Hello everyone, good afternoon, good morning, good evening to all of you. Welcome once again to this live एनालिसिस स्टार्ट करते हैं आज का ये सेशन। फिलहाल के लिए देखोगे कल मार्केट क्लोज हुआ था। क्रूड ऑयल क्लोज होते होते एक सेलिंग का ट्रेड आ गया था, याद होगा, टारगेट हिट हो गया था। फिर वहां पर एक बाइंग का ट्रेड लगाया था कल। तो वही चल रहा है, मार्केट वहीं पर एग्जैक्टली क्लोज हुआ था, वहीं पर ओपन हुआ। पहली जो कैंडल है उसने एक स्पाइक तो दे दिया था वैसे, अभी भी वहीं पर रुका है। तो थोड़ा सा एक छोटा सा बाइंग का ट्रेड है। अगर यहाँ पर ज़्यादा मूव नहीं आता है या फिर ये इस ब्लू कलर की लाइन के ऊपर सस्टेन नहीं करता है तो फिर नीचे स्ट्रॉन्ग सपोर्ट रहेगा ये वाला 6140 160 के बीच में जो है, ठीक है, दैट इज गुड सपोर्ट आफ्टर दैट। बाकी नेचुरल गैस में भी याद होगा कल एक रेजिस्टेंस पे सेलिंग का ट्रेड लगाया था, थोड़ी बहुत सेलिंग आई, फिर साइडवे चला गया, अभी वहीं पर ओपन हुआ है। ये लेवल मैंने कल ही बताया था आपको, नेचुरल गैस में थोड़ा सा रिस्की है, रिस्की इन द सेंस ऑफ पहली बार नहीं आ रहा है यहाँ पे, ऑलरेडी मल्टीपल टाइम सेम लेवल को हिट कर चुका है। फोर्थ टाइम था शायद कल। हाँ, फोर्थ टाइम इस लेवल को हिट कर चुका है प्राइस। इससे पहले देखोगे तो एक बार हिट किया था, सेलिंग आई थी, दूसरी बार ब्रेकआउट ऐसा हिट किया था, फिर नीचे आया, तीसरे बार में फिर सेलिंग आई, ये फोर्थ टाइम है। तो ज़्यादा रिस्क मत लेना नेचुरल गैस में, टारगेट बड़ा रख सकते हो बट डोंट टेक हाई रिस्क। नीचे वो जो परसों का रेजिस्टेंस जोन था जिसका ब्रेकआउट हो गया था, उसका रीटेस्ट अभी भी पेंडिंग है, आ ही नहीं रहा वहाँ पे। बाकी फिर नीचे एक मेजर सपोर्ट 312 314 के बीच में है, वो स्ट्रॉन्ग सपोर्ट है। इसके ऊपर एक रेजिस्टेंस और मिलेगा। ये रेजिस्टेंस एरिया भी ऐसा नहीं है पहली बार आ रहा है, ये भी आपका दो तीन बार टेस्ट हो चुका है, तीन बार टेस्ट हो चुका है, चौथी बार ही आएगा यहाँ पर। जैसे यहाँ पर आ रहा है, आया था फोर्थ टाइम। तो ऊपर रेजिस्टेंस थोड़े से वीक मान के चल सकते हो, बट अभी जब तक है तब तक ट्राई कर सकते हैं छोटे से एसएल के साथ। एसएल क्वांटिटी कम रखना नेचुरल गैस में, टारगेट बड़ा रख सकते हो सो दैट एसएल जाए तो कम ही लॉस हो, और अगर मोमेंटम अपसाइड आता है तो थोड़ा सा ठीक ठाक प्रॉफिट हो जाए। ओके। बाकी एक करेक्शन पेंडिंग तो है नेचुरल गैस में, पता नहीं कब आएगा, आएगा भी या नहीं। बाकी नेचुरल गैस की अगर देखोगे, नेचुरल गैस को अगर देखो, गैस सॉरी डेटा की अगर मैं बात करूं तो आज यूएस मार्केट ओपन है, अभी 12:30 पे लंदन सेशन ओपन होगा, 5:30 पे न्यूयॉर्क सेशन, 6 पीएम पे फिलाडेल्फिया फेड मैन्युफैक्चरिंग इंडेक्स का डेटा, ये गोल्ड और सिल्वर को इम्पैक्ट करता है मेनली। एंड देन 7 पीएम यूएस मार्केट ओपन। लास्ट ट्रेडिंग सेशन है, ज़्यादा रिस्क मत लेना, काफ़ी टाइम है अभी। नॉर्मली मॉर्निंग टाइम पे थोड़ा वॉल्यूम कम रहता है, तो जितना मोमेंटम आ जाए तो आ जाए। ऑप्शन जो ट्रेड करते हैं, ऑप्शन बाइंग स्पेशली जो करते हैं, कॉल या पुट वगैरह, वो थोड़ा ध्यान रखना, मोमेंटम नहीं आया तो प्रीमियम बहुत जल्दी डिके हो जाएंगे, स्पेशली नेचुरल गैस में एक्सपायरी बहुत पास में है इसलिए। बाकी वॉर के रिगार्डिंग कल मैंने वो अपडेट कर दिया था वैसे। कल स्टेटमेंट आया था फ्रॉम वाइट हाउस की, ईरान पर अटैक यूएस करेगा या फिर नहीं, ये डिसीजन यूएस के प्रेसिडेंट आने वाले 2 वीक्स के अंदर ले सकते हैं, नेक्स्ट 2 वीक्स। सो नेक्स्ट 2 वीक्स इज़ वेरी इंपॉर्टेंट, देखना पड़ेगा कि किस तरह से क्या डिसीजन लेते हैं यूएस के प्रेसिडेंट। अगर वो इन्वॉल्व हो गए तो फिर तो पता ही है, क्रूड ऑयल ऑलमोस्ट $90 तक जा सकता है उस केस में। बट अभी क्लैरिटी नहीं है, वेट करना पड़ेगा। एंड और कोई अपडेट न्यूज़ के रिगार्डिंग फ़िलहाल तो नहीं है। बाकी कल ईरान ने और कुछ बैलिस्टिक मिसाइल लॉन्च किए थे इसराइल पे। तो आई होप अब एज यूजुअल इसराइल भी कुछ ना कुछ बड़ा अटैक जरूर करेगा, देखना पड़ेगा किस तरह का अटैक करता है। कंटिन्यूसली बैलिस्टिक मिसाइल से अटैक हो रहा है इसराइल पे, तो इसराइल अब रुकने वाला तो नहीं है, इतना कंफर्म है। Reports are indicating another attempted drone attack tonight against US forces stations at Al Assad air base in western Iraq. According to report, a number of one-way attack drones were intercepted approaching Al Assad, resulting in no damage to the base or injured to personnel. US Secretary of State Marco Rubio met earlier today with UK Foreign Secretary David Lammy to discuss the ongoing war between Israel and Iran. The US Department of Defense has announced the death of two soldiers deploying to the Middle East as a result of non-combat related incident this week within the US Central Command. Australia has announced the closure of its embassy in Iranian capital of Tehran as well as the evacuation of all Australian officials and their families from Iran. American Airlines has suspended any further flight to Doha, Qatar, and United Airlines has suspended its daily flight to Dubai in the United Arab Emirates as the war between Israel and Iran continue to escalate in the Middle East. अमेरिकन एयरलाइंस ने अपनी फ्लाइट ही बंद कर दी है. कि निफ्टी बैंक निफ्टी को देखोगे, बैंक निफ्टी हल्का सा गैप अप हुआ था, बहुत ही स्मॉल सा, ज़्यादा नहीं। एंड देन वहाँ से 15 मिनट टाइम फ्रेम पे बैंक निफ्टी फ्यूचर कंटिन्यूसली बुलिश साइड पर ही जा रहा है। अगर अप साइड आता है 15 मिनट पे, जितना मुझे दिख रहा है अभी, ऊपर मार्केट के पास रेजिस्टेंस करंट लेवल की अगर बात करें तो वही 56,400 से 56,350 से 450 के बीच में रेजिस्टेंस है मेजर। लेट्स सी वहाँ तक वापस आता है या फिर अगर ये कल का लो ब्रेक करके नीचे आता है तो फिर हैवी सेलिंग और आ सकती है। अगर आज का हाई ब्रेक नहीं होता है फ्यूचर में और आज कल का लो ब्रेक करके नीचे क्लोज कर देता है, या फिर मैं कहूँगा 55,700 के नीचे भी क्लोज कर देता है 15 मिनट की कैंडल, वापस सेलिंग आ जाएगी। वैसे भी ये 2-3 दिन से सपोर्ट पर ही रुका हुआ है, ब्रेक नहीं कर पा रहा है नीचे का, तो नीचे जाना है तो सेल ऑफ करना ज़रूरी है। अदरवाइज इट इज़ ऑलरेडी सपोर्ट फ्रॉम लास्ट कितने दिन से सपोर्ट पे बैठा हुआ है। लाइक भी करते रहो गाइस।
And forecasts have been less.
Your Treasury yields lower just a bit. You are seeing Brent crude higher as people assess the risk of some sort of escalation in the Middle East. Coming up, we are going to be speaking with Chris Verone of Strategas as a risk-off mood returns to markets. Stephen Cook of CFR as the White House looks to set up ceasefire talks with Iran this year, potentially this week. And Krishna Guha of Evercore ISI on a wait-and-see Fed. We begin this story with our top story. Israel and Iran entering a fifth day of conflict. This as President Trump leaves the G7 earlier. Joining us now from Canada is Anne-Marie Herdern from the G7. Anne-Marie, what do we know about exactly what triggered President Trump's departure a day early from the G7 meetings?
Well, it clearly has to do with what is going on in the Middle East and obviously the continued bombardment of Iran from Israel. The president, though, is keeping it very vague in terms of what he plans to do as he just arrived about an hour or so back in Washington, D.C. We do know that he is convening the National Security Council and he plans to spend the day in the Situation Room. He told that to reporters on Air Force One as he was heading from Alberta back to Washington, D.C. And the president has maintained a continued posture here at the G7, continuously saying that Iran can never have a nuclear weapon. Obviously, there's been a ton of speculation about what the president may or may not do, especially since yesterday, Lisa, he put out a Truth Social post that actually also moved financial markets, saying that everyone should leave Tehran immediately, evacuate Tehran immediately. So while he's kept it vague, We should also note he did say that he is not leaving to go back to D.C. to work on a ceasefire. Emmanuel Macron, the president of France, had suggested this, and he said that that's wrong. I'm not going back to work on a ceasefire between Israel and Iran. Quote, wrong. Macron has no idea why I'm now on my way to Washington, but it certainly has nothing to do with the ceasefire. Much bigger than that, whether purposely or not, Emmanuel always gets it wrong. So it doesn't sound like at this moment the president, and he also told reporters he's not in a mood to negotiate. So then the question, the speculation becomes, what is the United States doing? Right now, the U.S. has remained a defensive posture. We should look at the tea leaves. The president says Iran cannot have a nuclear weapon. We know Israel wants to get rid of sites like Natanz and Fordow. Experts have long said that that cannot be done without the help of the United States. A week ago, Lisa, the president convened his top national security military experts for a day of talks regarding Iran at Camp David. All of this is leading people to speculate potentially the U.S. could get involved at this moment in a defensive posture, not just defensively.
Yeah, and Anne-Marie, less than an hour ago, President Trump put out a post on Truth Social saying, I have not reached out to Iran for peace talks in any way, shape, or form, doubling down on what he put out there yesterday. This is just more highly fabricated fake news. Anne-Marie, aside from what's been going on with the Iran-Israel conflict and the U.S.'s potential role, what else has transpired in G7? I understand that it was really dominated by it, but this is the second time for G7 that President Trump has left early, in particular from Canada, at a time when there's a lot of question around how much the U.S. is truly looking to establish ties with traditional allies.
Well, what marks this G7 different than the one in 2018 when he left is that he left saying this was a successful meeting. I did everything I had to do. And he also left his Treasury Secretary, Scott Bessent, behind to continue having these talks with other world leaders. Clearly, trade was on top of agenda for other leaders that were coming here, trying to get a moment of his time. He did sign this trade agreement. Nothing really changed than what they announced a few weeks ago with the United Kingdom. And he presented that to the press alongside UK Prime Minister Keir Starmer. He did meet on the sidelines with the Japanese Prime Minister. And what's interesting here is that on the way back to Washington, he told reporters that Japan is difficult to negotiate with. And then on Canada, he thinks there could be some deal. He says that he has a tariff concept. Mark Carney has a different concept. But also coming into the talks when it comes to Canada, what was discussed also, Elisa, when you talk about geopolitics, the potential for some of U.S. and its allies, adversaries in the futures like Iran, when you have the Defense Department talking about how many intercontinental ballistic missiles they could potentially work on in the next decade, he said that Canada would be a part of the U.S. Iron Dome and they would pay up billions to be part of that project.
Bloomberg's Anne-Marie Hordern, thank you so much for all of the excellent reporting from Banff. Right now, let's get the view from Wall Street this morning. Joining us now is Chris Verone of Strategas, a Baird company. Chris, wonderful to have you. Thank you so much for being here.
Thank you.
Let's just start with this idea that stocks don't know what to do with all of this. Typically, geopolitical risk has been something you fade. You buy that dip because ultimately it doesn't usually have staying power. Does this time feel different?
Well, I think we're going to have to let the market be the judge of that. You know, this conversation began with you saying that the U.S. is in defensive posture. Well, is the market in defensive posture here? I think is the bigger question for when you look at the world through the lens of price action. And I think it's inconclusive. We have not seen the real overt rush to treasuries. We just talked about kind of a very modest or benign response from U.S. 10-year yields. Gold is well below the highs from not only mid-April, but from where it was just on Friday morning. Dollar has bounced, but only modestly. So I think it's difficult to embrace this view that there's some pervasive risk-off message streaking through markets. And then when you look through some of the leadership, the cyclicals have generally held in there. The Asian markets in particular are acting very, very well here. So I'm going to kind of lean towards the market's interpretation thus far, which is this is probably something you want to fade.
Well, there's this question of what does it mean to be defensive at a time where you've got different tail risks. You've got the potential for some sort of weakening in the economy, and then you have the potential for some sort of resurgence in inflation that really challenges maybe bond valuations, but isn't that pernicious for the stock market. Which is the biggest sort of risk that you see people defending against?
I think when you go back to early April, all the attention was on what the inflation risk would be kind of on the other side of tariffs. We just never saw it. When you look at the market's messaging, it was not very pro-inflationary messaging. Our concern was always that there was a bigger risk to the growth side of the equation. And that's why I think you got to be a little careful what you wish for here on bond yields. I know it seems comforting if you saw bond yields lower here. I'm not sure that would be the best message on economic growth. If nominal growth is running somewhere around 5, you probably don't want 10-year yields much below 4. So they're hanging out here in this 440, 450 neighborhood. The market is largely acting okay. Cyclicals are largely outperforming. I think we want to maintain that very status quo as much as we can here.
So at a certain point, you have to wonder, when do bond yields become a problem for equity valuations? We've been asking that a lot. You're making the argument that at this level, not only are they not problematic, but they're actually conducive to more gains because it actually suggests this positive outlook for the U.S. economy. Is this a sweet spot? Are we kind of in Goldilocks when it comes to the yield space?
I'm skeptical of the word Goldilocks when gold is also up, right? So I got to be a little careful with that. But I do think the real trouble often emerges when you have bond yields higher with defensives outperforming. So we have bond yields roughly where they've been for much of the year, but defensives are not working here. I mean, if you look at the staples, they're back on the relative lows. This morning in our own work, we wrote about the food and beverage stocks on their lows. So you're not seeing that traditional defensive messaging. On the other side, industrials have continued to hold their own. Financials globally are largely still okay. So I'm not seeing the disruptive message in leadership yet to suggest bond yields are a problem here. What frankly, again, what I would be more worried about is bond yields moving lower with defensives taking grip of this market, because it would run totally counter to the narrative that, hey, cyclicals need lower yields to really work. I would be a little bit skeptical of that view here.
And basically what you're indicating is this sense of sell America and how much this is a sell America trade and sell U.S. rates trade versus just simply something that makes sense based on the backdrop in the economy. What we saw today from the Bank of America Global Fund Manager survey for June was that investors are the most underweight U.S. dollar going back 20 years. Does this mean it's a buying opportunity if you're a contrarian, or do you think that this is something that does have legs?
You know, you got always be a little careful with the soft and anecdotal data and the sentiment work, and certainly that survey falls into that camp. But I'll add a little fuel to the fire. I was in London a few weeks ago, and I have never seen in 20-plus years of going there such emotional bearishness on both U.S. dollar and U.S. assets, where you do begin to wonder, is there some contrarian opportunity here? I think in particular where we're seeing sentiment maybe most one-sided is actually on Japanese yen. And I say that as someone who's been a Japanese yen bull, and I just want to be a little bit careful that almost everyone I talk to is also a Japanese yen bull. So just want to be a little bit careful that the kind of one-sided thinking on USD hasn't gotten so far extreme where you want to actually think about some contrarian opportunity. Now, that said, here we are in the middle of a conflict, and dollar really hasn't done anything of great note over the last 4 or 5 days. So it does speak to this idea that perhaps, to your point, Lisa, that we're in some evolving macro order where dollar or treasuries are perhaps not as defensive or don't serve that same role that they have for so many decades.
And part of this is because people don't understand what the main risk is, right? And we've been talking about this. Is it the downside risk to growth, or is it something that has more to do with the upside to inflation, which is a reason why I think a lot of people are looking at the pain point for oil. At what point oil prices rise to a big enough level where they affect CPI to potentially push off the Fed from cutting rates at a time when it could ultimately, longer term, be deflationary or certainly stagflationary at best?
Well, it's funny. This is why we have the core, right, on CPI. I think the irony of this moment is, or really all year, the appropriate word we thought all year, and you got to be so careful saying this word, is actually transitory. Everyone's afraid to say it because of what happened in 21 and 22. But when you think about tariffs, one-time price adjustment, or the move in crude, these seem like transitory events, not strategic or long-lasting events, but there's a reluctance, for good reason, for anyone to embrace that word. I think when you look at what the move in crude here is telling us, just remember one thing. We're entering a very weak seasonal period for oil. Basically, July through October, oil historically tends to be under pressure. So I would be careful chasing crude here. This was, frankly, bottoming and improving in our work the last 4, 5, 6 weeks. We've now had the move. We're into major resistance, call it 80, 82 on Brent, maybe 78 to 80 on WTI. I'm more inclined to fade it. I'm more inclined to go back to what the leaders in the energy space are, which are power and natural gas. What are the stocks in energy yesterday making the new relative highs? It's stocks like EQT and LNG and Range Resources. It's the gas-related names, not the oil-related ones.
You said the T word. That's pretty bold.
I know.
Chris Verone, you're going to be sticking with us.
I might regret that.
Even if you say the T word again, you're sticking with us for the hour, which we're very happy about. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. We start with the latest out of the Middle East. The Israeli military says it has killed one of Iran's most senior commanders. General Ali Shadmani had only recently assumed the role of chief of staff following the death of his predecessor in a prior IDF airstrike. Iran has launched around 370 ballistic missiles at Israel, killing 24 people and injuring almost 600, while Iran says over 200 people have been killed by Israel's strikes. Meanwhile, President Trump left the G7 summit in Canada a day early. He returned to Washington early this morning, just hours after calling for the evacuation of Tehran. In a Truth Social post, the president said his departure had nothing to do with the ceasefire between Israel and Iran and that it's, quote, much bigger than that. But before leaving the G7, President Trump and UK Prime Minister Keir Starmer agreed on a deal to implement their tariff-cutting agreement from last month. The deal will slash U.S. tariffs on key British exports and raise UK quotas on certain American agricultural products. Aerospace and steel exemptions are also in the deal, though a quota on UK steel tariffs will be decided at a later date. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, Trump focusing on Iran.
Remember, Iran cannot have a nuclear weapon. It's very simple. Not to go too deep into it, they just can't have a nuclear weapon.
Stephen Cook of CFR joins us next. This is Bloomberg Surveillance.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Good morning. Welcome back. Stocks having a little bit of a risk-off tone after some commentary from President Trump as he left the G7 a day early, focusing on Iran, saying there was a lot to do and saying it wasn't because he wanted to have ceasefire talks. Right now, futures down about 0.6% on the NASDAQ and the S&P. Russell 2000 down about 0.8%. Taking off some of the gains from yesterday when people were looking at big tech. Under surveillance this morning, very much Trump focusing on Iran. Here is the latest. President Donald Trump returning to Washington, leaving the G7 early, saying the reasoning was, quote, much bigger than a ceasefire between Israel and Iran. Joining us now, I'm so pleased to say, is Bloomberg's Tyler Kendall. Tyler, what do we know in terms of what the reaction is like in Washington, D.C., let alone what exactly prompted President Trump to depart Canada?
Yeah. Hey, Lisa, good morning. Well, when it comes to the reaction, we've heard from congressional lawmakers, for example, who want to have a say instead of just having the White House make unilateral decisions when it comes to this. For example, we're expecting a bipartisan group of lawmakers today to introduce what's known as a war powers resolution that would essentially give Congress some sort of vote or debate before the U.S. takes any military action in the region. Though, of course, we should say up to this point, the U.S. has assumed that more defensive posture, and U.S. officials tell us that that has not changed, though the U.S. military has moved assets into the region in recent days. Perhaps we could get some more details later on today, as we are expecting President Trump to spend the majority of today inside the Situation Room. He suggested that this is going to be a more secure way for him to make these calls and advance what he would like to see as negotiations compared to the setup that he had at the G7. He did touch down at Joint Base Andrews just about an hour ago, and he told reporters on that flight, as you've been discussing, that he is looking for something much bigger than a ceasefire. He has made absolutely clear that he wants Iran to abandon its nuclear ambitions. He said that the country would be foolish, in his words, not to make a deal. He also, Lisa, suggested that perhaps discussions could take place in person. It does appear that the White House does still feel that there could be a diplomatic off-ramp here. He did suggest that he could dispatch Vice President J.D. Vance or Special Envoy Steve Witkoff if talks do progress.
Tyler Kendall, thank you so much for that. Right now, we're going to be joined by Stephen Cook of the Council on Foreign Relations. Stephen, thank you so much for being with us. I want to start with your interpretation of what exactly prompted President Trump to leave the G7 meetings early.
Yeah, it's actually quite curious, given the fact that the Israelis seem to have this situation fairly well in hand. Israeli military leaders believe that they have about a week left to go through their target set. And the Iranian rate of fire on Israel, although continuing to be lethal, is diminishing. My sense is that the president's, the mixed signals coming out of the White House is the president trying to keep the Iranians off balance. And there is going to be a demand from the United States that if there is a diplomatic initiative, that Iran dismantle its nuclear program before the Israelis destroy it. It seems unlikely that the Iranians will agree diplomatically to voluntarily dismantle their program, however.
Stephen, and I realize this is going into the realm of hypothetical, but there is this question around whether the United States would get involved with bombing Fordo, which is their deep underground nuclear site that Israel can't really reach with their equipment. They don't have the bunker busters that the United States does. What would be the consequences of doing that in terms of the international reception, what that does to the potential conflict or reduce the nuclear threat?
Yeah, I think certainly if the United States were to bomb Fordo, it would reduce the nuclear threat. While there might be certain international outcry, I think that privately people would be relieved that the Iranians would be disarmed. But I wouldn't assume that the Israelis don't have any options themselves with regards to Fordo. They have been looking at this problem for quite some time, and they may, in fact, have figured out a way to pick the lock. They suggest that they will complete their tasks within a week, and that includes Fordo. So it may not be necessary to have a B-2 with 30,000-pound bunker buster bombs aboard, but we'll just have to see.
Stephen, it's Chris. When you think about why this president, or one of the reasons this president was elected, it was on less foreign engagement. Do you think taking a more active role in the Iran conflict here kind of puts that at risk?
Oh, well, certainly the president's America First outlook means reducing America's footprint in certain areas around the world. The president ran for office 3 times, in part because he was opposed to getting the United States involved in foreign adventures, particularly in the Middle East. However, he's been fairly consistent with regard to Iran's nuclear program since becoming the president, and has said that there needs to be an end to this program. And he did say in response to critics the other day that he gets to determine what America First is, not commentators like Tucker Carlson and others.
Stephen, I think one of the risks whenever there's a geopolitical event is you get very caught up in the first order thinking. What is the second and third order thinking here that maybe the consensus is not focused on?
Well, I think that the folks are focused on the actual conflict, and that makes a lot of sense, whether the United States is going to be involved, what that does to the markets. I think there's a longer-term goal here on the part of the Israelis that has been kind of nodded at and winked at, which is to weaken the regime in a way that makes it possible for Iranians to rise up and engage in regime change themselves. That would be a paradigm shift in the international system, and particularly in the Middle East. A changed Iran, perhaps a more benign government, maybe not, though it would necessarily mean a very, very changed Middle East.
Well, we've dealt with this quite a bit, and let's build on this, Stephen, this idea of regime change in the Middle East. We've seen this movie before in various iterations, time and again, and it often doesn't go as well or as smoothly as people thought. How much do you see an actual viable leadership, aside from just some sort of rebellion among the Iranian people, a viable leadership in the wings ready to take over should the current leadership be deposed?
Yeah, I mean, this is what's so risky about this. Now, the Israelis aren't saying that they're engaged in regime change. They're saying they're going after the nuclear program. But it seems clear based on what they're targeting and the kinds of things that they're saying that they wouldn't mind if the Iranians rose up and changed their government. The Iranian opposition is hopelessly and woefully divided among itself. We have seen the Shah's son, Reza Pahlavi, raise his profile in the course of the last couple of weeks or so. But it will be a struggle to build a new, a decent government in Iran. I don't think anybody believes that this isn't anything but an incredibly risky strategy.
Stephen Cook of CFR, thank you so much for spending the time with us this morning as we try to understand what the ramifications could be and whether the United States would be looking to get involved. Chris, you did raise that point, this question of if this president ran on America first, how does this sort of change some of the calculus? If you take that a step further in terms of second order, what does this do to the one big beautiful bill that we hear going on in Washington, D.C., some of the trade agreements in terms of, as an investor, what you focus on and how much that gets delayed as this takes center stage?
Well, I think just to kind of go back for a moment, when you think about what were the three tenets of the campaign, it was immigration, it was tariffs, and it was less foreign engagement. And he's 2 for 3 so far, and I think this is the one that's out there that potentially goes against what he campaigned on. So I would still be surprised, kind of when I look at the market's message, I would still be surprised if we entered this in any big way. I think the market's still treating this fairly benign at the moment. I think the harder question, Lisa, as you ask, is what does this do for all the other priorities that are currently on the table, namely trade and taxes? The timeline is not particularly generous here. We do not have a lot of calendar left in the congressional cycle here before we get to a point where this tax bill has to get done. So, again, I think the market's message will be a kind of a key guide in that regard.
Just quickly, Chris, what would markets do if the U.S. did get involved?
Well, I think we'd certainly see gold to new highs. I do think ultimately things like treasuries would come back as a traditional safe haven. I am skeptical of the view that these things are no longer the safe assets in the world. I think that is way overhyped and way overblown. And
right now we are seeing a bit of a bid into treasuries amid some of the risk-off yield that we're seeing in equities. Yields lower just a touch as the Federal Reserve begins their two-day meeting. You do have the sell-off in futures, just a touch, taking off some of the heat from yesterday. Coming up in the next couple of minutes, we've got Krishna Guha of Evercore ISI on a wait-and-see Fed. They don't have the luxury of any kind of visibility like the rest of us. This is Bloomberg Surveillance. A little bit of edginess this morning as people assess exactly why President Trump departed G7 meetings early to go back to Washington, D.C. to get into the Situation Room to really understand and navigate what's going on in the Middle East. You're seeing stock futures off about 0.6% on the S&P and NASDAQ, down 0.8% on the Russell 2000. 3 hours away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start with solar stocks absolutely plunging after Senate Republicans unveiled a bill that would end tax credits for wind and solar by 2028. That's years earlier than for other energy sources like nuclear. So as a result, you are seeing Sunrun down 27%, while Solar Edge Technologies and Enphase Energy are also down. That's because analysts have already warned that ending these tax credits would decimate the solar industry, though I will add that the bill could still change. Next up, we have shares of T-Mobile. They are down 4.7% now after SoftBank unloaded 21.5 million shares of the wireless provider at a slight discount in one of the biggest U.S. stock sales this year. The nearly $5 billion haul will help fund CEO Masayoshi Son's massive push into AI, including a potential investment of $30 billion into OpenAI, but coming at the expense of this stock today. And take a look at shares of Verve Therapeutics. They are absolutely soaring, up 78% on an FT report that Eli Lilly is in advanced talks to buy the gene editing startup for up to $1.3 billion. That deal would double Verve's market value and give Lilly access to a promising cholesterol treatment at a time when it's trying to expand its pipeline beyond those blockbuster weight loss drugs. Lisa?
Thank you so much, Yahaira. I guess it's Merger Tuesday as well as Merger Monday. On our radar this morning, President Trump leaving the G7 early as Israel and Iran enter a fifth day of attacks, conflicting reports about why he left, leaving markets on edge. The president saying it's bigger than a ceasefire. Chris Verone still with us of Strategist. And Chris, I have to wonder, as the markets game out how this looks, is the biggest risk some sort of blocking of the Strait of Hormuz, the idea of free oil flow? Or is it the United States getting involved with a lot of unpredictable ramifications?
I think it's more the latter as the bigger risk. I mean, I went to bed last night expecting to wake up this morning to see futures down meaningfully, to see treasuries very bid, to see oil through the highs. And none of that here has played out. And, what we wrote to clients late last night and again this morning is very simply, pay attention to Friday's intraday highs when the news kind of first broke. VIX, I think, was 22. High yield CDX was 350. Crude was, 77, 78. I think those are important kind of near-term thresholds to get an understanding of whether the market sees a real risk starting to materialize from here.
And I think a lot of people are watching to see what transpires in the Situation Room and how much it distracts from some of the other agenda issues. And this is something we were talking about earlier. President Trump and UK Prime Minister Keir Starmer reached an agreement to implement some elements of the trade deal announced last month. The U.S. will slash tariffs on key British exports, and the UK will raise quotas on certain American agricultural products. An immediate cut on steel tariffs, which was a key British demand, was not included in the deal. Chris, how much are we learning about what the red lines are, about whether the United States will drop tariff rates below that 10% sort of floor, about how quickly we're getting some sort of resolution ahead of a deadline that's fast approaching?
It's a deadline that's fast approaching, which is unique for markets, the idea of a deadline, because you think of markets as discounting type where all the information is known or processed before the deadline approaches. So you kind of wonder how this deadline is going to play out. I think when you look at the UK deal, I think the issue that the UK here has is the currency is just too strong. And for an economy that's probably in a weaker spot than we are, where bond yields have gone up more in the UK, plus a strong currency, that's not the best recipe for some economic revival in the UK here.
So at a certain point, do you see this as being a sticking point increasingly for countries that are getting challenged by having a stronger currency at a time where the U.S. is arguing for more trade deals, but also getting benefited by the fact that the dollar has weakened so substantially this year?
Well, I think it highlights the risk we talked about at the beginning of the show, that sentiment on dollar is just so one-sided here, whether you look at the BAML Fund Flow Survey or whether you look at our own work. It's about as extreme as I've seen in 20-plus years of doing this. So I do think dollar shorts at least should be open to what new information could hurt them here. I think in particular, frankly, I think the most important kind of part of the trade agenda is what happens in Japan here. Because you have the BOJ in an interesting spot here. And they just finished a two-day meeting. Rates were pretty benign coming out of that. Yen was pretty benign coming out of that. But we have seen massive strengthening in the yen over the last year, from this time last summer, 160 to call it 140 and change right now. I think that is really the big elephant in the room.
Which is the reason why maybe you saw a bit of a dovish tone from the Bank of Japan overnight. The three prongs of the stool, as we were talking about trade, we're talking about the bill in Washington, D.C., and of course, we're talking just in general about how we get sort of GDP up in some sort of substantial way. Senate Republicans plan to cut trillions of dollars in taxes in their version of the president's big, beautiful bill to offset the cost. Senators are looking to repeal some clean energy tax credits and scale back Medicaid benefits even further than the version passed in the House. How much, Chris, can we actually take a look at this and game anything out in terms of deficit, in terms of spending cuts for states, versus just sort of discount this as a negotiating tool for now, ignore, focus on other things until this gets into a more baked form?
I still think for the market, this is probably the biggest game in town here. Just frankly, the timeline is short. Now, remember,
Nathan Farrell, Lisa Abramowitz, and Tom Keene.
Threatening to disrupt oil supplies at a time when that will only add to some of the inflationary questions.
I think over $80. They're not there yet, but over $80 a barrel, things change.
Yeah, and this is why we're watching the Statement of Economic Projections as well as what we might end up getting from the forecasts in the dot plot. Right now in markets, you could see a bit of calm. You've got equities that are rallying despite some of that uncertainty. Just to give you a perspective, since the last meeting on May 7th, S&P is up almost 7%. When you take a look at yields, they are up materially, about 10 basis points on the 10-year, up from on May 7th, the last time the Fed met, 4.36%. And crude lower, but still up materially since that last meeting. Coming up shortly, J.P. Morgan's Bob Michael, Kathy Jones of Charles Schwab, and Greg Peters of PGIM will be taking us up to the Fed rate decision at 2 p.m. We'll get immediate reaction from former Fed Vice Chair Rich Clarida, Diane Swank of KPMG, and Deutsche Bank's Matt Lazzetti. And finally, breaking down Chair Powell's news conference, Stephanie Roth of Wolf's Research, Apollo's Torsten Slok, Subhadra Rajappa of SocGen, and BlackRock's Jeff Rosenberg. Joining us now, we are so pleased to say, is J.P. Morgan's Bob Michael. This is actually a big deal because they're going to release their quarterly summary of economic projections at a time where things haven't exactly gotten clearer.
Yeah, I don't think this is a boring Fed meeting. I think this is a historic Fed meeting. You've got the Fed dealing with a lot of things. Tariff policy could be something we haven't seen in a century. You could have a potential major conflict in the Middle East. And of course, when you look at the One Big Beautiful Bill Act, if that passes, you've got the extension of one of the biggest tax breaks in history. If it doesn't, you're going to have one of the biggest tax hikes in history. How does the Fed bring all of this together?
The question really will ultimately be, what is the reaction function? Where are they placing the emphasis right now? On data that does appear to be weakening, we are seeing a shift upward in the jobless claims over a 4-week moving period. You are seeing the economic surprise index roll over into negative territory, or on the potential for inflation from oil, from tariffs, from some of these policies that they don't really want to get involved with commenting on.
Well, that's why the summary of economic projections is going to be so critical this time. The last ones were in the March meeting. Of course, you've had Liberation Day, you've had the One Big Beautiful Bill Act, and now you've got Israel, Iran. So all of that, they have to weigh into that. We expect, of course, they've got to raise their expectation of inflation. So core personal consumption expenditures, we expect them to go up from 2.8 to 3.2. And they're going to bring down growth, probably from 1.7% GDP to 1.4%. And you'll probably see a tick up in unemployment from 4.4 to 4.5, and probably just one rate cut this year, not two.
From where you sit, is the job market cracked? I mean, 245,000 4-week moving average on weekly claims. I would say the majority of people say not yet, but how's our labor market?
It's on the knife's edge. And what you see in the weekly claims data is that businesses are neither hiring nor firing. They're frozen. And you see that with continuing claims continuing to go up. That tells you that if you've been laid off, you can't find a job.
I'm not going to let this go, and I like that we have 3 bond people up top. I think the bond market's speaking right now versus the equity market. I want to look at the 10-year real yield. I'll let you pick the duration. But what's amazing to me is it's still range-bound. Do you predict that the inflation-adjusted yield will break down to a new lower, disinflationary, slower, sluggish tendency, or can it break up with all the geopolitics we've got?
It's probably likely to break up. I think there will be an expectation that as all these different policies take shape and are deployed, that's going to create a lot of anxiety and volatility in the market. Break-even spreads will have to accommodate for that. So
is it rude to ask for a level at this time of our Fed show? Let's ask for a level. 203. Can you give me a number to 2 decimal points up? 220?
Yeah, I think you're looking close to 2.25%.
Farrell would never let me do that.
Well, that'll be back next Fed meeting, so don't get too excited. There is this question, though, and you raise it in some of your expectation, and this is the baseline expectation that they are going to raise their inflation expectation, downgrade their growth, and also reduce the number of rate cuts that they have. Doesn't that imply that they see the potential inflationary shock as being something more than transitory? I know that T word is somewhat contentious. At the same time, people are pointing to that weakness that Tom was talking about in the labor market and saying Why not weigh in on that if you think that this is actually going to be a passing trend?
I think what it tells you is they're in a pretty good spot right now. Nothing's really broken. Yeah, everything could move materially in one direction or another. So why shift things in anticipation before you know what the actual policies look like and the impact to the economy?
Meanwhile, as Tom was mentioning at the top, there has been this drumbeat from the White House, and we only got that again this morning when President Trump came out and said the Fed should really be about 2.5 points lower, saying that they should reduce the rates that much, and then saying, I would be a really good Fed chair, and he'll be out the second that his term is up. At what point do you think that really starts to color the press conference in terms of how the Fed wants to color their decision, even if it is based purely on the economic data?
Yeah, and I think there's been a lot of conversation. If you bring the Fed funds rate down to 1 7/8%, you're probably going to see the 10-year go up to about 5%, maybe higher. We have history for that. 1992 to 1994, the spread from Fed funds to the 10-year was 300 to 400 basis points. And that was another period where the markets felt the Fed was overstimulating. He's going to get asked a lot of questions about that. Why not?
Why shouldn't he answer them? We have a template of McChesney Martin in 1951. We have the Vietnam War, LBJ, really unhappy. Maybe it was Nixon, I can't remember right now. What is this silence that we get from Powell? He should make some form of defense of the institution today, shouldn't he?
I'm sure he will. I'm sure he'll defend the integrity with which they look at inputs into their decision-making process and the summary of economic projections. In the past, he has admitted that there are wide dispersions of time. Not everyone is in agreement. We think this time there will be unanimous on not changing rates, but I think he will defend the institution.
Let's say the Fed were to cut rates, not by necessarily 2.5 percentage points, by let's say a percentage point. How much would long-term yields rise based on the current expectation of an elevated trend of inflation for a longer period of time?
Probably not a lot. I think the market is expecting about 100 basis points in rate cuts over the next year. I think everyone has moved to a December rate cut and 3 more early part of next year. So that's already effectively in the market. It would be interesting to see what that does to the 10-year. Does it bring it down a little bit? And does that create a more positive dynamic for the housing market? That's the one thing that worries us the most. When you look at the housing data today, it's at a cycle low.
Yeah, and that was something that we saw in economic data that we got earlier this morning, and we've been getting consistently. I am just wondering how much that forecast for a front-loaded or back-loaded rate cuts next year stems from the fact that we're going to have a different Fed chair, who potentially will be a little bit more dovish.
Yeah, that's the case. Look, Fed officials are political appointees. They're not voted in, so they're going to be appointed based on their views and beliefs and what the administration wants to endorse.
So did you hear that, Tom? He said that this is actually going to be a riveting meeting, so we should all be
I
very
agree,
clear.
and I've changed my tune. I was not, did I think it was a snooze fest? Maybe, but we have migrated from that. At least I think this is important to state. We're fighting 2.5 wars. We're fighting Ukraine. We're fighting from Israel to Persia, and we're fighting, with great respect, half a war in Gaza, I guess. So it's 2.5, if not 3 wars. When did we have a Fed meeting with 3 fronts, ever?
Well, with 3 fronts on one side and then a home front with a question of policy. And Bob kept talking about the bill that may or may not get passed, with the CBO putting out that it would increase the deficit some $2.8 trillion over the next 10 years. How much does that factor into a Federal Reserve who is being accused of raising the costs for this government by the president? This is something that he's going to have to discuss today. I'm sure he'll get asked about it. Bob Michael of J.P. Morgan is sticking with us, which we are so pleased about. Coming up, we've got Kathy Jones of Charles Schwab and Greg Peters of PGIM as we count you down to that Federal Reserve decision. This is Bloomberg. Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance. The Fed decides.
Live on Bloomberg Television and radio, good afternoon. Counting down to another Fed rate decision and Chair Powell news conference. Alongside Tom Keene, I'm Lisa Abramowitz. Someone is missing. Tom, I believe.
I just got a message from the Bank d'Italia, and he's 24 miles south of one of their branches. I think it's an island.
Yeah, well, somewhere beautiful. And unfortunately, he is missing the most riveting Fed meeting since the last one.
Certainly most political. My word, the comments this morning.
How about it from President Trump coming out and saying he should be the head of the Federal Reserve? Honestly, quite a time for him to be coming out.
It's going to be a long show, the press conference. He's got to rebut the comments today. He's got to say something.
There's that. There's also this question of how much uncertainty can you possibly have at a time where not only do you have tariffs, do you have changes in policies in Washington, D.C., but now you have what's going on with Iran and Israel threatening to disrupt oil supplies at a time when that will only add to some of the inflationary questions.
I think over $80. They're not there yet, but over $80 a barrel, things change.
Yeah, and this is why we're watching the statement of economic projections as well as what we might end up getting from the forecasts in the dot plot. Right now in markets, you could see a bit of calm. You've got equities that are rallying despite some of that uncertainty. Just to give you a perspective, since the last meeting on May 7th, S&P is up almost 7%. When you take a look at yields, they are up materially, about 10 basis points on the 10-year, up from on May 7th, the last time the Fed met, 4.36%. And crude lower, but still up materially since that last meeting. Coming up shortly, J.P. Morgan's Bob Michael, Kathy Jones of Charles Schwab, and Greg Peters of PGIM will be taking us up to the Fed rate decision at 2 p.m. We'll get immediate reaction from former Fed Vice Chair Rich Clarida, Diane Swank of KPMG, and Deutsche Bank's Matt Lazzetti. And finally, breaking down Chair Powell's news conference, Stephanie Roth of Wolf's Research, Apollo's Torsten Slok, Subhadra Rajappa of SocGen, and BlackRock's Jeff Rosenberg. Joining us now, we are so pleased to say, is J.P. Morgan's Bob Michael. This is actually a big deal because they're going to release their quarterly summary of economic projections at a time where things haven't exactly gotten clearer.
Yeah, I don't think this is a boring Fed meeting. I think this is a historic Fed meeting. You've got the Fed dealing with a lot of things. Tariff policy could be something we haven't seen in a century. You could have a potential major conflict in the Middle East. And of course, when you look at the One Big Beautiful Bill Act, if that passes, you've got the extension of one of the biggest tax breaks in history. If it doesn't, you're going to have one of the biggest tax hikes in history. How does the Fed bring all of this together?
The question really will ultimately be, what is the reaction function? Where are they placing the emphasis right now? On data that does appear to be weakening, we are seeing a shift upward in the jobless claims over a 4-week moving period. You are seeing the economic surprise index roll over into negative territory, or on the potential for inflation from oil, from tariffs, from some of these policies that they don't really want to get involved with commenting on.
Well, that's why the summary of economic projections is going to be so critical this time. The last ones were in the March meeting. Of course, you've had Liberation Day, you've had the One Big Beautiful Bill Act, and now you've got Israel, Iran. So all of that, they have to weigh into that. We expect, of course, they've got to raise their expectation of inflation. So core personal consumption expenditures, we expect them to go up from 2.8 to 3.2. And they're going to bring down growth, probably from 1.7% GDP to 1.4%. And you'll probably see a tick up in unemployment from 4.4 to 4.5, and probably just one rate cut this year, not two.
From where you sit, is the job market cracked? I mean, 245,000 4-week moving average on weekly claims. I would say the majority of people say not yet, but how's our labor market?
It's on the knife's edge. And what you see in the weekly claims data is that businesses are neither hiring nor firing. They're frozen. And you see that with continuing claims continuing to go up. That tells you that if you've been laid off, you can't find a job.
I'm not going to let this go, and I like that we have 3 bond people up top. I think the bond market's speaking right now versus the equity market. I want to look at the 10-year real yield. I'll let you pick the duration. But what's amazing to me is it's still range-bound. Do you predict that the inflation-adjusted yield will break down to a new lower, disinflationary, slower, sluggish tendency, or can it break up with all the geopolitics we've got?
It's probably likely to break up. I think there will be an expectation that as all these different policies take shape and are deployed, that's going to create a lot of anxiety and volatility in the market. Break-even spreads will have to accommodate for that. So
is it rude to ask for a level at this time of our Fed show? Let's ask for a level. 203. Can you give me a number to 2 decimal points up? 220?
Yeah, I think you're looking close to 2.25%.
Farrell would never let me do that.
Well, Doug will be back next Fed meeting, so don't get too excited. There is this question, though, and you raise it in some of your expectation, and this is the baseline expectation that they are going to raise their inflation expectation, downgrade their growth, and also reduce the number of rate cuts that they have. Doesn't that imply that they see the potential inflationary shock as being something more than transitory? I know that T word is somewhat contentious. At the same time, people are pointing to that weakness that Tom was talking about in the labor market and saying, why not weigh in on that if you think that this is actually going to be a passing trend?
I think what it tells you is they're in a pretty good spot right now. Nothing's really broken. Yeah, everything could move materially in one direction or another. So why shift things in anticipation before you know what the actual policies look like and the impact to the economy?
Meanwhile, as Tom was mentioning at the top, there has been this drumbeat from the White House, and we only got that again this morning when President Trump came out and said the Fed should really be about 2.5 points lower, saying that they should reduce the rates that much, and then saying, I would be a really good Fed chair, and he'll be out the second that his term is up. At what point do you think that really starts to color the press conference in terms of how the Fed wants to color their decision, even if it is based purely on the economic data?
Yeah, and I think there's been a lot of conversation. If you bring the Fed funds rate down to 1 7/8%, you're probably going to see the 10-year go up to about 5%, maybe higher. We have history for that. 1992 to 1994, the spread from Fed funds to the 10-year was 300 to 400 basis points. And that was another period where the markets felt the Fed was overstimulating. He's going to get asked a lot of questions about that. Why not?
Why shouldn't he answer them? We have a template of McChesney Martin in 1951. We have the Vietnam War, LBJ, really unhappy. Maybe it was Nixon, I can't remember right now. What is this silence that we get from Powell? He should make some form of defense of the institution today, shouldn't he?
I'm sure he will. I'm sure he'll defend the integrity with which they look at inputs into their decision-making process and the summary of economic projections. In the past, he has admitted that there are wide dispersions of time. Not everyone is in agreement. We think this time there will be unanimous on not changing rates, but I think he will defend the institution.
Let's say the Fed were to cut rates, not by necessarily 2.5 percentage points, by let's say a percentage point. How much would long-term yields rise based on the current expectation of an elevated trend of inflation for a longer period of time?
Probably not a lot. I think the market is expecting about 100 basis points in rate cuts over the next year. I think everyone has moved to a December rate cut and 3 more early part of next year. So that's already effectively in the market. It would be interesting to see what that does to the 10-year. Does it bring it down a little bit? And does that create a more positive dynamic for the housing market? That's the one thing that worries us the most. When you look at the housing data today, it's at a cycle low.
Yeah, and that was something that we saw in economic data that we got earlier this morning. We've been getting consistently. I am just wondering how much that forecast for front-loaded or back-loaded rate cuts next year stems from the fact that we're going to have a different Fed chair, who potentially will be a little bit more dovish.
Yeah, that's the case. Look, Fed officials are political appointees. They're not voted in, so they're going to be appointed based on their views and beliefs and what the administration wants to endorse.
So did you hear that, Tom? He said that this is actually going to be a riveting meeting, so we should all be
I
very
agree,
clear.
and I've changed my tune. I was not, did I think it was a snooze fest? Maybe, but we have migrated from that. At least I think this is important to state. We're fighting 2.5 wars. We're fighting Ukraine. We're fighting from Israel to Persia, and we're fighting, with great respect, half a war in Gaza, I guess. So it's 2.5, if not 3 wars. When did we have a Fed meeting with three fronts ever.
Well, with three fronts on one side and then a home front with the question of policy. And Bob kept talking about the bill that may or may not get passed, with the CBO putting out that it would increase the deficit some $2.8 trillion over the next 10 years. How much does that factor into a Federal Reserve who is being accused of raising the costs for this government by the president? This is something that he's going to have to discuss today. I'm sure he'll get asked about it. Bob Michael of J.P. Morgan is sticking with us, which we are so pleased about. Coming up, we've got Kathy Jones of Charles Schwab and Greg Peters of PGIM as we count you down to that Federal Reserve decision. This is Bloomberg. Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, The Fed Decides.
Live on Bloomberg Television and radio, good afternoon. Counting down to another Fed rate decision and Chair Powell news conference. Alongside Tom Keene, I'm Lisa Abramowitz. Someone is missing, Tom, I believe.
Missing. I just got a message from the Bank d'Italia, and he's 24 miles south of one of their branches. I think it's an island.
Yeah, well, somewhere beautiful. And unfortunately, he is missing the most riveting Fed meeting since the last one.
Certainly most political. My word, the comments this morning.
How about it from President Trump coming out and saying he should be the head of the Federal Reserve? Honestly, quite a time for him to be coming out.
It's going to be a long show, the press conference. He's got to rebut the comments today. He's got to say something.
There's that. There's also this question of how much uncertainty can you possibly have at a time where not only do you have tariffs, do you have changes in policies in Washington, D.C., but now you have what's going on with Iran and Israel threatening to disrupt oil supplies at a time when that will only add to some of the inflationary questions.
I think over $80. They're not there yet, but over $80 a barrel, things change.
Yeah, and this is why we're watching the Statement of Economic Projections as well as what we might end up getting from the forecasts in the dot plot. Right now in markets, you could see a bit of calm. You've got equities that are rallying despite some of that uncertainty. Just to give you a perspective, since the last meeting on May 7th, S&P is up almost 7%. When you take a look at yields, they are up materially, about 10 basis points on the 10-year, up from on May 7th, the last time the Fed met, 4.36%. And crude lower, but still up materially since that last meeting. Coming up shortly, J.P. Morgan's Bob Michael, Kathy Jones of Charles Schwab, and Greg Peters of PGIM will be taking us up to the Fed rate decision at 2 p.m. We'll get immediate reaction from former Fed Vice Chair Rich Clarida, Diane Swonk of KPMG, and Deutsche Bank's Matt Lazzetti. And finally, breaking down Chair Powell's news conference, Stephanie Roth of Wolf's Research, Apollo's Torsten Slok, Subhadra Rajappa of SocGen, and BlackRock's Jeff Rosenberg. Joining us now, we are so pleased to say, is J.P. Morgan's Bob Michael. This is actually a big deal because they're going to release their quarterly summary of economic projections at a time where things haven't exactly gotten clearer.
Yeah, I don't think this is a boring Fed meeting. I think this is a historic Fed meeting. You've got the Fed dealing with a lot of things. Tariff policy could be something we haven't seen in a century. You could have a potential major conflict in the Middle East. And of course, when you look at the One Big Beautiful Bill Act, if that passes, you've got the extension of one of the biggest tax breaks in history. If it doesn't, you're going to have one of the biggest tax hikes in history. How does the Fed bring all of this together?
The question really will ultimately be, what is the reaction function? Where are they placing the emphasis right now? On data that does appear to be weakening, we are seeing a shift upward in the jobless claims over a 4-week moving period. You are seeing the economic surprise index roll over into negative territory, or on the potential for inflation from oil, from tariffs, from some of these policies that they don't really want to get involved with commenting on.
Well, that's why the summary of economic projections is going to be so critical this time. The last ones were in the March meeting. Of course, you've had Liberation Day, you've had the One Big Beautiful Bill Act, and now you've got Israel, Iran. So all of that, they have to weigh into that. We expect, of course, they've got to raise their expectation of inflation. So core personal consumption expenditures, we expect them to go up from 2.8 to 3.2. And they're going to bring down growth, probably from 1.7% GDP to 1.4%. and you'll probably see a tick up in unemployment from 4.4 to 4.5, and probably just one rate cut this year, not two.
From where you sit, is the job market cracked? I mean, 245,000 four-week moving average on weekly claims. I would say the majority of people say not yet, but how's our labor market?
It's on the knife's edge, and what you see in the weekly claims data is that businesses are neither hiring nor firing. They're frozen. And you see that with continuing claims continuing to go up. That tells you that if you've been laid off, you can't find a job.
I'm not going to let this go, and I like that we have three bond people up top. I think the bond market's speaking right now versus the equity market. I want to look at the 10-year real yield. I'll let you pick the duration. But what's amazing to me is it's still range-bound. Do you predict that the inflation-adjusted yield will break down to a new lower, disinflationary, slower, sluggish tendency, or can it break up with all the geopolitics we've got?
It's probably likely to break up. I think there will be an expectation that as all these different policies take shape and are deployed, that's going to create a lot of anxiety and volatility in the market. Break-even spreads will have to accommodate for that. So
is it rude to ask for a level at this time of our Fed show? Let's ask for a level. 203. Can you give me a number to 2 decimal points up? 220?
Yeah, I think you're looking close to 2.25%.
Farrell would never let me do that.
Well, John will be back next Fed meeting, so don't get too excited. There is this question, though, and you raise it in some of your expectation, and this is the baseline expectation that they are going to raise their inflation expectation, downgrade their growth, and also reduce the number of rate cuts that they have. Doesn't that imply that they see the potential inflationary shock as being something more than transitory? I know that T word is somewhat contentious. At the same time, people are pointing to that weakness that Tom was talking about in the labor market and saying, why not weigh in on that if you think that this is actually going to be a passing trend?
I think what it tells you is they're in a pretty good spot right now. Nothing's really broken. Yeah, everything could move materially in one direction or another. So why shift things in anticipation before you know what the actual policies look like and the impact to the economy?
Meanwhile, as Tom was mentioning at the top, there has been this drumbeat from the White House, and we only got that again this morning when President Trump came out and said the Fed should really be about 2.5 points lower, saying that they should reduce the rates that much, and then saying, I would be a really good Fed chair, and he'll be out the second that his term is up. At what point do you think that really starts to color the press conference in terms of how the Fed wants to color their decision, even if it is based purely on the economic data?
Yeah, and I think there's been a lot of conversation. If you bring the Fed funds rate down to 1 7/8%, you're probably going to see the 10-year go up to about 5%, maybe higher. We have history for that. 1992 to 1994, the spread from Fed funds to the 10-year was 300 to 400 basis points. And that was another period where the markets felt the Fed was overstimulating. He's going to get asked a lot of questions about that. Why not?
Why shouldn't he answer them? We have a template of McChesney Martin in 1951. We have the Vietnam War, LBJ, really unhappy. Maybe it was Nixon, I can't remember right now. What is this silence that we get from Powell? He should make some form of defense of the institution today, shouldn't he?
I'm sure he will. I'm sure he'll defend the integrity with which they look at inputs into their decision-making process and the summary of economic projections. In the past, he has admitted that there are wide dispersions of time. Not everyone is in agreement. We think this time there will be unanimous on not changing rates, but I think he will defend the institution.
Let's say the Fed were to cut rates, not by necessarily 2.5 percentage points, by let's say a percentage point. How much would long-term yields rise based on the current expectation of an elevated trend of inflation for a longer period of time?
Probably not a lot. I think the market is expecting about 100 basis points in rate cuts over the next year. I think everyone has moved to a December rate cut and 3 more early part of next year. So that's already effectively in the market. It would be interesting to see what that does to the 10-year. Does it bring it down a little bit? And does that create a more positive dynamic for the housing market? That's the one thing that worries us the most. When you look at the housing data today, it's at a cycle low.
Yeah, and that was something that we saw in economic data that we got earlier this morning. We've been getting consistently. I am just wondering how much that forecast for a front-loaded or back-loaded rate cuts next year stems from the fact that we're going to have a different Fed chair, who potentially will be a little bit more dovish.
Yeah, that's the case. Look, Fed officials are political appointees. They're not voted in. So they're going to be appointed based on their views and beliefs and what the administration wants to endorse.
So did you hear that, Tom? He said that this is actually going to be a riveting meeting. So we should all be
I
very
agree,
clear.
and I've changed my tune. I was not, did I think it was a snooze fest? Maybe. But we have migrated from that. At least I think this is important to state. We're fighting 2.5 wars. We're fighting Ukraine. We're fighting from Israel to Persia. And we're fighting, with great respect, half a war in Gaza, I guess. So it's 2.5, if not 3 wars. When did we have a Fed meeting with 3 fronts, ever?
Well, with 3 fronts on one side and then a home front with a question of policy. And Bob kept talking about the bill that may or may not get passed, with the CBO putting out that it would increase the deficit some $2.8 trillion over the next 10 years. How much does that factor into a Federal Reserve who is being accused of raising the costs for this government by the president? This is something that he's going to have to discuss today. I'm sure he'll get asked about it. Bob Michael of J.P. Morgan is sticking with us, which we are so pleased about. Coming up, we've got Kathy Jones of Charles Schwab and Greg Peters of PGIM as we count you down to that Federal Reserve decision. This is Bloomberg. Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, The Fed Decides.
Live on Bloomberg Television and radio, good afternoon. Counting down to another Fed rate decision and Chair Powell news conference. Alongside Tom Keene, I'm Lisa Abramowitz. Someone is missing, Tom, I believe.
Missing. I just got a message from the Bank d'Italia, and he's 24 miles south of one of their branches. I think it's an island.
Yeah, well, somewhere beautiful. And unfortunately, he is missing the most riveting Fed meeting since the last one.
Certainly most political. My word, the comments this morning.
How about it from President Trump coming out and saying he should be the head of the Federal Reserve? Honestly, quite a time for him to be coming out.
It's going to be a long show, the press conference. He's got to rebut the comments today. Look, he's got to say something.
There's that. There's also this question of how much uncertainty can you possibly have at a time where not only do you have tariffs, do you have changes in policies in Washington, D.C., but now you have what's going on with Iran and Israel threatening to disrupt oil supplies at a time when that will only add to some of the inflationary questions.
I think over $80. They're not there yet, but over $80 a barrel, things change.
Yeah, and this is why we're watching the Statement of Economic Projections as well as what we might end up getting from the forecasts in the dot plot. Right now in markets, you could see a bit of calm. You've got equities that are rallying despite some of that uncertainty. Just to give you a perspective, since the last meeting on May 7th, S&P is up almost 7%. When you take a look at yields, they are up materially, about 10 basis points on the 10-year, up from on May 7th, the last time the Fed met, 4.36%. And crude lower, but still up materially since that last meeting. Coming up shortly, J.P. Morgan's Bob Michael, Kathy Jones of Charles Schwab, and Greg Peters of PGIM will be taking us up to the Fed rate decision at 2 p.m. We'll get immediate reaction from former Fed Vice Chair Rich Clarida, Diane Swonk of KPMG, and Deutsche Bank's Matt Lazzetti. And finally, breaking down Chair Powell's news conference, Stephanie Roth of Wolf's Research, Apollo's Torsten Slok, Subhadra Rajappa of SocGen, and BlackRock's Jeff Rosenberg. Joining us now, we are so pleased to say, is J.P. Morgan's Bob Michael. This is actually a big deal because they're going to release their quarterly summary of economic projections at a time where things haven't exactly gotten clearer.
Yeah, I don't think this is a boring Fed meeting. I think this is a historic Fed meeting. You've got the Fed dealing with a lot of things. Tariff policy could be something we haven't seen in a century. You could have a potential major conflict in the Middle East. And of course, when you look at the One Big Beautiful Bill Act, If that passes, you've got the extension of one of the biggest tax breaks in history. If it doesn't, you're going to have one of the biggest tax hikes in history. How does the Fed bring all of this together?
The question really will ultimately be, what is the reaction function? Where are they placing the emphasis right now? On data that does appear to be weakening, we are seeing a shift upward in the jobless claims over a 4-week moving period. You are seeing the economic surprise index roll over into negative territory, or on the potential for inflation from oil, from tariffs, from some of these policies that they don't really want to get involved with commenting on.
Well, that's why the summary of economic projections is going to be so critical this time. The last ones were in the March meeting. Of course, you've had Liberation Day, you've had the One Big Beautiful Bill Act, and now you've got Israel, Iran. So all of that, they have to weigh into that. We expect, of course, they've got to raise their expectation of inflation. So core personal consumption expenditures, we expect them to go up from 2.8 to 3.2. And they're going to bring down growth, probably from 1.7% GDP to 1.4%. And you'll probably see a tick up in unemployment from 4.4 to 4.5, and probably just one rate cut this year, not two.
From where you sit, is the job market cracked? I mean, 245,000 4-week moving average on weekly claims. I would say the majority of people say not yet, but how's our labor market?
It's on the knife's edge. And what you see in the weekly claims data is that businesses are neither hiring nor firing. They're frozen. And you see that with continuing claims continuing to go up. That tells you that if you've been laid off, you can't find a job.
I'm not going to let this go, and I like that we have 3 bond people up top. I think the bond market's speaking right now versus the equity market. I want to look at the 10-year real yield. I'll let you pick the duration. But what's amazing to me is it's still range-bound. Do you predict that the inflation-adjusted yield will break down to a new lower, disinflationary, slower, sluggish tendency, or can it break up with all the geopolitics we've got?
It's probably likely to break up. I think there will be an expectation that as all these different policies take shape and are deployed, that's going to create a lot of anxiety and volatility in the market. Break-even spreads will have to accommodate for that. So
is it rude to ask for a level at this time of our Fed show? Let's ask for a level. 203. Can you give me a number to 2 decimal points up? 220?
Yeah, I think you're looking close to 2.25%.
Farron would never let me do that.
Well, John will be back next Fed meeting, so don't get too excited. There is this question, though, and you raise it in some of your expectation, and this is the baseline expectation that they are going to raise their inflation expectation, downgrade their growth, and also reduce the number of rate cuts that they have. Doesn't that imply that they see the potential inflationary shock as being something more than transitory? I know that T word is somewhat contentious. At the same time, people are pointing to that weakness that Tom was talking about in the labor market and saying, why not weigh in on that if you think that this is actually going to be a passing trend?
I think what it tells you is they're in a pretty good spot right now. Nothing's really broken. Yeah, everything could move materially in one direction or another. So why shift things in anticipation before you know what the actual policies look like and the impact to the economy?
Meanwhile, as Tom was mentioning at the top, there has been this drumbeat from the White House, and we only got that again this morning when President Trump came out and said the Fed should really be about 2.5 points lower, saying that they should reduce the rates that much, and then saying, I would be a really good Fed chair, and he'll be out the second that his term is up. At what point do you think that really starts to color the press conference in terms of how the Fed wants to color their decision, even if it is based purely on the economic data?
Yeah, and I think there's been a lot of conversation. If you bring the Fed funds rate down to 1 7/8%, you're probably going to see the 10-year go up to about 5%, maybe higher. We have history for that. 1992 to 1994, the spread from Fed funds to the 10-year was 300 to 400 basis points. And that was another period where the markets felt the Fed was overstimulating. He's going to get asked a lot of questions about that. Why not?
Why shouldn't he answer them? We have a template of McChesney Martin in 1951. We have the Vietnam War, LBJ, really unhappy. Maybe it was Nixon, I can't remember right now. What is this silence that we get from Powell? He should make some form of defense of the institution today, shouldn't he?
I'm sure he will. I'm sure he'll defend the integrity with which they look at inputs into their decision-making process and the summary of economic projections. In the past, he has admitted that there are wide dispersions of time. Not everyone is in agreement. We think this time there will be unanimous on not changing rates, but I think he will defend the institution.
Let's say the Fed were to cut rates, not by necessarily 2.5 percentage points, by let's say a percentage point. How much would long-term yields rise based on the current expectation of an elevated trend of inflation for a longer period of time?
Probably not a lot. I think the market is expecting about 100 basis points in rate cuts over the next year. I think everyone has moved to a December rate cut and 3 more early part of next year. So that's already effectively in the market. It would be interesting to see what that does to the 10-year. Does it bring it down a little bit? And does that create a more positive dynamic for the housing market? That's the one thing that worries us the most. When you look at the housing data today, it's at a cycle low.
Yeah, and that was something that we saw in economic data that we got earlier this morning. We've been getting consistently. I am just wondering how much that forecast for front-loaded or back-loaded rate cuts next year stems from the fact that we're going to have a different Fed chair, who potentially will be a little bit more dovish.
Yeah, that's the case. Look, Fed officials are political appointees. They're not voted in, so they're going to be appointed based on their views and beliefs and what the administration wants to endorse.
So did you hear that, Tom? He said that this is actually going to be a riveting meeting, so we should all be
I
very
agree,
clear.
and I've changed my tune. I was not, did I think it was a snooze fest? Maybe, but we have migrated from that. At least I think this is important to state. We're fighting 2.5 wars. We're fighting Ukraine. We're fighting from Israel to Persia, and we're fighting, with great respect, half a war in Gaza, I guess. So it's 2.5, if not 3 wars. When did we have a Fed meeting with 3 fronts, ever?
Well, with 3 fronts on one side and then a home front with a question of policy. And Bob kept talking about the bill that may or may not get passed, with the CBO putting out that it would increase the deficit some $2.8 trillion over the next 10 years. How much does that factor into a Federal Reserve who is being accused of raising the costs for this government by the president? This is something that he's going to have to discuss today. I'm sure he'll get asked about it. Bob Michael of J.P. Morgan is sticking with us, which we are so pleased about. Coming up, we've got Kathy Jones of Charles Schwab and Greg Peters of PGIM as we count you down to that Federal Reserve decision. This is Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
The Fed sort of stuck between a rock and a hard place.
The Fed is in risk management mode.
They're definitely going to be on hold.
On hold.
So the Fed is really on hold.
Remain on hold.
The Fed won't cut.
I expect them to not do anything.
The Fed wants to be, quote, late to the game.
It makes sense for them to be on hold. They will continue to sit on their hands.
They're going to upgrade inflation. They're going to downgrade growth. They'll continue to say we're being patient.
The FOMC is prioritizing inflation over the labor market.
Powell will probably say that he will continue to wait for clarity.
You probably are going to get a lot more wait and see, a lot more to learn.
The Fed is going to wait and wait and wait.
Such an intro. The riveting Fed Decides, the countdown to the Fed Decides on Bloomberg TV and radio is right now. I'm Lisa Abramowitz alongside Tom Keene. Jonathan Farrow is on a well-deserved week off. I will just say right now, markets kind of range-bound as they assess all the potential risks in markets. They've come a long way, though, since the last Fed meeting on May 7th. You can see the S&P is almost 7% higher. Now it's up by almost 0.3%. Across the board, we have seen gains in the equity indexes, in part because of this this. You have seen this expectation with yields higher across the board since May 7th, but not running away. And that has been one of the concerns. Do you end up with this yield premium that really becomes pernicious? Right now, not so much, still up about 10 basis points, but the 10-year yield, 4.37%, I should say 10 basis points from the last Fed meeting. But oil, Tom, and this is, I think, what we're watching most closely. Oil prices materially higher since the last Fed meeting, up some 28% on the heels of what's going on.
There's a rule, and Bob will remember this from LIBOR OIS in 2007. You go 4 standard deviations. It matters. 2 days ago, Brent crude went 4 standard deviations within a very tight range. I don't want to say a lot about it other than we haven't hit 80 yet. People are modeling out hundreds. I don't have the name. I can't remember, but somebody modeled out a 1.5% hit to GDP with $100 oil. I don't want to be inflammatory on that other than it's moving up. It's part of the mix. You know, I like the headline here moments ago. This, you know, Powell could say this today on cutting rates. I may do it. I may not do it. We may get that from Jerome Powell.
I'm guessing that that's not going to be the case. Joining us right now is Kathy Jones of Charles Schwab, who I'm sure agrees with me, and Bob Michael of JP Morgan is still with us. Kathy, thank you so much for being with us. How much is this Fed going to have to respond to what's going on with respect to oil prices, in addition to what we have already learned, both on tariffs or not, as well as the budget?
It's just another layer for the Fed. I mean, it's just like this layer cake that you just keep adding on one risk, one policy issue after another. So on top of tariffs, on top of the budget bill, on top of the multiple wars, now we're going to have energy prices as an input. And I think that this makes it even more complicated, and it was already really complicated to start with.
And part of this is the guessing of GDP. We were talking to Bob about it before, and whether it's a nominal GDP mystery of what inflation's going to do, or even real GDP. Do you get a sense that there's a real dispersion of wonderment about where real GDP is the end of the year, or dare I say out 12 months to Q2? It's next year's 2026, is that right?
You got this.
Nailed it.
Oh, we got the year now. I don't know that there's a lot of dispersion on expectations yet. I think we haven't even gotten to the end of the 90-day pause on tariffs, so we don't even know what the effective tariff rate is going to be longer term. So I think a lot of people are still modeling kind of a muddle along, not bad kind of GDP growth because consumers have hung in there. But I think as we get over the next couple of months, what we're probably going to find out is how's the labor market holding up, how's consumer spending therefore holding up, and what do all these policy changes have? What impact are they going to have?
At a certain point, though, and I got to say, Bob, we do have some certainty. And this is something that I think people should recognize, that tariffs are going to be on, that you do have an economy, that, yes, it is weakening, but it's not falling off a cliff. I mean, don't we have that base case, and then they have to give us some sort of scenario analysis for what they do with some kind of stagflationary type of situation?
And you've got the CBO out there scoring what the revenue from tariffs is, which, by the way, magically exactly matches what the One Big Beautiful Bill Act will spend over the next 10 years. So, yeah, I think it's incumbent on the Fed to give us some answers this time. They have enough information. They can talk about what they use to model and then what the tail scenarios are.
We thank Neil Dutta for listening today with Renmac. Thank you for the note, Neil. And Neil just says, look, the consensus always is behind. They'll pencil in whatever, and they'll be there after it happens. To me, what's missing here is the drama of the president, 2%. He wants 200 basis point drop. The drama of President Trump, you know, I can do it down 100 beeps, down 200 beeps. What's wrong with a 25 beep cut? Multifamily housing's down 23% or something. The housing market's flat. Jobs are getting tense. Just go down 25 beeps and say, we'll look at it next meeting. Why can't they do that?
Well, they could, but there's all the uncertainty of what these big policies will look like. What will the bill going through Congress eventually look like? Where will tariffs settle? What will happen in the Middle East? They need a few more answers. And right now, everything looks okay. Most of the time, we would look at where the labor market is, where inflation is, where growth is, and say, we would take it 9 out of 10 times. So I think they're smart to just sit here, tell us that they believe policy rates are slightly restrictive, and then wait for an opportunity to bring them down.
Kathy, do you think they should weigh in more on the hawkish or the dovish side, considering the weakness that we're seeing in the economy in tandem with some of the inflation fears that have really abetted quite a bit?
Yeah, I think the problem with being too dovish right now is that there's a lag time between tariffs and when it might hit the price level. There's a lag time in so many of these things. Energy prices be a lag time. And they are further from their target on inflation than they are from their mandate on unemployment. So if you remember last time, Powell said, we look at how far we are away from our targets and we set policy based on that. Well, they're further away on inflation than they are on unemployment. So that would argue not to be too dovish at this stage of the game.
Which raises the question, and this is something that John would be saying if he were here. He'd say sometimes you can learn more about how the market reacts than even the news itself. Joining us now is Greg Peters of PGIM. Greg, from that perspective, how much are you expecting the market to really want to hear a dovish message versus a more hawkish one when you take a look at longer-term bond yields that are a little bit more controlled than they have been, but still nudgy?
Yeah, I mean, the bond market's been in a very volatile range for several years now. The market is clearly leaning more dovish. I think they're going to be sorely disappointed. I think the Fed is focused on inflation. And the market is, focused more on the growth side. What you're also seeing is kind of forward path of rates is baking in this new Fed regime, whatever that means. So, what does the Fed look like post Powell? And so the market is really skewed one-sided around rate cuts and the amount of rate cuts as you go out the curve. And I'm not sure the inflation dynamics or even the growth dynamics support that.
What do you see in the comparison of nominal to real yields in the bond market, Greg, right now? What's the dynamic just the last couple of days between the nominal, full faith and credit and the real yield?
Yeah, I mean, you look at real yields, they're, just call it, above 2%. That's, pretty substantial. I think that's, on the higher, end of the range. I would expect that to come down, but, you could interpret that, the beautiful thing about yield and real yield, you can interpret that, a couple different ways, right? It could be a strong macro growth story, or there could be something more nefarious. So I think that, real yields are a little too high, but not dramatically so.
Greg, what Bob Michael was talking about was that this is a Fed that's going to have to give some answers. They're going to have to answer how the reaction function really does change as their dual mandate comes into conflict. And we do see something more akin to the stagflationary picture that the summary of economic projections is likely to show. What would you like to hear? And what would your question be if you were in that meeting talking to Fed Chair Powell?
Yeah, well, I think Bob's going to be severely disappointed because I don't think you're going to get answers. But I think, I think they're going to dance around, in the environment. But, quite frankly, I would ask the employment question. I think this economy and even inflation hinges around employment. You have seen some weakening. There's some seasonal adjustment factors there as well. But really trying to hone in on how important is the employment picture and what are the targets that you're looking at, whether it's quit rates, whether it's, any other measure they want to put forth. But I think it's all about labor, and we're getting lost in kind of the other narratives.
What do you see across the Schwab network? We're talking a big fancy bank here, boutique fancy people over in Jersey City at Prudential. What do you see in the real world of Charles Schwab from your clients?
I think certainly retail investors are very nervous because we have all these policies, very uncertain. It's been volatile. And I think they're very nervous about what they're doing, broadly speaking, is keeping some duration, but not too much. So we've been advocating kind of a middle ground, intermediate term duration. They're finding the yields are relatively attractive. If you go into investment grade corporates or municipal bonds have been very attractive. Yeah. They're finding a spot where they feel secure because they are a bit nervous about the equity market.
Microsoft's $1.20 below its record high of 2 days ago. I mean, I find retail here to be just absolutely fascinating of the nervous and OMG, what's going to happen. Long-term has become two-year paper in a stock market that's up near record highs.
I'm still trying to wrap my head around your croissant that's down $1.20 since a week ago. I mean, go figure, it sounds like a bad business practice. I am curious, though, about how much they see the risk as inflation versus weaker growth. And that really is going to be the quagmire for the Fed.
Yeah, for the Fed, I think that is what comes first, what's the order of magnitude of either one. That's what they're trying to assess, and that's why the consensus is they're on hold, because these things are still playing out. We still don't even have all the policies. It still has to finalize some of these policies that are conflicting in some ways. You know, they're gonna slow growth and they're gonna raise inflation. But then on the 6 months from now could go the other way. That's a really tough environment to set a policy.
You know, Bob, I find it interesting because you've come on the show, and earlier in the year you talked about a sub 3% across the curve yield on 10 years, 2 years, and 30 years. That's obviously changed, and you have changed some of your outlook. But I wonder if it's based on some of the Sell America trade, if it's based on inflation, or if it's based on something related to just supply and demand having to do with yield term premium based on Washington, D.C. and that big, beautiful bill.
Well, I think there are a couple of things. One, tariff policy is far more aggressive than we originally thought it would be, and it's going to settle in above levels we had expected. The One Big Beautiful Bill Act, that came out to be much higher in terms of incremental spending than we had also assumed. And I think the combination of those things just made you pause and say, what's the Fed going to do? They're probably going to hold off. Greg mentioned that the rates market has been relatively volatile. We're taking the other side of it. It's remarkable to us how stable it's been. I'm surprised the 10-year Treasury isn't 5%. Fed funds is 4 3/8. It's been 4 3/8 for a while. We've already had half of the year go by, and one after another rate cut that was expected pulled off the board. So that's already happened, and the market's on board with a rate cut in December. You could take that off the board. I don't care. We're 4 3/8%. We've been there for a long time, but we see it because we have meetings every day with people looking to get into the bond market. I've not had a single meeting this year with anyone saying, oh, I've got to get out of the bond market. When do I get out? How do I get out? It's all about, is this the time to get in? Where should I go? About de-dollarization.
Greg, just quickly, a final word from you.
No, I think of all the things that are going on, I think this Fed meeting is probably the least important, right? They are just reacting to, all the events that are unfolding that we're discussing and the uncertainty. So I think definitionally you'll see a Fed behind the curve. And I think there's no way to get around that fundamental fact.
Kathy Jones, Greg Peters, to both of you, thank you so much. This is the countdown to the Fed decides on Bloomberg TV and radio. We are just about a minute and 10 seconds away from that Fed decision.
Any dissent?
I don't know. I
don't think so.
I'm guessing that probably
not. Given the president on the lawn today, I don't. If I was dissenting against Jerome Powell today, he's under fire. I mean, they're coming out of the trenches after him.
And there's no reason for them to say that they should cut rates. The dissent will be expressed maybe in the dots, because we are going to be getting the dot plot, which I know they all love very much.
You know how much
all of a sudden, if you start to have people pulling dots off the base in terms of how many rate cuts this year and only one getting gamed out in those dots, how much does that really put the fire on Jay Powell?
We need James Bullard to come back and give us that lowball dot.
Yeah, well, he actually was thinking, he took the other side of that. We actually caught up with him earlier today, and he said that this is a Fed that should recognize more greatly the weakness in the U.S. economy, as evidenced by the downside surprises, as well as what we have seen with respect to the labor market and the housing market. Neil Dutta, that's just for you. Heading into that meeting, into that decision, we are staging a rally up about 1/3% for the S&P and NASDAQ. Russell 2000, more dependent on Fed easing, up almost 1%. Right now, let's head over to that decision.
No change in rates, very few changes to the statement, no change to the dot plot, and some expected changes to the outlook. Fed officials still forecasting 2 rate moves by the end of this year, as 7 members now forecast 2 cuts, 2 more than in March, or forecast no cuts rather, 2 more than in March. 4 see just 1 cut. They do see 1 less cut than they had for next year. The biggest change to this statement is the balance of risks. Uncertainty about the economic outlook has diminished, it says, but remains elevated. In May, the committee said uncertainty had increased further and that the risks of higher unemployment and higher inflation have risen, a phrase that is dropped from the statement today. They also changed their labor market outlook to say unemployment remains low rather than May's stabilized at a low level in recent months. Labor market conditions remain solid, they say. The forecast sees only a slight increase in unemployment by the end of this year to 4.5% from their March forecast of 4.4%. Unemployment will remain at 4.5% next year. Inflation, however, is forecast to rise significantly. It will end this year at 3%, up from a 2.8% projection in March. Headline inflation was 2.1% last month. Core inflation will be 3.1% this year, up from a March forecast of 2.8%. Growth should slow, rising 1.4% this year. That is down from a projection of 1.7% in the March SEP. The neutral rate remains at 3%, though some members think it may fall in 2026. The decision was unanimous, so the bottom line basically is with fiscal policy, tariffs, and taxes still undecided, there is still too much uncertainty for officials to give a clear answer as to the path of how monetary policy will respond.
Mike, thank you so much. Great work as always. That's Michael McKee, our correspondent for economics. We're looking right now at a reaction in markets that is treating this as a dovish message. We are seeing a rally into bonds across the board, a sharp rally in the 2-year in particular, and that is extending into equities. What you're seeing is down almost 5 basis points for the 2-year yield, 3.9%, partly because of the dots, the idea that they are keeping 2 rate cuts getting priced in or gamed out for the dots. That, I think, is the news of so far the statement.
Based on all my conversations, you're dead on. It's really important that they're gaming out 2 more rate cuts this year. There's a wide body of people that say, show me the evidence.
Joining us now, former Fed Vice Chair Rich Clarida. Bob Michael still with us. Rich, what's your take on their reluctance to get rid of one of those rate cuts getting gamed out in the dots?
Yeah, Lisa, I thought going in it was a close call. I actually thought they would get rid of one of those cuts. So I think you read it well. It is a dovish lean from the committee. I do note that apparently they took out 1 cut next year, but that's way down the road. So they still have those 2 cuts in, even though they see more inflation than they did in March. I
look, Richard Clarida, say Jeffrey Frankel at Harvard years ago, saying we've got to go beyond the dual mandate. Within the scope and scale of your economics and what you did at the Fed, line up the priority of those things: employment, inflation, economic growth, or the side distractions we have from the president. Line up those distractions forward for Jerome Powell.
Well, I think right now, look, the economy's in a pretty good place. The labor market is at or close to full employment. Inflation has been coming down this year. I think right now the third factor is the uncertainty about the tariffs, probably also on fiscal. I do think that if we had not had the overshoot in inflation in the last several years, then we would probably be already signaling a rate cut at this meeting. So I think there is some history dependence here as well, Tom.
Bob, what's your take on this in terms of what we were expecting, which is 1 rate cut getting priced in, one of them getting priced out, and what we did see, which is a sort of stagflationary mix of a downgrade to growth and an increase in inflation, but not as much as we were expecting. What's your take? Are you surprised?
I am surprised. I'm surprised they left in 2 cuts this year. Obviously, they're paying a lot of attention to the housing market and to the labor market. Both of those show signs of potentially cracking. Yeah,
President Trump weighing in earlier on the Fed today at a press conference. Take a listen to what he had to say.
Maybe I should go to the Fed. Am I allowed to appoint myself, Doug? I don't know. Am I allowed to appoint myself at the Fed? I do a much better job than these people. So anyway, we should be 2 points lower.
Rich, how much do you think this is actually weighing on what we're hearing or what we're potentially going to hear from Fed Chair Jay Powell later today? This idea that there are a lot of people in markets saying that rates should be lower, and you also have the president increasing the pressure.
I don't think it's so much. Look, Jay Powell has a lot of experience with criticism from the White House, and so I don't think that's going to be a factor at all. But look, the inflation data has come in better than a lot of folks, probably even the Fed, expected. We are seeing some slowing in the labor market. You know, Lisa, I think a factor now is they're also having to deal with what is a fully employed economy given what's going on with immigration right now. So we're going to have probably some slowdown in the labor force from that. Engaging that is an additional complication to the decision, I think.
I'm going to do this for Stanley Fischer, the late, great Stanley Fischer. He
Yeah.
lectured me, folks. A little bit of math time here. Lisa said, Pharaoh would never let me do math. We're doing math. I think it's a clarification, Bob Michael, that we talk about 2 rate cuts, and the President of the United States is talking about 8 rate cuts. 2 full percentage points. And we don't understand, he's talking about jumping down a point and a point, like a real estate guy. What would happen to our world if we were so abrupt as to go halfway to 100 basis points, or all the way to a presidential 200 basis point 8 rate cuts? What would happen?
You're betting on a number of things. The first thing you're betting on is that tariff policy would create a significant headwind to the U.S. economy, and businesses and households would just stop spending. So now you're creating a lower cost of funding for them to step in and start spending. You're also betting on the One Big Beautiful Bill Act doesn't get passed in its current form, that it gets dialed down quite a bit. So that sort of offset to tariff policy isn't quite there. I think those are 2 mighty big bets to make here. I would just stick with tinkering with the dots.
Tinkering is the key thing here. We have a 50-year history, Claire is expert at this, of tinkering and not jump conditions like a real estate guy from New York.
Well, the tinkering will actually make the press conference a whole lot easier because it'll give Fed Chair Jay Powell a bit of a pass in dealing with some of the political questions. Joining us now, Diane Swank of KPMG. Diane, were you surprised that this Fed leaned dovish at a time when even people in the market, putting aside President Trump, have talked about how inflation, as Rich just mentioned, has been coming in weaker than a lot of people had expected?
No, I'm not surprised. I think this is an important issue. The Fed says they're data dependent. They have to respond to that, but they're not going to cut right now. And that's the most important thing. We've got a forecast where the Fed is actually more stagflationary, which I think is what you pointed out. And that's important. And, you know, whether or not we believe it's 2 or 1 rate cuts, time will tell. And the Fed is in this really policy purgatory where they're unable to move because of the uncertainty ahead and the fact that we know that tariffs were not all collected. The effective tariff rate in May was actually lower than what we know the effective tariff rate will be in June. And these things are coming in sequentially and in a staggered way that will show up later in the data. And that's what the Fed's waiting to see.
And Diane Swank, the headline's simple here. Jennifer Pinero, thank you for this. 1.4% on growth and 3% on inflation. That's that Swank stagflation that we're looking at. What's your conviction that we would see a reduced GDP level?
Oh, I think we will see a reduced GDP level, and I think that's what the Fed is also acknowledging and why they're saying they might go the full 2 points. It's actually not that far off from our forecast as well. And in fact, if they get the forecast that they're saying, this would be a forecast where inflation sort of peaks around 3.1% on the core and then starts coming down by year end. And they feel convinced that it will continue to come down by year end because weakness, the unemployment rate starts to creep up, but it doesn't creep up fast enough to trigger an official recession.
Diane, I'm so glad you mentioned this, Rich. And Rich, I would love your thoughts on this. You were talking about how they have gotten inflation data that has been better than expected, weaker than expected. I'm looking at the unemployment rate that they're forecasting, and it went up from 4.3% from the March summary of economic projections to 4.5% in this latest one for 2025 and for 2026. It raises a question, especially what you were talking about, the demographic shifts, just what this feels like in terms of the labor market tightness or not, given how much we have seen immigration affect the picture.
Sure. Well, because the immigration is going to show up in the growth in the labor force, and it's going to obviously show up in employment or unemployment. So I think it's a complication in the sense it makes their signal extraction problem even harder. I guess one thing I would say, Lisa, and I like the term policy purgatory, Diane, because I think it captures it well. One thing I would say is 4.5 is a number, so we'll talk about it, but there's a big range of outcomes for the unemployment rate, especially 12 months down the road. So I think there's a chart in the SEP that will show uncertainty about unemployment, and that's probably pretty elevated as well.
Professor Clarida, are we unanchored? And I say that within the great central bank fear of lessons learned, particularly from Japan years ago. Oops, we raised rates. Oops, we got to turn around. Lots of oops. Are we unanchored where there's a new monetarist fear out there of monetary policy people, I should say?
Tom, I don't think so. You know, there was a paper at the recent Fed conference about unanchored inflation expectations, so I know it's on some folks' mind. I don't think we are. In fact, I think Jay Powell's focus really right now for the remainder of his term is to be darn sure that when he leaves, that we are anchored. And I think, you know, that's probably part of what's going on, and we'll hear about it today at the press conference.
Is there anything that gives you pause, Bob, about the idea that maybe we aren't really fully appreciating some of the inflationary risks at a time when, yes, the backward-looking data has been better than expected, but looking forward is pretty complicated right now?
You know, I was sitting here thinking, actually, the Fed did almost exactly what everyone expected. They didn't hike rates. When I go through their forecast on GDP, inflation, and unemployment, directionally, they're where everyone was headed, so they kind of matched that. And I think 3% inflation looks to us to be very aspirational. When I look at Mike Feroli's forecast, he has inflation peaking at 4.6% in the third quarter. And that's on a seasonally adjusted annualized rate, but that's a very high number. So I think, yeah, there is some risk that we may be underestimating what tariffs and higher oil prices could do to inflation, and whether the One Big Beautiful Bill Act has enough power into it that it helps to entrench higher prices.
And Diane Swank, with your charm of the Midwest, there's one big beautiful interstate system out of Chicago moving south, which is directly affected by goods, tariffs, and the rest of it. What do you observe in the Midwest? Are the tariffs clicking in now? Advise the chairman.
Well, they know what's going on. They're hearing it from everywhere. And what we're starting to see is not only are firms doing whatever they can to mitigate the costs of tariffs, they're also starting to see some disruptions due to supply chain problems that you can't undo overnight. And I think that's very important as well. That's only just beginning to seep into the data, but it's very reminiscent of the pandemic. And I think that's why the Fed is still on so much guard. And this is a purgatory for them because they are very concerned that the unemployment rate will rise, or it may not be signaling, as Rich said, what it might have otherwise signaled, because we'll have pockets of tightness where immigrants used to be and they no longer are. We're already seeing that in the care economy, and we've been tracking it, and the slowdown in elder care in particular, where there's a disproportionate amount of foreign-born workers in that area, that employment has fallen basically to nothing. And in fact, that's where inflation is also moving up at several times overall inflation. So those are pockets that, you know, you get a little pocket of it. Is it enough for the overall economy? When you've got the aging demographics we do, that's something you want to worry about. Along with, we have childcare disruptions as well.
Diane Swank of KPMG, thank you so much for being with us. If you are just joining us, the rate decision was unanimous, and it was a decision to do nothing, at least when it comes to the actual rate, holding it in the benchmark rate zone of 4.25% to 4.5%. The one aspect, though, that caught everybody or some people off guard, Neil Dutto again would say, absolutely, this is not surprising, is that they are leaving their dot plot at 2 rate cuts for the remainder of this year. They did lower their GDP estimate it to 1.4% from 1.7% in the March summary of economic projections, and lifted inflation from 2.8 to 3%, but they still kept their rate cut expectations the same. Talked about uncertainty diminishing, but still elevated, Tom, at a time where we're all kind of in this policy purgatory that Diane was talking about.
I know you want to go to Matt Lazzetti here, but to me, the arch issue, I've said this, you've heard me, the Bramall Cam once got her, she was very upset at me, boring her with this. Can you aggregate America? If you're Richard Clarida at the Fed or Matt Lazzetti at Deutsche Bank or Bob Michael at JP Morgan, Greg Peters, any of them, can you aggregate American economic data, or is it a barbell economy of those healthcare workers Diane Swank just spoke about? They're desperate and unreplaceable, or fancy people you're living with every weekend north of New York City? I mean, which is it?
Well, you know what? This is a great time to bring in Matt Lazzetti of Deutsche Bank to answer all of those questions and address them. Matt, thank you so much for being with us. Let's start with your reaction. Do you view this as a dovish move by the Fed, as it seems to be treated in markets?
Look, I think it skews slightly dovish. We thought in a very close call that they would go to one rate cut this year rather than two rate cuts. But when you look at the overall change in their economic forecast, it's very much in line with what we anticipated. And you have a committee where 7 officials expected to not cut rates at all this year. That's up from 4 in the last SEP. They actually raised their dots in 2026 and 2027 because they think inflation is going to be a little bit more persistent. And so the way that I view this, the median for at least this year, it was kind of a managed kind of agreement that they would keep it at 2 cuts at this point in time. Don't want to rock the boat. There's still a lot of uncertainty in terms of how the outlook will evolve from here. But it's a committee that expects eventually to be cutting rates, but less so in aggregate than what they thought previously.
Matt Lazzetti, it's a 3-ratio effort. We don't need to go into the math. Where is productivity in America right now? Out of the pandemic, all the tech stuff, there seemed to be this zeitgeist that we were seeing increasing productivity. The overlay for Jerome Powell, is it still a productive America?
Yes, I think so. We've been very constructive on productivity growth coming out of the pandemic, mostly because we view productivity growth as being kind of a lagging indicator from a very tight labor market. So when you have extraordinarily tight labor markets, what you find is firms, see labor that is tight, difficult to find, and expensive in terms of high wage growth. That incentivizes them to find productivity enhancing investments, capital deepening, other efficiency gains. Now, there's a lot of volatility in the near term. You're having big shocks from trade policy uncertainty. You have a fiscal package that's coming through. But overall, on a trend basis, we're quite supportive and kind of constructive on productivity growth.
Taking a step back in terms of the uncertainties that this Fed is going to be having to deal with, there's a question about oil and how much it matters or doesn't. We're used to saying oil doesn't matter. You strip it out from core inflation and you take a look at what does matter. And yet it does seem to trickle into inflation expectations and potentially some of the costs of goods around the board. I'm just wondering, and I would love Rich and Bob to weigh in too, but Matt, from your perspective, how important is it to both growth and inflation to understand whether this is a sustainable level of oil prices that we've seen in the terms of the $16 rise since that May 7th meeting, the last time the Fed gathered?
Yeah, in terms of the growth impact, I think that impact has moderated over time as we've become a net exporter and energy production has become more important within the U.S. Obviously, it lifts headline inflation in the near term with a far more modest pass-through to core inflation as we look ahead. But I think you're exactly right, Lisa. The key area to focus is on inflation expectations because all measures that we have are highly sensitive to oil prices, including long-run market-based measures. So if you look at the correlation between oil and five-year break-evens or inflation swaps, that correlation is about 75% since 2014. And so if you do have a spike higher in energy prices, I think above these levels, most importantly, I think that is something that can move inflation expectations to more worrying levels for the Fed.
And Rich, what's your take on this? Because we heard from Bob that maybe we are underestimating just how inflationary not only the one big beautiful bill is and also the tariffs, but potentially also the oil price spike that could alter longer-term inflation expectations.
Exactly, Lisa. I think, again, given the history, they are attuned and attentive to inflation expectations. They don't take them being well anchored for granted. You know, the Fed and other central banks have a lot of experience over now decades of how to look through oil prices. But I think Matt is exactly right. In the context of where we are currently, with the history and also with the tariff uncertainty, I think it's yet another thing for Jay Powell and the committee to worry about, which is probably, again, why they're on hold at this meeting.
Bob, what do you expect him to say about this? The idea that traditionally oil price surges can be disinflationary, inflationary, stagflationary. How will he message it at a time where we do have enough certainty that he does, as you said before, have to give some answers?
Well, I think he'll point out a lot of things. I think he'll point out that the Fed understands it's one of the biggest household expenditures. So higher oil prices could translate into higher prices for gas at the pump, and that could cause households to pull back on expenditures elsewhere. I think he'll go back to things he's always been saying. It's about inflation expectations. Are they concerned that this becomes embedded in prices going forward, and then expectations become unanchored?
A sensitive question, Richard Clarida. I believe you were on the watch when Putin invaded Ukraine the second time, 2022. How does the Fed talk about geopolitics? Around the table, how do you talk about war?
Well, actually, I had moved on from the Fed at that point, but in general, you know, geopolitics is an ever-present uncertainty. Sometimes it spikes, as it is recently, at least in my experience, and the minutes and the transcripts show this. It's a pretty clinical, analytical discussion of how it feeds into inflation, demand, supply. At least in my experience, you know, Fed commentary doesn't really go into the politics side of the geopolitics, more just the economic side.
Matt Lozzetti, I think one thing important here, Bob Michael mentioned this earlier, is a surprise that yields aren't higher, whatever anybody can believe. Ken Rogoff mentioning 5, or I think at one point he got out of control and mentioned a 6% 10-year. Matt Lozzetti, are you surprised that yields aren't actually higher right now?
I think given some structural factors, the answer is probably yes. So the budget deficits that we are running here in the U.S., the outlook for the debt to GDP ratio, the idea that inflation might be somewhat higher and more volatile, and bonds may not be as good of a hedge for equities. All those suggest, I think, you know, over the more medium term, long-term yields are likely rising and term premium are likely to be higher. In the current environment, however, I think that is being offset by cyclical considerations and cyclical concerns, at least. And those concerns are still around the possibility that the uncertainty shock that we've had from trade policy and the impact of trade policy uncertainty will lead to weaker growth outcomes, a weaker labor market outcome, and that the Fed could need to cut meaningfully at some point in time. I think for the long end of the curve to kind of dislodge meaningfully higher and on a sustained basis, you probably need those concerns to completely dissipate, and we're certainly just not there yet.
I mean, Bob, the history here, you know, the young crew, I mean, including young Lozzetti, they 45 basis points on the vanilla 2s and 10s, the difference between the 10-year and the 2-year yield. You and I recall 200 basis points, 2 full percentage points difference. Are we just going to get used to a steeper yield curve?
Tom Pooh, we used to do 45 basis points on the curve in a day. This is total nonsense. But I think actually Mr. Lozzetti is right. He hit the nail on the head. It's going to take time to get there. You are still living in a post-Great Financial Crisis world where most of the investors who are sitting on desks only know a 0 to 2% Fed funds rate.
Right.
So this looks extreme to them. I think it's going to take time to mean revert to the normal that existed pre-financial crisis. Remember that first Fed dot of neutral policy long-term was 4.25%. It wasn't 2, it wasn't 3, it was 4.25%.
Okay, now my idea is James Diamond's going to have a phone call. He's going to be in Central Park running, and he's going to get a phone call from the president, and they're going to explain Bob Michael's x-axis here. President Trump's x-axis doesn't look like Jerome Powell's. How do you explain to President Trump to have patience to get the market to normalize away from the oddities of the last 5, 6, and 7 years?
Well, I think you have to look at how things look pretty healthy right now. Yes, there are storm clouds on the horizon, but we've now been talking about them for 2 quarters, and they haven't actually materialized yet. I know housing and the labor market feel a little bit softer, but the hard data hasn't actually reflected the breakage.
Rich, come on in here. Do you agree with this? I mean, honestly, I've heard this discussion so many times. I remember back in the day when I got a mortgage at 10%. At the same time, no one mentions the fact that their house cost about $90,000. So just saying, it was a very different time asset price-wise. Do you think...
At the table
well, no,
right
this
now.
is something that people always argue that. And I love that you said puh. But I'm just curious, Rich, from your perspective, is that something that this economy can handle? Rates where they are on the long end and even going higher in this sort of adjustment period that we hear Bob and even Matt talking about?
Well, you know, Lisa, we've been, the 10-year's been in this range of roughly the high 3s to just under 5 now for 2 years. We really got into this at the last Fed hike in July of 2023. The economy is handling it. We do think a higher real term premium is what investors are going to require in order to hold this debt. You know, we've talked about the bad news on deficits, but this bad news has been really priced in for a while. So we think the economy can handle it, will handle it. We do think that the curve eventually will steepen. Inverted or flat as a pancake curves are not the new normal, but it will take Fed cuts, as I think Matt Luzetti mentioned a moment ago, for that steepening to be actually realized.
Matt, there was a feeling yesterday that maybe if there were some regulatory changes at banks that would help the long end of the yield curve, that would suppress yields. And I'm talking about the supplemental leverage ratio and how there was discussion, and the Fed's going to meet to discuss it, about potentially allowing banks to hold more treasuries without getting penalized for it or having be charged anything. Do you think this would materially shift anything in addition to maybe adding some incremental liquidity? Would it actually cause banks to go out there and be bidders, be net buyers of treasuries in a new kind of way?
I think the impact is likely at the margin. I think many banks you don't actually think is being constrained by the SLR at the moment, and therefore easing up a little bit, I think, may not have as big of an impact as anticipated. I think also there was actually some hope or optimism that there'd be even greater relief around SLR, for example, excluding treasuries from the ratio. And so kind of the news reports around just kind of dropping the rate, I'm not sure are going to have as big of an impact as anticipated. But I think as you take a bigger picture on this, what you do see, and I think what's been hinted at by Rich and maybe Bob, is this idea that, look, I think foreign investor demand for U.S. treasuries and U.S. assets is likely to be declining over time. It looks like we are set to continue to run budget deficits as a share GDP that are 6.5% to 7% over the next several years. And it makes sense, I think, for the administration to look for ways to free up some demand from the domestic financial sector. And this is one way, at least at the margin, that they're looking to do so.
Rich, out on YouTube live chat, I'm getting torn asunder here. I mentioned the x-axis. This guy says, for those of you way, way, way in the back, the x-axis refers to time. Speaking of time, does a chairman have to come out, Rich Clarida, today and make a clear statement of Fed independence?
I don't think he needs to lead with that. He'll almost certainly get a question from the reporters. You know, again, Jay Powell's now been doing this for 7 years, and I think he has a record that doesn't really need to be, defended in that way. So I'm sure the question will come up, but I don't think he needs to lead with it. No.
Well, we do this every time before the Fed meeting. Imagine all three of you are in the room at that press conference. Bob, I will start with you since you always have your question handy. For Fed Chair Jay Powell, what would you ask if you were in that press conference?
I'd ask him how they modeled revenue coming in from tariff policy, because right now the CBO scoring is at $2.8 trillion. That's a big number.
And I'm guessing he will want to punt. Rich, what about you? What would you ask?
I would say Governor Waller's talked about a good news rate cut. What would it take to get it in July?
Ooh, compelling. And what about you, Matt? What would you ask if you were in that meeting?
Yeah, I think we want to get clarity or some view on what type of signal they want to send with 2 cuts versus 1. And so, what is the type of data? What is the confidence that they have around that? And does he want to lean into the signal of the dot plot or not would be my key question.
Matt Luzetti, Bob Michael, Rich Clarida, to all three of you, legends, thank you so much for being with us. And Tom, there you have it, a lot of hard questions today.
Well, you can see the steam coming up on my ears. Look, we're benumbed by what this president says about institutions, all institutions. What I heard on the lawn this morning about this central bank and its force around the world, somebody's got to come on. Vice Chair Clarida was graceful, I would say. I'll be less than graceful. He's got to say something to reaffirm McChesney Martin, 1951.
Well, and he has. He has come out and said that
the
Fed
again,
is
absolutely
independent from any kind of pressure. At the same time, the pressure is coming from markets as well. And I think that's important, that people in markets are saying there are signs of cracking in the labor market, there are signs of cracking in the housing market, there are signs of cracking even in retail sales, albeit it's a complicated picture. How does he respond to that? Jerome Powell is walking to the podium for the press conference. He is beginning his news conference. Let's listen in.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate, at 4.2%, remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country, and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer-run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Powell. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjusted over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term as you get out to the later years. It's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
You say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the war will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data including this morning, that have been pretty weak. Do you see any concerns that the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5–2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place? So
this is very much the conversation we had today and yesterday. There are many, many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point, it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate overall, and people are managing to that. But the pass-through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And we haven't been through a situation like this. And I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
Nick Tamarosa of the Wall Street Journal. Chair Powell, I guess I'm wondering if you could explain a little bit more the divergence we see in the dot plot, particularly around the 2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts. And they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So you put that in there too. So those are the two ways that the two things I think that drive these things. Remember, though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things. And I think as the data come in, you should see those differences diminish.
If I could follow up, you've said that policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not. We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's going to be the effects on spending and on hiring and all those things.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction. And I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers about the outlook for the economy.
Look, From my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with strong labor market and price stability. That's what we want. We think our policy is well positioned right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids picking up significantly, what kind of effect would that have on the labor market in the short term?
With what picking up?
Workplace raids.
So you're asking immigration?
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level, not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means, like, part of that is that labor demand and labor supply are kind of moving down at the same rate. Labor demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of how do we think our communications can be improved? There are a number of ideas. People offered a really, it was a great conversation. Number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really that only implement things that have very broad support. And also you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known as the guy that makes decision based on data instead of speculation. You've said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So what made you feel comfortable cutting then when inflation was higher than where it is today, and you didn't cut today?
Well, the forecast for inflation in December was 2.5%. Core PCE for 2025, the forecast was 2.5%, which is a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be, we've learned that the tariffs are going to be substantially larger than forecasters generally thought. And we don't, our forecasts are generally not particularly different from those of other, well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming and that would mean higher inflation. That's what happened. And so now you see You saw 2.5% forecast in December. You saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025, and that's a big part of the change, and that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates when it comes to mortgages, car loans. Small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. The best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis, that, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy. So I would say probably modestly restrictive. And so what it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects, and then we can start to make a better judgment. So that's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now. And inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months. And this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So. And what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional forecaster with adequate resources and forecasts for a living is forecasting a pretty significant, everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs, because someone has to pay for the tariffs, and it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind, or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost, but ultimately the cost of the tariff has to be paid, and some of it will fall on the end consumer. We know that because that's what businesses say, that's what the data say from past. So we know that's coming, and we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years though talking about how you're data dependent, and be a little more direct on this. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate there should be a rate cut?
No, I mean, your monetary policy has to be forward-looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again, right? So it's always forward-looking. If at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad, right? So we took very aggressive forward-looking because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, were in a bit of shock after April 2, but you see business sentiment, you talk to business people now, there's a very different feeling now that people are working their way through this, and they understand how they're going to go, and it feels much more positive and constructive than it did 3 months ago, let's say. So again, we think that our current stance of monetary policy is in a good place.
Thank you. Amara Mokwe with Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked, maybe not overstaffed. Then in a memo to staff in May announcing a deferred resignation program at the Fed, you said you wanted to ensure that the Fed was, quote, right-sized. Those two statements appear to be at odds with one another. Could you explain what changed in the roughly 3 months between those statements that made you decide that staff levels at the Fed should decline?
I don't see them at all as intention. So I was asked, is the Fed overstaffed? And I said no, and I sort of said as a pun, overworked but not overstaffed. People do work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we work hard, but I would say this. So we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our history, modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public, we're going to demonstrate that we are good stewards of public resources. So we thought, and I thought, that this is a time when we can, we grow at about, our headcount has grown at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a year, in a couple of years. We think we can do that, and we think this is without taking risk to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it again respecting that we have critical missions to carry out. I've had experience, a lot of experience in my prior careers, with headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions, and I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're gonna hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous, and so we actually really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and that the effects will be at the margin, I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks, and worries that long-running problems around funding and response rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
You know, two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see, layoffs and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and everyone, having really good data on the state of the economy at any given time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that, because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult, and it's so important that we get it right. I just would say it's not a place I would want to keep investing in that, for the good of the general public.
Victoria. Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair, and I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
The framework document goes back to 2012, and it's the committee's document. It's not like we're going to invent a brand new way to do things. It's been an evolving document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So, yeah, it isn't really tied to any particular chair. And we used to renew it every year. Now we do it every 5 years. So, but I don't think I've never heard anyone raise this issue that, a new chair might want to come in and go in a completely different direction. I really don't think that's right. But but that's not going to be up to me to decide.
Is that affecting at all who you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation? And what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So, of course, we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. Those things don't generally tend to have lasting effects on inflation, although, of course, in the 1970s, they famously did, because you had a series of very, very large shocks. But we haven't seen anything like that now. The U.S. economy is far less dependent on foreign oil than it was back in the 1970s. So, but there.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently been warning that AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements, including one today. I wouldn't, overread a couple of data points because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with it, with AI, will have been a little bit stunned at how capable it is. And it's just a different thing. So I think this is something that certainly has transformational potential. And probably we're in the very early stages of it. They say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. Of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, white collar, blue collar, and everything. So I just don't know. We don't have a house view on that, but this is going to be a very important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell. There's a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this profound change, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people some sort of explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to change how the movements of the dollar was impacting the economy. Are we going through something like that now? That, are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. From a geopolitical standpoint, from a trade standpoint, from an immigration standpoint, you see this not just here but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. But and it doesn't change our objectives or what we need to do. And these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. Will it be? There have been many things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. AI could cut in the very other direction. AI could make people much more productive and push in the other direction. I don't know, though. But you're right. But honestly, our focus is a much more practical one, and that is how do we keep inflation low and employment high in the near term. That's really what we're about.
Mark.
Hello, Chairman Powell. Mark Hamrick with Bankrate. What is the view about the growing amount of slack in the job market, including the softening in payrolls, the forecast of a modest rise in the unemployment rate, and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't really see unemployment going up. You don't see increased slack, really. At the margin. Remember, you're at 4.2% unemployment. That was, for many years, that was a extremely low level. It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You're right that the level of job creation has come down, but so has the supply of workers, the change in the supply, the new supply. So you've seen the unemployment rate remain pretty stable at 4.2. It's been as high as 4.3, but those are good numbers. So it's a pretty good labor market. There's a more concerning thing is there's not a lot of layoffs, but there are not a lot of job creation. If you're out of work, it's hard to find a job. But very few people are being laid off at this point. So that's an equilibrium we watch very, very carefully, because if there were to be significant layoffs and the job finding rate were to remain this low, you would have an increase in unemployment fairly quickly. But that hasn't happened. It really hasn't happened. The U.S. economy has defied all kinds of forecasts for it to weaken, really, over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken. Now, eventually it will, but we don't see signs of that now.
Go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. There's been a lot of talk about cuts. I wanted to ask you, why do you think there are no forecasts for rates to rise or even to stay where they are next year, given that the projection for inflation is to rise to 3%, and there's a lot of there's some skepticism over whether those price hikes will be a one-time event?
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So, I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime, we do the best we can with these forecasts, and I think they're representative of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
This is the Fed Decides on Bloomberg Television and Radio. That was Fed Chair Jerome Powell at the press conference following the central bank's decision to keep rates unchanged. What would you write down? I don't know. What would you write down? What about those dots? This is a Fed that sees a lot more certainty ahead, but not yet enough to make any moves. While Powell said that peak uncertainty happened in April, and we are getting some clarity, there's still a lot to learn until the data becomes clear. They're on hold and are in a good place. Take a listen.
We feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking.
Jerome Powell also asked about the situation in the White House, dismissing questions around the future for him on the Federal Reserve.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Is a retracement of some of the earlier moves. We are seeing bond yields actually climb back to basically where they were and then some from before the press conference. Tom, it seemed like this was a Fed chair saying that we are past peak uncertainty, but we probably will get more information later, so stop asking.
It's true, the press conference, looking at the correlation of equities, bonds, currencies, commodities, it was sort of up and downy and up and downy. And I didn't get any real conviction out of it. The one tone I saw from him that I hear in some conversations is, what if we're underestimating the power of this American economy? There's a gloomy call. The GDP numbers come down. Inflation's up. Woe is me. But, and that but was just there for a bit where he said, you know what? It is a resilient economy.
You have said the phrase that I think about all the time, which is that companies adapt and adjust. And we hear that from so many companies that are doubling down on some of their forecasts.
Particularly around tariffs.
Yes, exactly, because they have to look past that and they can handle some of these tariffs. What I thought was interesting was that this was a Fed chair that actually said if we were backward looking at the data, we probably would be cutting more quickly. But because of the tariffs and the forward expectation for more inflation, it does create a greater degree of uncertainty, which is the reason why we still are happy to stand tight.
You don't see this, folks, but Lisa, during the press conference, she's got one of those little clicker things like in a movie theater, and every time they say uncertainty, you're moving your thumb around. And there was
and you're drinking.
150, well, it's surveillance beverage time. The issue here, Lisa, is the uncertainty issue was given to them. They didn't invent it. The president's comments today, outrageous comments. Do you see what he did to McKee? He slammed Michael McKee after those rude McKee-like questions. Tariffs, Bob Michael saying, do we know what tariffs will raise? We have no clue what they will raise.
Which is the reason why they aren't necessarily going to make any big moves right now. Joining us now is Stephanie Roth of Wolfe Research. So pleased to say that you're here in studio. Stephanie, what was your take on a press conference where this Fed chair said that he had more certainty, but there'll be more later on?
I think the single most important line that he said is rates aren't very high. And when we're thinking about the next couple of months, what we're going to learn is more information about the reconciliation bill. So then they're going to incorporate that fully into the SEP, in which case that's going to look a lot more hawkish. So our base case is this year, they're not cutting. And the two cuts are going to eventually get sort of rolled away. At this point, they were very close on the edge of between 1 and 2, and they're probably going to eventually not end up cutting this year because the economy will be resilient and fine, and inflation's elevated.
On the core GDP equation, do you have any conviction at all in C, I, G, or NX? I mean, I don't know how you do it. I don't know how you come up with a real GDP statistic.
Yeah, we're looking for 1.4% GDP this year, so not that different from the Fed. But I think the important thing to focus on is for 2026, my forecasts are a lot higher than what the Fed has. I'm looking for something that's close to 2%, if not a bit above. Our forecast is that reconciliation bill could boost the economy by about 40 basis points. So that could be a notable acceleration versus where we are today. And that's what the market's going to start focusing on.
Lisa, help me. Is the reconciliation bill the big, beautiful thing?
It's one big, beautiful B. Okay. It's one 3B. Yes, we can.
Again, more uncertainty.
Well, that's the problem. And I really was struck by the idea that Fed Chair Powell brought to the fore, which is in response to Nick Timiraos of the Wall Street Journal's question, why aren't you looking at some of the weakening trend that we're seeing in inflation and say, you know what, we're actually quite restrictive? Why are you saying that this is actually an appropriate rate? And the Fed chair said, well, the reason why is because we have to look forward and we have to say this could potentially be inflationary and we don't know and we will learn more in the next couple of months, but we're not sure how much we're going to learn. Is that good enough for you? Does that ring true to you that that is an appropriate stance for this Fed?
I think it's fair for them to be in wait and see. They know that the tariffs will be inflationary. He very much emphasized someone's going to be paying the cost, and eventually they're going to try to get it to the consumer. And I think that's the right way to think about it. It's going to eventually flow through some portion of it to the consumer. Our numbers are similar to the Fed's forecast that inflation should be close to 3% at the end of this year. And at this point, we don't know how much. It's hard to forecast these things. But I think the main takeaway is inflation will be elevated this year, but growth should probably hold up just fine.
Which is essentially what they were saying, albeit at a slower pace. Right now, we're so lucky to have Torsten Slok of Apollo joining us. Torsten, thank you so much for being here. What was your take on the press conference, on the Fed stance, and frankly, the market taking this based in stride, not saying that they're getting much new information here?
I think the banner hanging over this entire press conference and the forecast is stagflation. They revised down GDP growth to 1.4 and they revised up inflation to 3%. That's telling you that they are beginning to worry about the things that are hitting the U.S. economy, and it's no longer just trade and tariffs that's stagflationary. Oil prices are also stagflationary, meaning higher inflation, lower GDP growth. And restrictions on immigration is also stagflationary. We already saw in the last employment report upward pressure on wages, and of course that ultimately means downward pressure on employment if we're going to do, in particular, deportations at the current pace. So the conclusion is, it is not surprising that the Fed is beginning to worry about their mandate being torn in the opposite direction, because inflation higher says that should be hiking, GDP growth lower says it should be cutting. So that's why at the moment they stay put. And the conclusion, therefore, is that he didn't really give much other than say, we will likely be cutting, and that's what's in their dot plot. But the conclusion is, this is a very difficult situation for them when there's both, as he said, meaningful expectations of upward pressure on inflation and at the same time, a revision down in GDP growth.
Torsten, he alluded to their data capture, which is perhaps showing a more resilient GDP, a better, stronger America. Steve Raschuta at Mizuho is heated about this, that we could see GDP better. Is that in any probability for you?
Well, I think that when it comes to a particular trade, forgive the picture here, but the pig is coming through the python. Someone needs to pay for the tax increase on imports. Tariffs have gone up, and if companies are not passing this on to consumers, let's say that inflation does not go up as much as we would have expected, then the conclusion is, well, then earnings will simply be going down more. because this tax increase means, of course, that you will begin to see some downward pressure on GDP and potentially some more downward pressure on earnings. So that's another way of saying we saw effective tariff rates go up from 3% in January to now 18% today, and that effect will still be playing out. And he said very clearly he does expect a meaningful increase in inflation over the coming months. So combining that with, he said, we could also see a cooling down in the labor market. It does mean that just maybe inflation will not go up so much, but the consequence of that will be, well, then we will instead see tariffs coming through instead through lower GDP growth and a bigger hit to earnings.
And he expects to see some data on that front in the upcoming months. Right now, let's bring back in Bloomberg's Michael McKee. If you are just joining us, we did just conclude the Fed's press conference where, Mike, you put him on the spot there with the political question. I don't know that he loved answering it. We were all glad that you asked it. What was your takeaway from the press conference in terms of what you felt was the most new information that we gleaned?
Well, I think the takeaway is fairly obvious here, and I'm not sure that my economist friends all agree with me, but I think the line that you want to look at is how many times Jay Powell said nobody on the committee has a lot of conviction about these forecasts. In other words, this is all going to change. And we had to write down something, so we did. So don't take us seriously in terms of the number of rate cuts. Don't take us seriously in terms of the forecast. It's the best we can do at the moment, but we know this is all going to be different. So don't, I would translate that into don't invest on the idea that the Fed is going to be doing 2 rate cuts by the end of the year.
Michael McKee, thank you so much for being with us. And Stephanie, we were kind of laughing around the table when he said, we just kind of turn to each other and say, what did you write down? You know, I don't know. I'm kind of throwing a dart at the dartboard, but it does feel like they are trying to message something to markets. And do you think that this is saying, ultimately, we understand our dual mandate and we are going to respond potentially to a weaker jobs picture?
I think it's saying there are risks to both sides of our mandate. We don't know if it's going to be on the inflation end or the growth side. And at this point, we're in wait and see mode. I think the ultimate destination will be that the economy holds up okay. Inflation does pick up. I totally agree with Torsten's comments. If it doesn't pick up, that's almost a bad sign because that's going to come from company margins. But at the end of the day, we'll come through this okay, and then the focus will be on 2026 for markets, which is an economy that's just fine.
Your core ability is the math and the dynamics of our math. The toughest math is productivity. Is productivity still in play? Is there a total factor productivity right now that we underestimate?
Yeah, I think that's certainly the case, and hopefully it's the case, especially given that our labor supply is shrinking. So we kind of need that to some extent. And our base case is that the productivity should be fairly solid throughout the course of this year into next year. It is hard to estimate. But I do think AI is going to slowly have that impact over the course of the next couple of years.
With productivity gains, Torsten, and I'd love you to weigh in on this because you've been really good on this. We're not necessarily going to get recession. A lot of people say that's not their base case, but we are going to get a slowdown at a time of increasing inflation. People seem to think if there's a recession, that's really bad. If there's not a recession, that's really good. What is that breaking point where you have growth slowing enough that it becomes really terrible for companies in terms of where inflation is and growth just not keeping up?
The talk of war, Lisa, at the moment, namely, we do have a number of things that are weighing on growth, as we're talking about here, namely higher oil prices, higher tariffs. We now also have restrictions on immigration, meaning removing labor. All those things would argue for GDP growth slowing down, as the consensus expects over the coming quarters. But at the other end of the rope in this talk of war, we have definitely the productivity increases that we potentially could see. He did respond to the question around, will this be labor replacing or labor augmenting? And we still just really don't know the answer to that question. Yes, it is the case in the census surveys when businesses are asked, have you adopted AI in the last 2 weeks, that about 10% of companies and a rising share is saying, yes, we are now using today AI tools to improve our productivity. But the speed with which productivity gains, and to Tom's point, total factor productivity, namely how well labor and capital work together, the speed with which we'll see that in the data is probably going to take quite a bit longer. So I worry more about the cyclical downward pull on GDP growth, because I do think that over time we will see the AI gains, but it's just probably not going to come quick enough relative to some of the downward pull coming from the cyclical forces of tariffs, higher oil prices, and at the same time also the restrictions on immigrations we're seeing.
Given that backdrop, Torsten, do you think that based on what this Fed said, they are just moderately restrictive? Do you think they're more restrictive than that? Or do you think that this really is closer to neutral than many people think?
Well, that's why this discussion, Lisa, around, as we have all talked about for so many years now, our star and where are we relative to that. Note how he didn't bring that up today. This conversation about where are we relative to neutral has almost become a backseat issue because now there are some cyclical issues that are overwhelming the structural discussion around where neutral rates are. So, but I do think that the Fed's own framework and the New York Fed estimates would certainly say that neutral is lower. And as he did hint a little bit at, that we are in slightly restrictive territory. But the issue still here is they are battling. The major issue is that, as he said, they expect to see meaningful upside pressure on inflation. And that makes sense, not only headline inflation because of oil prices, but also because of tariffs. And again, because of the emerging pressure we're seeing on wages. So the short answer to your question is, I think that this discussion of restrictive or not restrictive is taking a little bit of a backseat because we now have some cyclical forces pushing inflation up over the coming months.
Torsten Slok of Apollo, thank you so much for being with us and for those comments. Joining us now is Subhadra Rajappa of SocGen. Just curious, Subhadra, what you make of this idea that rates are not very high, that policy is modestly restrictive, but not necessarily causing the restraint that many people would expect. Do you think that this was an appropriate Fed meeting?
You know, let's call a spade a spade. I must say I didn't get a lot of new information out of this meeting. I think Mike McKee summed it up. There's a lot of uncertainty. The first half of the year, the economy's been extraordinarily resilient. There's a chance that we get higher inflation in the second half. There's a chance that the growth could slow down as well. But that doesn't really give us a lot of information on exactly what they're going to do on the policy front. Yes, the dots are showing 2 cuts for this year, but there's a good chance that they don't cut at all this year, or they have to cut as early as the September meeting if the data deteriorates. So for me, the informational value was very little. I think that there's a lot of uncertainty, which was highlighted again and again during the press conference, and I think that they're going to wait till they have enough information to confirm a rate cut. So for me, this is status quo. The market pricing hasn't really changed. The bond market really hasn't reacted much. So we need more information.
Subhadra, is the information going to come in the yield curve? We had a really informed question come in about the vanilla 210 spread, or I'll let you pick the spread that matters. Are we going to go back to yield curve steepness as we saw many years ago?
Yeah, the 530s part of the yield curve has been steepening. The Fed, you know, the front end is pegged to policy, so the 2 years is kind of stuck between 3.75 and 4%. And the 530s part of the yield curve has the potential to steepen. But again, a lot depends on what we get out of that big, beautiful bill. If it is actually more deficit inducing than what we are anticipating, then there's a potential that we could see a rebuild in term premia. But you know, those negotiations are still ongoing. And really, it's the fiscal side that determines what the shape of the yield curve is, not so much how much the Fed is going to cut, because cuts between now and the middle of next year are quite modest. We're looking at maybe 75 to 100 basis points of cuts at the most.
Stephanie, where are you on the fiscal space? I mean, I think this is, Bob Michael brought it up and others before, but this is a huge mystery that's unspoken. We don't have a clue where our debt and deficit is, do we? We have no clue.
We have one clue, and that's not good. So it's not heading in a very good direction. We all know that. But I think the bond market has largely internalized it. So what we're talking with clients about is, at this point, once they actually pass the reconciliation bill, base case is there's not a big sort of bond market riot as a result. It's a risk. But I think maybe over the summer, the bigger news is going to be the inflation prints, which could be a headwind for equities, and the employment data, which might seasonally surprise, plus the downward sort of projection on immigration. That could be sort of the bigger news over the summer. I don't anticipate it's going to be a surprise on the deficit front, because we largely know what's going to be in the bill, and they're going to kind of negotiate from here. But I don't expect it to be a major surprise at this point.
All I can say is this feels a little bit, I keep saying this, like when you put too many commands into a computer and it says, I'm buffering, and it just kind of, we have no idea what the headlines are going to be in a couple of months. Subhadra Rajappa of SocGen, thank you so much for joining us and for really being honest, which is, we didn't really learn all that much. Joining us now is Jeff Rosenberg of BlackRock. The one thing that did stand out was this idea that this is not a Fed that feels urgency to cut rates, even though you have the president basically jawboning them and you have people in the market saying we are seeing cracks. What was your take, Jeff, from this meeting?
Yeah, you know, there's something we're not talking about, which could have been, you know, the headline, which is this is the first
statement of economic projections post the tariff uncertainty. And mostly he got away with not really talking about that. Torsten just highlighted it a second ago. It's stagflationary. I don't think anybody raised that once that word ever came up. So we really kind of pivoted away from what might have been kind of an interesting storyline to the storyline that we're hearing, which is watching paint dry. And I think that's an excellent outcome for the Fed. That's what they want us to talk about, paint drying, and not the Fed opining on the impact of policy. They really ended up pivoting the conversation towards a repeat of nothing to see here, and we don't know, and it's much more about the uncertainty than it is about the forecast that we just wrote down. I think that's kind of an interesting takeaway. I think, as your previous guest just highlighted, that is the takeaway that the markets are, having from today. Right. And when you listen to the opening press conferences, I pull up last month's press conference, and you can follow along. It's almost verbatim, with the exception of the insertion of the SEP changes, which he downplayed, and maybe the introduction of, waiting for more information as opposed to waiting for the uncertainty to clear. This is very much a repeat of what we got last month.
Jeff Rosenberg, when you look at what the president said in the lawn today, we're benumbed by presidential criticism of Jerome Powell. Is this a Fed, as we're all half asleep in a snooze fest, representing the haves in the financial industry? Or are they actually representing a good part of America that does not agree with this dialogue and says they're flat on their backs right now?
There are a lot of questions in there, Tom, for me to avoid answering. So I'm going to do my best imitation of Powell to pivot to answering it the way he answered Mike McKee's question, and basically restating what he wanted to answer, which is they believe they're following the right path. They are answering the right questions. They're pursuing the policy for the benefit of the economy overall that benefits the most of Americans.
Okay.
And I think kind of he answered that question the way, or I'm answering that question the way Powell answered McKee's question.
Absolutely gorgeous, Jeff. Very well done. I will answer this. I will ask it.
Oh, it's compliance from BlackRock.
Yeah, you're doing great. So, Jeff, you passed that compliance test. I guess another way to ask the question a little bit more directly is, to your point, this was not a Fed chair who is challenged on the stagflation point, who said, when your dual mandate really comes called into question, would you tolerate higher inflation for longer in order to protect a labor market that has left a lot of people, to Tom's point, out, and that has left people behind in a participation rate that is lower than we previously had? Were you surprised that that wasn't asked, that this is a Fed that really hasn't had to address that thorny question?
Yeah, and it's going to be the more interesting conversation. I feel like this is the period where we're kind of between two environments, where the kind of pre-tariff environment, and he got asked the question, hey, back in December you were cutting rates. Why aren't you cutting rates now, given that inflation is even lower than it was in December? And he very kind of clearly laid out there's been a change in information, and the change in information is the impact, the uncertainty of much higher than expected tariff policy. What we're waiting for is it to show up in the data. Now, when he got pushed back from one of the questions of, well, are you data dependent? It sounds like you're forecast dependent. Why are you now saying you're forecast dependent when you always tell us you're data dependent? And he gave the answer on, well, we have to be forward looking, not necessarily forecast dependent. And so we're going to get to this period where the inflation does show up in the data. And now I think the question is, and everybody on this show so far has been calling it the inflation increase. Let's be careful here. Powell is not calling the rise in inflation an inflation increase. He's calling it a temporary or one-time pass-through with the expectation that it goes back down. That's not inflation. That's a one-time pass-through. The difficulty we're going to have is, how do you know, while you're seeing the increase in the prices passing through, that it's one time? And how long are you going to be willing to wait to figure that out? That's going to be the more interesting challenge. And then, Lisa, to your question, it's going to press on the dual mandate, because if they're seeing the increase in inflation at the same time as we're seeing, which we're starting to see the very early signs of right now, the slowdown in the labor markets, if that's accelerating, rates. Now you're going to have this tension between the two policy goals. They kind of address it a little bit with like the distance between the two goals and the time expected to meet those two goals. But they're going to have a lot more questions to answer about how they're balancing those two trade-offs.
Jeff Rosenberg of BlackRock, thank you so much, as always, for being with us. Stephanie Roth of Wolfe Research still with us. And I'm curious, for the final word, how you see this dual mandate as playing out. And you had a great question for the Fed chair that was not asked, especially at a time of such confusing, frankly, data.
Yeah, I mean, I think the question we want to know over the summer is when we start to see payroll gains slow down, potentially below 100,000, with the unemployment rate remaining largely steady, how does the Fed react to that? And our base case is at this point, and certainly after today, there seem to be very much in wait-and-see mode, and they're probably going to do nothing, which then means that 2 cuts are going to have to fade to no cuts this year.
Is a 4.2% unemployment rate now the same as a 4.2% unemployment rate 30 years ago? I'm not sure it is. There's a lot of noise in there. I'm not sure it is.
Yeah, that's totally fair. And of course, they're going to think about the directionality here, and they're expecting it to go to 4.5. I'm worried it goes down to closer to 4% with the impact of inflation.
Turns around and goes the other way.
It might go the other way, and I think that's the thing that is going to be a really interesting dynamic for the Fed to potentially watch here. This is a real tightening of the labor market. You have the cross currents with the slowing economy, and then the real tightening of labor supply. We had 530,000 people from Cuba, Haiti, Nicaragua, Venezuela. Their visas are effectively expired overnight.
Stephanie Roth of Wolfe Research, looking forward to continuing this conversation on Friday. Meanwhile, coming up on the close, former Fed Governor Betsy Duke. And honestly, I think that's the best question. This idea of, is a 4.2% unemployment rate the same today as it was 20 years ago at a time of participation rate very much changing? This is Bloomberg.
गाइस 130 ऑलरेडी हो चुका है, देन सेशन ऑलरेडी ओपन। स्टिल देखोगे नेचुरल गैस एज एक्सपेक्टेड पूरा साइडवेज। लास्ट ट्रेडिंग सेशन है, फ्राइडे है तो थोड़ा क्वांटिटी का ध्यान रखना, अननेसेसरी रिस्क मत लेना, ठीक है। बाकी क्रूड ऑयल को देखोगे वही सपोर्ट पे ही अटका हुआ है, ना ऊपर जा रहा है ना प्रॉपर्ली नीचे आ रहा है। कह सकते हैं साइडवेज है, अगर इस लेवल के ऊपर नहीं जाता है 6488 और नीचे कहीं ब्रेक डाउन करता है सक्सेसफुली 6344 के नीचे, तो एक इस एरिया के नीचे अगर कहीं ब्रेक डाउन वगैरह कर देता है तो फिर हो सकता है और गिरे, अदरवाइज आप मान सकते हो जब तक इस एरिया के ऊपर सस्टेन है 6335 के ऊपर तब तक तो ये लेवल पर ही है। तो ये एक रेंज हम एक्सपेक्ट कर सकते हैं मार्केट की। कोई न्यूज़ वगैरह आएगी तो हो सकता है कुछ जंप करे, फिलहाल के लिए और कोई न्यूज़ है नहीं। लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया है। कोई न्यूज़ वगैरह आती है तो देखते हैं, बाकी न्यूज़ शाम को, डेटा तो शाम को ही आएगा, अभी कोई डेटा भी नहीं है करेंटली। लेट्स सी ये नेचुरल गैस नीचे आता नहीं आता। बाकी ध्यान रखना नेचुरल गैस में लोगों ने सेल किया है अगर फ्यूचर वगैरह या फिर कॉल शॉर्ट करके रखी हुई है, अपना ऐसा थोड़ा सिस्टम रखना, क्वांटिटी कम ही रखना, बिकॉज ये पहली बार नहीं आ रहा है इस रेजिस्टेंस पे, फोर्थ टाइम आया था, मैंने मॉर्निंग पे बता दिया था, चौथी बार आया है, ऊपर भी चौथी बार ही आएगा, फोर्थ टाइम। तो अगर सेलिंग आनी होगी तो आ जाएगी, जल्दी नहीं आती है तो एसएल भी जा सकता है, तो एसएल जाता है तो कम ही जाना चाहिए, टारगेट बड़ा रख सकते हो। Signals he will hold off Iran strike to give diplomacy time. That is also a good news. Chinese student jailed for 24 years for raping women in UK and China. That over the last 24 hours, at least 20 C17A Globemaster third NC-5M Galaxy strategic heavy lift transporter with the US Air Force have arrived at airbase in Middle East from Europe. The Israeli Air Force released footage earlier showing number of strike. The market is still range bound. कुछ खास सिनेरियो तो दिख नहीं रहा है फिलहाल के लिए. अपना एसएल का ध्यान रखना, ठीक है, टारगेट उतना ही है, उससे बड़ा तो नहीं है. ये ब्लू कलर की ऊपर जो लाइन है, अगर इसके ऊपर निकल गया तब हो सकता है थोड़ा मूव कर जाए. और 6485. बाकी अगर इसके ऊपर नहीं जाता है तो फिर जितना ये रुका हुआ है यहाँ पर, बार बार इसी लेवल को शायद होल्ड कर जाए. एंड वी डोंट नीड कि ये इसके ऊपर और ज़्यादा होल्ड करे, क्योंकि उसमें प्रॉब्लम हो सकती है. अगर इसको रेंज ब्रेक करनी है तो ये निकल जाना चाहिए. यहाँ पर ये देख रहे होगे ना, बड़ा सा एफईजी है, उसी का सेंटर लगाया हुआ है एक्चुअली में, दिस वन. तो ज़्यादा देर होल्ड होगा भी नहीं अगर अप साइड मूव नहीं करता है प्रॉपरली. अब बाकी इसके नीचे ये सपोर्ट अच्छा है, अगर ये यहाँ से नहीं जाता है ऊपर, इतना ही जाता है, यहाँ से ब्रेक करके नीचे आ जाता है, तो फिर ये सपोर्ट पे बाइंग अच्छी रहेगी. बाकी मुझे लग रहा है शायद न्यूज़ का वेट करेगा मार्केट. तो जो लोग बाइंग में हैं क्रूड ऑयल में, चाहो तो अपना एसएल भी ट्रेल कर सकते हो, बहुत देर हो गई है. बाकी ये नेचुरल गैस के ध्यान रखना, ऑप्शन ट्रेडर्स ऑप्शन जो बाई करते हैं, कॉल या पुट जो भी, एक्सपायरी भी है मंडे को, तो थीटा डे के कुछ ज़्यादा ही हो रहा है. तो अपनी पोजीशन का भी ध्यान रखना, ऐसा ना हो कि इतना थीटा डे के हो जाए कि मार्केट में फिर प्रीमियम ही ना बचे. समझ में आया? बाकी एक बार फॉरेक्स का चार्ट भी देख लेते हैं. 15 मिनट में तो नहीं है, 30 मिनट में. Let's see the news of the hour. Basin top bank reform is good for the market.
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Tom McKenzie.
And I'm Caroline Hepker.
The White House says that President Trump will make a decision on whether to strike Iran within the next 2 weeks. Trump has publicly mused about the US joining Israel's strikes on the country in recent days, but the latest statements suggest that the American president still wants to secure a deal on Tehran's nuclear program. Here's his press secretary, Caroline Levitt.
I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
Levitt declined to elaborate on Trump's timeline, including how he views the chances of success in any further talks with Iran. US Secretary of State Marco Rubio and Special Envoy Steve Witkoff met UK Foreign Secretary David Lammy at the White House on Thursday. That comes after Prime Minister Keir Starmer called on President Trump to keep the door open to resuming talks on Iran's nuclear program. Lammy will now join the French and German foreign ministers for talks with Iranian Foreign Minister Abbas Araghchi in Geneva.
Israeli warplanes have continued to strike military targets in Iran as a missile launched from Iran hit an Israeli hospital on Thursday. Meanwhile, authorities in Tehran have imposed a nationwide internet and telephone blackout, telling civilians that it's necessary to prevent Israeli cyber attacks. The blackouts follow a series of highly accurate Israeli strikes, which prompted Iranian officials to urge citizens to delete WhatsApp from their phones. The government claims that, despite the app's end-to-end encryption, it was being used to transmit user information to Israel. In a statement cited by the Associated Press, WhatsApp denied that claim, describing them as false reports that the Iranian state could use as an excuse to block its services, quote, at a time when people need them the most.
And cybersecurity experts in Israel say Iran is tapping into private security cameras to gather real-time intelligence. As UN Potts reports, the revelation exposes a recurring problem with these devices, one that has emerged in other global conflicts.
Earlier this week, a former Israeli cybersecurity official issued a stark message on public radio. Turn off your home surveillance cameras or change the password immediately. The warning was later backed by Israel's National Cyber Directorate, which confirmed to Bloomberg that internet-connected cameras are increasingly being targeted as part of Iran's war planning. Similar tactics were employed by Russia following its invasion of Ukraine. And while researchers have been sounding the alarm about vulnerabilities in security cameras for over a decade, there is now increasing evidence that for countries at war, these systems are being exploited as a critical weak point. In London, I'm Ewan Potts, Bloomberg Radio.
Oil prices have slumped after President Trump's comments, which ease fears about an imminent attack from the US. Bloomberg analysis of Iran's oil facilities, though, suggests that the country is racing to put its oil on global markets. The oil analyst tankertrackers.com estimates that Iran exported a daily average of 2.33 million barrels per day in the 5 days since the Israeli attacks began. That's a sudden jump of 40%. Bloomberg's James Wilcock has the story.
The oil storage tanks on Karg Island have floating roofs. So, when you can see a shadow on satellite images of the reservoirs at Iran's main export terminal, they're not quite full. Over the past 10 days, they've gone from being partly full to being filled to the brim, ready to ship out. That's despite exports going up in the same period. That's one of the bits of data analysis oil traders are using to conclude Iran is trying to rapidly get oil out of the country as its conflict with Israel ratchets up. In London, James Woolcock, Bloomberg Radio.
The Bank of England held rates yesterday but took a more dovish view than expected, warning about the conflict in the Middle East. 3 out of the 9 rate setters on the central bank's Monetary Policy Committee voted for a cut. Deputy Governor Claire Lombardelli said the BOE is keeping an eye on the oil price.
The events in the Middle East are tragic and they are deeply worrying. As you'd expect, we are monitoring carefully those events and the impact that those will have. We've seen oil prices, for example, increase since the attacks.
Lombardelli added that she expects interest rates to follow a gradually downward path. The comments come as UK retail sales slumped by more than expected to 2.7% in May compared to the previous month. The data comes as a new survey showed that sentiment in the wider economy does appear to be improving. UK consumer confidence improved for a second straight month, according to GfK's gauge, rising by 2 points in what the organisation described as a fragile rebound.
SoftBank's founder Masayoshi Son is looking for a team to realise what could be his biggest bet yet. This is a $1 trillion industrial complex in Arizona, codenamed Project Crystal Land. According to people familiar with the billionaire's thinking, the idea is a vast manufacturing hub like China's Shenzhen that would bring back high-tech manufacturing to the US. They say that SoftBank officials have spoken with state and federal officials about tax breaks for companies who would come to the industrial park. Representatives of SoftBank, TSMC and Samsung declined to comment.
The EU is making progress in talks with the US, according to one of the region's top officials. That's as the administration's tariff cut-off date approaches. Bloomberg's Tiwa Adebayo has more.
With just 19 days to go before President Trump's scheduled tariff deadline, the European Union says it's making headway with negotiations. The bloc is pursuing a compromise but is ready to take measures to protect itself should discussions fall through. That's according to Economy Commissioner Valdis Dombrovskis, who played down the importance of, quote, so-called reciprocal tariffs at a meeting of euro area finance ministers this week. The EU is facing the prospect of 50% levies on nearly all US exports if an agreement isn't reached in time. Meanwhile, central banks in Switzerland, Sweden and Norway cut rates this week, highlighting a shift in policy as officials brace for tariff fallout. In London, Tiwa Adebayo, Bloomberg Radio.
Well, those are our top stories for you this morning. In terms of the markets, then, looking at the oil price at the moment, Brent crude down 2.6%. WTI crude futures also down 0.2%. So Brent is reversing the surge that we saw on Thursday of 3%, but we're still up for 3 weeks in a row.
That's news when you want it with Bloomberg News Now. I'm Tom McKenzie.
Today,
I'm Caroline Hepker.
Trump risks alienating his MAGA base as he continues to weigh joining Israeli strikes on Iran. And the US is reviewing the online presence of foreign students for any hostile stance. It's Thursday, June 19th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Kim Vanel in Whanganui, New Zealand.
I have ideas as to what to do, but I haven't made a final. I like to make the final decision 1 second before it's due, because things change. I mean, especially with war, things change.
President Donald Trump keeps the world guessing whether the US will join Israel in airstrikes on Iran. He says the door hasn't entirely closed on diplomacy and that the Iranians want to come to the White House for talks. Iran's supreme leader, Ayatollah Ali Khamenei, however, has rejected Trump's earlier demand for unconditional surrender. A week of Israeli air and missile strikes has wiped out the top echelon of Iran's military, damaged its nuclear capabilities, and killed hundreds of people. Retaliatory Iranian strikes have killed 24 civilians in Israel. Now, Trump, considering striking Iran directly, isn't going down well with some of his most loyal supporters. They feel US involvement in Iran would betray the MAGA movement. The president ran on promises to put America first and stay out of endless wars in the Middle East. That rift on full display in a clip that's gone viral of Tucker Carlson clashing with Republican Senator Ted Cruz.
I don't know anything about Iran. So okay, I am not the Tucker Carlson expert on Iran.
You're a senator who's calling for the overthrow of the government.
You're the one who
know anything about the country.
No, you don't.
Steve Holland is at the White House.
The broad sweep of the MAGA voices who are speaking out against this, these are people with huge audience numbers, with deep influence across the conservative landscape. Tucker Carlson has a popular show that streams on X. Marjorie Taylor Greene, this longtime Trump ally with a large megaphone, and she says, you know what, we don't want to get into another foreign war. And a lot of people are going to listen to that message. I went to an event with Steve Bannon, who's a longtime Trump ally, and he said, you know, we just can't do this again. It'll tear the country apart. We can't have another Iraq.
What sort of broader impact could this rift have on the Republican Party?
It could have a ripple effect through his conservative movement and undermine his efforts for Republicans to win elections in 2026, the congressional elections. If they feel like they're disenfranchised, they will go elsewhere or just not.
Guys, ये नेचुरल गैस में जो लोग अगर सेलिंग में हैं, अगर चाहो तो अपना एसएल ना कॉस्ट पे रख लो. जिन लोगों ने अगर नेचुरल गैस में सेल किया तो साइडवेज ही है, बट चाहो तो अपना एसएल कॉस्ट पे रख लो. मुझे इसमें ना मोमेंटम नहीं लग रहा. हो सकता है ये ऊपर वाले लेवल तक भी आ जाए. वैसी रिस्की ट्रेड है, बट अब थोड़ा सा और ज़्यादा रिस्क लग रहा है इस ट्रेड में. अभी तक आना होता सेलिंग में गिर जाता प्राइस, इतना देर लगाता नहीं है. तो जो लोग सेलिंग में हैं, दे कैन आइदर एग्जिट और पुट योर एसएल ऑन सिस्टम, कॉस्ट टू कॉस्ट पे रख लो. देखते हैं वॉल्यूम जनरेट होता है उसके बाद. नेचुरल गैस में जो लोग सेलिंग में हैं, अगर अपना एसएल कॉस्ट पे रखना है कॉस्ट पे रख लो, नहीं तो इसमें से निकल भी सकते हो. अब ज़्यादा देर मुझे लगता नहीं इसको होल्ड करने का ज़्यादा फ़ायदा है. इतने देर रुकेगा तो फिर कुछ कह नहीं सकते, किसी भी डायरेक्शन पे जा सकता है. नॉर्मली रेजिस्टेंस एरिया से सेलिंग थोड़ी फास्ट ही आती है. ज़्यादा देर रुक रहा है, इसका मतलब ब्रेकआउट की तैयारी कर रहा है. तो जो लोग सेलिंग में हैं, अगर चाहें तो अपना एसएल कॉस्ट पे रख लो. बार बार रिपीट कर रहा हूँ. अगर निकलना चाहो तो निकल भी सकते हो सेलिंग से. ठीक है, मैं इस ट्रेड को रिमूव कर रहा हूँ. थोड़ा रेंज मेरे अकॉर्डिंग अब ब्रेक हो जाए तो बेटर है. अभी ऐसे होने को ब्रेकआउट नहीं हुआ है, बट मुझे कुछ खास ये लग नहीं रहा है यहाँ पर ट्रेड करने लायक. नेचुरल गैस में सेलिंग में जो लोग हैं, निकलना चाहो निकलो, ऐसा रखना है तो, नहीं तो कॉस्ट पे रख लो. फिलहाल अब मेरे साइड से इसमें कोई ट्रेड नहीं है. इतना देर नहीं रुकना चाहिए रेजिस्टेंस पे. इट इज़ कम्प्लीटली साइडवेज. सुबह 9 बजे से अभी 3 बजने वाला है ऑलमोस्ट. पिछले 5 घंटे से साइडवेज है. ऑलमोस्ट लास्ट 5 आवर्स से साइडवेज है. कहीं भी बड़ी कैंडल बन सकती है अब तो बहुत रिस्की हो चुका है यहाँ पर होल्ड करना. जिन लोगों ने लिया है सेलिंग का ट्रेड, आइदर पुट द एसएल ऑन कॉस्ट, ऐसे या तो कॉस्ट पर रख लो या फिर निकल भी सकते हो. कोई नया ट्रेड बनेगा तो देखेंगे थोड़े कम रिस्क के साथ. यहाँ पर रिस्क बहुत ज़्यादा हो रहा है अभी भी रेजिस्टेंस पर ही, बट साइडवेज हो चुका है.
Not vote, and you could see Democratic sweeps on that election day. So it is something that Trump is aware of and needs to worry about.
Could some of the outspoken critics influence Trump's thinking on this?
It very well could influence his thinking. His gut feeling about these things is just don't get the United States involved in any more military adventures. And we'll see what he comes up with. I wouldn't be shocked if he backs off in the end and lets Israel do the job.
Trump's will he, won't he continues to rattle markets and investors who are otherwise focused on a series of central bank meetings. Analysts are warning that any sign of escalation in the Middle East could spark a knee-jerk reaction in the markets. And about those central bank meetings, the optimism around the Fed signalling rate cuts later in the year was immediately reeled in by Chair Jerome Powell's expectation that tariffs will add to inflation pressures. European nations, meanwhile, are attempting to negotiate with Tehran. Reuters has learned that Germany, France and Britain plan to hold nuclear talks with Iran on Friday in Geneva. The talks have been closely coordinated with the US. Israeli gunfire and strikes killed at least 140 people across the Strip in just the past 24 hours. That's according to local health officials. It includes some 40 people killed on Wednesday as they were lining up for food. Palestinians seeking aid have been killed almost daily in the last 3 weeks since Israel partially lifted a total blockade. The Israeli Defense Force said that despite repeated warnings, individuals approached some troops in a manner that posed a threat to the forces. Palestinians in the Strip say their plight is being forgotten as attention shifts to the conflict between Israel and Iran. A federal judge in Texas has thrown out a Biden-era rule that was meant to keep information about legal abortions or gender transition treatments private. The rule stopped healthcare providers and insurers from sharing details with state law enforcement. Japan's Nippon Steel has officially acquired US Steel, giving an unusual degree of power to President Donald Trump. Under a national security part of the agreement, President Trump has the authority to name a board member, as well as a non-economic golden share. That means the US has veto authority over a raft of corporate decisions, from cutting production capacity to moving jobs overseas. And the largest ever sale of a professional sports team. The Buss family is entering an agreement to sell a majority stake in the Los Angeles Lakers, ESPN has reported. It's the end of an era for one of the NBA's most influential owners. Mark Walter of holding company TWG Global is set to take the majority ownership under the agreement, which values the Lakers at $10 billion. The Trump administration is significantly tightening its social media vetting of student visas. They're now looking for anyone who they say may be, quote, hostile toward the United States. Consular staff can also ask applicants to make private social media public or probe why someone doesn't have an online presence at all. And the move could extend beyond just student visas. Humaira Pamak is in Washington.
U.S. consular officers are now required to conduct a comprehensive and thorough vetting of all student and exchange visitor applicants to identify those who bear hostile attitudes towards our citizens, culture, government, institutions, or founding principles. Now, in a way, that is very definitive, but it's also very vague, because what is an example of hostile attitude towards the United States, right? So it is going to be up to the consular officer after a long examination of a candidate's entire online presence, social media presence, and decide whether or not they're eligible for a visa.
So might this extend beyond just student visas?
Yes, absolutely, because in a separate cable that was issued late last month in May, Secretary Rubio also directed consular officers to begin additional vetting of visa applicants looking to travel to Harvard University for any purpose. And one super interesting thing in that other cable was saying that the implementation of that order was going to serve as a pilot for expanded screening and vetting of visa applicants. And it actually didn't say student visa applicants. It just said visa applicants, which makes us think that the possibility of measures taken against Harvard and visa applicants trying to go there will likely be used as a template for other universities or perhaps other types of visas.
And for today's recommended read, how Oklahoma is hoping to be America's answer to China's rare earth dominance. There, beneath the Wichita Mountains, is a 2-story warehouse containing the only machine in the US capable of refining nickel. That's a crucial energy transition metal. We'll put a link to that story in the pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app. And don't forget to follow us on your favourite podcast player. We'll be back tomorrow with our daily headline show.
where do we go from here? Because this has been a choppy year, but is the worst over in terms of the risk priced into the markets, given all that we're seeing, geopolitical risk, risks tied to the fiscal situation of the U.S.?
This is the environment where one
needs to buy insurance.
Justify a tail hedge because of the uncertainty rather than a direction. But and of course it did work out this time as it does work out almost always, but it did work out compared to other approaches to hedging that either failed or didn't perform well.
You became a household name, essentially, at least in Bloomberg viewing households, when you wrote The Black Swan. Yeah. And I wonder if now that we're all thinking about that after you sort of unveiled it, if it's less of a threat, because we're all looking for the unknowns.
No, actually, what has happened is it's more complex. It started with fooled by randomness, where people don't understand the difference between noise and signal, and mistake very often noise for signal. Things have gotten worse.
Yeah.
Okay. The understanding of tail events has gotten worse. Okay. The pricing of tail events, what we think would be more rational, has gotten worse. Okay. People use bad models more and more.
Wow.
And so it is interesting. I saw that over a 25-year, the life of my book collection, the Inserto, the first one being Fooled by Randomness. So I don't think that there is consciousness of risk that has improved. We just think that at any point in time that we live in a more risky period than our ancestors or that we did before, but it's just a normal perception.
Mm-hmm. So it's interesting. A couple of years ago, Mark Spitznagel over at Universa warned that this was a tinderbox time bomb of a situation with the U.S. debt load, and that certainly has gotten worse. But the markets have been pretty complacent to it. So is this time different?
Yeah, let's look at markets. Okay, markets are not driven by long-term economic stuff. Is driven by allocations. Okay, for example, people think that the market reflects today the impact of the tariffs and these policies that may or may not be rational. No, markets are driven by certain allocation parameters, and people, of course, panic sometimes, but they got to satisfy these. In the long run, of course, the economy will decide, and we have severe problems. The first one being the accumulated deficit. And it's snowballing, as you know, and with interest rates here, it is adding every year to the budget, so just to stay in the same place. Plus, what has happened with a lot of modern economies is that as you get richer, you see, it's normal that your growth rate will slow down because you have fewer people in poverty in your economy. You have to import, actually, poverty from elsewhere. Okay? It's like an S-curve, like a natural S-curve that we see in nature. At the top of the S-curve is when people borrow, when their growth potential is much lower, and for natural reasons. It's nothing to do with policies. So we should be borrowing less now that we have reached almost reached destination, because it's what we call a decreasing growth rate, and which is normal, whereas countries in Africa and Asia are far away from that point. You see, they still have people in poverty that they got to pull up, and that will increase their GDP. And they can borrow, but they're not the ones borrowing.
Right. But we're not going to be borrowing less. I mean, clearly, we're going to continue to increase deficits, at least if this one big, beautiful bill is passed. And I wonder about the products that Universa sells, right? Yeah. You can hedge against the kind of tail risk, like if the U.S. defaults on treasuries, right? We see a drop.
We are focused on the stock market. We just use that as a driver. Okay?
Right.
So because you're targeting one variable, you're not targeting events because events are not well defined. But that variable is very well defined.
Well, I'm just saying that this is an event, a default that would trigger, an instantaneous drop. But it's harder to hedge against something like the slowing decline of the dollar.
Yeah, but okay, so that is but that would end up being reflected in stocks. the slow decline of the dollar. And effectively, the second risk, so the first one is the deficit. The second one is effectively that the dollar is losing its status as a reserve currency.
What proof do you have of that, though?
You can see the accumulation of gold in the reserves and the behavior of gold over the past 12 months. And it didn't start with Trump's policies. Of course, it started with Biden when he froze the accounts of people connected to Putin.
Right.
And of course, thinking that it'd be limited there, but people not connected to Putin, so decided to stay away from a euro and a dollar. And gold is effectively now the reserve currency.
So
transactions take place in dollars, euros, usually dollars, and at the same rate. However, they get converted back into gold. And we can see it from the accumulation of reserves.
You know, it's interesting. Citigroup just this morning said the gold rally might hit a timeout this year. They said that it could start to retreat after running to near record highs
what do they know? How do they know? How do they know?
Well, that's my question to you. If you were afraid of where the U.S. deficit is, if you were concerned about the dollar, and at this point geopolitical risk, are you stockpiling gold? Even at this level?
Okay, I'm not a central bank, so, I mean, I think that with what's going on now, particularly with the new administration, the perception of America is the riskiness of America has increased. So on top of that move into gold that started with Biden, we have now a move into gold by people who are afraid of these policies, and
including central banks around the world, which doesn't look like it's going to let up.
Especially central banks around the world. So the dollar is a good transactional currency because people can label things in it, but not necessarily a storage currency. And this is what we're facing now.
Just over the last 24 hours, we're hearing that Millennium, for example, is one of the firms that is looking to sell a stake at a $14 billion valuation. These massive multi-strats and non-banks have been much bigger in the market. Do you ever worry about systemic risk with the way things are going?
Much less with hedge funds, and I kept advocating for the transfer of risk from banks to hedge funds because hedge funds don't have the skin in the game problem. Okay, bankers, of course, they have very little to lose, and they're prone to bailouts. On top of that, hedge funders have their money in it, so I think the risk management is much more rational with hedge fund than it has been with banks. Banks, they use just models to cover their reputation and nothing else.
What do you think, though, about the opacity of private markets, especially as they continue to grow? I mean, they're bulging, right? Everybody's racing to put money into private credit, and it has been for years, and yet it doesn't. There's no Carson Block looking at these.
Okay, if there's no bailout potential, then opacity isn't harmful. You see, because those punished will be those who put money in it. That's the functioning of a normal functioning of a market. However, if there's a potential bailout, then we need to know what we may have to bail out. You see, so this is where I would look more into the details of what we are insuring as taxpayers, what we are insuring.
But so, Nassim, that's better off bank, right? That's better in the shadow banking system. If it comes to, a bank branch near you, then it's a problem.
But the banks are lending more to the non-banks. That's the problem.
Banks became utilities progressively. After 2009, 2008, 2009, after that period, people understood that they should not be taking risks, and progressively, money went where it should go.
You know, it's interesting. The hedge fund industry, by and large, throughout the course of this year, we've been talking about it a lot. They've done okay. Actually, everybody has held up through the course of all of this volatility. My question to you, you were talking about the big risks that the U.S. is posing.
Yeah.
What about the Trump administration's strategy? Is there more volatility ahead?
So, let me tell you, long term, this is why I think that we need to worry, maybe not about the stock market. It may express itself elsewhere. We need to worry because the approach is not very rational. First of all, they're amateurs doing numbers to start with. The other thing is when we have 4% unemployment, think about it, you have 4% unemployment. It means the economy, what are you going to do now with these tariffs? Try to shift business from high added value into low added value? This is what we're invited to do? Well, that will depress GDP. So in other words, it's like asking a surgeon, just for balance, to clean the streets one day a week, okay? So of course, it would depress GDP. That's exactly what the Trump administration is getting us to do. I understand tariffs. Tariffs may be necessary in many areas. Tariffs need to be symmetric and stuff like that. So this we understand. But the way they're going about it makes no sense.
Can you understand, the reasoning behind it? Because these are people, that Trump has around him. Scott Bessent, Howard Lutnick, Stephen Miller, who, they're not idiots, right? They've done well in their careers. They went to Ivy League schools. Like, why are they doing this?
There's a difference between, they're not idiots and they're not specialists in that area. Right. And they're probably okay in what they've done in the past, although
Peter
I'm not
Navarro.
sure about all of them.
Yeah.
Peter Navarro, I apologize, but I'll have to say that in his own domain, he hasn't fared well. Okay, the other ones have some kind of performance in an area that is orthogonal, in other words, uncorrelated to the current performance. It's like asking a dentist to do brain surgery. Okay, may do better than average. I'm not sure. Okay, so none of them really is a specialist of the area that they're discussing. And this is where I find myself agreeing with the economists. Okay, that basically it makes no sense, and the approach is irrational. You see, the idea of confronting China is irrational. But now let's think about what are going to be the effect. Well, there are two things they're doing. The first one, tariffs on things that we don't produce. It's going to tax not the middle class, but is going to class
the poorest among us.
The poor, because
it's regressive.
And then compensating that with a tax break doesn't work if you don't pay taxes.
Well, my question too is, you have the Treasury Secretary saying that, okay, well, maybe artificial intelligence will make this economy more productive. Do you buy that?
Maybe we can wait.
More jobs.
Yeah, maybe for Christmas we'll get Santa Claus coming in and distributing money. A lot of things can happen with maybe. You see, as the French would say, with maybe you can put Paris in a bottle. All right. So the idea of these the tariffs may be sound. The way they're going about it is it's like trying to wreck the boat voluntarily. That's the first one, is tariffs. The second one is immigration. I don't know if you realize the structure of American businesses and American labor. Last time we had a labor shortage, we saw what prices did. Okay, people have large loans. Everything is based on cheap labor. Okay, coming from Latin America or elsewhere. Everything's based on it. So trying to constrain that source of labor may make sense in the long run, but like in Japan, for example, they have small houses. Here, people have mansions. Okay, you won't be able to find people to mow the lawn or do things. And if you have to wait for artificial intelligence, okay, let me know when it comes and revise my opinion. For the time being, we don't have cheap robots.
Yep.
So there's a lot of dangers in these policies, because it's not that they didn't think of the second order effects.
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest developments involving Iran. The White House says President Trump will make a decision on whether to strike the country within the next 2 weeks. The president is scheduled to attend a national security meeting in the Oval Office later today. White House Press Secretary Caroline Leavitt spoke with reporters yesterday.
I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
White House Press Secretary Caroline Leavitt says the president's goal of halting Iran's enrichment of uranium and preventing the country from obtaining nuclear weapons remains intact, though she says if there's a chance for diplomacy, the president is always going to grab it.
Meanwhile, Nathan, the fighting continues. The Israel Defense Forces says it completed a series of strikes in Tehran, hitting dozens of targets. A missile from Iran hit an Israeli hospital on Thursday for the first time since the war began. Iran's foreign minister is due in Geneva for talks with European foreign ministers today. And we get more with Bloomberg's Oliver Crook.
What the sort of goal of this meeting is to try to begin to establish kind of a framework for a day after, if there is a ceasefire, something you can go to sort of from Iran and the rest of the world to say, listen, these are going to be the monitoring arrangements that Iran has agreed to, basically unrestricted access to making sure that Iran is not developing a nuclear site, potentially some restrictions and some observations about sort of cutting back the ballistic missile program, those sorts of things. But again, I think that one needs to keep sort of really sort of low expectations here, because we know the world of Trump, and we know the world of Trump is one in which the Europeans don't have a huge amount of sway in terms of diplomacy. There's a real question about whether or not, anything that they agree to or anything that they can come up with, does Trump really want to, put his name on something that somebody else has come up with?
And that's Bloomberg's Oliver Crook reporting. Iran's foreign minister told state TV this morning that Iran does not want to negotiate with the U.S. if Israel continues to strike the country.
And Karen, cybersecurity experts in Israel say Iran is now tapping into private security cameras to gather real-time intelligence. As Bloomberg's Ewan Potts reports, the revelation exposes a recurring problem with these devices, one that's emerged in other global conflicts.
Earlier this week, a former Israeli cybersecurity official issued a stark message on public radio. Turn off your home surveillance cameras or change the password immediately. The warning was later backed by Israel's National Cyber Directorate, which confirmed to Bloomberg that internet-connected cameras are increasingly being targeted as part of Iran's war planning. Similar tactics were employed by Russia following its invasion of Ukraine. And while researchers have been sounding the alarm about vulnerabilities in security cameras for over a decade, there is now increasing evidence that for countries at war, these systems are being exploited as a critical weak point. In London, I'm Ewan Potts, Bloomberg Radio.
All right, Ewan, thank you. Meanwhile, the war in Ukraine goes on. Overnight, Russia unleashed a wave of drones and decoys to the cities of Odessa and Kharkiv. Ukraine's Air Force says 16 drones managed to evade its air defenses. At least one person was killed and 14 hurt in Odessa. The drones there damaged several apartment buildings and the city's central rail station. At least 4 others sought medical help in Kharkiv.
And back here in the U.S., Karen, the White House has scored a legal victory over its deployment of National Guard troops in Los Angeles. A 3-judge panel has ruled the Trump administration can continue using the Guard to respond to anti-deportation protests. Lori Levinson is a former federal prosecutor and a professor at Loyola Law School in L.A.
The bottom line is that this panel of judges believe that there was enough interference, enough violence going on in Los Angeles that the president, in his broad discretion, had the power to call out the National Guard because that's what the statute allows.
Loyola Law Professor Lori Levinson notes that California could still appeal to the full federal appeals court or the Supreme Court. The lower court judge who ordered the federal government to return control of the Guard to California is also holding a hearing today.
Nathan, as immigration raids continue, they're starting to have a noticeable impact on workforces across the country. On Bloomberg's Monica Ricks reports.
The downtown L.A. fashion district where the ICE raid started is emptied out.
Texas dairy farmers say workers aren't showing up to milk cows. And the deputy mayor in Ventura, California says Latino day laborers seem to have disappeared from his closest Home Depot. Last month, the U.S. workforce shrank in large part because of a decline in foreign-born workers. California alone stands to lose $275 billion in economic output from the immigration crackdown. Monica Ricks, Bloomberg Radio.
Okay, Monica, thank you.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. For the first time since Cleveland beat Golden State in 2016, there'll be a Game 7 in the NBA Finals. Indiana stayed alive, had a 31-point lead in the second half, beat Oklahoma City 108-91, setting up the decisive Game 7, which will be played Sunday in OKC. The Yankees ended their 6-game losing streak, beat the Angels 7-3. The Mets have now lost 6 in a row, lost 7-1 in Atlanta. Washington ended an 11-game losing streak, beat Colorado 4-3. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
The entire auto sector is higher today.
And analysis on the companies making news on Wall Street.
Tesla's been a stock that's been in focus. Shares have really been all over the map this morning.
Listen to the Stock Movers Report from Bloomberg.
Let's talk about some other decliners.
It's your short audio report on the day's winners and losers in the stock market.
Second biggest driver in terms of points for the S&P 500.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast.
Let me just ask you about the latest, which is that President Trump seems to be opening a window, a door.
We're trying to understand whether or not Israel needs U.S. assistance in order to complete the task of destroying Iran's nuclear program. Is it required?
Absolutely, yes. Having said that, doesn't mean that Israel cannot inflict severe destruction on the complex of Fordow, where we are talking right now, but definitely we will need the U.S. aid in order to initiate such a blow that will be very hard to Iranians to reconstruct or rebuild. We are talking about a compound that is dug inside a mountain, about 120 meters inside. There is even one bomb that can really penetrate most of that, which is the BGU 57 that can be carried by the B-2 plane. And so if we want to shorten as much as possible this campaign and to bring the Iranians to the negotiation table under completely different terms, the U.S. should step forward and come across and assist us.
What would be the implications of that?
Well, you know, if you ask me this question about 2 weeks ago, or even less than that, I would say that the Iranian had the capability of striking major American places or installations across the Middle East, or even striking their neighbors and so on. But we had diminished quite a lot of their capabilities, and they're right now pretty much preoccupied in defending themselves. The Israeli Air Force, in fact, flies above Tehran completely free. I was amazed just to see the photos of Iranians shooting with machine guns towards the sky. It was more or less of Germany in 1945 and not Iran 2025. So right now, the implication would not be severe, and I think we should all take the chance.
So a regional war is not on the list of your kind of outcomes from such a strike, because that would be the fear, that they would hit targets in Qatar, in the UAE, elsewhere around the region. The US has plenty of bases, particularly in Iraq as well. You don't see those strikes coming?
I see those strikes coming, definitely, yes, but I see they are very much limited, and they don't have the capability to sustain it for a long period. Don't forget, we have already reached about between 40 to 50% of their ballistic missiles. And together, if there is a coalition, and I'm talking about coalition, which include, of course, the U.S. first, but not only the U.S., we can definitely limit the damage that they can inflict on the Americans and coalition targets, and bring them back as soon as possible to the negotiation table under different terms.
Okay, let's talk about that a little bit more. Why would you do that? Why would you not carry on and deliver regime change? Is it enough simply to change the narrative around the nuclear program? Or do you think regime change is ultimately the objective here?
The official objective of this campaign was to, first of all, to bring back the capability of developing nuclear devices by this regime, and to diminish as much as possible their missile capability. And those two objectives should be reached, and we can do that, because right now the campaign is proceeding in a very, very efficient and good way. But there's a hidden agenda, which is of course, changing the regime. I don't think it is possible within days, weeks, or even months, because it's not Syria. It's not that there are strong militias and all you have to do is bring them together and charge with Toyota SUVs straight into Tehran. That's not the case. The things should come from bottom up in Iran. I don't see right now the leader or the group that can do it, but we have to think of changing the regime on the medium long term.
The President of the United States issued a very, very thinly veiled threat to the Ayatollah. How seriously should we take that?
They are with their back to the wall. They are a wounded animal, and so the threats are becoming more and more vigorous and more threatening. I don't think this is the case right now. I think the Ayatollah regime is in the lowest position since 24th August 1988, the end of the Iran-Iraq war. They had lost all their proxies. They had lost part of the defense shield. And they, of course, are right now in the process of trying to analyze what's going to be next. They're bewildered. Their top echelon command is cut off. And you can see from the white beard of those people that those people had been in power for many, many years. And so it's very difficult to replace them.
But do you wouldn't replace them, but it's figuring out what regime change could look like, and whether or not there is, as you say, a grassroots bottom-up process that could unfold and deliver that regime change. Because I struggle to see how the regime in Tehran survives with a significantly diminished capability on the nuclear front, any kind of agreement that would be signed with Israel and the United States would be very harsh and would deliver a significant blow to the regime. Is it capable of surviving that? Is it capable of surviving, A, in the current environment in which it's being threatened by the United States physically, or B, is it capable of surviving in a world where it has effectively had to sign on to a very, very harsh set of requirements that are going to be issued now by the GCC, by the United States and by Israel?
It's a lose-lose game for the Iranians. In a way, but I don't have a definite answer for that because, you know, we have seen in the past the tremendous ability of recovery and survival of this regime. We remember 2009, the riots, 1.5 million Iranians poured into the streets. And we remember 2022, the hijab. So I don't have a definite answer right now, but I can say one thing, that the only way in the near future is to make sure that Iran is no longer a nuclear threat, not to Israel, but to the world, is by the change of the regime. It's not going to happen now. It's not going to happen one day, but I strongly believe in the process that we are right now planning that will eventually lead to that.
Oded, let's just talk about an area in which you specialize. We have watched over the last 18 months the Israeli security forces deliver a significant blow to Hezbollah and to other proxies within the region of Iran. What is the capability within Iran to deliver something similar now? And we talked about Fordo, and we're trying to figure out whether or not US capability is required to destroy that site. Can it be done with alternative measures? You say that we need this, Israel needs the United States. But if it doesn't get the assistance from the United States, how long will it take to reach the same objective, and how will it achieve that objective?
Israel had pretty good capabilities on the ground in Iran. As you can see, Israel had managed to penetrate Iran and cover almost every place in Iran. That I can just imagine that the Mossad agents are working freely everywhere in Tehran. And then, having said that, it's you know that they're also recruiting assets and spies and so on. But it's a very, very difficult task to annihilate or eradicate Fordo independently without the Americans. I don't say it's impossible. We can inflict a huge damage on Fordo in different ways and different tactics. But I think if we want to shorten the process and to reach as soon as possible some sort of an agreement, Americans should step in.
So what is the state of the Chinese movie industry from IMAX's perspective? I know you're at the higher end right now, and but more percentage of the big blockbusters are going into IMAX, and Chinese seem to be buying them, at least through January through May. What does January through May, how does that translate to projections for the rest of the year?
So we're having a great year. Obviously, it started out with a very strong Chinese New Year. We're seeing high, big tentpole films coming in, both from Hollywood as well as the Chinese local language slate. So, I think we're on our way to one of our best first halves. We've got titles coming in, getting dated, almost day and date with the rest of their global releases. Mission Impossible 8, Jurassic World, How to Train Your Dragon, further out, Zootopia 2, and then finally, this tiny little movie called Avatar 3 at the end of the year. So lots coming in on the Hollywood front.
Now, wait a minute. I thought the Chinese economy was slowing and the consumers are more discerning, and I thought there was a trade war that was going to be impacting the number of U.S. films coming into China.
Yeah. Yeah, business is really as usual. It's pretty great to see. The process of importation is really been very smooth. These films are getting dated with regularity, and there's really nothing very much changed that we've seen over the past few months, and we expect that to continue. So I hear about this trade war, but we haven't exactly felt it directly hit our business.
Why is that? There was a lot of noise, obviously, with the tariffs and Donald Trump's proclamation about bringing films back to the United States and tariffing foreign films that come into the United States. But is that all a bunch of nothing? I know Richard, your boss, has talked about it's just a bunch of noise, but it hasn't been impacting you?
I got to agree with my boss, right? It started out, with a couple of bloggers that basically started some online rumors, and there was about a week of frenzy around it, and then 7 days later, it was very clear that business was back to usual. So I think there's always been a lot of noise, and there will always continue to be some noise. But for our little sector, we're pretty protected from a lot of the outside noise.
So what's going on with Wanda? Because I believe they operate, about 50% in China of your IMAX screens, and they're going to be converting more of them to the higher end. Tell us about that.
Yeah, that was an announcement we made earlier this week, something we're really proud of. I think in particular with that announcement, it's not about new sites, but it's really about converting other premium formats. So that, I think, is just further confirmation of the demand for IMAX in the market. Replacing other premium formats with IMAX. Obviously, there's a lot that goes into considering that, and certainly on Wanda's ROI and looking at the financials of what IMAX means to them, and the brand and what consumers are really looking for right now. We saw, I think it was Lighthouse Research did a survey, and 82% of the Chinese population now prefers large premium formats. Obviously, IMAX is leading that. But this strong preference for premium is not going away. In fact, I think it's only getting stronger.
The premium quality, but there's a premium price according to that as well. And also filming, I believe, in your more advanced cameras and production equipment is more expensive. Beijing and Light and others have talked at the Shanghai Film Festival about maybe there's too many films being made right now for mass market. It could be about half of that, because costs over the last decade have more than doubled, or tenfold, I believe is the term that it was the figure they used.
I saw that earlier this week. What is the correct number of films to be making any given year, I think is anyone's guess, right? Yeah. I'm not sure exactly which types of films they were referring to. For us, I don't really see that being a factor that influences our business. We're in the business of doing the biggest blockbusters, whether they're Chinese language or Hollywood. And for those films, I don't think we're going to see a shortage in sort of investment for that. Our cameras, if anything, I think they add to box office, and that's why so many filmmakers and studios want to be using our cameras. Yesterday we announced 3 new titles, Chinese language titles, Dongji Rescue, right. The Cool Fish 2, and then Writer's Odyssey 2, all of which are going to be releasing this summer and before the end of the new year.
So what did Ne Zha 2 basically do to the industry? Because that was really the tentpole for the box office success of late, and there is some concern that after that runs its course, that maybe the demand will taper off.
For me, I think Ne Zha 2 proved one simple thing. The audience is there. If you make a good movie, the audience is there. And they showed up in huge numbers. We, year to date, a lot of help from Ne Zha 2, have seen 22 million in attendance for IMAX. Right. That's a very large number. And so I think, it
was double year over year, wasn't it?
It was double year over year, that's great. You got your numbers there. So I think it proves that the theater-going audience in China is really strong. It's really about the content supply.
But how resilient is it? The economy is not doing as well as authorities would like, no doubt. And people are holding on to their discretionary money, their household savings.
Mm-hmm. Well, I think that going to watch a movie is still a really high ROI for people. You're paying less than $10 to be entertained for 2 to 2.5 hours. In the summertime, it's air conditioned. You've got popcorn, you've got Cokes. I mean, in terms of time and money, I think it's still a really high value proposition. So I think that's one of the reasons why we're still seeing a lot of growth in our market share. Again, year to date, we're doing 5% of the total box office in China. That's the highest we've ever done in any year. And I think people, again, goes back to wanting that premium experience for what is, I believe, a really reasonable cost.
What would be the target then, from 5% to what over the next 5 to 10 years? Of course.
From 5 to 100.
You're taking that to Richard and saying that's our business plan for the next 5 years?
No, we don't give ourselves sort of a target number.
Yeah.
I mean, we have less than 1% of the total screens in China. We've got about 800 screens in China. So, doing 5 times that in box office is something we're really proud of. But always, I think there's room to grow. And we're going to be pushing the limits into double digits.
Let me just ask you about the latest, which is that President Trump seems to be opening a window, a door to the diplomatic channels, and says that he has not made a final decision on whether to get involved in this war militarily, essentially buying about 2 weeks of time before we know exactly what the U.S. are going to do.
Yes, I think you're exactly right. I don't think his initial instinct or his basic instinct is to go to war. In fact, he returned to power on the promise of withdrawing the United States or ending endless wars, needless wars, as he would see them. So I think his first choice, his first preference would be for a diplomatic deal. Of course, his terms for a diplomatic deal so far are not terms the Iranians have accepted. And perhaps he sees the coming 2 weeks with sustained Israeli military pressure as the time in which Iran will do a review and perhaps decide to climb down from its refusal to give up its uranium enrichment. That really is at the heart of this diplomatic dispute. Now, it's also worth remembering the phrasing within 2 weeks actually gives a very hazy timeline. Essentially, he can make a decision a minute from now. He can make a decision 2 weeks from now. And if it's 2 weeks from now, that takes us up against the July 4th holiday, Independence Day in the United States, perhaps a time when he would want to hold up a successful U.S. military offensive, military intervention in Iran as part of his administration's success. So it's very hard to know if there's also a tactical haze here, a sense that he might be wanting to, again, lower the guard of the Iranians for an eventual U.S. intervention militarily, if that happens.
The conversations around, is it an emerging market? Does MSCI or some of the index compilers, do they look at them eventually as becoming a developed market? It doesn't seem to be the case right now for MSCI, at least on the surface. How do you think about that? How does that change the outlook? Is it a good or possibly a bad thing that it becomes a developed market in that sense?
In terms of flow, it's not going to be a positive. We calculate that there would be some outflow if Korea goes into the developed market. Now, what it means to go to a developed market in terms of trading, in terms of currency, so that could make the valuation of the stock market better. So
इंडियन मार्केट क्लोज हो चुका है, ये क्रूड ऑयल में निकल जाना बायर्स, ठीक है, क्रूड ऑयल में भी बाकी जो लोग अभी भी होल्ड करके बैठे हुए हैं, ट्रेल कर लेना, काफ़ी देर से रुका हुआ है, ब्रेक करके नीचे आता है तो फिर नीचे सपोर्ट तक गिर सकता है। कोई न्यूज़ भी नहीं आ रही है तो उस वजह से साइडवेज है आज मार्केट कम्प्लीटली। मॉर्निंग से देखोगे एक रेंज बना रखी है एंड कहीं ना कहीं 6400 के आसपास पॉइंट ऑफ इंटरेस्ट है। अनटिल अनलेस नीचे ब्रेक नहीं करता या फिर ऊपर ब्लू कलर की लाइन के ऊपर नहीं निकलता तो रेंज में ही रहेगा। आ जाए नीचे तो बढ़िया ही है, नीचे का सपोर्ट भी अच्छा रहेगा बाई करने के लिए फिर से। सपोर्ट है, ब्रेक नहीं किया है क्रूड ने नीचे, ब्रेक करना ज़रूरी है अगर कंप्लीटली सेल ऑफ चाहिए नीचे डाउन साइड पे। नेचुरल गैस भी साइडवे चला गया रेजिस्टेंस पे, ऑलमोस्ट देखोगे कल रेजिस्टेंस पे आया था, आज भी वहीं पर था, ऐसा लग रहा था फास्ट सेलिंग आएगी बट लग नहीं रहा। ऑलमोस्ट 4 बजने वाला है, तो मॉर्निंग 9 AM टू 4 PM 6 घंटे हो चुके हैं इसी रेंज पे साइडवेज होते हुए प्राइस में, ऑलमोस्ट 6 आवर। बाकी 2 दिन मार्केट क्लोज है, कल परसों सैटरडे संडे, ज़्यादा रिस्क लेना मत, मोमेंटम अभी नहीं आएगा तो इवनिंग पर ही आएगा 5:30 न्यूयॉर्क सेशन की ओपनिंग के बाद। बाकी इंडियन मार्केट को भी देखोगे, बैंक निफ्टी पॉजिटिव क्लोज हुआ है आज निफ्टी के साथ 1% से ऊपर। वीकली जो कैंडल है वो भी ठीक ठाक ही क्लोज हुई है, फ्लैट से हल्का सा पॉजिटिव साइड कह सकते हैं, लास्ट वीक तो अच्छा खासा सेल ऑफ आ गया था। ओपनिंग देखेंगे कल, अगर सैटरडे संडे कुछ खास नहीं हुआ इन द सेंस ऑफ मार्केट ऐसे ही मूव करता है और कोई बड़ा सेल ऑफ नहीं आता है या गैप डाउन नहीं होता है तो हो सकता है, या फिर वॉर में यूएस इन्वॉल्व नहीं होता है तो हाई चांसेस रहेंगे कि मोमेंटम हो जाए। बाकी ऑप्शन की एक्सपायरी रहेगी मंडे के दिन, तो प्रीमियम बहुत ज़्यादा डीके हो रहा है ऑप्शन बाइंग में नेचुरल गैस का, तो ध्यान रखना नेचुरल गैस में जो लोग ट्रेड करते हैं या कर रहे हैं। What's going on? गाइस लाइक करते रहो सभी लोग, कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हो। गोल्ड में भी देखोगे एमसीएक्स में तो गैप डाउन ही हुआ था सीधा, उसके बाद से बिल्कुल रेंज बना के बैठा हुआ है आज मॉर्निंग से। एंड फॉरेक्स में भी ऑलरेडी लगभग 0.5% यहाँ भी डाउन है। ऑल टाइम हाई को टच नहीं कर पाया स्टिल। लेट्स सी सेलिंग आती है क्या यहाँ से। डेली टाइम फ्रेम पे पिछले काफ़ी टाइम से एक रेजिस्टेंस के आसपास बना था, वॉर के चांसेस थे, ऊपर गया थोड़ा बहुत, वापस सेल ऑफ में आ गया उसी लेवल के आसपास जहाँ 9th और 8th ऑफ 6th ऑफ जून के आसपास था जब वॉर स्टार्ट हुई थी उससे पहले। कल 21st ऑफ जून भी है, कल योगा दिवस भी है। हैप्पी योगा डे एज वेल। टुमारो इज योगा डे एज वेल। योगा जरूर करें। सूर्य नमस्कार बहुत ज़रूरी है। ठीक है, बाकी देखो 3:30 हो गया है तो मुझे लग रहा है शायद थोड़ा सा वॉल्यूम कम रहे टिल 5:30 पे लंदन सेशन के बाद न्यूयॉर्क सेशन ओपन हो जाएगा, तो वेरी हाई चांसेस कि मार्केट उसके बाद थोड़ा सा मूव कर जाए। अभी तो लग नहीं रहा कि मूव करने वाला है करंटली। थोड़ा बहुत जो मोमेंटम आना था 12:30 के बाद आ चुका है ऑलरेडी। नेचुरल गैस साइडवेज ही है, चौथी बार आया था यहाँ पर कल, साइडवेज चला गया। देखते हैं अभी निकलता है ऊपर या फिर नहीं। यहाँ चला जाए तो बेटर ही है ऊपर के लेवल पे। नीचे भी रिटेस्ट है, सपोर्ट एरिया है, पुल बैक भी नहीं आ रहा है। कल परसों से कंटिन्यूसली बुलिश है, नो इवन स्मॉल पुल बैक भी नहीं आ रहा है इसमें। नॉर्मली तो आता है बट नॉट राइट नाउ। बाकी एक डेटा भी है ध्यान रखना 6 बजे, फिलाडेल्फिया फेड मैन्युफैक्चरिंग इंडेक्स का, ये भी गोल्ड और सिल्वर को इम्पैक्ट करेगा मेनली तो। बाकी S&P 500 नैस्डैक को देखोगे ऑलमोस्ट फ्लैट ही चल रहे हैं। कल जिस हिसाब से डाउ जोन्स 200-250 पॉइंट गिर गया था अर्ली सेशन पे, ऐसा लग रहा था और डाउन जाएगा बट नहीं। गैस की इन्वेंट्री जब रिसेंटली आई थी, फोरकास्ट 96 बिलियन था, उससे कम आया था डेटा 95 बिलियन। उस दिन तो कुछ हुआ नहीं, वेबसाइट ने इसको न्यूट्रली लिया था, बट 1 पॉइंट का डिफरेंस था, 96 से 95 आई थी, कम आई थी, तो इट इज़ पॉजिटिव फॉर नेचुरल गैस प्राइस। तो 18 के बाद देखोगे नेचुरल गैस रुक ही नहीं रहा। 18 के बाद अगर नेचुरल गैस को देखा जाए, 18 का प्राइस एक्शन 17 था, 18 को इन्वेंट्री आई थी शाम को, मार्केट यहाँ पर इन्वेंट्री था, आई थिंक ये इस एरिया के आसपास इन्वेंट्री आई थी, उसका साइडवेज गया। 18 को 19 को भी साइडवेज ही रहा, फिर कल थोड़ी बहुत बाइंग आई क्लोजिंग होते होते, फिर रेजिस्टेंस को हिट किया, वहाँ पर टक गया कल से, आज भी वहीं पर रुका हुआ है। तो इन्वेंट्री के बाद देखोगे, इन्वेंट्री जिस दिन आई थी उस दिन तो कुछ इम्पैक्ट हुआ नहीं, उसके बाद मोमेंटम जरूर हुआ है। मेनली मुझे लग रहा है वही मिडिल ईस्ट में जो टेंशन चल रही है उसकी वजह से कहीं नेचुरल गैस की सप्लाई पे इम्पैक्ट ना हो, और तो कोई रीज़न है नहीं। देखो नेचुरल गैस में यहाँ पर एक वैसे तो अभी तक ब्रेकआउट हुआ नहीं है, ब्रेकआउट हो जाता तो बेटर था, रेजिस्टेंस ब्रेक हो जाता तो हमें ऐसा कंफर्म हो जाता कि यहाँ पर जो सेलर हैं हम निकल ही गए हैं। अदरवाइज जब तक ये इसके ऊपर ब्रेकआउट होगा नहीं, वी डोंट नो कि ये ब्रेकआउट करेगा भी या नहीं करेगा रेजिस्टेंस के ऊपर। नहीं तो यहाँ पर एक बाइंग का ट्रेड ले लेते ब्रेकआउट के लिए विद द एसएल ऑफ लगभग 2 पॉइंट के साथ। ठीक है, ट्राई करना चाह रहे हो तो ये कर सकते हो, वैसे तो इसमें मुझे और कुछ लग नहीं रहा, बन रहा है ट्रेड। बट इसमें दोनों ही चीज़ अगर हम सेल करें वो भी रिस्की है, क्योंकि ऊपर रेजिस्टेंस इतने बार टेस्ट हो चुका है, ब्रेकआउट होगा नहीं होगा हमें भी नहीं पता, जब तक हो नहीं जाता अब तक कह नहीं सकते। तो एक ये ट्रेड अगर प्लान करें एंड एक्सपेक्ट करें कि ब्रेकआउट कर दे, तो एक ये टारगेट मिल सकता है, बट ये थोड़ा सा रिस्की रहेगा, क्योंकि रिस्क इसमें इतना ही है कि ब्रेकआउट नहीं हुआ है अभी तक। एक बार अगर ये ब्रेकआउट हो जाए यहाँ से, लाइक ये कैंडल ही ऊपर ब्रेक कर दे और फिर नीचे आए और फिर तब बाई करें, दैट इज़ आफ्टर कंफर्मेशन कि चलो ब्रेकआउट हो गया, रेजिस्टेंस अब होल्ड नहीं करेगा, तो पुल बैक में एक तरह से बाई कर सकते हैं, क्योंकि ऐसा भी हो सकता है कि काफ़ी देर कंसोलिडेशन करे और फिर नीचे आ जाए। नॉर्मली तो सेलिंग थोड़ी फास्ट ही आती है। तो अभी यहाँ पर कुछ भी ट्रेड लेना, बाइंग या सेलिंग दोनों ही रिस्की हैं। सेलिंग रिस्की इसलिए क्योंकि मल्टीपल टाइम टेस्ट हो गया है, बट इतने देर से रुका हुआ है तो 50-50 चांसेस हैं, नीचे भी आ सकता है, ब्रेकआउट भी कर सकता है। बाइंग के लिए जाएँ तो अभी तक ब्रेकआउट हुआ नहीं है, वो एक कंसर्न है, जब तक ब्रेकआउट सक्सेसफुली होता नहीं, हमें नहीं पता ब्रेकआउट एक्चुअल में करेगा भी या नहीं, हो सकता है नीचे ही आ जाए। अदरवाइज इसमें कि बाइंग का ट्रेड जरूर ऐसा लग रहा है कि बन सकता है ओवर हियर, हल्का सा छोटा सा ऐसा लगा के। तो अगर कोई ट्राई करना चाह रहा है तो वो ट्राई करना, वैसे क्योंकि इसमें एक्सपायरी भी है मंडे को, तो ऑप्शन बाइंग करना तो बिल्कुल भी सही नहीं है अभी, चाहे कॉल लें या पुट लें, ऑप्शन बाइंग इज़ नॉट रिकमेंडेबल। किसी एक साइड निकल जाता तो बेटर रहता। और ये वैसे रेंज देखोगे डे हाई से डे लो कोई बहुत बड़ी रेंज भी नहीं है, सिर्फ 2.4 पॉइंट की रेंज में घूम रहा है मॉर्निंग से। एक्यूमुलेट हो रहे हैं, पता नहीं बायर और सेलर दोनों ही फाइटिंग में है। जो भी जीता उसी डायरेक्शन पे मोमेंटम, क्योंकि इस तरह के मोमेंटम में ना जब रेजिस्टेंस पे प्राइस होता है तो कई बार फेक मोमेंटम भी आ जाता है, लाइक इस तरह से ब्रेकआउट हो या फिर ब्रेकडाउन हो और फिर रिकवर करके ऊपर नीचे आ जाए। रिसेंटली यहाँ पर हो चुका है एक बार इसी लेवल पे नेचुरल गैस में सेलिंग के लिए, फेक ब्रेकआउट दिया और वापस नीचे, बट वो सेकेंड टाइम आया था इस पर्टिकुलर जोन पे। तो मेरे अकॉर्डिंग तो एक बार रेंज ब्रेक हो जाए तो बेटर है, तो ऊपर ब्रेकआउट ही करे या फिर नीचे ही क्लोज कर दे एटलीस्ट 352 के नीचे, फिर देखते हैं। इस लेवल पे आ जाए तो बेटर है। सी नेचुरल गैस निकलता है या फिर नहीं 356 के ऊपर क्लोजिंग दे दे, बढ़िया है, ब्रेकआउट हो जाएगा इजीली। बाकी देखो नेचुरल गैस अगर ऊपर आया तो ऊपर का रेजिस्टेंस अभी भी ठीक ही है, 364 65 का जो जोन है अपर लेवल पे नेचुरल गैस इतने बार यहाँ पर टेस्ट हुआ है, तो एक फाइनल टाइम्स अगर यहाँ पर मिल जाए करंट लेवल पे। मान सकते हैं इसको हम, कल रेजिस्टेंस पे आया है तो कल से ऑलमोस्ट 9 पीएम पे रेजिस्टेंस जोन को हिट किया था नेचुरल गैस ने 356-55 का जो लेवल था। कल 9 पीएम से अभी ऑलमोस्ट 4 पीएम हो चुका है। तो 19 आवर्स से इसी रेजिस्टेंस पर है कह सकते हैं। दिस स्टेटमेंट इज करंट 19 आवर्स से सेम ही लेवल पे रुक गया है नेचुरल गैस। ठीक है, देखो एक और ट्राई करते हैं। इतने देर से रुका है, अब तो मूव करेगा नेचुरल गैस। क्रूड ऑयल का मॉर्निंग से थोड़ा बहुत वो भी ऐसे तो रेंज के अंदर ही है, बट फिर भी ठीक ठाक ही मोमेंटम कर रहा है। तो एक फाइनल टाइम अगर यहाँ पर रुकता है, वैसे सेलिंग देखो रुक फास्ट ही आती है हमेशा, बाइंग थोड़ी स्लो आती है, बट सेलिंग इज ऑलवेज फास्ट, स्पेशली अगर मार्केट रेजिस्टेंस को हिट करके गिर रहा है। एक तो है कि सपोर्ट को ब्रेक डाउन करके सेलिंग आती है, ब्रेकआउट करके बाइंग आती है। एक है डायरेक्टली रेजिस्टेंस पे सेलिंग आ जाए, तो वहाँ पर ज़्यादा देर रुकना नहीं चाहिए। ठीक है, एक छोटे से एसएल के साथ ट्राई करेंगे। अगर नहीं रुकता तो फिर नेक्स्ट ऊपर का रेजिस्टेंस वहाँ पर भी जैसा मैंने बताया 1 2 3 4 5 6 1 2 3 4 5 6 7 टाइम आ चुका है, 7th। वन टाइम, 2 टाइम।
What we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. What it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs. Ultimately, the cost of the tariff has to be paid, and some of it will fall on the end consumer.
Here's the latest. Fed Chair Jay Powell saying tariff impacts are coming as policymakers wait for clarity. Stephanie Roth of Wolfe Research saying if tariff-driven inflation isn't visible in CPI, that would be concerning. To the extent CPI doesn't rise, that suggests someone else along the supply chain isn't absorbing the tariffs. Stephanie joins us now. A fascinating take after what we heard on Wednesday, I guess it was, where Fed Chair Powell said we will see the data change. If we don't, does that suggest that profit margins are actually shrinking considerably?
Yeah, exactly. And that would be the demise of the economic cycle. If we start to see profit margins roll over, then you start to see layoffs, and that would really become a self-fulfilling prophecy towards recession. If we end up seeing it flow through to CPI, which is very much our base case, and the consumers are likely to be able to absorb it, and we can kind of go on our way, and this could just be a fairly short shock.
Well, that really raises the issue of how the Fed considers this, because right now, based on their summary of economic projections, they do see an increase to inflation and a decrease to growth, but they don't see that as being a lasting inflation shock. Is that your base case as well, and do you think that allows them to look through that and still cut rates?
Well, look through that, yeah.
इन चांसेस क्रूड ऑयल नेचुरल गैस डाउन साइड चांसेस का नहीं कह सकते सर, चांसेस से मार्केट थोड़ा नहीं चलता है। फिलहाल भी मैं कह सकता हूँ जब तक ब्रेकआउट नहीं होता तब तक रेजिस्टेंस पर ही है, और नीचे भी सपोर्ट है। अगर मार्केट को थोड़ा बड़ा फॉल करना है तो एटलीस्ट 352 के नीचे अगर क्लोजिंग बेसिस पे आ जाता है, ठीक है, इस सिनेरियो के नीचे कहीं अगर क्लोजिंग बेसिस पे आ जाता है तब एक कंटिन्यूसली फॉल हो सकता है थोड़ा बड़ा एज कम्पेयर टू करेंटली, एंड उस केस में फिर 344 342 तक जाने की प्रोबेबिलिटी बहुत ज़्यादा बढ़ जाएगी। अभी के लिए तो ऐसा कुछ भी होता हुआ नहीं दिख रहा है।
been incredibly resilient. And I tend to get more worried about being later in the cycle when there's a lot of leverage and excess in the economy, which does not seem to be the case. We did get an inversion of the yield curve, which hurt small businesses, hurt different parts of the economy. But if you look broadly, the next things to look at are credit spreads blowing out, are bankers tightening lending standards. We saw a bit of that here and there, but that's not where we are currently.
Although the leverage is in governments, which is the reason why people are watching a lot of the government auctions.
But not showing up at the business side, and the banks don't appear to be over-levered.
Which is the reason why people are wondering whether you could end up getting corporate spreads that are inside where we see government bond yields based on the better profile. Brian Levitt of Invesco, thank you so much for spending the hour this morning. Coming up next, Dan Greenhouse of Solis Alternative Asset Management, Bloomberg's Akela Gardner, Tom Nides of Blackstone, as well as former Kansas City Fed President Thomas Hoenig, as we look ahead to the next 2 weeks, which should be rather eventful. You're watching Bloomberg Surveillance.
In case you missed it on the opening trade.
What trade does is it meets a consumer demand. Consumer demand is not weakening. China supplies a little over 30% of what we eat, wear, and consume. That's unlikely to change anytime soon. I think that supply will find new homes potentially, but our reliance as a global economy on Chinese manufacturing is unlikely to change fundamentally anytime soon.
Don't miss the opening trade live every weekday.
Asia is a continent of contrasts. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Min-Seok, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불지." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
In case you missed it on The Pulse.
I think the idea of wait and see and pause is really yesterday's news. Our best advice to CEOs right now is that if you're not operating differently than you were a year ago, you may be falling behind. Yes, we need to build resilience, but we need to also build growth despite the environment, and that requires a different strategy than just a year ago.
Don't miss The Pulse, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
We're
back to where we were in January with a different set of risk and a different set of facts, which look worse.
When you look at this year, markets have gone through the entire range of emotions.
Yes, the market is very resilient, but yes, it's very well aware of what's going on.
There's clearly signs of softening, but everything's been very low grade.
The macro picture for now is still not too weak.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance as we look to a rule of 2 weeks. 2 weeks on a decision on whether the U.S. directly strikes Iran. 2 weeks until the tax bill is due. 2 weeks until the reciprocal tariff deadline. Danny Berger joining me for the next 2 hours. John and Anne-Marie are both off today. It feels like we're going to learn a lot in the next 2 weeks, but for now, it feels like we remain in the dark.
We're in the dark, but there's so much noise in the meantime, coming from geopolitics, coming from politics in general. But maybe what's the loudest has been the silence from this market. For this week, for stocks, it's been the tightest trading range since January. For bonds, the tightest trading range since December. There's not a lot of movement with a lot of the risks that you're highlighting on the horizon.
There's a lot of exhaustion right now as you take a look. S&P futures lower by about 0.2%, but you're right, on the week, basically flat. NASDAQ futures down about the same. Russell 2000 outperforming, and perhaps the reason why is in the 2s, 10s, 30s bond space. You see yields somnolent this week, also basically going nowhere today, up about 3 basis points on the long end, but still quiet, 3.94% on the 2 years. People look to dovish central banks around the world, really giving a boost to this idea that central bankers are looking past the potential inflationary hit and towards some sort of growth shock.
We do have a timing issue here. There was a really interesting study from the Danish Central Bank recently saying, looking at all the trade shocks from the 1990s, it takes at least a year for the economic effects start to filter in. So you get this feeling from the Fed, maybe they want to wait and see how inflation plays out. September has been made the timeline. Maybe we won't even know the real effects in September. It might take longer than that.
In the meantime, you are seeing, though, the Bank of England not necessarily move, but signal they are going to be cutting rates. The Swiss National Bank looking at negative yields again, cutting to zero and signaling that they'll do whatever it takes to get people to stop going into the Swiss franc. And you have this idea of even the Norges Bank coming out with a rate cut, a sense that globally there is a feeling that the inflationary shock has abated.
It has abated. Again, for how long? There have been reports of stockpiling, and that means that the narrative of higher inflation comes longer on. One that is likely happy about this are governments, our fiscal policy. You see the likes of Japan this morning, for example, saying that they're pulling back on ultra-long bond issuance. The demand has been waning because of the uncertainty around inflation, because bond yields keep ebbing higher and you keep seeing losses there. So some of these cuts maybe will start to filter through and create more demand for bonds when policymakers need it so badly.
Yeah, this is a reason why people are maybe saying, or people being President Trump saying, look, if you cut rates by 2 points, we're going to end up with much lower borrowing costs in the United States. So get on it, Jay Powell. And Jay Powell says, listen, I am not your guy. I am just doing my job. Coming up for the next hour, Dan Greenhouse of Solis Alternative Asset Management with stocks on hold. Former U.S. Ambassador to Israel, Tom Nides, as President Trump gives Iran time for diplomacy, and former Kansas City Fed President Thomas Honig as Trump lays into Fed Chair Powell yet again. We begin this hour with stocks muted as President Trump buys time in the Middle East. Dan Greenhouse of Solis writing this. Things really ramp up with tail risks becoming reality and oil approaches triple digits. Otherwise, markets are in a bit of a dead zone until the next jobs report. Dan joins us now to talk about that dead zone. Dan, thank you so much for being with us.
Thank you for having me.
It feels like, why would anyone get long risk right now heading into this weekend, given the fact that a lot of things could change and it's very hard to really get an edge on it?
Yeah, the quote you just read is sort of I did a poor job of articulating what I was trying to say in a larger sense, but the triple digit oil scenario is in a worst case scenario, if you will, where we end up bombing the Iranian nuclear facility and things spiral a bit out of control. And so from a trader standpoint, you are certainly a little reluctant to be long risk into a weekend when something like that can happen. Although, admittedly, you're probably taking some comfort from the president saying, yet again, a decision will be made in the famous 2-week time frame. So perhaps you think, okay, well, maybe not this weekend, but at this point, we're living through a moment where any time in the next 24, 48, 2 weeks, you could have an attack on that facility. And to be clear, I think all the foreign policy reporting is that all the tools are in place for that to actually happen. The question is, at this point, just a matter of when.
There is a question also of just whether we do get clarity in the next 2 weeks. There's been sort of a rolling 2-week time frame that we keep getting. Yes, it'll show up in the data, maybe in 2 weeks. Yes, it'll show up in some sort of policy decision in the next 2 weeks. At what point do you count on clarity, or do you say, you know what, this is the new normal. We're going to go into what we know, and we're going to basically stay away from whatever we don't?
I think for now, I think you said on the show the other day, the only certainty right now is uncertainty, or the scarcest commodity is clarity. Someone said something like that. It was really terrific. I think some version of that sentiment is true. The 2-week time frame I do disagree with. I mean, the situation with Iran is going to be with us for a little while. Obviously, bombing or not bombing, we'll know when it happens. But the larger story about tariffs is going to be with us for a while. I have disagreed with people who have taken total comfort, as you alluded to in the opening monologue, that for now the tariff story is not played out, and so markets are at a high, spreads are at their tights. The story from my standpoint was always going to be in the middle to end of the summer. So it's when you get the July inflation report in August or the August inflation report in September, you're going to have a lot more clarity by then. Until then, my argument for being long risk assets, as we were selling off, is you're not going to have that clarity, or at least the first inclinations of that clarity, until later in the summer, in which case, why are we down 20% off the highs? And so I disagree with, not that you said this, but I disagree with the idea that 2 weeks is the time frame. I'm operating more in the next 2-month time frame.
If we get something in the 2 weeks that looks like U.S. involvement, it maybe is a shock, but it's another one of these shocks that I don't know if we can count it as such, because a shock is supposed to be something you don't see coming. And we keep getting a lot of that, be it geopolitics, be it coming from the White House, be it policy. Does that mean for these types of shocks, I'll keep calling it, how we trade it and how we treat it is different than how we usually did in the past?
That's fair. That's fair. The fact that we're all waiting for some explosion, and when the explosion comes, doesn't make it any less shocking. I mean, I asked my wife out. I thought she'd say yes, and she did. I was still fairly shocked. She's quite fetching. But that issue, I think from an investor standpoint, whether you're in credit or equity, structured products or commodities, we're all sort of looking at the same thing, which is, when is this going to happen? Is it going to happen? And what are the effects? And there are really 3 things that you're wrestling with now. One is what looks likely to be happening right now, which is just the status quo. Ongoing hostilities, skirmishes here or there, et cetera, and oil in particular holds at this mid-70s level for a prolonged period of time. How does that operate? You've already seen retail gasoline at the pump tick up. It was $3.10, $3.12. Now it's $3.20. So consumers might, for the moment, pull back. Another scenario is that clearly nothing's going to happen, and oil is going to probably fall back into the mid to low 60s, if not further over time. And then the tail risk scenario, to the question about being long risk into the weekend, is that we bomb Fordo, and they attempt to close the strait. And while I think there are fair questions about the Iranians' ability to close the strait if they tried, the attempt to do so is going to be good for $100 oil. And that was the point I was getting at earlier. And then what does the risk landscape look in the short term? Again, I think the longer-term issue is Iranian forces are probably not going to put up too long of a fight against the U.S. and Israel, the combined forces. However, in the short term, are there missiles lobbed into Saudi Arabia? Do they attempt to close the strait and hit a ship or two? Those issues are what you wrestle with, and could lead to, certainly would lead to some destabilization in the short term.
I mean, that is a fat, ugly tale. But do you understand what oil would do? Do you understand what other risk assets would do? How prolonged any sort of weakness there would be, given the very short bouts of weakness we've seen this year?
I mean, you can build a framework for historically what happens during the situations when oil jumps up by $25, call it 25%, 30% in short periods of time. Equities will probably be down 10% off the highs, if not more. Gold will spike, et cetera, et cetera. You can build a framework for what that's going to happen. The problem is, from an investor standpoint, is you really have 2 different types of investors here. One is, oh, this is fun, I'm going to try to exploit these issues. And then there's a whole chunk of us that are like, well, I invest over longer time frames. I put money to work in companies, we invest in the companies, we lend money to companies for 3, 5, 7 years, in which case what happens over the next 3 months in the oil market is largely irrelevant.
So basically, some people are saying this is fun, and then the rest of you are saying not so much. Can you give us something to actually work with? Let's talk about what we actually do know.
Yep.
Because I was looking this morning and thinking, okay, there's a lot that we don't know that's going to be decided in the next 2 weeks. But there's some things that we have learned in the past couple of months. Number one, AI is still here, robots still threatening to replace us, and people who can program them, create
they're not
them,
replacing us.
envision them. All right, let's just leave it alone. But et cetera, are going to be paid $100 million bonuses and are in great demand. Okay, that is still something that we're seeing profitable. We're also seeing that central banks globally are leading to the dovish side, and that is notable.
Yep.
And it is led by Europe, not the U.S., which really threatens the whole dollar trade, but I'll leave that aside for just 1 second. A real question of how much that gives a tailwind, certainly to markets overseas. Yes, we don't understand what's happening on the geopolitics, but how much do those two themes alone send you more into certain risk assets that you can count on because you can bank on these particular threads?
So we've talked about this in the past, and any number of other people have as well. The AI story, I think, clearly is here to stay. And whether it's NVIDIA or Broadcom, et cetera, for a year now, 2 years now, there's been a little smoke. You've had, well, we're not going to invest in that data center as much. The DeepSeek Monday was a moment. But the CapEx story remains in place. The investment story remains in place. And to your point about the $100 million bonuses, which, by the way, I don't believe that. But
really? You would take it, right?
$100 million bonus?
It's okay. You don't have to answer. I mean, anyway, Solis, he's doing great.
So how do you know Solis isn't giving me $100 million?
All right. Carry on.
They're not. But that story is still an important theme in markets. And when you look at the factors that have worked this year, size across spaces has been one of them. And I'm looking now, Microsoft is up 14%, NVIDIA is up 9%, Meta's up 19%, basically at a high. The only one of those big names that's not working is Apple, because the street generally views them as having missed, at least thus far, the AI trade entirely. Now, we'll see in the fall whether that's the case or not. But that theme is wholly in place in the market. You see it in utilities are the third best performing sector. That's because of Constellation and Vistra and the deals with Amazon and Microsoft. So that story is wholly in place. The replacing us, man, I know everyone's talking about this.
Yeah.
I saw a debate the other day, the 30-hour work week that was predicted 100 years ago is finally. No. I don't think that. The history of the United States and productivity-enhancing technological advances. The cotton gin is the one everyone uses, but what about the ATM machine or the computers in the 1990s, et cetera, has always resulted in just a reorganization of the economy, not a replacement of the economy. And I was just reading Chip War, the book about, obviously, semiconductors, and he was talking at one point about all the women that were employed connecting the wires into the wall. That obviously was replaced by switches, by Cisco, and all those people had to find new jobs, and they did. And I can't imagine that this time is not going to be different. The idea that we're all going to be sitting around playing tennis all day, Danny.
I feel attacked. It's okay.
Worrying about how we're going to kill 40 hours or 100 hours a week, no matter how much you work. I think that's science fiction, at least for now.
Right now, I will just say this is the topic of discussion in my household. And one family member was saying, I want to invest in robots that treat us like rich pet owners treat their dogs. So I have to wrap my head around that and look for that company down Greenhouse to sell us alternative asset management. You don't have to respond to that. You will be sticking with us right now. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anna. And Yahira.
Hi, Lisa. The White House says President Trump will make a decision on whether to strike Iran within the next 2 weeks. White House Press Secretary Caroline Leavitt says the president's goal of preventing the country from obtaining nuclear weapons remains intact. She added, however, that if there's a chance for diplomacy, the president is always going to grab it. Meanwhile, Pop Mart shares tumbled in Chinese trading after state media called for stricter regulation of blind box toys and trading cards. China said some business models induce minors to become addicted to purchasing these products. The warning did not call out Pop Mart by name, but the company is well known for selling those blind box toys like its popular toothy monsters, Labubu dolls. And a 16-year-old restaurant in Lima, Peru has been named the best in the world. Maido specializes in Nikkei cuisine, which is a combination of Peruvian and Japanese flavors. The top 5 restaurants on the list are located in Peru, Spain, Mexico, and Denmark, with Italy and Bangkok having a strong presence in the top 50. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. What didn't have a strong presence was the United States, with just one restaurant, I believe Atomics, in that top 50.
It's okay, we got a Pope, so we'll, we don't need the top 50 restaurants.
There you go. You heard it from Danny Berger. Up next, a rift in the GOP.
The Senate needs to recognize they can make changes, they can enter into negotiations, but the fact is you need 218 votes to pass this in the House, and there is not a chance in hell that this bill will pass at $10,000, let alone less than $40,000.
The SALT contingent is going strong. Bloomberg's Kayla Gardner joining us next. This is Bloomberg Surveillance.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Going to be the consequence for U.S. markets.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. CFO Pascal Desroches has played a key role in restructuring AT&T, reducing debt and refocusing the business. Now his steady approach has the company primed for growth.
I'm a believer you try to make progress on big problems every day, and ultimately you'll look back and say, hey, you've come a long way.
Watch Chief Future Officer Wednesday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Finishing up the week on a little bit of a softer note, but as Danny said earlier, this has been one of the tightest trading ranges all year that has ended the week potentially almost unchanged. Right now, we're down about 0.2% on S&P futures. We are seeing a little bit of a sell-off in the bond space with that reprieve of 2 weeks, maybe, to make a decision, up about 3 basis points, 4.42% on the 10-year crude prices. In New York, up a little bit, but on the Brent contract, you can see a decline as that sigh of relief does continue. Under surveillance this morning, a rift in the GOP.
The Senate needs to recognize they can make changes, they can enter into negotiations, but the fact is you need 218 votes to pass this in the House, and there is not a chance in hell that this bill will pass at $10,000, let alone less than $40,000. I guess people, want to try and call our bluff. They tried that in the House. They tried to jam us, and we didn't fold.
Here's the latest. The battle within the GOP rages on as the big, beautiful bill's deadline nears in, guess what, 2 weeks. Joining us now, Bloomberg's Kayla Gardner. Kayla, how much are we seeing fissures that threaten to really derail the July 4th timeline for the one big, beautiful bill?
So the issue that you saw Congressman Mike Lawler talking about there is the SALT tax. The threshold that was passed in that House bill was $40,000. And in this Senate version of the bill, it's as low as $10,000. So there's deep disagreements, I should say, between Republicans in both of these chambers, particularly because they say it's an issue of fairness. This provision essentially allows filers to reduce the amount of taxes that they owe on their taxable income by the amount they already paid to state and local government. So that means a lot for people in places like New York, California, the suburbs of Washington, D.C., who make wealthy amounts of income. And yet you have people, Republicans in states that are lower incomes, saying this is unfair, that they feel as though their constituents are subsidizing this issue. There's also other risks. One is Medicaid. You have the Senate bill having deeper cuts to Medicaid. Basically, there could be millions of Americans who lose their coverage under the House bill and the Senate bill that has basically even more thousands of people that could lose that bill. And then, of course, there's the deficit. You have hawks in both the Senate and the House, and there's such a delicate balance. You saw that House bill take weeks to negotiate, and this Senate bill still has to go back to the House.
This is an iHeart podcast.
5 PM ऑलरेडी हो चुका, आधा घंटा और है न्यूयॉर्क सेशन की ओपनिंग पे. ओनली 30 मिनट लेफ्ट. फाइव 30 से पहले ट्रेल कर लेना. क्रूड ऑयल में तो निकल ही जाओ. बायर्स जो हैं डोंट होल्ड, या जो लोग होल्ड करके बैठे हैं अपना हाफ प्रॉफिट बुक करके ट्रेल करना. ये भी सुबह से रेंज के अंदर ही फंसा हुआ है, लग नहीं रहा है मोमेंटम करने के मूड में है. हाँ ठीक है. बाकी नेचुरल गैस भी देखोगे तो एक छोटा सा रेस्ट सेलिंग का ट्रेड लगाया हुआ है. कॉस्ट टू कॉस्ट पर ही है अभी भी. लेट्स सी नेक्स्ट 30 मिनट में मूव करता है या फिर एसलेट करता है. थोड़ा नीचे आ जाए तो बढ़िया ही है, नहीं तो ब्रेकआउट हो चुका है लेवल का. कल से इसी रेंज के अंदर फंसा हुआ था. अगर एक हल्का सा रिटेस्ट करके जाए तो बढ़िया रहेगा. फेक ब्रेकआउट ना हो बस. श्योर उसको देख सकते हैं दोनों पे. क्रूड ऑयल में पुट साइड एंट्री कहाँ पे होगी यार? पुट साइड रेजिस्टेंस पे होगी, यहाँ पर तो अभी नहीं है. नेचुरल गैस गोइंग अप, शुड आई एग्जिट पुट ऑप्शन एसएल हिट? अभी गया तो नहीं है एसएल. कॉस्ट टू कॉस्ट पर ही है. 5:30 तक वेट कर लो. 2 पॉइंट का ही एसएल है, जाएगा तो निकल जाना. ज़्यादा बड़ा एसएल लेना मत. बाकी 5:30 तक मोमेंटम नहीं आया तो फिर एसएल कॉस्ट पे रख सकते हो. $130 कब जाएगा? मुश्किल है. $130 जाना तो बहुत मुश्किल है. अगर यूएस इन्वॉल्व हो जाता है, फुल फ्लैज वॉर हो जाती है ईरान और यूएस के बीच में, इसके चांसेस हैं थोड़े बहुत, तब भी मोस्ट प्रॉब्ली $90 तक जा सकता है. 90 to 100. 130 तो रेयर चांसेस. बाकी अगर वॉर नहीं हुई तो वापस गिर जाएगा $60 के आसपास. ठीक है, 5:30 होने वाला है. लेट्स सी. Yes, that was the first time on resistance. ऊपर भी है बट यहाँ पर तो पहली बार ही आया.
Today, we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest developments involving Iran. The White House says President Trump will make a decision on whether to strike the country within the next 2 weeks. The president is scheduled to attend a national security meeting in the Oval Office later today. White House Press Secretary Caroline Leavitt spoke to reporters yesterday.
I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
White House Press Secretary Caroline Leavitt says the president's goal of halting Iran's enrichment of uranium and preventing the country from obtaining nuclear weapons remains intact, though she said.
देखो थोड़ी देर पहले की न्यूज है, यूरोपियन यूनियन के जो लीडर्स हैं उनकी ओर से ये बोला गया है, स्टेटमेंट दिया गया है दैट यूनाइटेड स्टेट ईरान के साथ डायरेक्ट टॉक के लिए ओपन है, तो मतलब next 2 weeks very important. अगले 2 वीक में जो होना है हो जाएगा. क्रूड ऑयल भी कंफ्यूजन में है, वॉर होगी या नहीं होगी, यूएस इन्वॉल्व होगा या नहीं होगा.
As if there's a chance for diplomacy, the president is always going to grab it.
Meanwhile, Nathan, the fighting continues. The Israel Defense Forces says it completed a series of strikes in Tehran, hitting dozens of targets. A missile from Iran hit an Israeli hospital Thursday for the first time since the war began. Iran's foreign minister is due in Geneva for talks with European foreign ministers today. And we get more with Bloomberg's Oliver Crook.
What the sort of goal of this meeting is to try to begin to establish kind of a framework for a day after, if there is a ceasefire, something you can go to sort of from Iran and the rest of the world to say, listen, these are going to be the monitoring arrangements that Iran has agreed to, basically unrestricted access to making sure that Iran is not developing a nuclear site, potentially some restrictions and some observations about sort of cutting back the ballistic missile program, those sorts of things. But again, I think that one needs to keep sort of really sort of low expectations here, because we know the world of Trump, and we know the world of Trump is one in which the Europeans don't have a huge amount of sway in terms of diplomacy. There's a real question about whether or not, anything that they agree to or anything that they can come up with, does Trump really want to, put his name on something that somebody else has come up with?
And that's Bloomberg's Oliver Crook reporting. Iran's foreign minister told state TV this morning that Iran does not want to negotiate with the U.S. if Israel continues to strike the country.
And Karen, cybersecurity experts in Israel are saying that Iran's tapping into private security cameras to gather real-time intelligence. Bloomberg's Ewan Potts reports the revelation exposes a recurring problem with these devices, one that has emerged in other global conflicts.
Earlier this week, a former Israeli cybersecurity official issued a stark message on public radio. Turn off your home surveillance cameras or change the password immediately. The warning was later backed by Israel's National Cyber Directorate, which confirmed to Bloomberg that internet-connected cameras are increasingly being targeted as part of Iran's war planning. Similar tactics were employed by Russia following its invasion of Ukraine. And while researchers have been sounding the alarm about vulnerabilities in security cameras for over a decade, there is now increasing evidence that for countries at war, these systems are being exploited as a critical weak point. In London, I'm Ewan Potts, Bloomberg Radio.
All right, Ewan, thanks. Meanwhile, the war in Ukraine goes on. Overnight, Russia unleashed a wave of drones and decoys into the cities of Odessa and Kharkiv. Ukraine's Air Force says 16 drones managed to evade its air defenses. At least one person was killed and 14 hurt in Odessa. The drones there damaged several apartment buildings and the city's central rail station. At least 4 others sought medical help in Kharkiv.
And back here in the U.S., Karen, the White House has scored a legal victory over its deployment of National Guard troops in Los Angeles. A 3-judge panel has ruled that the Trump administration can continue using the Guard to respond to anti-deportation protests. Lori Levinson is a former federal prosecutor and a professor at Loyola Law School in L.A.
The bottom line is that this panel of judges believe that there was enough interference, enough violence going on in Los Angeles that the president, in his broad discretion, had the power to call out the National Guard because that's what the statute allows.
Loyola Law professor Lori Levinson notes that the state of California could still appeal this ruling to the full federal appeals court or to the Supreme Court. The lower court judge who ordered the federal government to return control of the Guard to California is also holding a hearing today.
Nathan, as immigration raids continue, they're starting to have a noticeable impact on workforces across the country. On Bloomberg's Monica Ricks reports.
The downtown L.A. fashion district where the ICE raid started is emptied out. Texas dairy farmers say workers aren't showing up to milk cows. And the deputy mayor in Ventura, California says Latino day laborers seem to have disappeared from his closest Home Depot. Last month, the U.S. workforce shrank in large part because of a decline in foreign-born workers. California alone stands to lose $275 billion in economic output from the immigration crackdown. Monica Ricks, Bloomberg Radio.
Monica, thanks. Turning to markets now, futures are lower as we close out the holiday interrupted trading week. Today, investors are bracing for about $6.5 trillion of notional U.S. options expiring, and that could lead stocks to swing more wildly than the subdued changes we've seen in recent weeks. Every quarter, a cluster of different exchange-traded derivatives contracts all terminate on the same day, leading to what market watchers sometimes call a triple witching event. Now, it's not expected to add additional volatility today, but it could open the path to more sudden stock market moves next week.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. For the first time since Cleveland beat Golden State in 2016, there'll be a Game 7 in the NBA Finals. Indiana stayed alive, had a 31-point lead in the second half, beat Oklahoma City 108-91, setting up the decisive Game 7, which will be played Sunday in OKC. The Yankees ended their 6-game losing streak, beat the Angels 7-3. The Mets have now lost 6 in a row, lost 7-1 in Atlanta. Washington ended an 11-game losing streak, beat Colorado 4-3. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
गाइस 5:30 होने वाला है. किसी का कोई रनिंग ट्रेड चल रहा है, ट्रेल कर लेना. क्रूड ऑयल में तो निकल ही जाना. बायर्स अगर ट्रेल कर रहे हो तो एसएल कॉस्ट टू कॉस्ट पर डाल देना रिमेनिंग क्वांटिटी का. काफ़ी देर से सुबह कल का ही सपोर्ट था, कल के लेवल है, वहाँ पर आया था. मॉर्निंग पे थोड़ी बहुत बाइंग आई, फिर नीचे आया, फिर बाइंग आई. ये ना ऊपर की ब्लू कलर की लाइन के ऊपर निकल रहा है 6485 के ऊपर, ना ही इसके नीचे निकल रहा है 632 के नीचे. तो ये रेंज के बाहर कहीं निकलेगा तभी मुझे लग रहा है कुछ रेंज बना पाएगा, अदरवाइज इट इज़ कम्प्लीटली साइडवेज. तो अब यहाँ पर रुकने का ज़्यादा फायदा नहीं है. रुक रहे हो तो एसएल कॉस्ट पर रख लेना, हाफ प्रॉफिट बुक करके. लगभग 120 पॉइंट का टारगेट है फ्यूचर में. 60 पॉइंट के 2 टारगेट मान के चल सकते हो, तो लगभग 60 पॉइंट पहले ही मिल चुके हैं. दूसरा टारगेट भी मिल जाता तो बढ़िया ही था, बट नहीं जा रहा है ऊपर तो कुछ कर नहीं सकते. वॉलेटाइल है बिकॉज ऑफ द अनसर्टनिटी इन द मार्केट. वी डोंट नो क्या होने वाला है इजराइल और वॉर के बीच. नेचुरल गैस का एक छोटा सा सेलिंग का ट्रेड है, ज़्यादा बड़ा नहीं है ये, सिर्फ 4 पॉइंट का ही लगा रखा है. आ जाता है 5:30 तक मोमेंटम तो वेल एंड गुड, नहीं आता है तो एसएल इसमें भी कॉस्ट पर ही डाल देना. वैसे 2 पॉइंट का एसएल है, 4 पॉइंट का टारगेट. लेट्स सी, थोड़ा बहुत तो मूव करे. अब मॉर्निंग से कल रेजिस्टेंस पे आया था, साइडवेज गया था, उसके बाद मॉर्निंग से पूरा साइडवेज था, एक फेक ब्रेकआउट जैसा दिया है. लेट्स सी थोड़ा नीचे तक अगर आता है, अगर ऐसा ना हो फिर से साइडवेज चला जाए. अरे ये चेंज कैसे हो जा रहा है बार बार. ठीक है, 5:30 की कैंडल से पहले अपने एसएल जरूर ट्रेल कर लें, क्रूड और नेचुरल गैस दोनों ही जगह पे. बाकी 5:30 की 15 मिनट की कैंडल एक बार क्लोज जाएगी, वी विल सी नेक्स्ट ट्रेड आफ्टर दैट. आज मार्केट ओपन है तो वॉल्यूम आना चाहिए, ज़्यादा कोई इशू होना नहीं चाहिए. Food has the most vitamin C. What do you think, guys? Orange, lemon, bell pepper, kale. Which is that? Bell pepper. Trail. मैं नेचुरल गैस में देखो वॉच करूंगा नीचे का लेवल अराउंड एक्सपायरी मंडे को है, आज नहीं. 353, 352 इसके नीचे अगर ये चला गया वापस, जैसा मैं एक्सपेक्ट कर रहा हूँ, अगर इसके नीचे क्लोजिंग हो गया तो बड़ी सेलिंग आ जाएगी. नहीं आता है तो फिर जैसा ये साइडवेज पड़ा हुआ है साइडवेज ही पड़ा रहेगा. इस तरह के मार्केट में ना जब साइडवेज चले जाते हैं रेजिस्टेंस पे या सपोर्ट पे, तो फेक ब्रेकआउट या ब्रेकडाउन काफ़ी होता है, काफ़ी देखा गया है. हाँ, 352 के नीचे गया तो थोड़ा एक बड़ा टारगेट रख लेंगे 344 के आसपास, 42 के आसपास. नहीं तो साइडवेज ही है छोटी सी रेंज के अंदर. बाकी क्रूड भी देखते हैं, या तो निकल जाए थोड़ा नीचे यहाँ कहीं ब्रेकडाउन करके, या फिर थोड़ा ऊपर ही चला जाए वापस. फिलहाल ये भी साइडवेज ही है. छोटा सा ही टारगेट है इसका, काफ़ी देर के बाद तो मूव आ रहा है उसमें. बाकी एक्सपायरी है ऑप्शन की, ध्यान रखना. मंडे को अभी प्रीमियम बहुत ज़्यादा डीके हो रहे हैं ऑप्शन बाइंग में, जो लोग कॉल बाई या पुट बाई करते हैं. ऑप्शन सेलर के लिए अच्छा दिन है, फ्यूचर ट्रेडर्स के लिए भी कोई प्रॉब्लम नहीं है, बट जो स्पेसिफिकली ऑप्शन ही ट्रेड करते हैं वो थोड़ा कॉशियस होकर ही ट्रेड करना. नहीं रुका तो फिर साइडवेज किसी एक साइड तो ब्रेक करना ही पड़ेगा। एक बार इसको भी काउंट नहीं किया जाएगा। यहाँ से आती है तो अच्छी फाइट हो जाएगी यहाँ पे। एक सिंगल कैंडल भी नीचे क्लोज हो जाएगा 353 के नीचे, 52 के नीचे, तो फिर इजीली 342 तक आ सकता है। क्लोजिंग जरूरी है लेकिन नो क्लोजिंग नो मूव। लाइक करते रहो सभी लोग, इसको ट्रेल कर लेते हैं कैसा रहेगा। बाकी गोल्ड में ध्यान रखना, एक डेटा भी है 6 PM पे, वो इम्पोर्टेंट ही है। लास्ट सेशन है आज, लास्ट डेटा कह सकते हो वीक का। ये होगा ना कंसिडर, बिल्कुल होगा। परफेक्ट लेवल है ये गोल्ड का। ऐसा है तो सेलिंग अच्छी आ जाएगी ऑब्वियसली। ये आपका 530 पिप्स में हो जाता है, कितना है लगभग $0.5। 1:4 कहाँ रुक सकता है। कुल 5:30 से पहले कोई नया ट्रेड मत लेना। अब 5:30 की कैंडल क्लोज हो जाने दो, फिर देखते हैं, ट्रेड तो बन ही जाएगा। ये भी डाउन चला गया इसमें, यहाँ पर लिक्विडिटी जो इसी जगह उसका फ्लैट है। ये कंसिडर तो नहीं होगा, लेकिन हाँ ये एक लेवल है, ये देखो। अब होगी फाइट यहाँ पे, एंड दिस अ वेरी गुड लेवल। अगर 6 PM पे कुछ न्यूज़ पे नहीं होता तो 5:30 भी मान लो सेम ही रहेगा, एक ही है। गोल्ड यहाँ तक जाएगा उस केस में, ये तो आ गया ऑलरेडी। तो वो लेवल मोस्टली कंसिडर हो जाते हैं एक बार में, नहीं हुए तो फिर निकल जाते हैं लेवल। हो सकता है फॉरेक्स में गया हो। हाँ हो तो सकता है। ये 5:30 की कैंडल के बाद ये रेंज बाउंड रहा तो फिर वो भी मूव नहीं करेगा मोस्ट प्रोबेबली। ठीक है 15 मिनट रह गए हैं। नेक्स्ट कैंडल सीधा न्यूयॉर्क सेशन की ओपनिंग कैंडल रहेगी। देखो किसी भी साइड जा सकती है, वी डोंट नो, कोई न्यूज़ ना आए स्पेशली उसका ध्यान रखना है। क्रूड ऑयल को देखो कैंडल ओपन इक्वल टू हाई बनी है, लग रहा है कोई न्यूज़ फिर से आ गई। 530 भी हुआ भी नहीं है। लेट्स सी क्या न्यूज आई है। ठीक है इसका ट्रेलिंग एसएल जा चुका है, क्रूड ऑयल का ध्यान रखना, होल्ड करके मत बैठे रहना। लेट्स सी कोई नया ट्रेड बनेगा तो 530 के बाद ही देखेंगे। गोल्ड भी गिरा, क्या गिरा गोल्ड, वाह। कुछ तो न्यूज आई, सडनली कैंडल बनी गैप डाउन के बाद क्रूड में भी और गोल्ड में भी। गोल्ड एग्जैक्टली सपोर्ट गिरा, सपोर्ट पे आया और वहां से रिटर्न 3350 के अराउंड। क्या कैंडल बन रही है 1 मिनट की गोल्ड में। ओपन हुआ था कैंडल $3,352 के आसपास, नीचे गया $4, वहीं से रिटर्न सपोर्ट लेके। ठीक है कुछ ना कुछ न्यूज आई होगी उसी की वजह से ऐसा हो रहा है, बहुत ज़्यादा वॉलेटाइल गोल्ड। एग्जैक्ट न्यूज़ क्या है वो तो अभी आएगी पता चलेगा। किसी ने कोई स्टेटमेंट ना दिया हो बस। वरुण कोठारी जी नेचुरल गैस में से उनके बुक कर लिया, चलो बढ़िया है, जो निकलना चाहे निकल भी सकता है 530 की कैंडल से पहले। अदरवाइज एसएल जरूर कॉस्ट पे रख लें, कॉस्ट टू कॉस्ट पे रिस्क मत लेना 530 से पहले। 530 के बाद ही नेक्स्ट ट्रेड होगा। ठीक है ऐसी वॉलेटिलिटी बढ़ जाती है थोड़ा सा 530 के आसपास। गोल्ड को मैं वही ट्रैक कर रहा हूँ, कुछ दिखा तो नहीं रहा न्यूज़। न्यूज़ क्या होगी, स्टेटमेंट ही आया होगा कुछ मोस्ट प्रोबेबली। नीचे गिरा है तो कुछ अच्छी न्यूज़ होगी जिसकी वजह से नीचे गिर रहा है। एपी न्यूज़ को देख लो, एसोसिएटेड प्रेस, ईरान एंड इजराइल। ये है लाइव। ट्रम्प कैन कीप द नेशनल गार्ड डिप्लॉय इन एलए अपील्स कोर्ट रूल। ये तो पुरानी न्यूज़ है। Under attack from Israel, Iran's supreme leader faces a stark choice. Israel threatened Iran's supreme leader as Iranian strike wound over 200. ऐसा होता तो प्राइस ऊपर जाना चाहिए था, ना कि नीचे आना चाहिए था। जिस दिन ये हो गया ना, अगर इन्होंने ईरान के सुप्रीम लीडर को असैसिनेट कर दिया तो क्रूड ऑयल अच्छा खासा जंप कर देगा अपसाइड पे। नहीं अभी नहीं है, रेंज ब्रेक होगी उसकी क्रूड की, तो फिर देखते हैं नीचे डाउन वाले लेवल के। जब तक वो होल्ड है तब तक तो अभी क्या नहीं सकता, तो वेट करते हैं। MCX में ठीक है, ये लो। अरे यार ये चेंज हो गया, the fuck? 10 मिनट। किसी एक साइड पे ब्रेक हो जाए ना। ठीक है देखो नेचुरल गैस का भी हो गया टारगेट। अब आपकी मर्जी, निकलना चाहो तो निकल जाओ, सिंगल क्वांटिटी है तो निकल ही जाना। बाकी अगर एक से ज़्यादा क्वांटिटी ट्रेड कर रहे हो और अगर ट्रेल करना चाह रहे हो तो उसको एसएल कॉस्ट पे रखा हुआ है जो, उसको ट्रेल कर लो। देखो बड़ा मूव तभी आ सकता है अगर ये नीचे 352 के नीचे क्लोजिंग दे दे, अगर 352 के नीचे अगर एक क्लोजिंग आ जाती है 15 मिनट की कैंडल की, तो बहुत हाई प्रोबेबिलिटी है कि 342 तक चला जाना चाहिए इस एरिया के आसपास तक। अगर नहीं आई क्लोजिंग, यहीं पर रुक गया, इट मीन सिंपल सा वो साइडवेज ही है। अभी भी फेक ब्रेकआउट दिया था, तो फिर कोई नया लेवल बनेगा तभी कुछ कर पाएंगे। अभी के लिए 352 हमारे लिए इंपॉर्टेंट लेवल है, उसके नीचे क्लोजिंग आई तभी कुछ कर पाएंगे। बाकी निकलना चाहो तो निकल भी सकते हो। ₹2400 डन नेचुरल गैस में, बढ़िया है, ग्रेट। 10 मिनट रह गए हैं, 5:30 की कैंडल। आई थिंक दिस इज द लेवल, ये है 15 मिनट के लिए। पर क्लोजिंग जरूरी है। क्या लगता है क्लोजिंग आएगी? 352 के नीचे नहीं आई तो साइडवेज किसी एक साइड पे तो ब्रेक ऑन नहीं पड़ेगा इसको। नेक्स्ट कहाँ मिल सकता है सपोर्ट? सपोर्ट है, यहाँ पर भी मार्केट आया नहीं अभी तक। यहाँ पर आ चुका है नीचे ऑलरेडी, तो ये वीक हो गया। दिस इज अ वीक, बट क्योंकि वहाँ पर है तो ट्राई यहीं करेगा। 345 9, फिर तो ऊपर ही देखना पड़ेगा अगर नहीं होल्ड करता तो। यहाँ तक गया तो कितना मिल सकता है? ब्रेकडाउन अगर होता है तो मान के चलो लगभग 3 पॉइंट। क्या हुआ तो नहीं हुआ तो नहीं हुआ तो नहीं जाएगा। 720 के अराउंड देख लें, सही है। टीवी पर आप वॉचिंग, कम ऑन गाइस, लाइक भी करो सभी लोग। व्हाट इज दिस? ये क्या हो गया? ये 5 मिनट और न्यूयॉर्क सेशन की ओपनिंग से पहले। जिन कुमार राजपूत जी, क्रूड ऑयल नीचे क्यों जा रहा है? कोई न्यूज आई होगी फिलहाल के लिए, जिस तरह की कैप डाउन कैंडल बनी है और ऊपर से ओपन इक्वल टू हाई, बट फिलहाल मुझे कोई न्यूज ऐसी दिख नहीं रही है। कोई अपडेट मिलेगा तो देखेंगे। फिलहाल 5:30 की कैंडल का वेट है। न्यूयॉर्क सेशन ओपन होगा 5:30 पे। एक्सपेक्ट है थोड़ा वॉल्यूम इंक्रीज हो। बाकी नेचुरल गैस में से मैंने बताया टारगेट हो चुका है, निकल जाना जो लोग होल्ड कर रहे हैं अगर, क्योंकि ये वापस नीचे आ गया। अगर इसको और गिरना है तो 352 के नीचे कैंडल क्लोजिंग चाहिए, अगर नहीं आती है तो फिर ये वापस साइडवेज हो सकता है इसी रेंज में। सो 5:30 कैंडल इज वेरी इंपॉर्टेंट राइट नाउ। या तो 352 के नीचे क्लोज करे या फिर ऊपर डे हाई के ऊपर 359 के ऊपर, तभी हम इसको कुछ बड़ा एक्सपेक्ट कर सकते हैं मूवमेंट। नहीं तो रेंज के अंदर ही कंप्लीट ड्रॉ डाउन हो जाएगा। नहीं, फॉरेक्स में तो कुछ भी नहीं है। यहाँ पर कुछ बना है? बिल्कुल भी नहीं। ये हो सकता था, कोशिश तो करी लेकिन कर नहीं पाए। ये भी नहीं है। लेवल हो सकता है नीचे सपोर्ट का, अगर नीचे आता है इन केस। लग तो नहीं रहा इसका लो कितना है। ओके, 20 सेकेंड्स लेफ्ट। यहाँ पर तो कोई लेवल नहीं है नियर बाई। ऊपर अगर बन जाता है इनकेस तो शायद गोल्ड को कॉन्ट्राडिक्ट कर देगा लेवल। ठीक है, न्यूयॉर्क सेशन हो गया ओपन। देखते हैं 15 मिनट की कैंडल क्या मूव करती है। ट्रेल कर रहे हो नेचुरल गैस में तो ट्रेल जरूर करना, अदरवाइज बुक करके निकल गए हो तो बीच में एंट्री मत करना। 30 मिनट में देखना पड़ेगा। थर्टी मिनट का है ना रेजिस्टेंस। गैस की एक्सपायरी भी है मंडे को ऑप्शन की, तो प्रीमियम का ध्यान रखना, डी के बहुत जल्दी हो रहा है। यहाँ पर कुछ तो हुआ है। एसएल कितना बड़ा है, वाह। ठीक है, देखो यहाँ पर 15 मिनट में तो कोई सपोर्ट है नहीं क्रूड ऑयल में, लेकिन यहाँ पर 30 मिनट में जैसा हमने ऊपर ये रेजिस्टेंस बनाया था ना कल, ये 30 मिनट के रेजिस्टेंस है ऊपर, क्योंकि 15 मिनट में उतना चार्ट शो नहीं कर रहा था, मैंने कल ही बताया था। तो यहाँ पर एक 30 मिनट का सपोर्ट है जरूर, बट वो ऐसा नहीं कि पहली बार आ रहा है, वहां पर भी ऑलरेडी 2 बार टेस्ट कर चुका है, तीसरी बार हिट किया है इसने। एंड 30 मिनट में ऊपर और कोई रेजिस्टेंस भी नहीं है, अनटिल अनलेस 6240 के नीचे क्लोज नहीं करता तो 30 मिनट का सपोर्ट होल्ड करके बैठ सकता है प्राइस। अगर यहाँ पर 30 मिनट के हिसाब से बाई करते हैं क्रूड ऑयल को, तो लगभग 73 पॉइंट का एसएल बनेगा। नहीं, बहुत बड़ा हो जाएगा। 73 पॉइंट इज टू हाई, विच इज मल्टीपल टाइम टेस्ट। 30 मिनट के अकॉर्डिंग रेजिस्टेंस पे सेल करना बेटर है। ये कैंडल एक बार क्लोज होने दो, थोड़ी अपसाइड की ओर क्लोज होती है तो ऊपर से सेल कर देंगे, बहुत ज़्यादा सेफ है। मान के चल रहे हैं कि ये यहीं तक जाएगी, इसके ऊपर नहीं जाएगी। ठीक है, तो 15 मिनट में कुछ खास है नहीं यहाँ पर करने के लिए, 30 मिनट का ही मुझे सपोर्ट रेजिस्टेंस नज़र आ रहा है फिलहाल के लिए। तो 30 मिनट को ही थोड़ा सा कंसिडर करूंगा मैं यहाँ पर अब क्रूड ऑयल में। 15 मिनट में कुछ लेवल ही शो नहीं कर रहा है, यहाँ पर पूरी खिचड़ी बनी हुई है, देख रहे हो, कुछ भी मोमेंटम नहीं है, ना कोई सपोर्ट है ना कोई रेजिस्टेंस। सपोर्ट वो भी ब्रेक नहीं हुआ है, अभी भी देख पा रहे हो, कैंडल क्लोज ही नहीं हुई है, ऊपर जा नहीं रहा है प्राइस। न्यूज़ का भरोसा नहीं किस साइड मूव कर दे। यहाँ पर एक 30 मिनट में सपोर्ट जरूर दिखा रहा है, बट वो भी 2 बार टेस्ट हो गया, तीसरी बार हिट किया है यहाँ पर। पहली बार हिट किया था अराउंड 17 को, फिर 18 को, अब ये 20 को यहाँ पर हिट किया है एक बार ये। और सबसे बड़ा इशू यही है कि जब पहली बार मार्केट यहाँ से सपोर्ट लेके गया था, हाई क्रिएट किया था, दूसरी बार जब मार्केट इसी लेवल पे गया, मार्केट ने कोई हायर हाई क्रिएट नहीं किया, इक्वल हाई क्रिएट किया था। तो थोड़े बहुत बायर बचे हैं इसलिए रुक रहा है, बट क्या इतने हैं कि ये थर्ड टाइम वापस बाइंग करके ले जाएं, क्योंकि ऊपर 30 मिनट के अकॉर्डिंग ये रेजिस्टेंस बन जाता है सीधा सीधा। 15 मिनट के अकॉर्डिंग नहीं, 30 मिनट के अकॉर्डिंग, क्योंकि ये ऊपर वाला रेजिस्टेंस 30 मिनट के अकॉर्डिंग है। तो एक बार ये कैंडल, इसमें 30 मिनट है क्लोज होने में, वैसे तो एक बार में ही निकल जाना चाहिए था इसके। यहाँ से पहली बार आया सपोर्ट लेके 262 पॉइंट का मोमेंटम, ये दूसरी बार आया सपोर्ट लेके, लग तो नहीं जाता जाएगा लेकिन चला गया। और ये थर्ड टाइम, ये कैंडल 30 मिनट की क्लोज होनी जरूरी है, कहाँ क्लोज होती है 15 मिनट में, तो कुछ नहीं है। फिफ्टीन मिनट में ये नहीं कंसिडर कर सकते क्या, इसका हाई कितना है? नेचुरल गैस आया क्या 335? 335? 335 तो बहुत दूर है भाई, 335 तो नहीं आया अभी। 355 कह रहे होगे शायद। 335 के लिए यहाँ से 20 पॉइंट गिरना पड़ेगा तब जाएगा 335 तक। अगर क्लोजिंग आती है नीचे 352 के नीचे, तब एक चांसेस 342 तक जा सकता है, वहां पर सपोर्ट है फिर नेक्स्ट नीचे लगाया हुआ है। अगर नहीं आई क्लोजिंग 352 के नीचे तो फिर ये साइडवेज मान लो, फिर किसी एक साइड पे कैंडल क्लोज होनी जरूरी है, तभी बड़ा मूव कर पाएगा आइदर साइड। 30 मिनट के अकॉर्डिंग यूज करेंगे, और अगर वो नहीं बनाता है तो जाने देते हैं। कैंडल ही क्लोज नहीं हो रही वहाँ पे, जब तक कैंडल क्लोज नहीं होगी तो नहीं ले सकते। रूल्स आर रूल्स। यहाँ पर हुआ क्या है, यहाँ पर मुझे लग रहा है यहाँ पर कुछ ना कुछ तो हुआ, दिख नहीं रहा है चार्ट की सेटिंग में। ये है ना, लुक एट दिस। एसएल भी 30 मिनट के अकॉर्डिंग ही बनेगा ना, बिल्कुल। अगर सेलिंग 30 मिनट के अकॉर्डिंग हो रही है तो एसएल भी 30 मिनट ही देता है। हाँ एग्जैक्टली है, 15 मिनट में कन्वर्ट कर दो। अगर सेलिंग मिस कर दी, लेवल ब्रेक करे तो एंट्री कर सकते हैं क्या? वेट करो, देखते हैं। अगर ये 352 के नीचे अगर क्लोजिंग देता है 15 मिनट टाइम फ्रेम पे, एक कैंडल भी क्लोज हो जाए तो वापस हल्का सा पुल बैक आएगा इस तरह से, तो वापस सेलिंग आ जाएगी। बट अगर ऐसा नहीं हुआ, फिर यहीं से अगर ये सपोर्ट लेके चला गया तो फिर ये रेंज बना देगा, और फिर इस रेंज में किसी एक साइड के एसएल जरूर जाएंगे, या तो यहाँ ब्रेकआउट करे या फिर यहाँ ब्रेक डाउन करे, क्योंकि दोनों साइड तो जा नहीं सकता। बेस्ट के सिनेरियो में यही मान के चल रहा हूँ कि ये नीचे क्लोज करे, फिर हल्का सा पुल बैक दे, वापस सेल कर दें इस तरह से। अगर यहीं से चला गया ऊपर तो फिर से साइडवेज। तो बेस्ट के सिनेरियो अगर किसी एक डायरेक्शन पे जाना है, क्योंकि अगर ऊपर भी ब्रेक कर दिया तो ऐसा नहीं है कि ऊपर उड़ जाएगा, ऊपर भी एक रेजिस्टेंस है 15 मिनट टाइम फ्रेम के अकॉर्डिंग करंटली। ठीक है, रुक रहा है उस वजह से। अभी थोड़ा सा ये 530 की कैंडल है, ऊपर से ओपन इक्वल टू हाई भी बनी है, तो लेट्स सी इसी कैंडल में ब्रेक कर दे। 4 मिनट और है न्यूयॉर्क सेशन की कैंडल पे, क्योंकि इसमें मोमेंटम नहीं हुआ तो फिर बाकी कैंडल पे सेलर्स इतना प्रेशर डाल पाएंगे नहीं, कहना मुश्किल हो जाएगा। दिस इज अ वेरी इंपॉर्टेंट कैंडल, 530 कैंडल है, 5:30 की कैंडल। न्यूयॉर्क सेशन से अच्छा वॉल्यूम आ जाता है। थोड़ा बहुत ऊपर भी रख सकते हैं अदरवाइज कभी कभी यहाँ पे। ज़्यादा नहीं, थोड़ा बहुत 1-2 पॉइंट रख लो, यहीं से सेलिंग बने। इसका भी नीचे कोई ऐसा नहीं होता। अरे नहीं, यहाँ से मत कर, चल यहाँ से बहुत रिस्क है, यहाँ से करना है बेस्ट, ताकि एसएल छोटा हो जाए। लुक एट दिस, या तो इतना भी रखोगे तो 40 पॉइंट का बन जाएगा, तो यही बेस्ट है। थोड़ा सा उसके ऊपर ही रखना पड़ेगा। अगर ये इसके नीचे चले गई तो हाँ लोअर लो बन जाएगा, इसका मतलब ये अभी भी स्ट्रॉन्ग है। अगर नहीं गई तो फिर इसी को देख रहा हूँ। हाँ एक बार पहली बार आया लेवल पे, दूसरी बार बाइंग कैसे आ गई इसमें? एक बार ऑलरेडी एक ये भी तो कर सकता है कि यहाँ से बनाए और फिर ये ऊपर जाए और फिर यहाँ से सेलिंग कर दे, पॉसिबल है। देखते हैं क्या होगा। लाइक करते रहो गाइस, 43 पीपल आर वाचिंग, ओनली 25 लाइक्स। 6 पीएम पे एक डेटा भी आने वाला है, गोल्ड और सिल्वर को इम्पैक्ट करेगा, ध्यान रखना। फिलाडेल्फिया फेड मैन्युफैक्चरिंग इंडेक्स का डेटा है, मेनली गोल्ड और सिल्वर को इम्पैक्ट करता है विथ यूएस डॉलर। इसके अलावा और कोई डेटा नहीं है। फिर 7 बजे यूएस मार्केट ही ओपन हो जाएगा सीधा सीधा। 15 मिनट में नहीं है वहाँ पे। ठीक है, तो इस तरह के देखो मोमेंटम होते हैं ये नेचुरल गैस में, कई बार नोटिस किया है मैंने भी। आप भी देखना इसमें, कभी कभी मार्केट ये दोनों साइड ही होता है, लाइक अगर कभी रेजिस्टेंस पर है या फिर सपोर्ट पर है, सेलिंग हमेशा फास्ट आती है। मार्केट अगर रुक रहा है ना, फिर वो किसी भी डायरेक्शन पर जा सकता है, लेकिन ऑब्वियसली है अब मार्केट ऊपर जाएगा तो हर कोई बाइंग करने की सोचेगा, या फिर मार्केट अगर नीचे आने की सोच रहा है तो हर कोई सेलिंग करने की सोचेगा, तो ट्रैप कैसे होंगे लोग? तो उस केस में मार्केट मैक्सिमम टाइम, बहुत रेयरली होता है कि सीधा ब्रेकआउट या ब्रेकडाउन करके नीचे आ जाए। मैक्सिमम टाइम फेक ही देता है ब्रेकआउट, या तो फेक ब्रेकआउट देगा फिर नीचे आ जाएगा, या फिर दूसरा भी हो सकता है फेक ब्रेकडाउन दे और ऊपर चला जाए। स्पेशली कोई लेवल अगर मल्टीपल टाइम टेस्ट हो गया, पहली बार आता है तो नॉर्मली तो कोई इशू नहीं आता। अब अगर ये नीचे क्लोज कर दे यहाँ तक तो आराम से गिर जाएगा, नहीं करता है तो नहीं गिरेगा, ऐसा भी नहीं है कि करने वाला ही है। हमें इसके नीचे येलो कलर के बॉक्स के नीचे क्लोजिंग चाहिए। बाकी लास्ट ट्रेडिंग सेशन है, ज़्यादा रिस्क भी मत लेना, फ्राइडे है, मार्केट कल परसों क्लोज ही है, आप लोगों को पता ही होगा। देखो ऑप्शन की एक्सपायरी भी है नेचुरल गैस में, तो रिस्क ज़्यादा लेना मत, और जिनको हो चुका है प्रॉफिट तो अवॉइड भी कर सकते हो। हाँ रुक गया। बाकी देखो क्रूड ऑयल में कोई ट्रेड नहीं है यहाँ पर, थोड़ा सा ऊपर जाता था यहाँ से सेल कर देते, वहां तक भी नहीं गया, ट्रेलिंग ऐसे उड़ा दिया इसने यहाँ पर, इवन तो अभी भी ब्रेक डाउन हुआ नहीं है, कैंडल लेवल के नीचे क्लोज नहीं हुई है 15 मिनट की। 15 मिनट के लेवल काफ़ी दूर बने हुए हैं। बेस्ट के सिनेरियो मुझे अभी 30 मिनट में दिख रहा है, बिकॉज 15 मिनट में मुझे कोई सपोर्ट रेजिस्टेंस अभी तो नज़र बिल्कुल नहीं आ रहे हैं फ्यूचर में, क्रूड ऑयल एमसीएक्स में। हाँ 30 मिनट में जरूर मुझे सपोर्ट रेजिस्टेंस नज़र आ रहे हैं। यहाँ पर 30 मिनट टाइम फ्रेम के अकॉर्डिंग एक सपोर्ट है, जो कि 2 बार टेस्ट हो चुका है, ये तीसरी बार आया है यहाँ पर। एंड ये रेजिस्टेंस मान सकते हो अब 30 मिनट टाइम फ्रेम के अकॉर्डिंग, अगर ये अभी 30 मिनट की जो करंट कैंडल है वो क्लोज हो जाती है, जिसके क्लोज होने में 15 मिनट और रह गए हैं बस। एक सेकेंड, 30 मिनट, तो 15 मिनट की कैंडल क्लोज हो जाएगी तो फिर यहाँ पर एक रेजिस्टेंस भी बन जाएगा, तो एक रेंज आप मान सकते हो उस केस में 6244 से लेकर 6430 के बीच में। और क्योंकि सपोर्ट 2 बार ऑलरेडी टेस्ट हो गया है, तो ये तीसरी बार आया है, तो कहीं ना कहीं थोड़ा वीक तो जरूर हो गया होगा, एंड अगर ब्रेक कर दे तो बेटर है, बट न्यूज़ का भी कुछ कह नहीं सकते, सडनली कोई न्यूज़ आ जाए और प्राइस वापस चला जाए तो फिर वो भी इशू करेगा। एक थर्ड केस सिनेरियो हो सकता है कि रेजिस्टेंस ही ना बने यहाँ पर 30 मिनट टाइम फ्रेम पे, तब फिर देखेंगे थोड़ा सा कम क्वांटिटी में बाई करने का वापस, नहीं तो सेलिंग ही एक्सपेक्ट रहेगी। वेट फॉर दिस करंट कैंडल क्लोजिंग। वो वैसे भी नहीं आएगा वहाँ पर। करंट कैंडल भी देखो ऊपर इक्वल टू हाई बनी है नेचुरल गैस में, लास्ट कैंडल भी बनी थी, ये कैंडल भी ओपन इक्वल टू हाई बनी है। ओपन इक्वल टू हाई कैंडल इज नॉट गुड फॉर बाइंग स्पेशली, जैसे ओपन इक्वल टू लो कैंडल पे सेल नहीं करते, ओपन इक्वल टू हाई पे बाई नहीं करते, इवन तो अभी भी है तो सपोर्ट पर ही, बट अब दोनों साइड रिस्क नहीं ले सकते, किसी एक साइड के एसएल जाने दो, या तो ये इसको ऊपर ब्रेक करने दो या फिर नीचे क्लोज करने दो। किसी एक साइड के एसएल अगर चले जाते हैं, वहां पर जो भी बायर और सेलर बैठे हुए हैं, तो हमारे लिए थोड़ा स्पेस खुल जाएगा, तो बड़े टारगेट के लिए ट्रेड ले सकते हैं, नहीं तो बस वो 4-4 पॉइंट में ही घूमते रह जाएंगे। करंट कैंडल देखोगे ओपन इक्वल टू हाई है इन नेचुरल गैस 15 मिनट। कोई नहीं जाने दो। लास्ट टाइम जब ऐसा हुआ था कहाँ पर हुआ था? यहाँ पर हुआ लास्ट टाइम। जब यहाँ पर हुआ तो पुल बैक आया है, एंड पुल बैक आने के बाद वापस सेलिंग हुई है। ठीक है, तेज जी हेलो सर, थैंक्स फॉर योर व्यू ऑन नेचुरल गैस अर्लियर। वेलकम, लाइक कर दो फिर अब। इसके हिसाब से भी यही बनता है, ओपन इक्वल टू लो ना बने। थोड़ा तो आएगा ही, ऐसा नहीं है। अगर मैं यहाँ पर लूँ इन केस, तो 4 पॉइंट मिल सकते हैं, और ज़्यादा से ज़्यादा, इससे ज़्यादा तो मिलेगा भी नहीं। 4 पॉइंट तो लगभग 1:2 ही बनेगा। एक सेकंड, ये यार नेचुरल गैस का टारगेट अभी तो इतना ही था जितना लगा रखा था। अगर एक क्लोजिंग देता है फिर देखते हैं थोड़ा बड़ा टारगेट। 352 के नीचे अगर क्लोजिंग आती है प्रॉपरली 15 मिनट में। अब इसका मतलब ये नहीं कह रहा हूँ कि गिरता ही चला जाएगा, ऐसा नहीं होता, हो भी सकता है, बट नॉर्मली अगर एक क्लोजिंग यहाँ आ गई तो हल्का सा पुल बैक देके गिर सकता है इस तरह से। क्या कहते हो, ये भी तो सेम ही लेवल है, इससे फर्क नहीं पड़ता। ओपन इक्वल टू लो नहीं बनना चाहिए, तो फिर उस पर एंट्री होगी नहीं। ये बनी थी ओपन इक्वल टू लो। देखो यहाँ पर एक पुल बैक तो आना चाहिए मेरे अकॉर्डिंग नेचुरल गैस में, डायरेक्टली तो नहीं गिरना चाहिए। कभी तो कैंडल का भी क्लोज नहीं हो रहा है, थोड़ा सा रिस्क लें क्या यहाँ पर एक पुल बैक के लिए? ज़्यादा रिस्क रिवॉर्ड नहीं मिलेगा, एटलीस्ट कितना 1:2.5, 1:2 मिल सकता है बस इसमें। ये कैंडल क्लोज अभी भी नहीं हुई 352 के नीचे, 352 के नीचे क्लोजिंग नहीं आई है। छोड़ो, क्लोजिंग का ही वेट करते हैं। ठीक है, कैंडल अभी फिलहाल ओपन इक्वल टू हाई है तो ले नहीं सकते बाइंग। ओपन इक्वल टू हाई कैंडल पे बाई नहीं करते हैं। बाकी देखते हैं 352 के नीचे क्लोजिंग आती है नहीं आती है, और रुक रहा है वहीं पर 352 के आसपास। 7 मिनट और है। ओपन एंड सोर्स इंटेलिजेंट नेटवर्क की साइट पर देख सकते हैं, मिल जाएगा। नो अपडेट। क्रूड ऑयल क्यों गिर रहा है? कहाँ गिर रहा है क्रूड ऑयल? रुक गया क्रूड ऑयल। Germany military deems Russia existential risk to nation in Europe. Special reports. फिलहाल तो कोई अपडेट नहीं है। Tesla set to open India's showrooms in July with made in China electric vehicles. इंडिया में कब बनाएगा ये पहला ईवी शोरूम टेस्ला का इंडिया में? जुलाई में बन जाएगा, ओपन हो जाएगा सॉरी, जहां पर बिकेंगी मेड इन चाइना इलेक्ट्रिक व्हीकल्स टेस्ला की। क्रूड ऑयल का प्रीमियम अगेन सेम पोजीशन पे आ गया। कौन सी स्ट्राइक प्राइस का बात कर रहे हो? चार मिनट और रुक जाओ बस, इस कैंडल को क्लोज हो जाने दो 15 मिनट में। ओपन इक्वल टू हाई कहाँ तक जा सकता है इसमें? डाउन साइड पे यहाँ पर ये तो 3 बार ले गया सपोर्ट यहाँ से। ऐसा तो नहीं कि इसको, नहीं ऐसा भी नहीं है। नॉर्मल कैंडल है, जब तो ओपन इक्वल टू हाई बनेगी नहीं, ब्रेक होगा नहीं। यहाँ पर भी ओपन इक्वल टू लो नहीं बनी है ना, कर सकता है सिर्फ ओपन इक्वल टू हाई, ओपन इक्वल टू लो। नॉर्मल कैंडल पे नहीं होता ब्रेक। इसमें लग रहा था हो जाएगा लेकिन ये क्लोजिंग दे दी। ये भी नॉर्मल कैंडल है, अब हो गया, ये फंस गया इस रेंज में। तो हम एक्सपेक्ट करेंगे कि ये यहाँ से एक सेलिंग दे दे हमें नीचे सपोर्ट ब्रेक करने के लिए, और कोई न्यूज़ ना आए। लगभग इतना तो ऐसा लेना ही पड़ेगा, और ये टारगेट लगभग मतलब ब्रेक डाउन के लिए जाने वाला है, तो ये कहना चाह रहा है, और कोई ऑप्शन नहीं है, जाना ही पड़ेगा ब्रेक डाउन के लिए। कैंडल देख लेना बस, ओपन इक्वल टू लो ना बने, वहाँ पे ना प्रॉब्लम आ जाएगी नहीं तो। ठीक है, 3 मिनट बचे हुए हैं, ऐसा लग रहा है कैंडल क्लोज कर देगी नेचुरल गैस की, विच इज़ गुड साइन। सब्सक्राइब भी करते रहो गाइस चैनल को, जिन लोगों ने सब्सक्राइब नहीं किया है। एक मिनट इसको होल्ड कर लो। तो ये किस हिसाब से रख रहे हैं यहाँ पर? हिसाब से तो ये सपोर्ट स्ट्रॉन्ग है, डिपेंड करता है। ओपन इक्वल टू हाई बनी तो ब्रेक हो जाएगा, नहीं करी तो जैसे ये ओपन इक्वल टू हाई बना था, नेक्स्ट कैंडल पे ले लो, ऊपर ही क्लोज हुई, नेक्स्ट कैंडल पे एंट्री कर लें। तो एक ही है। तो एक मिनट, अगर ये क्रूड ऊपर जाता है सेलिंग करने के लिए, आई डोंट वांट टू टेक मोर रिस्क, इससे ज़्यादा रिस्क नहीं लेना चाहता। 30 मिनट के अकॉर्डिंग इतना काफ़ी है, करेगा तो ब्रेक देख ही जाएगा। 552 ठीक है, और लगाएगा तो यहाँ वापस कर लेंगे। 1 मिनट, थोड़ा ऊपर तो जाना ही पड़ेगा। M6 में दिख रहा है फॉरेक्स चार्ट। ठीक है, 1 मिनट रह गया, 50 सेकेंड्स, कैंडल क्लोज हो ही जाएगी ये नीचे। ठीक है, दैट्स वाई ओपन इक्वल टू हाई एंड ओपन इक्वल टू लो कैंडल इज मोस्टली इंपॉर्टेंट। गलत जगह पे गलत कैंडल नहीं, सही कैंडल बन जाए तो मज़ा आ जाता है। सेकेंड्स, एक डेटा भी आने वाला है 6 PM पे, इसका भी ध्यान रखना, ये गोल्ड और सिल्वर को इम्पैक्ट कर सकता है, गोल्ड और सिल्वर के प्राइस को। ये 30 मिनट में कुछ तो बना ही होगा। बाकी देखो 15 मिनट, ये क्रूड ऑयल में 15 मिनट में कुछ बन नहीं रहा है, वहाँ पर 30 मिनट में बन जाएगा इस कैंडल के क्लोजिंग के बाद। तो 30 मिनट के हिसाब से ट्रेड करेंगे तो वहाँ पर एसएल और टारगेट दोनों ही बड़े होंगे, अपनी क्वांटिटी का ध्यान रखना। हो गई कैंडल क्लोज नीचे नेचुरल गैस में। ठीक है, नेचुरल गैस कैंडल क्लोज कर चुका है। देखो इसमें अब एक टारगेट नीचे इसी ट्रेड को बढ़ा के हम रख सकते हैं अराउंड 343 तक। किसी को अगर इसमें फ्रेश एंट्री करनी है तो वो कर सकता है, अगर ये हल्का सा पुल बैक दे। दो पॉसिबिलिटी है, डायरेक्टली आ सकता है, वैसे तो नॉर्मली तो नहीं आता है इस तरह से, बट अगर डायरेक्टली आ जाए तो वेल एंड गुड, नीचे बाइंग का ट्रेड बन जाएगा। अगर ये पुल बैक देता है इस तरह से वापस यहाँ इस एरिया के आसपास वापस सेल कर सकते हैं। ठीक है, जो लोग ट्रेल करना चाह रहे हैं ये कि फाइनल टारगेट रखना, डायरेक्टली आ जाए तो बढ़िया, नहीं आता है नॉर्मली तो नहीं आता है, थोड़ा पुल बैक देना चाहिए लॉजिकली। यहाँ पर एक छोटा सा एफईजी है, देख पा रहे होगे, लगा देते हैं इस एफईजी को। ठीक है, ये बहुत छोटा सा एक एफईजी है, यहाँ पर एक ट्रेल कर सकते हैं। डायरेक्टली तो अच्छा नहीं आता है, तो वापस पुल बैक में जाने पर इस एरिया के आसपास वापस सेल कर देना। एसएल वही डे हाई का ही रहेगा जो लगाया हुआ है ओरिजिनल। ठीक है, नीचे का टारगेट मैंने लगा दिया है जहां तक जा सकता है, 343 से 344 के बीच में, 344 43.5 सही है। 343.5 ठीक है, वापस पुल बैक आएगा तो वापस सेल कर देना अराउंड 356 357 के अराउंड। बाकी देखो क्रूड ऑयल में यहाँ पर 30 मिनट टाइम फ्रेम पर एक सेलिंग का ट्रेड बन रहा है। वैसे तो बाइंग भी बन रही है, सेलिंग भी बन रही है, बट जैसा मैंने बताया बाइंग ऑलरेडी मल्टीपल टाइम टेस्ट हो चुका है ये लेवल। यहाँ पर एक 15 मिनट में कुछ नहीं है इसमें, ठीक है। यहाँ पर मेरे को तो नहीं दिख रहा है कुछ खास करने लायक, ना सेलिंग ना बाइंग। एक यहाँ पर एक सपोर्ट है, यहाँ एक रेजिस्टेंस बना हुआ है। क्योंकि सपोर्ट मल्टीपल टाइम टेस्ट हो गया तो हम थोड़ा सा एक सेलिंग के लिए जाने की कोशिश करेंगे, सो दैट नीचे का सपोर्ट ब्रेक हो जाए। क्योंकि 3 बार तो टेस्ट कर चुका है, 2 बार में, पहली बार में एक हाई बनाया था, दूसरी बार में इक्वल हाई बनाया है, थर्ड टाइम लोअर हाई दिख रहा है और रेजिस्टेंस भी बन गया। तो हल्का सा पुल बैक देता है अप साइड की ओर, तो एक सेलिंग का ट्रेड 30 मिनट टाइम फ्रेम के अकॉर्डिंग। वैसे इसमें एसएल देखा जाए तो थोड़ा सा बड़ा ही बनेगा, 30 मिनट टाइम फ्रेम है, बिकॉज टारगेट भी उस हिसाब से बड़ा ही है। डायरेक्ट नहीं जाएगा। तो कुछ ये एक ट्रेड रहेगा। कोशिश करना जितना ऊपर मिले उतना बेटर, लोअर एंड पे क्वांटिटी कम रखना, सो दैट एसएल छोटा हो जाए। क्योंकि जिस हिसाब से 30 मिनट टाइम फ्रेम है, जितना बड़ा टाइम फ्रेम लेंगे वहां पर एसएल बड़े ही बनते हैं। ठीक है, हम एक्सपेक्ट करेंगे कि नीचे का सपोर्ट ब्रेक होगा नहीं होगा मुझे भी नहीं पता, बट क्योंकि ये रेंज बना दी है एक तरह से मान के चलो, दिस इज द रेंज राइट नाउ। 180 पॉइंट की कोई न्यूज़ वगैरह नहीं आती है तो गिरना चाहिए। व्हाट इज दैट? बाकी 15 मिनट में कुछ दिख नहीं रहा है, तो अभी फिलहाल 15 मिनट में तो कुछ नहीं है, 30 मिनट के अकॉर्डिंग। ठीक है, ये कुछ रेंज मुझे लग रही है बनती हुई, तो हम एक्सपेक्ट करेंगे कि नीचे का ये लेवल ब्रेक करने जाए। अभी तक 30 मिनट का ब्रेकडाउन हुआ नहीं है, तो ये रेंज ही है, दिस इज द रेंज। हो सकता है अपर साइड का भी एसएल चला जाए अगर कोई न्यूज़ आ गई तो, बट अगर कोई न्यूज़ नहीं आती है तो एक ट्राई कर सकता है नीचे जाके और फिर नीचे से सपोर्ट ले ले। क्योंकि यहाँ पर अब बाई करना भी रिस्की हो जाता है बिकॉज ऑफ 3 टाइम्स सपोर्ट होल्ड, 3 टाइम ऑलरेडी टेस्ट कर चुका है बिकॉज। तो 2 ऑप्शन है, या तो छोड़ दें रेंज में कुछ ना करें 180 पॉइंट की, अदरवाइज एक साइड का रिस्क ले सकते हैं, लेना ही पड़ेगा और कुछ ऑप्शन भी नहीं है। को भी डिवाइड कर सकते हो 1:4 1:3 1:4 का समथिंग टारगेट है, तो 1:2 1:2 के डिवाइड करके रख सकते हो। लगभग 160 पॉइंट का टारगेट, तो 80 पॉइंट के 2 टारगेट लगभग ऑन एन एवरेज फ्यूचर में। सपोर्ट भी तो होना चाहिए, है ही नहीं, एक ब्रेकआउट दिखा के चला जाता है प्राइस। इस एरिया पे आएगा तो फिर श्योर। नितिन साहू जी, नेचुरल गैस नीचे जाएगा क्या? नेचुरल गैस सेल कर सकते हैं क्या सर? यहाँ पर नहीं कर सकते सर सेल। अगर फिर से सेल करना है तो प्राइस को थोड़ा पुल बैक देने दो, एंड 356 357 के बीच में सेल करना। यहाँ सेल करोगे एसएल क्या रखोगे? या फिर अगर ये डायरेक्टली नीचे आ जाता है तो यहाँ फिर बाइंग ही बन जाएगी उस केस में। ऐसे नॉर्मली तो आता नहीं चाहिए। बाकी क्रूड ऑयल में थोड़ा सा पुल बैक आता है, क्रूड ऑयल में एक सेलिंग का प्लान कर सकते हैं। एसएल थोड़ा बड़ा है बिकॉज ये 15 मिनट का मैंने चार्ट तो लगाया, लेकिन ये लेवल 15 मिनट के नहीं है, ये 30 मिनट टाइम फ्रेम के अकॉर्डिंग ट्रेड लगाया हुआ है। तो क्वांटिटी उतनी ही रखना जितना रिस्क ले सकते हो। यहाँ होने को सपोर्ट भी है, बट उससे मैं बाइंग अभी नहीं ले रहा हूँ बिकॉज 3 बार टेस्ट हो चुका है सपोर्ट, तो मुझे थोड़ा सा वीक लग रहा है। ब्रेक हो जाए तो बेटर ही है। ऑल डिपेंड अपॉन द कैंडल। देखो नॉर्मल कैंडल पे सपोर्ट रेजिस्टेंस ब्रेक होते नहीं है, ठीक है। जितना मैंने देखा है नॉर्मली ओपन इक्वल टू हाई में सपोर्ट नॉर्मली ज़्यादातर ब्रेक होते हैं, या फिर ओपन इक्वल टू लो में रेजिस्टेंस ब्रेक होते हैं। वो कैंडल जानबूझ के बनाई जाती है वहाँ पे। बाकी क्रूड ऑयल का भी ये लेवल जो यहाँ पर रुका था, ये फिर 30 मिनट में देखोगे तो ऐसा लग रहा था परसों जो वो कैंडल बनी थी बड़ी सी कल, ये ब्रेक कर देगा, लेकिन वो 30 मिनट में सपोर्ट ले गया। सपोर्ट क्या ले गया, वो ओपन इक्वल टू हाई कैंडल बनी थी, बट एग्जैक्टली सपोर्ट पे आई ही नहीं। जो सपोर्ट पे कैंडल आई वो नॉर्मल कैंडल थी, तो इस वजह से ब्रेक हुआ नहीं है अभी भी। बीच में कोई और ना बने सपोर्ट। ठीक है, 6 पीएम का डेटा भी आ चुका है। अब 7 पीएम पे यूएस मार्केट ओपन होगा सीधा। फिलाडेल्फिया फेड मैन्युफैक्चरिंग इंडेक्स का डेटा था, दैट इज नेगेटिव फॉर डॉलर, पॉजिटिव फॉर गोल्ड एंड सिल्वर। अब और कोई डेटा नहीं है आज। कल और परसों मार्केट बंद है, नेक्स्ट वीक ही मिलेंगे अब सीधा। नेक्स्ट वीक को देख लेते हैं एक बार कौन कौन सा डेटा शेड्यूल है। मंडे को सर्विस पीएमआई और मैन्युफैक्चरिंग पीएमआई का डेटा है। एग्जिस्टिंग होम सेल्स का डेटा भी है, मंडे को डेटा है। ट्यूसडे को भी फेड चेयरमैन की टेस्ट बनी है, ओके। कंज्यूमर कॉन्फिडेंस, रिचमंड मैन्युफैक्चरिंग इंडेक्स का डेटा, ये भी गोल्ड और सिल्वर को इम्पैक्ट करता है। वेडनेसडे को होम सेल्स, क्रूड ऑयल की इन्वेंट्री। थर्सडे को यूएस का फाइनल जीडीपी का डेटा, ये इंपॉर्टेंट है। अनएम्प्लॉयमेंट क्लेम्स, नेचुरल गैस की इन्वेंट्री भी होगी इस दिन। पेंडिंग होम सेल्स का डेटा, एंड देन फ्राइडे को कोर पीसी प्राइस इंडेक्स। तो एज यूजुअल मंडे टू फ्राइडे डेटा ही डेटा है, एक दिन भी कुछ क्लोज नहीं है। नेक्स्ट वीक काफ़ी ज़्यादा बिजी है डेटा के पॉइंट ऑफ व्यू से। बाकी वीकली एनालिसिस करेंगे कल, सो डोंट फॉरगेट टू ज्वाइन वीकली एनालिसिस जो कल करने वाले हैं। बाकी ओवरनाइट पोजीशन मत ही रखना गाइस, कुछ कह नहीं सकते, कुछ हो जाए ओवरनाइट, भरोसा नहीं इजराइल का। अभी तो मुझे सबसे ज़्यादा इंपॉर्टेंट दो चीज़ लग रही हैं, यूएस इन्वॉल्व होगा या नहीं होगा, कब होगा, एंड द सेकेंड वन इज़ क्या इजराइल वो ईरान के जो सुप्रीम लीडर हैं, क्या नाम है उनका, अयतुल्ला खमेनी, कहीं उनको ना मार दे। अगर उनको असैसिनेट कर दिया फिर तो कहीं और ही पहुंच जाएगी बात, क्योंकि इजराइल ने कहा है कि वी विल असैसिनेट हिम। मतलब एक तरह से मान के चलो किसी कंट्री के आप हेड को ही असैसिनेट कर दे रहे हो, कंट्री के हेड को, बहुत बड़ी बात है। फिर यूएस इन्वॉल्व हो ना हो, क्रूड फिर काफ़ी ज़्यादा हाई चांसेस बढ़ जाते हैं कि स्ट्रेट ऑफ हॉर्मुज ईरान ब्लॉक कर सकता है। हाँ श्योर। फेड इज इन द पोजीशन एज अर्ली एज जुलाई फॉर कट्स, ये न्यूज़ कहाँ से देखी आपने? लास्ट टाइम जो परसों आया था फेड का डिसीजन, जिसमें उन्होंने जो आपका इंटरेस्ट रेट है वो न्यूट्रल रखा था, वहाँ पर तो उन्होंने कहा था कि 2025 जो चल रहा है अभी करंटली, यहाँ पर जो एटलीस्ट 50 बेसिस पॉइंट वो कट करने की सोच रहे हैं, लेकिन जो पहला रेट कट होगा वो सितंबर के आसपास हो सकता है। जुलाई के आसपास का ये न्यूज़ कहाँ से देखी? परसों जो न्यूज़ आई थी फेड रेट कट की, वहाँ पर तो उन्होंने ऐसा कुछ बोला नहीं है। उन्होंने सिर्फ यही बोला था कि 2025 में 50 बेसिस पॉइंट वो कट करेंगे। अब वो एक साथ तो करेंगे नहीं, वी ऑल नो दैट 25 बेसिस पॉइंट ही कट करेंगे। अब वो जो 25 बेसिस पॉइंट है वो कब कट करेंगे, जुलाई में, ऐसा कहीं पर उन्होंने बोला था क्या? क्योंकि जितना मैंने देखा था उस न्यूज़ के बारे में, वो सितंबर के आसपास कह रहे थे कि जो रेट कट है वो कट करना मतलब सितंबर से स्टार्ट करेंगे, तो सितंबर में कर सकते हैं, देन नवंबर में करेंगे, ऐसा जो परसों फेड का मीटिंग हुई थी उसमें उन्होंने बोला था, फेड रेट कट के बाद जो प्रेस कॉन्फ्रेंस हुई थी। फेड वॉलर जस्ट मेंशन इन न्यूज़, देख लेते हैं यार ऐसा कहीं पर। क्योंकि अल्टीमेटली डिसीजन उसी पे लिया जाएगा जो टोटल फेड के मेंबर्स हैं उनमें से जो ज़्यादा वहाँ पर भी तो वोटिंग होती है एक्चुअली। की न्यूज़ है शायद, आई थिंक फेड गवर्नर वॉलर से सेंट्रल बैंक कुड कट रेट्स एज अर्ली एज जुलाई। ठीक है, उन्होंने कहा है कर सकते हैं, करेंगे तो नहीं बोला है, ठीक है, वहां पर वो वर्ड है कुड, ठीक है, तो कंफर्म नहीं है, क्योंकि जो परसों स्टेटमेंट आया था फेड के चेयरमैन का, मैं वो कोट कर रहा हूँ, उसमें उन्होंने ये बोला था कि हम सितंबर से स्टार्ट करेंगे रेट कट करना। बाकी वो जो जितना मुझे दिख रहा है फिलहाल के लिए, ठीक है, जो क्रिस्टोफर वॉलर है वो एक मेंबर है, वो चेयरमैन नहीं है फेड के, ठीक है, देयर आर मल्टीपल चेयरमैन्स, और फिलहाल के लिए अगर आप देखोगे ना वो फेड की पूरी लिस्ट, जिसमें जेरोम पवेल उनके चेयरमैन है, तो उस पूरी लिस्ट में सिर्फ 3 ही रिपब्लिकन है, ठीक है, और 4 डेमोक्रेट हैं, तो आई डोंट नो ये लोग करेंगे या नहीं करेंगे। तो ये तो मेंबर बोलते रहते हैं, मेनली तो वोटिंग होगी तभी पता चलेगा, अभी कहा नहीं जा सकता। बाकी इस न्यूज़ का मुझे नहीं लगता कुछ खास इम्पैक्ट पड़ेगा। बाकी जब रेट कट होगा तब देखेंगे, अभी कैसे क्या सोच सकते हैं, अभी मत सोचो रेट कट का क्या होगा, तब तक वी डोंट नो, कुछ और ही वॉर वगैरह स्टार्ट हो गई। जिस प्रभाकरण जी, कॉल ले सकते हैं क्या नेचुरल गैस में? या देखो, लेना चाहो तो ले सकते हो, वैसे मैं नेचुरल एफईजी से कोई बाइंग सेलिंग रिकमेंड करता नहीं हूँ, रिस्की होती है, बिकॉज ये कोई सपोर्ट नहीं होता एफईजी, इट इज़ अ इंटरमीडिएट लेवल जहाँ पर प्राइस थोड़ा बहुत पॉज लेता है नॉर्मली, ठीक है, सपोर्ट एग्जैक्टली यहाँ कहीं बना हुआ है, यहाँ कहीं आएगा तो सपोर्ट के लिए बाइंग यहाँ होती है, हो सकता है थोड़ा बहुत पुल बैक आ जाए, अगर वो ट्राई कर रहे हो तो चॉइस इज योर, बट रिस्क है रहेगा वहाँ पे, एफईजी से मैं रिकमेंड नहीं करता हूँ, सपोर्ट पे आएगा तभी, एफईजी इज नॉट अ सपोर्ट और रेजिस्टेंस। ईरान लॉन्चेस मिसाइल अटैक न्यूज़, फिर से कर दिया क्या लॉन्च? एक तो ये ओपन सोर्स इंटेलिजेंस वाला अपडेट भी नहीं कर रहा है कुछ. 30 missile in the last barrage. 30 missiles. Wow. Red alert. Haifa. Every part of the country red alert in Israel. तक 30 मिसाइल मारी गई हैं इजराइल पे. बट अभी तो नॉर्मल ही हो गया है. इसका मुझे लगता नहीं कुछ खास इम्पैक्ट पड़ेगा. अभी ये मार रहे हैं, थोड़ी देर में इजराइल वाले करेंगे वापस अटैक. मेनली मुझे लग रहा है दो ही चीज़ों पे मार्केट अब और ज़्यादा रिएक्शन दे सकता है. सडनली ऐसे ही कुछ न्यूज आ गई कि यूएस इन्वॉल्व हो गया, यूएस ने स्ट्राइक कर दी ईरान पे, या फिर इजराइल ने ईरान के सुप्रीम लीडर को ही लाइक उड़ा दिया. जो वो कर सकता है, ठीक है, इतना कोई छोटा काम नहीं है उनके लिए. ये दो न्यूज़, या फिर एक थर्ड न्यूज़ हो सकती है कि ईरान और यूएस के बीच बातचीत हो रही है डिप्लोमेटिक चैनल के थ्रू. तब हो सकता है क्रूड ऑयल डाउन आ जाए. तो बाकी पहली की दो न्यूज़ क्रूड के लिए पॉजिटिव हो सकती है, थर्ड न्यूज़ नेगेटिव हो सकती है. उसके अलावा मुझे नहीं लगता कि कुछ एक दूसरे मिसाइल मारेंगे उसका इम्पैक्ट क्रूड पे सडनली होगा. वो होना था, वो परसों 2-3 दिन से ऑलरेडी हो चुका है, उसको मार्केट ऑलरेडी प्ले आउट कर चुका है. तो अब सिर्फ इतनी छोटी न्यूज़ के लिए तो मार्केट मूव नहीं करेगा कुछ सडनली. ये तीन ही न्यूज़ हैं जिन पे मेरी नज़र है. यूएस इन्वॉल्वमेंट, यूएस इन्वॉल्व हो जाए वॉर में डायरेक्टली, ईरान पे बम्बार्डमेंट कर दे. दूसरा, इजराइल ईरान के सुप्रीम लीडर को असैसिनेट कर दे. या फिर थर्ड, ईरान और यूएस बातचीत कर लें कि ठीक है, आप हम पे बम्बार्डमेंट मत करना, हम न्यूक्लियर प्रोग्राम को छोड़ रहे हैं. जिसके चांसेस कम ही लग रहे हैं वैसे तो. इनमें से कुछ भी होता है तभी कुछ हो सकता है, बड़ा कुछ मूव आ जाए. पहली दो न्यूज़ पे मार्केट ऊपर ही जाएगा, और तीसरी न्यूज़ आ जाती है तो मार्केट वापस गिर जाएगा नीचे. तो अभी उस पर हमें ध्यान नहीं दे रहा हूँ, बेसिक प्राइस एक्शन पे ट्रेड करते हैं. इतनी छोटी न्यूज़ के लिए तो नहीं, मुझे नहीं लग रहा इम्पैक्ट पड़ेगा क्रूड पे सुजीत जी. नेचुरल गैस कब बढ़ेगा? बढ़ तो रहा था पिछले 3 दिनों से, और कितना बढ़ाओगे? थोड़ा प्रॉफिट बुकिंग भी आने दो. नीचे आता है 342-43 के आसपास, वहां से पुल बैक मिल सकता है वापस. या फिर ऊपर चला जाए तो 350-657 से वापस सेलिंग. बात कर लें ट्रम्प से. ट्रम्प का ही भरोसा नहीं है कुछ. ट्रेड ऑफ हॉर्मोज अगर चोक कर दिया ईरान ने, तो फिर तो क्रूड के प्राइस, क्रूड क्या नेचुरल गैस, दोनों की प्राइस ऊपर चढ़ जाएंगे बिल्कुल. गैप अप ही होगा सीधा. फिर तो क्रूड के प्राइस जाने ही जाने ऊपर, अगर स्ट्रेट ऑफ हॉर्मोज ब्लॉक हो जाता है. और वो तभी हो सकता है दो ही कंडीशन में, या तो यूएस डायरेक्टली इन्वॉल्व हो जाए, दूसरा ईरान के कुछ सुप्रीम लीडर को असैसिनेट कर दें। बाकी मुझे लगता नहीं ऐसे डायरेक्टली वो करेंगे चोक, क्योंकि ऐसा हुआ तो फिर और भी कंट्री इन्वॉल्व हो जाएंगी। बाकी लास्ट कल जो स्टेटमेंट आया था व्हाइट हाउस में, उन्होंने यही बोला है कि 2 वीक्स का वो टाइम लेंगे, ट्रम्प 2 वीक्स में डिसाइड कर देंगे कि अटैक करना है या नहीं करना है ईरान पे। Iran divided opposition senses its momentum, but activists remain wary of protest. उसको ले लेते हैं और ट्रेल कर सकते हैं जो भी होगा। लेट्स सी, उसको होल्ड करेंगे तो फिर देखते हैं। ठीक है, ओके, लेट्स सी। ग्लोबली इतना चल रहा है बट इंडिया विक्स गिरते जा रहा है। इट्स एट लो एफ 13%। इंडिया विक्स देखो, इंडिया विक्स नॉर्मली वॉलेटिलिटी कब बढ़ती है? जब कुछ अनसर्टेनिटी बढ़ जाती है तभी विक्स बढ़ेगा, लॉजिकली देखा जाए तो इंडिया विक्स रिसेंटली देखो, जब ये इजराइल ने स्टार्टिंग कर दी थी कुछ दिनों पहले, तो उस समय वापस गया था ऊपर, ऐसा नहीं है कि नहीं गया था। इंडिया विक्स वापस 18 के ऊपर चला गया था, 18 के ऊपर बहुत वॉलेटाइल माना जाता है नॉर्मली, बट वो उसके बाद देखोगे तो फिर ईरान ईरान ने वापस अटैक किया। मतलब दोनों जैसे लड़ते हैं, सबको पता है कैसे लड़ते हैं वो, तो उस वजह से मार्केट को इतना फर्क पड़ा नहीं, इंडियन मार्केट को कुछ खास। तो वॉलेटिलिटी इतनी है नहीं। वॉलेटिलिटी फिर बढ़ सकती है अगर, जैसा मैंने बताया, स्ट्रेट ऑफ हॉर्मुज ब्लॉक कर दे ईरान, या यूएस डायरेक्टली इन्वॉल्व हो जाए, क्योंकि उस केस में फिर कंप्लीटली अनसर्टेनिटी बन जाएगी कौन कौन सी कंट्री ना आ जाए। क्योंकि अगर यूएस ने अटैक किया तो फिर ईरान यूएस को तो अटैक कर नहीं सकता डायरेक्टली उसकी जमीन पे, तो उसके जो बेसिस हैं उन्हीं को अटैक करेगा। उसके बेसिस हवा में तो है नहीं, वो बाकी जितनी कंट्री है वहाँ पर, सऊदी अरेबिया, यूएई, ओमान, इराक, उन पर अटैक करेगा। अब उन पे अटैक करेगा तो उन कंट्री को भी अटैक करना ही पड़ जाएगा, फिर वो एक तरह से बॉर्डर वॉर बढ़ जाती है, वहाँ पर अनसर्टेनिटी बढ़ जाती है। फिर क्रूड ऑयल के प्राइस ऊपर जाएंगे, इंडिया की ग्रोथ नीचे आएगी, अनसर्टेनिटी बढ़ जाएगी। जितनी कंपनी है इंडिया में, उनके प्रॉफिट गिरना शुरू हो जाएंगे, क्योंकि ऑलरेडी सारे के सारे डिपेंड तो क्रूड ऑयल पर ही करता है। तो फिर से वॉलेटिलिटी बढ़ जाएगी, बट जब तक ऐसा कुछ होता नहीं, मुझे नहीं लग रहा वॉलेटिलिटी बढ़ेगी, क्योंकि वी ऑल नो दैट ये हर 2-3 साल में एक दूसरे पे ऐसे ही कुछ करते रहते हैं। अभी रिसेंटली तभी तो गया था इंडिया विक्स, अप्रैल में, याद होगा आपको, अप्रैल और उसके बाद फिर मई के आसपास, अप्रैल स्टार्टिंग में और मई स्टार्टिंग में। तो अनसर्टेनिटी इंडिया में नहीं है, ठीक है। और ऊपर से जो ट्रम्प ने टैरिफ लगाने की बात करी थी, इंडिया ऑलरेडी यूएस के साथ बातचीत कर रहा है ऑलरेडी, मोस्ट प्रॉब्ली 12 जुलाई से पहले, 12 या जो भी उनका इंडिपेंडेंस डे होता है उससे पहले एक ट्रेड एग्रीमेंट भी हो जाएगा इंडिया और उसके बीच में। तो उस वजह से वो जो अनसर्टेनिटी है वो भी खत्म हो जाएगी। इसलिए आप देखोगे इंडिया में अभी जो आउटफ्लो है एफआईएस का, वो इतना कंटिन्यूसली गिरा रिसेंटली, बट डीआईएस कंटिन्यूसली बाई करते चले गए। और अब थोड़ा बहुत एफआईएस भी जो थोड़ा बहुत बाई करते हैं, तब डीआईएस थोड़ा बहुत अपनी प्रॉफिट बुकिंग ही कर रहे होते हैं, क्योंकि अब एफआईएस को पता है कि हम कितना ही सेल कर दें, मार्केट बहुत ज़्यादा नहीं गिरने वाला, डीआईएस बचा लेंगे। बट ऐसा हर जगह नहीं होता। आप अफ्रीका का मार्केट देख लो, वहाँ पर दोनों कंट्रीज के बीच में, यूएस और साउथ अफ्रीका, रिलेशन अच्छे नहीं है। ऊपर से उन लोगों ने वहाँ पर टैरिफ भी लगा दिया एंड कोई ट्रेड डील भी अभी हुई नहीं है। वहाँ पर आप चेक करोगे उनका मार्केट इतना ज़्यादा गिर चुका है ऑल टाइम हाई से, जितना भी एफआईएस का आउटफ्लो था सारा निकल चुका है। तो एफआईएस भी देखते हैं सब चीज़ें, कंट्री के रिलेशन कैसे हैं एंड ऑल। तो अनसर्टेनिटी वहीं पर बढ़ती है जहाँ पर कुछ सर्टन ना हो। तो वॉर का अभी फिलहाल इंडिया पे कुछ खास इम्पैक्ट होने वाला नहीं है जब तक ऑयल की सप्लाई नॉर्मल चल रही है। बाकी अटैक करने दो, कोई फर्क नहीं पड़ता एक दूसरे पे, अगर करते रहते हैं। स्ट्रेट ऑफ हॉर्मोज अगर ब्लॉक हो गया तब वापस चला जाएगा इंडिया विक्स भी ऊपर, और ट्रेड डील हो ही गई है तो वहां पर भी अनसर्टेनिटी नहीं है। कि बाकी मुझे लग रहा है नीचे आएगा तो एक पुल बैक देगा जरूर। वैसे कोई इंडिया विक्स ट्रेड करने वाला नहीं होता, बट जितना देखा गया है उसके हिसाब से 12 से 13 के आसपास आके वो रुक ही जाता है। उसके नीचे तो मुझे नहीं लगा वो गया है रिसेंट पास्ट में। टिप बनाता है लेकिन वापस चला जाता है, तो मोस्टली 10 से 13 के बीच में ही रहेगा। एंड एक बार तो मुझे लग रहा है कि वापस वॉलेटिलिटी बढ़ेगी जरूर। अब कब बढ़ेगी ये तो कहा नहीं जा सकता, बट एटलीस्ट बढ़नी चाहिए वापस। 18 टू 20 के बीच में वापस जानी चाहिए वॉलेटिलिटी बढ़ के। और फिर 18 से 20 के आसपास जाएगी, वहां से वापस गिरेगी। वैसे जितना कम ही हो बेटर है। नहीं तो प्रीमियम पागल हो जाते हैं बिल्कुल निफ्टी के तो। नीचे डायरेक्टली आ जाए तो बढ़िया है। ठीक है, डायरेक्टली नीचे आ जाए तो बढ़िया ही है, यहीं से एक बाइंग बन जाएगी। गैस में ईरान सेज नो न्यूक्लियर टॉक अंडर इजरायली फायर, ट्रम्प कंसिडर ऑप्शंस। says no nuclear talk under Israeli fire। इसमें कुछ लाइव नहीं चला ना, इसको देखते हैं अभी होल्ड करके कितना बनता है। Price fall as worries ease that Middle Eastern war will expand। Okay, that Israel threaten Iran supreme leader Iran is stuck under 200। कुछ भी नहीं होगा इसमें। 530 इसको होल्ड करके देखें। 7 PM पे यूएस मार्केट भी ओपन होगा, ध्यान रखना। आधा घंटा रह गया, मतलब ये करंट कैंडल है, उसके बाद एक कैंडल और बस, फिर सीधा यूएस मार्केट ही ओपन होगा। आजा नीचे ही आजा भाई। टू पॉइंट फाइव ना तो लेना ही पड़ेगा। ओपन इक्वल टू हाई ना बने बस। इस एफईजी को रिमूव कर सकते हैं, अब जरूरत नहीं है। वैसे तो इसको और ऊपर जाना चाहिए, बट अभी के लिए इतना ही काफी है। निकल जाएंगे इसको, लगभग 14 पॉइंट का हो गया। Iranian media reports missile attack initiated by Iran targeting Israel, marking a significant escalation in military tension between the two nations. क्रूड ऑयल को अभी नहीं पता करना क्या है, जाए ऊपर या ना जाए। क्रूड ऑयल में ध्यान रखना, ये 30 मिनट के टाइम फ्रेम के अकॉर्डिंग लेवल लगा रखा है, तो प्लीज डोंट टेक हैवी क्वांटिटी इन सेलिंग स्पेशली, क्योंकि एसएल भी थोड़ा बड़ा बन रहा है। टारगेट भी बड़ा रखा है, बट एसएल भी बड़ा है 30 मिनट टाइम फ्रेम के अकॉर्डिंग, क्योंकि लेवल लगाया है 15 मिनट के अकॉर्डिंग, वहाँ पर कुछ नहीं बन रहा है फिलहाल के लिए। कोशिश करना जितने हाई लेवल पे मिले उतना बेटर, सो दैट एसएल छोटा हो जाए। नीचे भी सपोर्ट है, वो ब्रेक हुआ नहीं है, हम एक्सपेक्ट कर रहे हैं कि वो ब्रेक हो जाए, बट कोई न्यूज़ वगैरह आ गई तो ऐसा ना हो कि प्राइस सीधा ऊपर जंप करके चला जाए और रेजिस्टेंस को ब्रेक कर दे, और जो सपोर्ट 2 बार ऑलरेडी ले चुका है 30 मिनट टाइम फ्रेम पे, वो थर्ड टाइम भी होल्ड कर जाए। समझ रहे हो ना? तो ज़्यादा क्वांटिटी क्रूड ऑयल में नहीं होनी चाहिए। नेचुरल गैस में भी निकलना चाहो तो यहाँ पर निकल जाना, लगभग ये 14 पॉइंट का ही टारगेट था एग्जैक्टली, लगभग उतना आ चुका है। यहाँ से एक बाइंग का प्लान है वापस नेचुरल गैस में।
كنيسة نفيلا بو نفيلا بات زونا ترى بيت
In Beersheba and the Gusdan in addition to Haifa moment ago following Iranian strike। अरे वाह, इन्होंने तो लगता है पोर्ट को ही डिस्ट्रॉय कर दिया पूरा। to fall if UK data boost rate cut bets. ठीक है, नेचुरल गैस में निकल सकते हैं, हो गया टारगेट सेलिंग। नेचुरल गैस सेलिंग टारगेट डन, एग्जिट कर लेना। बाकी थोड़ा सा ध्यान रखना 7 PM पे कोई फिर से ओपन इक्वल टू हाई ना बन जाए सपोर्ट पे। नॉट गुड ओपन इक्वल टू हाई, वी ऑल नो दैट। जहाँ से एक छोटा सा बाइंग का ट्रेड प्लान है। मैंने उसको बुक कर लिया, वहाँ पर एक बाइंग का ट्रेड प्लान। लेट्स सी पुल बैक में कितना आता है, बट क्वांटिटी थोड़ी सी रखें। हो गया उसका टारगेट डन। टारगेट रखेंगे इसमें भी, एक ये फर्स्ट वन एंड दिस सेकंड वन, अगर ऊपर जाता है तो ठीक है। बाइंग में भी देखो टारगेट पहला यही है, लगभग 350 51 के आसपास। इसके ऊपर अगर सस्टेन करेगा तो फिर वापस 356 57 के आसपास का सेकंड टारगेट लेंगे। वो जोन पूरा ही एक ही है, सिंगल जोन, इसलिए तो बनाया हुआ है। 15 मिनट और है। मुझे क्रूड को देखना है, क्रूड क्या करता है 30 मिनट में। क्वांटिटी कम रखना, ठीक है। क्रूड में बार बार रिपीट कर रहा हूँ, थोड़ा एसएल बड़ा बन रहा है इसलिए। और वो नीचे का अभी भी सपोर्ट ब्रेक हुआ नहीं है, हम तो एक्सपेक्ट कर रहे हैं कि सपोर्ट ब्रेक हो, इसलिए ट्रेड बनाया है वो। उसमें नीचे सपोर्ट ऑलरेडी 2 बार ले चुका है, तो ये थर्ड टाइम आया है। फर्स्ट टाइम बाइंग आई थी, एक हाई बनाया था, दूसरे टाइम पे भी इक्वल हाई बनाया था। थर्ड टाइम है लोअर हाई बनता हुआ दिख रहा है, तो अगर सेलिंग आती है तो चौथी बार में तो ब्रेक कर ही देना चाहिए। और करता है तो वैसे बेटर ही है, नीचे से फिर नेक्स्ट सपोर्ट से ऊपर जाए तो बेटर रहेगा। कोई न्यूज़ ना आए बस। देख लेंगे, देखते हैं कितना होता है। Vikas Singh ji, I saw your growth from 2K to 43K. I used to watch your video in 2022. Thank you so much, sir. स्टक हो गए बट हम वहीं पर हैं, 43 42 पर ही स्टक ही हो गए। 50 के पता नहीं हुए ही नहीं कब से। 50,000 सब्सक्राइबर पे आई थॉट बहुत पहले हो जाएंगे, बट अटक गए वहीं पे। कोई नहीं, अपना वो एम नहीं है सब्सक्राइबर बढ़ाना। कम लोगों तो ज़्यादा बेटर है, ज़्यादा हो तो फिर सबके क्वेश्चन लेने पड़ते हैं, इसलिए मैं थोड़ा सा कमेंट बॉक्स भी पब्लिक वाला ओपन करके नहीं रखता हूँ। पीयूष जैन जी 12 के बुक कर लिया नेचुरल गैस में, ग्रेट। अवॉइड करना, आप कोई नेक्स्ट ट्रेड मत लेना, ठीक है, और डन कर दो, सिस्टम क्लोज। जिनको हो चुका है प्रॉफिट, अवॉइड नाउ। ओके, नेचुरल गैस एग्जिट सेलिंग डन फॉर द डे, ग्रेट। 8600 बुक कर लिया, ग्रेट विराज जी। उसको देखते हैं, ऊपर निकल लो ना बने वहाँ पे बस। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया हुआ है। श्योर। उसको देखते हैं उस लेवल पे, उसको एग्जिट कर लेना। सेवन, ये कैंडल क्लोज जाएगी, इसके बाद नेक्स्ट सीधा एक कैंडल और है 15 मिनट की, देन सीधा यूएस मार्केट ही ओपन होगा। थोड़ा क्वांटिटी का ध्यान रखना यूएस मार्केट से पहले। यूएस मार्केट की जो 15 मिनट की कैंडल होगी वहां पर कोई नया ट्रेड मत ले लेना। 7:15 की कैंडल वाली इंपॉर्टेंट, 7 PM की कैंडल इंपॉर्टेंट होती है अगेन। लंदन सेशन, न्यूयॉर्क सेशन, यूएस मार्केट, यहाँ पर सडनली कुछ किसी भी डायरेक्शन पे चला जाता है मार्केट, एग्जैक्टली कहा नहीं जा सकता। थोड़ा सा और रह गया। बाकी देखो नेचुरल गैस का भी थोड़ा सा टारगेट रह गया, 7 PM से पहले आ जाए तो और बढ़िया। सिंह जी, थैंक यू सो मच फॉर योर काइंड वर्ड्स। नितिन साहू जी, क्रूड ऑयल बाई करें क्या? बाइंग का ट्रेड नहीं लगाया सर, सेलिंग का ट्रेड लगाया हुआ है। बाइंग क्यों कर रहे हो? मैंने लॉजिक बताया ना, देखो जो मेरे हिसाब से बन रहा है मैं वो बता सकता हूँ, मैं उसके अलावा कुछ और कमेंट करना नहीं चाह रहा। ठीक है, लास्ट कैंडल है 7 PM से पहले। डार्क नाइट राइजर वन सर नहीं करते, आप जेन्युइन एडवाइस देते हो, थैंक यू सो मच। डार्क नाइट राइजेस। आशीष वर्मा जी, आपने बाई कर लिया था नेचुरल गैस 351 पे, 351 पे। अरे यहाँ क्यों बाई कर लिया सर? यहाँ पर ऐसा क्या था कि बाई करने लायक कुछ? यहाँ पर ऐसी पहली बात है, यहाँ पर कोई सपोर्ट नहीं है, ऊपर से कैंडल भी ओपन इक्वल टू हाई बन रही है। कैंडल को देखा करो, कैंडल ओपन इक्वल टू हाई पे कभी बाय मत करा करो, चाहे वो कितना ही स्ट्रॉन्ग सपोर्ट हो, या फिर नॉर्मली भी ओपन इक्वल टू हाई पे कभी बाय नहीं करना चाहिए किसी भी लेवल पे। उस कैंडल को या तो क्लोज होने दो लेवल के ऊपर, या फिर एटलीस्ट अपना ओपन इक्वल टू हाई डिस्ट्रॉय करने दो। डायरेक्टली ओपन इक्वल टू हाई पे नहीं लेना चाहिए, वहां पे वैसे सपोर्ट भी नहीं था पहली बात तो, ये रेजिस्टेंस ही बना हुआ है, फेक ब्रेकआउट दिया वापस नीचे आ गया। चलो थोड़ा सा रह गया, इसके ऊपर जाएगा तो 21 सेकंड देखेंगे, रहेगा जाएगा तो नहीं। ये भी सीधा चला जाए ना, नेचुरल गैस सही रहेगा, यहाँ से वापस सेल करने के लिए अच्छा है। अगर ये वापस नीचे आ गया फिर वो डब्ल्यू बनाएगा, काफ़ी टाइम लगा देगा। नहीं नहीं नहीं। डॉक्टर सुदर्शन जी 6 के बुक कर लिया नेचुरल गैस बाइंग में, जल्दी एग्जिट हो गए। वैसे टारगेट हो ही गया है उसका छोटा सा, एग्जिट होना भी चाह रहे हो तो हो जाओ, नहीं तो एसएल कॉस्ट पर रख लेना 7 PM से पहले, और कोई नया ट्रेड मत लेना अभी। 7 PM की कैंडल ओपन होने दो। 351 पे आके ऊपर जाना चाहिए था, बोला था 351 पे, मैंने बाई कर लिया। मैंने ऐसा कहाँ बोला यार? 351 पे आके ऊपर जाना चाहिए ऐसा मैंने तो नहीं बोला, मुझे जहाँ तक याद है। मैंने इतना जरूर बोला था 352 के नीचे अगर कैंडल क्लोज होती है 15 मिनट की तो और गिर सकता है। 351 पे आके बाइंग तो मैंने नहीं बोला कहीं पे। गलत सुन लिया लग रहा है सर थोड़ा सा आपने। 352 के नीचे कैंडल क्लोज करती है तो और गिर सकता है, ये मैंने बोला। बाकी पुल बैक आ सकता है, इसका मतलब ये नहीं कि बाई करना है, ठीक है। पुल बैक में बाई नहीं किया जाता है पहली बात तो। बाई करो सपोर्ट या सपोर्ट पे, सेल करो रेजिस्टेंस पे। अब कहीं पर प्राइस गिर रहा है, पुल बैक पे बाइंग लोग करते हैं अलग अलग स्ट्रैटेजी के अकॉर्डिंग। मैं उस स्ट्रैटेजी पे काम नहीं करता हूँ, तो जहाँ पर लेवल लगाऊं वहीं के आसपास बाई सेल करो। बीच में रैंडमली एंट्री मत लो। 10 मिनट और है। बाकी देखो वापस अगर ऊपर आएगा तो यहाँ पर एक सेलिंग का ट्रेड ही बनाएंगे, ठीक है, इस एरिया के आसपास आएगा तो। बाकी क्रूड में सेलिंग का ट्रेड लोगे, क्वांटिटी कम ही रखना। एसएल बड़ा है और नीचे अभी भी सपोर्ट जो ट्रेड बनाया है वो 30 मिनट टाइम फ्रेम के अकॉर्डिंग बनाया है, ना कि 15 मिनट के अकॉर्डिंग। तो उस हिसाब से एसएल और टारगेट दोनों ही बड़े हो रहे हैं। नीचे अभी भी सपोर्ट ब्रेक हुआ नहीं है, तो हम एक्सपेक्ट कर रहे हैं कि नीचे सपोर्ट ब्रेक हो। तीसरी बार आया था सपोर्ट पे यहाँ पर 30 मिनट टाइम फ्रेम के अकॉर्डिंग। 15 मिनट में कुछ नहीं है तो 15 मिनट के अकॉर्डिंग तो ना बाइंग बन रही है ना सेलिंग बन रही है। 30 मिनट के अकॉर्डिंग एक सेलिंग बन रही है, यहाँ पर एक बाइंग भी थी, बट एज आई सेड वो तीसरी बार आ रहा था, ऑलरेडी हायर लो बनाया था लास्ट टाइम, तो चांसेस है कि ब्रेक हो जाए तो बेटर है। कोई न्यूज़ ना आए। हाँ वो भी चलेगा। श्योर, कोई सा नहीं है। मिनट रह गए, 10 मिनट लेफ्ट। Linda French gates opens up about retail sales. डेटा की ओर से एक न्यूज आई थी, उन लोगों ने ये कहा है कि वो जो व्हाट्सअप यूज होता है वहां पर भी एडवर्टाइजमेंट ओपन करने वाले हैं। इन द सेंस अगर आप व्हाट्सअप अभी चलाते हो जो कि फ्री में यूज होता है, कोई ऐड नहीं आता है, अब उसमें भी ऐड आएंगे। एंड अगर आपको ऐड नहीं चाहिए तो आप उनका सब्सक्रिप्शन ले सकते हो। कब से लॉन्च होगा देखना पड़ेगा, क्योंकि लॉन्च होगा तो वर्ल्ड वाइड ही लॉन्च होगा। लगभग 2 बिलियन यूजर हैं व्हाट्सएप के वर्ल्ड वाइड। हुआ तो काफी बड़ा बिजनेस मिल सकता है व्हाट्सएप के थ्रू मेटा को। ट्यूब में होता है वैसा ही हो जाएगा। सेम जैसा यूट्यूब पे मोनेटाइजेशन होता है वैसे ही शायद वो व्हाट्सएप पे भी कर देंगे। 7 मिनट। सिल्वर का व्यू, एनी ट्रिगर्स टुडे और नियर टर्म्स? आज तो नहीं है, एक न्यूज़ थी बस, 6 PM पे वो ऑलरेडी आ चुकी है, उसके अलावा और कुछ नहीं है। नेचुरल गैस का टारगेट ऑलरेडी हो चुका है सेलिंग का, तो अब यूएस मार्केट का ओपनिंग का वेट कर सकते हो 7 PM की कैंडल का। एक बार देख लेते हैं सिल्वर को भी। हाँ 7 मिनट। MCX की बात कर रहे हो या फॉरेक्स की बात कर रहे हो सिल्वर में? सिल्वर फॉरेक्स या MCX? ठीक है, 7 PM होने वाला है, किसी का कोई ओपन पोजीशन है तो सिस्टम पे ऐसा डाल देना, डोंट टेक द रिस्क नाउ। 7 PM की कैंडल देखते हैं, 7 PM की कैंडल पे एंट्री मत कर देना कोई। 7 PM की 15 मिनट की कैंडल क्लोज होगी तो उसके बाद ही नया ट्रेड बनेगा वापस से, बिकॉज वी ऑल नो दैट 7 PM पे यूएस मार्केट ओपन होगा तो अगेन नया वॉल्यूम जनरेट होगा, किसी भी डायरेक्शन पे जा सकता है प्राइस। कैंडल ओपन इक्वल टू हाई या लो बनेगी उसका भी ध्यान रखना, स्पेशली दोनों ही जगह पे, क्रूड में, नेचुरल गैस में। ओपन इक्वल टू हाई ना बन जाए नेचुरल गैस में, और ओपन इक्वल टू लो ना बन जाए वापस क्रूड ऑयल में। नेचुरल गैस ले क्या कॉलर है भाई, नेचुरल गैस बता तो दिया, यूएस मार्केट का वेट कर ले। 7 PM पे नहीं ट्रेड करते हैं नया ट्रेड, कितने बार बोला हुआ है। जब लंदन सेशन ओपन हो, न्यूयॉर्क सेशन ओपन हो, यूएस मार्केट ओपनिंग टाइमिंग हो, वहां पर मत लिया करो ट्रेड। वहां पर कैंडल किसी भी डायरेक्शन पर चले जाती है, कुछ कहा नहीं जा सकता, क्योंकि सडनली एक तरह से ऐसे मान लो जैसे निफ्टी बैंक ओपन हो रहा है 15 मिनट की पहली कैंडल, कि कितना ही अच्छा सपोर्ट हो, कितना अच्छा रेजिस्टेंस हो, कहीं भी मूव कर सकता है, अभी एग्जैक्टली नहीं कह सकते किस डायरेक्शन पे जाएगा। ऊपर से ओपन इक्वल टू हाई लो बन गया गलत जगह पे तो फिर और बुरा। बाकी यहाँ पर नेचुरल गैस में फिर से लेना चाह रहे हो ले सकते हो, वैसे बाइंग लास्ट कैंडल में आ चुकी है, छोटा सा एक टारगेट था उसके आसपास तक गया जरूर, फिर से आती है तो देखना, कैंडल ओपन इक्वल टू बने तो एंट्री मत करना। 7 PM की जो 15 मिनट की कैंडल है, जो 15 मिनट का ही चार्ट लगाया हुआ है, क्लोज हो जाने देना, अगर ओपन इक्वल टू हाई बनी लेवल के ऊपर तभी एंट्री बनेगी, नहीं तो मत लेना। सेम फॉर क्रूड ऑयल, वापस ओपन इक्वल टू लो बनती है तो सेलिंग मत करना, नॉर्मल कैंडल पे एंट्री हो जाती है। देखते हैं 7 PM की कैंडल पे कैसे मूव करता है। और कुछ न्यूज़ तो नहीं है फिलहाल के लिए इजराइल ईरान की। थोड़ी देर पहले अटैक किया था, वही एक न्यूज़ थी। 30 मिसाइल लॉन्च करे थे अप्रॉक्सीमेटली। द मोमेंट ऑफ इरानियन स्ट्राइक इन हाइफा। एक मिनट रह गया। किसी ओपनिंग पोजीशन चल रही है तो एसएल कॉस्ट पे रख सकते हैं। देखो कभी कोई डेटा आने वाला हो जो हमें पता है, ठीक है, जो पता ही नहीं है उसके बारे में तो कोई कुछ नहीं कर सकता। सडनली कोई न्यूज आ गई, मार्केट मूव कर गया, उस पर नोबडी नोज, ठीक है। बट कभी कोई डेटा आने वाला है, जैसे इन्वेंट्री आने वाली है, मार्केट ओपनिंग टाइमिंग है लंदन सेशन का 12:30 इंडियन टाइम के अकॉर्डिंग, फिर 5:30 न्यूयॉर्क सेशन की ओपनिंग, 7 PM यूएस मार्केट की ओपनिंग। यहाँ पर कैंडल किसी भी डायरेक्शन में चले जाती है, वहाँ पर अवॉइड किया करो फ्रेश एंट्री बनाने से। इवन दो अगर मार्केट सपोर्ट रेजिस्टेंस पर भी है, आपको मौका मिल जाएगा वापस री एंट्री करने का, स्पेशली अगर वहाँ पर कैंडल गलत बन रही है, ओपन इक्वल टू लो या फिर ओपन इक्वल टू हाई, और अगर वहाँ पर सपोर्ट रेजिस्टेंस है। मिडिल ऑफ द लेवल कहीं पर प्राइस है तो फिर तो खैर कुछ फर्क नहीं पड़ता, फिर कहीं भी जाए। हाँ वही, कोई इन्वेंट्री आ रही है या फिर डेटा आ रहा है जिसका इम्पैक्ट कहाँ पर होगा हमें पता है, तो वहाँ पर अननेसेसरी क्यों तुक्का लगाना है, गैम्बलिंग थोड़ी ना करनी है। बाकी जिनको हो चुका है प्रॉफिट अवॉइड करना, एक दो ट्रेड शायद और बन जाए। बाकी क्रूड ऑयल में ध्यान रखना, सेलिंग का ट्रेड लिया है या फिर लोगे वापस ऊपर जाने पे तो क्वांटिटी थोड़ी कम रखना उसमें। ऐसा लाइक थोड़ा सा बड़ा हो रहा है, वो 30 मिनट टाइम फ्रेम के अकॉर्डिंग मैंने लेवल लगाया हुआ है, और नीचे का सपोर्ट अभी ब्रेक नहीं हुआ है। आई एम एक्सपेक्टिंग कि नीचे सपोर्ट ब्रेक हो जाए, क्योंकि वो जैसा सपोर्ट मैंने बताया 3 बार टेस्ट हो चुका है और लोअर हाई बनाया है। कोई न्यूज़ नहीं आती है तो मेरे अकॉर्डिंग तो ब्रेक होना चाहिए, कोई न्यूज़ आ गई तो चला जाएगा ऐसा, बट थोड़ा रिस्क तो लेना ही पड़ेगा वहाँ पर, और कुछ कर नहीं पाएंगे अभी। श्योर, ओके। अभी और कोई डेटा नहीं है, बस ये 7 PM की कैंडल ही इंपॉर्टेंट है लास्ट। जितनी वॉलेटिलिटी होनी है इसी में हो जाएगी मोस्टली। इसके बाद फिर नॉर्मल प्राइस एक्शन ही मूव होना चाहिए दोनों जगह पे। देखते नीचे क्रूड का लेवल इंपॉर्टेंट है। सेवन पी एम की कैंडल बड़ी इंपॉर्टेंट हो जाती है। श्योर, कोई इशू नहीं है। दैट्स व्हाई यूएस मार्केट की कैंडल, दैट्स व्हाई इंपॉर्टेंट। Israel, Iran, Qatar met energy majors to discuss risk to global gas supply. Iran foreign minister says Israel attack was betrayal or diplomacy. Qatar met with energy majors to discuss risk to global natural gas supply. World oil market are on high alert for any strike that hit energy facility in Iran. Qatar held this week crisis talk with energy majors after Israeli strike on Iran. Huge gas field with its share with Qatar, an industry source and a diplomat in the region told Reuters. Doha was asking firms to raise US, UK and European government awareness of increasing risk to global gas supply. Qatar Energy did not immediately respond to a request for comment. Just joining us, here is what you need to know. ठीक है, देखो वही है मेन लाइक अगर वॉर थोड़ा सा स्प्रेड हो गई तो सिर्फ क्रूड ऑयल नहीं, नेचुरल गैस को भी नेचुरल गैस में भी प्रॉब्लम आ जाएगी, बिकॉज नेचुरल गैस का भी जो मेनली एक्सपोर्ट करता है कंट्री वो कतर ही है। कतर के अलावा और भी कंट्री करती हैं, बट वैसे देखोगे तो यूएस मेनली है, कतर है मिडिल ईस्ट में, ईरान भी करता है क्रूड ऑयल के साथ साथ। तो इन सब पे एक इम्पैक्ट डाल सकता है, इनके प्राइस पे इम्पैक्ट डाल सकता है। क्रूड में अगर वापस ऊपर जाएगा वापस कर सकते हैं एंट्री, बिल्कुल कर सकते हैं। नेचुरल गैस में मत करना अभी एंट्री, नेचुरल गैस में भी ये 7 PM की कैंडल है, यहाँ पर एंट्री मत लेना अभी। इस कैंडल को क्लोज हो जाने दो फिर देखते हैं। ऐसा ना हो कि ये 7 PM की कैंडल में मार्केट ऑलरेडी सपोर्ट को ब्रेक करके नीचे चला जाए, फिर फायदा नहीं है। ठीक है, तो करंट कैंडल पे कोई एंट्री नहीं। ओके, आई थिंक ये डिस्टर्ब हुआ तो वो अब हो गया सही। मोहित जी कहाँ से पढ़ते? अलग अलग वेबसाइट है, वहीं से देख रहा हूँ। अभी फिलहाल मैंने रूटर्स की वेबसाइट से देखा था। मिडिल ईस्ट के लिए जैसे मैं न्यूज़ देख रहा हूँ वो मैं 2-3 ही जगह से देखता हूँ, या तो रूटर्स की वेबसाइट है, ब्लूमबर्ग की वेबसाइट है, और ट्विटर पे जो 2-3 वेरीफाइड हैंडल हैं, क्योंकि न्यूज़ पे आने पे तो बहुत टाइम लग जाता है। जब तक न्यूज़ पे आएगा तब तक तो हो जाता है सारा काम। तो दो हैं, एक ओपन सोर्स इंटेलिजेंट मॉनिटर करके एक ट्विटर हैंडल है, OSINT डिफेंडर। वो एक्यूरेट न्यूज़ देता है, ठीक है, तो वहाँ से देख सकते हो। बट वो काफ़ी लेट देता है वो भी, बट देता है, ठीक ठाक देता है, अच्छी खासी देता है, मतलब एक्यूरेट देता है। हमें एक्यूरेट इन्फॉर्मेशन चाहिए, फास्ट मिल जाए, तो वो एक सबसे अच्छा है। इवन दो आप मान सकते हो उसको इलोन मस्क भी फॉलो करता है, तो अच्छा ही ओपन सोर्स का एक सोर्स है। बाकी उसके अलावा एक वॉर मॉनिटर करके, एक वैसे बहुत सारे हैं वॉर मॉनिटर करके, बट एक यूरोप का है वॉर मॉनिटर करके, वहां से देख सकते हो। वो भी न्यूज़ थोड़ा सा प्रॉपरली दे देता है लेवल पे, ठीक है। ही इज बेस्ड इन लेबनान बाय द वे, वो लेबनान का है, तो ध्यान रखना, बट न्यूज़ वो भी आपको प्रोवाइड कर देगा, क्योंकि हमें अनबायस न्यूज़ चाहिए और टाइमली चाहिए, वो वहीं से मिलती है। बाकी न्यूज़ चैनल पे आते आते या फिर वो पोस्ट में आते आते बहुत टाइम लग जाता है। बाकी अगर आप ट्रेडिंग व्यू चलाते हो तो वहाँ पर भी न्यूज़ फ्लो करके एक ऑप्शन आता है फुल फीड, उसको ऑन कर लिया करो। वहाँ पर कोई भी न्यूज़ आती है हर 5 से 10 मिनट या फिर इवन 1-1 मिनट के इंटरवल में न्यूज़ मिलती रहती है, उसको आप चाहो तो वो भी कर सकते हो, फिल्टर भी कर सकते हो। Israeli authorities respond to report of projectile landing in northern Israel. ठीक है. आज क्यों गिर रहा है क्रूड ऑयल और नेचुरल गैस? या क्रूड ऑयल का तो मैं कह नहीं सकता. नेचुरल गैस रेजिस्टेंस पे था तो गिर गया. नेचुरल गैस मिनी में एसएल कितने पॉइंट का होना चाहिए? या तो डिपेंड करता है आप कौन से टाइम फ्रेम पे ट्रेड कर रहे हो. स्मॉलर टाइम फ्रेम पे ट्रेड करोगे एसएल छोटा ही होगा ऑब्वियसली. थोड़ा आप हायर टाइम फ्रेम पे ट्रेड करोगे तो बड़ा होगा. बाकी ये इस पे भी डिपेंड करता है कि प्राइस अभी कहाँ चल रहा है. ठीक है, क्योंकि जैसे जैसे प्राइस इंक्रीज होता जाता है, जैसे अभी एक नेचुरल गैस को ले लो, अभी 350 के आसपास चल रहा है मान लो ऑन एन एवरेज. तो यहाँ पर मोमेंटम ज़्यादा ही होगा, टारगेट भी बड़ा मिलेगा, एसएल भी बड़ा ही होगा. बट सेम टाइम फ्रेम पे आप जब प्राइस 150 के आसपास चल रहा होगा तब बड़ी मुश्किल से वो 4 पॉइंट भी बड़ी मुश्किल से मूव करता है. बट उस केस में फिर एसएल भी छोटे हो जाते हैं. तो कोई फिक्स नहीं होता. आपका जो लेवल है, लेवल के बेसिस पे आप एसएल रखो. जो भी आपका एक लेवल है, लेवल पे जहाँ पर आपका एंट्री पॉइंट है उसके अराउंड जो भी आपका जोन बन रहा है वही एसएल होता है. एसएल को ऐसा कोई फिक्स नहीं होता कि 10 पॉइंट का ही रखना है, 20 पॉइंट का रखना है. मैं तो ऐसा नहीं देखता हूँ खैर. तो जितना बन रहा है लेवल के अकॉर्डिंग उतना बन रहा है. अब वो ज़्यादा है अगर तो क्वांटिटी कम रख लो, या फिर प्राइस का और ऊपर आने का वेट करो. और कुछ कर नहीं सकते, क्योंकि अगर मान लो कहीं पर लेवल है, लेवल में एसएल क्रूड ऑयल में बनी अगर 100 पॉइंट का रहा है तो उसको मैं छोटा कैसे करूँ? है ही 100 पॉइंट का. उसमें इतना किया जा सकता है कि क्वांटिटी कम कर लो या फिर प्राइस को और ऊपर आने दो सो दैट एसएल छोटा हो जाए. बट एक्चुअल में जितना लेवल बना रहा है उतना ही बनता है. फिक्स तो नहीं होता जितना मैंने देखा है. कि वैसे कई लोग रखते हैं फिक्स एसएल की 10 पॉइंट का एसएल लेना है, 20 पॉइंट का एसएल लेना है. बट मुझे तो नहीं लगता वो सही है. अब जितना लेवल दिखा रहा है चार्ट पे उतना तो रखना ही पड़ेगा, नहीं तो अननेसेसरी एसएल चला जाएगा और एसएल हिट करके प्राइस फिर मूव कर जाएगा. फायदा नहीं है. क्लोज हो गई तो फिर नहीं, फिर तो नीचे चला गया ना इसका मतलब. इसमें एंट्री मत करना, ठीक है. बाइंग में अभी ये 7 PM की कैंडल के क्लोजिंग का वेट कर लो. लेवल के ऊपर क्लोज होगी तभी लेंगे, नहीं तो अगर लेवल के नीचे क्लोज हो गई तो फिर इसमें एंट्री नहीं है दोबारा. अभी भी 5 मिनट हैं, देखते हैं वापस ऊपर क्लोजिंग देता है नहीं देता. क्योंकि अगर वापस ऊपर क्लोजिंग नहीं आई लेवल के ऊपर तो फिर और गिर सकता है. ठीक है, मैं इसीलिए बोलता हूँ लाइक 7 PM की जो कैंडल होती है, फिर मार्केट ओपनिंग की कैंडल होती है कहीं पर भी, उस पर मत ही ट्रेड करना. वहाँ पर किस डायरेक्शन पे मोमेंटम आ जाए कोई नहीं कह सकता. अभी तो टाइम है 5 मिनट. हाँ, ये ऊपर क्लोज नहीं हुई तो फिर नहीं, फिर बिल्कुल नहीं. लाइक कर दो गाइस, कम ऑन. जिन लोगों ने लाइक नहीं किया स्ट्रीम को. 2 मिनट 2 मिनट यहाँ पे मार्केट क्लोज हुआ है ना, सो नहीं कर रहा। अरे ये है ना, ये दिस वन। तो इसमें बनता है ये लॉजिकली। तो नीचे कहाँ तक बढ़ेगा? नीचे वाला जो लेवल रहेगा वो फर्स्ट सेकंड थर्ड ये रहेगा। इसको रिमूव कर सकते हैं। इसको रिमूव कर देते हैं। अरे कुछ ज़्यादा ही बड़ा ऐसा है यार। ठीक है, देखो कैंडल क्लोज हो गई नेचुरल गैस की लेवल के नीचे ही चली गई है कैंडल 343, बट कोई नहीं, यहाँ पर भी एक ट्रेड बनाएंगे। उसमें ऐसा थोड़ा बड़ा रखेंगे और कुछ कर नहीं सकते, तो ये एक ठीक है। उसमें जो प्रीवियस लेवल था उसमें लेवल के नीचे कैंडल क्लोज हो गई है, तो वहाँ पर मत मान के चलना कि हम उस सपोर्ट पे ले रहे हैं। वो सपोर्ट पे नहीं एंट्री है, ये एक रीटेस्ट पे एंट्री है। इसका ऐसा थोड़ा बड़ा है 5 पॉइंट का, क्वांटिटी का ध्यान रख लेना। टारगेट भी रखा हुआ है ठीक ठाक 12 पॉइंट, तो लेट्स सी। ठीक है, दो काम करना है इसमें, थोड़ा एसएल बड़ा है इसलिए क्वांटिटी थोड़ी कम रख लेना। ठीक है, क्वांटिटी थोड़ी कम रख लेना, या फिर इस लेवल पे क्वांटिटी कम कर लो। अगर थोड़ा नीचे आ जाता है, लाइक जैसे 5 पॉइंट का एसएल है, मान लो 338 के आसपास आ गया, तो वहाँ पर 2.5 पॉइंट का एसएल बन जाएगा, तो वहाँ पर क्वांटिटी फिर से और डाल सकते हो। लाइक 2 लॉट्स में ट्रेड करते हो तो एक लॉट ऊपर ले लो, एक लॉट नीचे ले लो, क्योंकि जरूरी नहीं नीचे आएगा ही आएगा। अब एसएल यहाँ पर जैसे अभी किसी ने पूछा था ना, एसएल कितने पॉइंट का होता है, अब यहाँ पर 5 पॉइंट का बन रहा है तो बन रहा है, उसको मैं कम नहीं कर सकता। उसमें दो ही चीज़ करी जा सकती है, या तो क्वांटिटी ऊपर कम लो, या फिर प्राइस को थोड़ा और नीचे आने दो, सो दैट एसएल थोड़ा छोटा हो जाए। क्योंकि प्राइस नीचे आके एंट्री करोगे तो ऑब्वियसली एसएल छोटा बन जाएगा। बट यहाँ पर 5 पॉइंट का एसएल बन रहा है, तो दो ही चीज़ हो सकती है। अगर 5 पॉइंट का एसएल नहीं ले सकते हो, क्वांटिटी या तो कम रखो ऊपर, नीचे आएगा तो क्वांटिटी बढ़ा लेना, या फिर नीचे और आने का थोड़ा वेट कर सकते हो, एटलीस्ट 2.5 पॉइंट की लेवल के आसपास। तो लगभग 2.5 पॉइंट का एसएल तो नॉर्मल होता है नेचुरल गैस में। बाकी ये पूरा ही सपोर्ट जोन है 339.8। ठीक है, बाकी अब कोई डेटा नहीं है। हाँ, इसको रिमूव कर लो, कोई जरूरत नहीं। वो तो काफ़ी नीचे है। ये भी दिखाएगा कि क्लोजिंग कहाँ होती है अगर ये इनको हो चुका है प्रॉफिट अवॉइड करना। ठीक है, अननेसेसरी रिस्क लेने से।
वो है जब कोई अपनी मातृभूमि को बेचता है। सहमत हो इस चीज पे, है ना? कितने से बड़ा चोर, बड़े से बड़ा अपराधी, बड़े से बड़ा फ्रॉड अपनी मां को कभी नहीं बेचेगा। वो दुनिया भर में कुछ भी करके आएगा, अपनी मां को कभी नहीं बेचेगा, अपनी मां के बारे में खराब बात ना करेगा और ना सुनेगा। बड़े से बड़ा खतरनाक से खतरनाक अपराधी की भी आप बात कर लो। अब उस आदमी के बारे में सोचिए, मातृभूमि मतलब हमारे संस्कारों में मातृभूमि हमारी मां है ना? हमारा देश हमारी मां है। जो व्यक्ति अपनी मां को बेचने को तैयार हो जाए, जो व्यक्ति अपनी मां का अपमान करके पैसा कमाए, जो व्यक्ति अपनी मां को, अपनी मातृभूमि को बाहर निकाल के बेइज्जत करे सिर्फ इसलिए क्योंकि उसको कहीं से पैसा मिल रहा है, उस व्यक्ति के बारे में आप क्या सोचोगे? आपकी क्या राय है? बस इतना सोचिएगा। और ये जितने भी लोग हैं जो पाकिस्तान की मदद करते हैं ऐसे टाइम में भी, ये सब वही कर रहे हैं। सबसे बड़ा अपराध मेरी नजर में वो है जब कोई अपनी मातृभूमि को बेचता है। सहमत हो इस चीज पे, है ना? कितने से बड़ा चोर, बड़े से बड़ा अपराधी, बड़े से बड़ा फ्रॉड अपनी मां को कभी नहीं बेचेगा। वो दुनिया भर में कुछ भी करके आएगा, अपनी मां को कभी नहीं बेचेगा, अपनी मां के बारे में खराब बात ना करेगा और ना सुनेगा। बड़े से बड़ा खतरनाक से खतरनाक अपराधी की भी आप बात कर लो। अब उस आदमी के बारे में सोचिए, मातृभूमि मतलब हमारे संस्कारों में मातृभूमि हमारी मां है ना? हमारा देश हमारी मां है। जो व्यक्ति अपनी मां को बेचने को तैयार हो जाए, जो व्यक्ति अपनी मां का अपमान करके पैसा कमाए, जो व्यक्ति अपनी मां को, अपनी मातृभूमि को बाहर निकाल के बेइज्जत करे सिर्फ इसलिए क्योंकि उसको कहीं से पैसा मिल रहा है, उस व्यक्ति के बारे में आप क्या सोचोगे? आपकी क्या राय है? बस इतना सोचिएगा। और ये जितने भी लोग हैं जो पाकिस्तान की मदद करते हैं ऐसे टाइम में भी, ये सब वही कर रहे हैं। सबसे बड़ा अपराध मेरी नजर
ಗುಡ್ ಪರ್ಸನ್ ಮೋದಿ ಜಿ ಗುಡ್ ಪರ್ಸನ್.
ಮೋದಿ ಬಂದ್ರೆ ದೇಶ ಸೇಫ್ಟಿ ಆಗಿರುತ್ತೆ ಅಷ್ಟೇ.
ಸಿದ್ದರಾಮಯ್ಯ ಗ್ಯಾರಂಟಿ ಬೆಟರ್, ಮೋದಿ ಗ್ಯಾರಂಟಿ ಬೆಟರ್. ಮೋದಿ ಗ್ಯಾರಂಟಿ
100% ಮೋದಿ ಬೇಕು.
ಮೋದಿ की
नेचुरल गैस बाई करके यहाँ लगाया है ना नेचुरल गैस में, बट मैंने बताया थोड़ा सा एसएल बड़ा है 5 पॉइंट का, तो 2 काम कर सकते हो। हाई लेवल पे थोड़ी क्वांटिटी कम रखना, नहीं तो 5 पॉइंट का एसएल है, अपने क्वांटिटी के हिसाब से रखना। बड़ा लग रहा है एसएल तो फिर थोड़ा और नीचे आने का वेट करो, सो दैट 2.5 छोटा एसएल हो जाए। बट एसएल इतना ही बन रहा है, तो बड़ा एसएल बने तो उसमें 2 ही काम कर सकते हैं, या तो अपर लेवल पे क्वांटिटी कम, लोअर एंड पे बाकी क्वांटिटी ऐड कर लो। लाइक 2 लॉट में ट्रेड करते हो, 1 लॉट यहाँ ले लो, 1 लॉट यहाँ ले लेना, सो दैट एसएल छोटा हो जाए। या फिर इतना बड़ा एसएल लेना ही नहीं चाह रहे हो तो फिर थोड़ा और नीचे आने का वेट करो और इस तरह से बाई करो। बट इतना एसएल बन रहा है लॉजिकली, तो इतना बन ही रहा है। Will crude oil fall back to pre-war levels if there is a deal? Definitely. बट ऐसे चांसेस तो मुझे कम ही लग रहे हैं। इजराइल मानेगा नहीं, छोड़ेगा नहीं इस बार। इजराइल को मौका मिल गया तो, क्योंकि देखो अगर प्री वॉर तक क्रूड ऑयल को आना है, डील होनी है, और डील में सबसे पहली बात तो यूएस और इजराइल दोनों यही रखने वाले हैं कि ईरान अपने न्यूक्लियर प्रोग्राम को छोड़ दे, जो कि होने वाला नहीं है। अब सोचो ना, कोई कंट्री 20 साल से एक चीज़ पर लगी हुई है, सडनली तुम उसे उस चीज़ को छोड़ने के लिए कह दो, तो मुझे तो नहीं लगता ऐसा होगा। इवन दो हो सकता है और तेज कर दें प्रोसेस को। ऐसी भी रिपोर्ट्स आ रही थी कि प्रीवियसली ईरान के अंदर कहीं अर्थक्वेक आए हैं। अब वो अर्थक्वेक सच में अर्थक्वेक हैं या फिर कुछ टेस्टिंग चल रही है, कौन जानता है। तो डील होने के चांसेस तो मुझे कम ही लग रहे हैं फिलहाल के लिए। अब बिना उसके इजराइल मानेगा नहीं, क्योंकि और कोई ट्रिगर पॉइंट तो है नहीं क्रूड ऑयल के लिए ऊपर जाने के लिए। इसी वजह से जा रहा है प्राइस नॉर्मली। हाँ, अगर डील नहीं हुई तो प्राइस ऊपर जरूर जा सकता है, एटलीस्ट $90 तो चला ही जाएगा। स्पेशली अगर 3 जो सिनेरियो बताए थे उनमें से कुछ अगर एक हो गया, लाइक यूएस इन्वॉल्व हो गया या फिर वो ईरान के सुप्रीम लीडर को मार दिया, इन दोनों केसेस में प्राइस जरूर जाएगा ऊपर। लेट्स होप ऐसा ना ही हो, क्योंकि क्रूड ऑयल के प्राइस बढ़े तो फिर वो सब जगह ही बढ़ जाएंगे। Iranians and Israelis stand together. न्यूज़ कैसे चेक करते हैं? मैं समझा नहीं, न्यूज़ कैसे चेक करते हैं मतलब थोड़ा स्पेसिफिकली बताओ, मानो के वेबसाइट मैंने बता दी, reuters.com है, bloomberg.com है, वहाँ पर ऑलरेडी आप पेज पे देख सकते हो, सारी न्यूज़ अपडेट होती रहती हैं। बाकी और एक्यूरेट न्यूज़ चाहिए तो फिर एपी, उसको भी ट्रैक कर सकते हो। एसोसिएटेड प्रेस, वो भी सही न्यूज़ देता है। बाकी मैंने ट्विटर तो बता ही दिया, उसमें तो आपको पता ही है, ट्विटर पेज पे जाओ, अपडेट होती रहती है वहाँ पर, उसमें ऐसा कुछ खास और है नहीं। 45 लाइक्स डन गाइस, कम ऑन, लाइक भी करते रहो। जिनको हो चुका है प्रॉफिट मत लेना ट्रेड, ठीक है? अननेसेसरी रिस्क अवॉइड ही करना। इसको होल्ड कर सकते हैं क्या? एक बार न्यूज़ ऑफ द आवर देख लेते हैं, सुन लेते हैं थोड़ा सा। ट्रम्प हिंट्स ही विल होल्ड ऑफ ईरान स्ट्राइक फॉर नाउ। ये न्यूज़ तो बेरिस है क्रूड के लिए। एक बार स्टोरी देख लेते हैं। द लेटेस्ट स्टैंड सिग्नल अ स्टेप बैक आफ्टर रन ऑफ थोरो रेटोरिक। लगता नहीं यूएस डायरेक्टली इन्वॉल्व होने के मूड में है वॉर में। Nearly 1,000 ships GPS jammed near Iran daily, Navy group says. 1,000 ships का GPS ही jammed हो गया ईरान के आसपास रोज। ये आई थिंक मोस्ट प्रोबेबली नेवल शिप ही होंगे। न्यूज़ देख लो एक बार पहले।
News when you want it with Bloomberg News Now. I'm Nathan Hager. Friday morning trading is underway on Wall Street after a day off from the Juneteenth holiday. Traders are returning to work with stocks on the front foot. That was the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is higher by 0.4%, up more than 20 points. The Dow Jones Industrial Average opens with a 130-point gain, up about 0.3%, and the Nasdaq Composite is leading the way with a 0.5% gain, up about 100 points. 10-year Treasury yield up 2 basis points to 4.41%. All this as investors wait to see what comes next in the conflict between Israel and Iran. The White House says President Trump will decide within 2 weeks whether to bring the U.S. into the fight. Bloomberg's Dan Williams begins our team coverage from Jerusalem.
It's a waiting game. The Israelis aren't waiting, nor the Iranians. The exchange of fire, Israeli airstrikes and Iranian missiles continues. Arguably, however, the Iranian attacks do appear to be tapering off. According to an interview, he gave yesterday, the Israeli Prime Minister Benjamin Netanyahu attributed this to Israel's a shift by the Israeli military to targeting launch systems for those missiles. He argued that the launchers are actually more important than how many missiles the Iranians have in hand, because if you can't launch them, they're virtually useless.
Bloomberg's Dan Williams in Jerusalem. This morning, Reuters quoted a senior Iranian official as saying Iran is ready to discuss limits on uranium enrichment, but not stopping entirely. Iran's foreign minister has arrived to Geneva for talks with his European counterparts. Bloomberg's Jumana Berseche is following that from Dubai.
The red line has always been zero enrichment. Iran has said that that's not something that they would agree to, but perhaps now that they're in this more vulnerable position, that could be something worth exploring, so long as it means, from their perspective, that Israel reduce the intensity of strikes or indeed stop the strikes that are being leveled at Iran.
Bloomberg's Jumana Berseche reporting from Dubai. And as President Trump considers his options, he's due to meet this morning with his national security team in the Oval Office. Akayla Gardner covers the White House for Bloomberg News.
There is really increasing political pressure on the president because this is a decision that is really dividing his base. He went into office and campaigned on this idea of being isolationist and bringing the U.S. out of wars. He previously promised to end the war in Ukraine and the conflicts in the Middle East in 24 hours on the campaign trail. So you have many of his supporters now raising questions about why he is considering even getting more directly involved beyond a defensive stance.
Bloomberg's Akayla Gardner in Washington. The New York Post is reporting that the president's concerned a U.S. strike could lead to a chaotic outcome in Iran like the one in Libya following NATO's intervention in 2011. Israeli officials say they are determined to keep Iran from obtaining a nuclear weapon with or without U.S. help. Markets are also reacting to new comments from the Fed this morning. Governor Christopher Waller told CNBC he could see the central bank cutting interest rates as soon as next month. Bloomberg's Michael McKee reports that puts Waller a lot more on the dovish side than the rest of the Fed.
You get results like the Philadelphia Fed this morning where prices paid went down. If we don't see a big rise in inflation from tariffs over the next month or so, that could be a possibility, but I think it is definitely an outlier because at this point, the Fed doesn't have the data. So they would have to have some reason to move that hasn't shown up yet.
Bloomberg's Mike McKee. Now, Governor Waller says tariffs have not caused a big shock to inflation, and policymakers should not wait for the labor market to crack before easing borrowing costs. President Trump scored a legal victory over his National Guard deployment in Los Angeles. A three-judge panel says the administration was within its rights to call up the Guard to respond to anti-deportation protests. Bloomberg's Bill Ferries has more.
There's been a big fight over this with the California governor and the state of California basically arguing that Trump did not have the legal authority to deploy those forces the way they were called up.
Bloomberg's Bill Ferries reports the case could still be appealed to the full appeals court or to the Supreme Court. In the UK, lawmakers have backed a bill that would allow terminally ill patients in England and Wales to choose to end their lives. The Parliament voted 314 to 291 to back the terminally ill adults end-of-life bill following an impassioned and respectful debate. The bill now goes to the unelected House of Lords, which can amend or delay it, but cannot overrule the lower chamber. Back on Wall Street, we're checking some stocks that reported earnings before the opening bell. Kroger shares are higher by 5% after a beat on solid grocery spending. CarMax is also up 5%. That company beat on comp sales and earnings for the used car retailer. GMS is up 27% at the open. The Wall Street Journal is reporting that Home Depot has made an offer for the building materials supplier, and that could set up a bidding war with QXO, which offered $5 billion for GMS earlier this week. And Meta Platforms is launching an upmarket version of its Oakley smart glasses. The $399 model would include 3K video recording, double the battery life, and water resistance. Meta shares are up about 0.5% at the open. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager, and this is Bloomberg.
रसिया और नॉर्थ कोरिया भी धमकी दी है। रसिया और नॉर्थ कोरिया ने भी धमकी दी है। किस चीज़ की? क्रूड ऑयल में गाइस थोड़ा ध्यान रखना है सेलिंग के ट्रेड का, ठीक है? तो ज़्यादा बड़ी क्वांटिटी मत ट्रेड करना। नेचुरल गैस में भरोसा नहीं है, सडनली कोई न्यूज़ ना आ जाए, मुझे उसी का डर है। अभी भी नीचे सपोर्ट ब्रेक नहीं हुआ है, जितना टारगेट लगाया है वही सपोर्ट है 30 मिनट टाइम फ्रेम के। अगर उसके नीचे कैंडल क्लोज हो जाए तो अच्छा रहेगा 30 मिनट में। करंट कैंडल वापस ओपन इक्वल टू लो बन गई है। लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया स्ट्रीम को। और कोई रनिंग ट्रेड भी नहीं है, ये एक ट्रेड बनेगा यहाँ पर नेचुरल गैस का, एक बाइंग का ट्रेड। एसएल थोड़ा सा बड़ा है, अगर क्वांटिटी बड़ा एसएल नहीं लेना है तो थोड़ा और नीचे आने का वेट करना, सो दैट एसएल छोटा हो जाए। यहाँ से ले रहे हो तो थोड़ी क्वांटिटी कम रखना। एसएल देख के 5 पॉइंट का है। बाकी क्रूड ऑयल में लेवल 30 मिनट टाइम फ्रेम के अकॉर्डिंग लगाया है। यहाँ पर एक 30 मिनट टाइम फ्रेम के 15 मिनट में क्योंकि कोई सपोर्ट रेजिस्टेंस है नहीं, 30 मिनट में यहाँ पर एक सपोर्ट है, ये एक रेजिस्टेंस है। सपोर्ट ऑलरेडी 2 बार टेस्ट हो चुका है, तीसरी बार आया था, लोअर हाई बनाया, तो अगर ब्रेक हो जाए तो बेटर ही है। ऊपर रेजिस्टेंस है, पहली बार आएगा 30 मिनट में, तो मैं एक्सपेक्ट कर रहा हूँ कि नीचे सपोर्ट ब्रेक हो जाए। तो दोनों में से कोई ना एक साइड ब्रेक जरूर होगा। ओवरऑल देखोगे तो ये रेंज है लगभग 180 पॉइंट की। ओपन इक्वल टू लो पे एंट्री मत करना कहीं पर भी, एंड ओपन इक्वल टू हाई पे बाय मत करना कहीं पर भी। कितना मूव किया है? लगभग 80 पॉइंट। बाकी इस टारगेट को भी डिवाइड करके रख सकते हो वैसे तो। 160 पॉइंट का है तो 80 पॉइंट में। बाकी और कोई न्यूज़ है नहीं आज, जितना डेटा आना था वो ऑलरेडी आ चुका है।
Progress never stops, neither should you. At P.
Iran's got a lot of trouble, and they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to the people, why didn't you negotiate with me 2 weeks ago? You could have done fine. You would have had a country.
President Trump there reflecting on his intentions, keeping everybody guessing really around his intentions when it comes to Iran. So let's start our conversation there, Chrissy, this morning. On today's agenda, what will the US role in this war between Israel and Iran be? And it seems as if we could be possibly heading towards another weekend of drama on that front, possibly with some escalation. Now, we do have our reporting suggesting that US officials are then preparing for a strike on Iran, but this is all subject to whether President Trump wants to go ahead with that. We heard him yesterday talking there about his views, saying it's very late to be talking with Iran, but saying the final decision has really not been made yet. He'll make that in the seconds before it is due.
The seconds before it's due, which on the one hand talks about how Donald Trump is thinking about this. On the other hand, talks about the severity of the situation and how large this is. If there was a strike on Iran, though, it's very clear that energy infrastructure would not be targeted. That's something that has been expected by the press because of the ramifications in the oil market as well. In previous iterations, though, he's also talked about not signaling some sort of regime change at all, or even targeting one on the idea that there is really no alternative as well. So ultimately, this comes down to one nuclear bunker that is underground and really putting the full firepower behind that as well. But even that is up for grabs. We're going to digest that throughout the show.
Right, and it does really come down to perhaps the framing of any US involvement here and whether it will be very limited and very specifically targeted at that very low-level bunker, and whether there can be an argument around very specific action there, or whether this is something much wider and is interpreted as such by the market and is interpreted as such by the region and by Iran, and that'll be crucial. You mentioned how energy would respond to that. Of course, we'd all be watching to see the Iranian reaction, whether there be any closure or even just disruption in the Strait of Hormuz. That'll be crucial. But maybe this is a non-starter, because we know domestically in the United States, the MAGA movement was not founded on going abroad and getting involved in war. In fact, the absolute opposite. And so he is getting some pushback in parts of that MAGA movement.
Absolutely, within his own party. We should also mention, however, I think feels like Iran can sometimes be the exception to that rule, given that he did actively campaign on the assassination of General Soleimani. You mentioned, though, however, how the region is going to be interpreting this as well. We should keep an eye, mention as well, that not only is the region, but also how European leaders are thinking about this as well. If negotiations with Iran are potentially back on the table as one possible scenario, what framework does that look like in terms of previous nuclear agreements, which European leaders were very much a part of?
Yeah, seems like it's not the conversation for today, is it? You know, a replacement for JCPOA, but would it be a replacement for JCPOA? Let's move on to something else that's close to the market's thinking right now, Kriti, and that is the Fed, of course. I mean, so much for being data dependent, it would seem, because the Fed yesterday, the message there was about inflation is coming. This was quite a forward-looking, I thought, press conference, at least, from the Fed chair.
It's a fascinating one as well, because he's kind of saying, look, we don't know, which, surprise, surprise, nobody knows what the future holds. But he is saying, look, the economy is still resilient despite some unexpected jobless claims tick up as well. He is also warning about the tariff impact. And I think this is the very first time you've heard him very clearly say that there is some sort of inevitability when it comes to actually seeing that. We haven't seen it show up in the data yet. We've only seen it show up in things like import prices.
Yeah.
But he's saying that that is coming.
Yes, he is saying that is coming. And there was a really interesting conversation, wasn't there, about the reasons that it has not come yet. And he added thoughts into the mix around product imported before the tariffs and maybe being sold, therefore, at prices that don't fully reflect the tariffs. But that conversation obviously still to come. And the message very much from the Fed, wait and see. We'll learn a lot more about this during the summer. I thought it was interesting. Mike McKee asked a question about his role, about the Fed chair, about who sits in that chair. And he was quite keen, it would seem, to not get drawn into the conversation around what he thinks about President Trump's commentary on the Fed leadership, because President Trump has been very vocal on this front. But Powell was saying, look, this is not complicated. We stick to our goals, and I'm not thinking about the end of my term whatsoever.
I thought it was fascinating as well that in the lead up to this FOMC decision, Neil Kashkari, for example, over the Minneapolis Fed, said, look, this is something that's very hard to predict. It's very hard to see what the future actually holds. And this is something that is going to be talked about, I imagine, with the BOE as well later today.
Yeah, absolutely. So let's talk about where we go on the Bank of England conversation, shall we? Because here we have a central bank very much. I mean, yesterday I got notes post the Fed talking about, OK, well, maybe stagflation is where we go. Well, here we are with the Bank of England. And you can make arguments that the economy is slowing, and you can make arguments that price pressures are maybe not building, but aren't abating necessarily as fast as the market wants them to. So we've had jobs data, of course, 250,000 fewer jobs in the economy versus October of 2024. That's the weakening economy side of things here. CPI then yesterday at 3.4%. That was higher than had been estimated, broadly stable. Interestingly, Bloomberg Economics saying that it's not that sticky inflation. Actually, they don't see that as something that's going to stop the Bank of England from cutting rates. They see that there is that downward pressure on services inflation, and that services disinflation is intact, and so they see that as being quite crucial.
I thought it was fascinating that Dan Hansen, our chief UK economist as well, had made the point that keep one eye on oil in terms of the read-through into the UK as well. He said that the sensitivity that the BOE has traditionally pointed to is when oil prices hit an $85 a barrel mark. We're not there, but we're not far from that level as well. I'm curious if that's something that's addressed, that possibility.
Yeah, exactly. Anything they have to say on what the events in the Middle East mean for inflation and to read across into potentially higher rates in the UK will be watched. Divisions amongst the voters, that's also very key. And we saw at the Fed yesterday how there was such a range of views around the rest of 2025. And what will the range of views around policy look like at the Bank of England? They were really divided in May, ranging from hold to 50 basis point cuts. Will we get some dissenters today calling for a cut? Because the overall expectation, of course, in case we forgot to say, is that we don't get any change in policy.
Yeah, absolutely. And again, this is also, and I'm curious as we kind of evaluate and preview this decision as well, where the currency impact falls in all of this. Because if you are looking for some sort of stimulative impulse, how much of the financial markets are doing that heavy lifting for the BOE?
Let's tell you what is coming up on the programme today. We have great voices assembled to talk about all of these themes. Kim Crawford joins us, JP Morgan Asset Management Portfolio Manager, a great voice to weigh in on some of the central bank decisions we've had. We are still looking ahead to the SNB and the Bank of England, but we've heard from the BOJ, we've heard from the Fed, lots to discuss. Anna Rosenberg, Amundi Investment Institute, joins us, head of geopolitics. What are America's intentions? How can America's intentions be described? What narrative attached to them if we do see action over the weekend in Iran? And Nanette Heshlefe-Derb will be joining us, Lombard Odier's EMEA CIO. Great day to hear from Nanette, so we'll look forward to that conversation. And thinking about the BOE, we'll also talk to Matthew Swannell, EY Item Club Chief Economic Advisor, weighing in on all things Bank of England.
Absolutely. Plenty conversations ahead. Really interesting ones. We have an all-star lineup to really digest through what else we've got on the agenda. Let me walk you through it. After the show ends at 9 a.m. UK time, we do have a Norges Bank rate decision. Remember, we got the Riksbank yesterday as well. A cut there. We're expecting a cut from the SNB, as Anna had mentioned earlier as well. So we are expecting that throughout the show. And then, of course, it is all about the BOE rate decision. So it is Central Bank Palooza today. And I imagine the read-through as well. We should remind our global audience that the U.S. markets are closed. So the bond market is not trading today. And futures are seeing very light volume and very light liquidity. So keep one eye on that as well. Plus, geopolitics very much in focus. We've been talking about the Middle East, but EU finance ministers will also be meeting, I imagine, discussing the same topics we are.
Yeah, absolutely. Inflationary impact coming from the Middle East, perhaps on their radar as well. Let's briefly mention the SNB then. We are expecting to get a rate decision, and there is an expectation that we get a cut. We haven't had actual action and change in policy from many of the big central banks globally this week, but the SNB could be one of those. 3 out of those economists polled do expect the central bank to cut below zero today. That would require a 50 basis point or more, or at least more than 25 basis points to take us below zero. That's not the consensus. The consensus says we go to zero. But given the strength of the currency, given the weakness in inflation, maybe these things are possible.
It's fascinating, though, that in this era where we're talking about inflation, where we're talking about a risk to global economies, even the idea of negative interest rates for a major economy is crucial, especially one that is the beacon of one of the major risk-off currencies. And that is the outlier possibility of this entire thing, is that what if they don't cut at all? Because the SNB has been very quick to cut in the past, and that going to zero would leave very little room to maneuver should something like a recession or a trade war escalate as well. That is something that the currency markets aren't necessarily prepared for.
Let us tell you about some of the other stories that we are keeping track of this morning. Bloomberg has learned that Japan is considering trimming its issuance of super long bonds starting from July. According to a draft plan, the finance ministry is set to propose cutting issuance of 20, 30 and 40-year bonds. In total, they could be reduced by almost $700 million each per auction up to the end of next March. Bloomberg's been told Guggenheim Partners CEO Mark Walter is buying the Los Angeles Lakers at a record valuation of $10 billion. Sources say the Buss family has agreed to sell its majority stake in the NBA franchise to Walter, who already owns the Los Angeles Dodgers baseball team. The price tag crushes the $6.1 billion record paid for a professional sports team set in March by the NBA's Boston Celtics. Microsoft is planning to cut thousands of jobs in the latest move to trim its workforce amid heavy spending on AI. The terminations, which affect mostly sales roles, follow a round of layoffs earlier in May that hit 6,000 people and fell hardest on product and engineering jobs. And this does stem from the relationship between this business and AI. Its efforts on AI, it seems, to the fore, dictating those areas they want to invest in and those areas they may be less keen to invest in.
It's fascinating that they're going through the cycle again. We see this with all the hyperscalers. They invest so much money on the front end when it comes to data centers, when it comes to hiring in bulk, and then kind of pulling back on this. And we've seen this, how they've done this with infrastructure in the AI space. But now they're also talking about, at least according to the FT, about their future role in OpenAI. They've had a 49% stake historically. What does that future look like? We know that OpenAI has relied on Microsoft for a lot of their funding to push ahead that AI agenda. The FT reporting that Microsoft prepared to walk away.
We'll continue to watch that, of course. Chrissy, maybe we talk through some of the things that are coming up in the show.
Absolutely. We have one eye on the oil markets. We also have one eye on commentary coming out of the big oil majors. Shell CEO warning that they are cautious around transit through the Persian Gulf. We're going to bring you his comments throughout the duration of the show. Plus, as I said, central bank palooza. At the top of it, the Swiss National Bank saying measures aimed at strengthening the resilience of UBS are, quote, the best solution. We'll look ahead to today's highly watched rate decision. And up next, right back to the focus on the United States. Jay Powell held rates, but Donald Trump is not happy about it. What about the markets? We're going to dive into those details next. Stick with us. If you have any questions of your own for our guests or for us, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Progress never stops. Neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Welcome back. This is Bloomberg's opening trade. Now, Federal Reserve policymakers voted unanimously to hold interest rates steady for the fourth consecutive meeting. Fed Chair Jerome Powell says there are lots of unknowns about the outlook for the economy, including the impact of U.S. tariffs.
Despite elevated uncertainty, the economy is in a solid position. We expect a meaningful amount of inflation to arrive in coming months. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. The amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are. The current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments.
Jerome Powell there, and a lot of focus on how tariffs get passed through into the economy and who picks up the tab for those. Now, President Trump was quick to criticize the decision and continued to attack Jerome Powell.
Because of this guy's rates, you know, if he'd lowered a point, I'd pay about a point less. Then if he'd lowered 2 points, I'd pay about 2 points less. And that's for 10 years, 12 years, 15 years, 5 years. It's hundreds of billions, it's even trillions of dollars that we're going to lose because of this too late. I call him Too Late Powell because he's always too late.
President Trump's views on the Fed president. Well, let's get to Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management, with us on set this morning. Kim, very nice to have you with us. Let me ask you about the Fed then, and the commentary. Of course, it's become politicized, President Trump weighing in with his thoughts on where we go. But if we put his views to one side and just look at where rates are in relation to the underlying economy, your view as to whether they are appropriate and what we see next from the Fed.
Yeah, I think they're definitely appropriate. What we heard yesterday was really mission accomplished on a no-news message, and I think that makes sense given just how high uncertainty is. It didn't make sense for the Fed to swing the bat one way or the other. I think what they're doing is they have the ability or the luxury to stay where they are and then just be more reactive rather than proactive. You know, we're getting pretty good news or pretty soft news on inflation, but we also know that that tariff pass-through is going to come, at least in some parts, in goods inflation in the coming months. And at the same time, that means that the Fed's going to need materially weaker activity data in order to cut rates. Yes. And that's looking fine at the moment. You know, the labor market is loosening, but very gradually.
What about if President Trump decides to nominate somebody new to the Fed early? I mean, how would the market deal with that? How would you be thinking about that? Would that undercut the messages that Chair Powell is getting out into the market about having to wait to see the full impact of higher prices on consumers as a result of tariffs?
Yeah, so Powell's reign as chair ends May next year. We could find out earlier than that who his replacement's going to be. I think the market will expect a dovish kind of shift in regime, given what Trump is talking about. I would caution, though, that the Fed is still a committee at the end of the day. It's made of 7 governors and then also 5 Reserve Bank presidents that rotates on an annual basis. So that's going to temper the dovish shift to some extent. Also, if you're a Fed and you're trying to be too dovish in the light of still sticky high inflation, that's going to make you lose credibility. And that's going to actually probably send 10-year yields higher rather than lower, which is not what they're trying to achieve either.
The markets are pricing in 2 rate cuts, though. What would those rate cuts come from?
Yeah, so I think our base case is that, they probably do get ground out over time. I think if they come, it's because the tariff pass-through of inflation is just lower than we think, or the labour market picks up pace and it's weakening. It's still really weakening very gradually. So you've got a 3-month run rate of payroll still around 135,000. I think that's going to have to go a lot closer to 0 or negative for the Fed to really pick up pace.
You mentioned the payrolls data. The jobless claims data was significantly stronger than everyone expected. How should we be interpreting labor data or jobless claims data, even ADP data, in the context of inflation risks, geopolitical tensions, et cetera?
Yeah, I think the bar, because inflation is high, then what you're looking for in the labor market has to be weaker than what you would usually do in order for the Fed to react to it. You mentioned jobless claims. Continuing claims is something that we're looking at closely because that's really been on the rise. But we are looking at the whole mosaic of data. So things like JOLTS, things like Indeed job openings, alongside payrolls and claims. There are some seasonally adjustment issues in claims data at the moment. So I think we just have to be a bit more cognizant of the bigger picture as well.
Yeah, I thought it was interesting that Powell was asked yesterday about the immigration policy and what that's doing. And he was clear to point out that, yes, there would be some reduced supply of labour to the economy, but he also saw slight reductions in demand. So he didn't seem too concerned overall about the impact there. Can I go to Japan then, Kim, and ask you about your stance there? Because Japanese bonds, we've seen an update essentially coming through from the Ministry of Finance talking about the amount of issuance they're going to do at the long end. And there's been a lot of nervousness about the long end of the Japanese curve, and that to some degree spilled into other global bond markets, didn't it? And just a real nice illustration of people's fiscal concerns, I suppose, and especially around the long end. How significant are these announcements today?
Yeah, so the Japan curve has really out-steepened and aggressively steepened global markets in the last 2 months. I think it presents actually quite an attractive opportunity here. So yeah, like you said, today we heard from the Ministry of Finance that maybe tomorrow we'll get a bit more details on their discussions with primary dealers. We see it more of a demand-supply imbalance amidst high volatility. If you look at domestic buyers of long-end JGBs, they've pretty much disappeared in the last few months. So they're waiting for some calm in the markets as well, and for the Ministry of Finance to come in and reduce that long-end issuance. I think what we're hearing today, this morning, about a 10% cut, if it's true, I don't think that's going to be enough to calm the curve. But next week, the Ministry of Finance is going to meet with other investors as well. And I think it's still an ongoing discussion back and forth before July when we actually get the final announcement.
Essentially, that it might not be enough because, Gritty, we had a Japanese bond auction just this morning, in fact, but it was at 5 years. It's a 5-year horizon, so not the area that everybody's worried about, but that seemed to show pretty solid demand there.
Yeah, absolutely. But it brings about this question of issuance as well, and connecting the BOJ with the Federal Reserve, if you'll let me. In terms of this issuance story, because there's also speculation that Scott Bessent is looking to also move some of the issuance to the front end of the curve. The BOJ has historically been a little bit of a case study in central banking for the rest of the world. Does that work? Does moving issuance on various ends of the curve work?
I think it can help reduce volatility. It may not necessarily bring your level of yields down. I think the UK is a good example as well. We had the DMO a few months ago really significantly reduced that long-end issuance, and I think they understand that demand-supply imbalance as well as the pension industry has evolved over time. And you've seen since then that the UK curve, which has historically been really high beta and steepening, just reduce that beta. So I think it can reduce volatility, and then it's down to the fundamental data on just how far it can actually bring down the level of yields.
Kim, I think you like gilts. Is that correct?
Yes.
That's still correct. You're checking that's still the right information. And so where are you focused? We talked at the top of the programme about the deteriorating labour market environment, but and the deteriorating economic environment into the second quarter. But then you also have this sort of persistent inflation.
Yes. So UK inflation is still higher, especially in services compared to a lot of the world. But I think what you're starting to see, which we're getting a bit more excited about, but not really going all the way in either, is just that pickup in pace of weakening in the labour market. And if you do get that, I think it can pull down inflation pretty quickly. The ONS has told us that the last figure that we got, which really pulled employment figures down pretty sharply, was taken earlier in the month than it usually is. So we do expect some revisions to that. But it's that labour market story that we're really looking at to pull services and wage growth down. And the big question for me is when the Bank of England can start to pick up pace from that quarterly rate cutting pace. And that's going to be down to how quickly the labour market continues to loosen, how quickly that feeds through to wage growth numbers, so how quickly that can come back to more 3% or a little bit higher, consistent levels, and then also how inflation expectations remain anchored in light of oil prices.
Kim, 30 seconds. Does the gilt market need to be pricing in an oil shock at this stage?
Not at this stage. I think it's incredibly difficult to say how the conflict ends. We know that if the Saudi oil infrastructures get hit or the state of or the channel of Hormuz gets closed, then you're going to see oil prices skyrocket materially higher. Where oil prices are today and natural gas prices, it's going to probably push the Bank of England's headline inflation forecast up by about 0.2, 0.3 percentage points. And it's something at that point the Bank of England will still be able to look through.
All right. Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management, quite literally taking a tour around the world with us. We thank you so much. Coming up, we're going to continue that conversation on oil and the broader implications as U.S. officials prepare for a possible strike on Iran in the coming days. We're going to talk about what that means for the widening conflict in the Middle East, as well as the ripple effects into these markets. Stick with us. Don't go anywhere. That conversation next. This is Bloomberg.
Good morning from London. I'm Anna Edwards alongside Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Bloomberg sources say senior U.S. officials are preparing for a possible strike on Iran in the coming days. President Trump says he's keeping his options open. The Fed leaves interest rates unchanged but warns some of the impact of tariffs will fall on the U.S. consumer. And today, the Bank of England is expected to hold interest rates, while the SEBI could cut them to zero. We'll bring you the Swiss decision later in the show.
And I'll pick up on that theme because, of course, this is my personal obsession this morning, keeping an eye on that risk haven, especially when it's under kind of consideration against the other risk haven, which, of course, is dollar Swissy. We are seeing strength in favor of the dollar this morning, weakness on that expectation that the S&P is likely to cut. Brent crude as well, one eye on the Middle East, trading higher this morning. Marginally, trading at a 76 handle. But you can see there is nervousness in this market, despite the fact that the U.S. is closed today. We don't have a read on the bond market either. Eurostoxx 50 futures down a whopping 0.7%. The countdown to the opening trade starts right now.
Iran's got a lot of trouble. And they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to the people, why didn't you negotiate with me 2 weeks ago? You could have done fine. You would have had a country.
President Trump there reflecting on his intentions, keeping everybody guessing really around his intentions when it comes to Iran. So let's start our conversation there, Kriti, this morning. On today's agenda, what will the U.S. role in this war between Israel and Iran be? And it seems as if we could be possibly heading towards another weekend of drama on that front, possibly with some escalation. Now, we do have our reporting suggesting that U.S. officials are then preparing for a strike on Iran, but this is all subject to whether President Trump wants to go ahead with that. We heard him yesterday talking there about his views, saying it's very late to be talking with Iran, but saying the final decision has really not been made yet. He'll make that in the seconds before it is due.
The seconds before it's due, which on the one hand talks about how Donald Trump is thinking about this. On the other hand, talks about the severity of the situation and how large this is. If there was a strike on Iran, though, it's very clear that energy infrastructure would not be targeted. That's something that has been expected by the press because of the ramifications in the oil market as well. In previous iterations, though, he's also talked about not signaling some sort of regime change at all, or even targeting one on the idea that there is really no alternative as well. So ultimately, this comes down to one nuclear bunker that is underground and really putting the full firepower behind that as well. But even that is up for grabs. We're going to digest that throughout the show.
Right, and it does really come down to perhaps the framing of any US involvement here and whether it will be very limited and very specifically targeted at that very low-level bunker, and whether there can be an argument around very specific action there, or whether this is something much wider and is interpreted as such by the market and is interpreted as such by the region and by Iran, and that'll be crucial. You mentioned how energy would respond to that. Of course, we'd all be watching to see the Iranian reaction, whether there be any closure or even just disruption in the Strait of Hormuz. That'll be crucial. But maybe this is a non-starter, because we know domestically in the United States, the MAGA movement was not founded on going abroad and getting involved in war. In fact, the absolute opposite. And so he is getting some pushback in parts of that MAGA movement.
Absolutely, within his own party. We should also mention, however, I think feels like Iran can sometimes be the exception to that rule, given that he did actively campaign on the assassination of General Soleimani. You mentioned, though, however, how the region is going to be interpreting this as well. We should keep an eye, mention as well, that not only is the region, but also how European leaders are thinking about this as well. If negotiations with Iran are potentially back on the table as one possible scenario, what framework does that look like in terms of previous nuclear agreements, which European leaders were very much a part of?
Yeah, it seems like it's not the conversation for today, is it? You know, a replacement for JCPOA, but would it be a replacement for JCPOA? Let's move on to something else that's close to the market's thinking right now, Kriti, and that is the Fed, of course. I mean, so much for being data dependent, it would seem, because the Fed yesterday, the message there was about inflation is coming. This was quite a forward-looking, I thought, press conference, at least, from the Fed chair.
It's a fascinating one as well, because he's kind of saying, look, we don't know, which, surprise, surprise, nobody knows what the future holds. But he is saying, look, the economy is still resilient despite some unexpected jobless claims tick up as well. He is also warning about the tariff impact. And I think this is the very first time you've heard him very clearly say that there is some sort of inevitability when it comes to actually seeing that. We haven't seen it show up in the data yet. We've only seen it show up in things like import prices.
Yeah.
But he's saying that that is coming.
Yes, he is saying that is coming. And there was a really interesting conversation, wasn't there, about the reasons that it has not come yet. And he added thoughts into the mix around product imported before the tariffs and maybe being sold, therefore, at prices that don't fully reflect the tariffs. But that conversation obviously still to come. And the message very much from the Fed, wait and see. We'll learn a lot more about this during the summer. I thought it was interesting. Mike McKee asked a question about his role, about the Fed chair, about who sits in that chair. And he was quite keen, it would seem, to not get drawn into the conversation around what he thinks about President Trump's commentary on the Fed leadership, because President Trump has been very vocal on this front. But Powell was saying, look, this is not complicated. We stick to our goals, and I'm not thinking about the end of my term whatsoever.
I thought it was fascinating as well that in the lead up to this FOMC decision, Neil Kashkari, for example, over the Minneapolis Fed, said, look, this is something that's very hard to predict. It's very hard to see what the future actually holds. And this is something that is going to be talked about, I imagine, with the BOE as well later today.
Yeah, absolutely. So let's talk about where we go on the Bank of England conversation, shall we? Because here we have a central bank very much. I mean, yesterday I got notes post the Fed talking about, OK, well, maybe stagflation is where we go. Well, here we are with the Bank of England. And you can make arguments that the economy is slowing, and you can make arguments that price pressures are maybe not building, but aren't abating necessarily as fast as the market wants them to. So we've had jobs data, of course, 250,000 fewer jobs in the economy versus October of 2024. That's the weakening economy side of things here. CPI then yesterday at 3.4%. That was higher than had been estimated, broadly stable. Interestingly, Bloomberg Economics saying that it's not that sticky inflation. Actually, they don't see that as something that's going to stop the Bank of England from cutting rates. They see that there is that downward pressure on services inflation, and that services disinflation is intact, and so they see that as being quite crucial.
I thought it was fascinating that Dan Hansen, our chief UK economist as well, had made the point that keep one eye on oil in terms of the read-through into the UK as well. He said that the sensitivity that the BOE has traditionally pointed to is when oil prices hit an $85 a barrel mark. We're not there, but we're not far from that level as well. I'm curious if that's something that's addressed, that possibility.
Yeah, exactly. Anything they have to say on what the events in the Middle East mean for inflation and to read across into potentially higher rates in the UK will be watched. Divisions amongst the voters, that's also very key. And we saw at the Fed yesterday how there was such a range of views around the rest of 2025. And what will the range of views around policy look like at the Bank of England? They were really divided in May, ranging from hold to 50 basis point cuts. Will we get some dissenters today calling for a cut? Because the overall expectation, of course, in case we forgot to say, is that we don't get any change in policy.
Yeah, absolutely. And again, this is also, and I'm curious as we kind of evaluate and preview this decision as well, where the currency impact falls in all of this. Because if you are looking for some sort of stimulative impulse, how much of the financial markets are doing that heavy lifting for the BOE?
Let's tell you what is coming up on the programme today. We have great voices assembled to talk about all of these themes. Kim Crawford joins us, JP Morgan Asset Management Portfolio Manager, a great voice to weigh in on some of the central bank decisions we've had. We are still looking ahead to the SNB and the Bank of England, but we've heard from the BOJ, we've heard from the Fed, lots to discuss. Anna Rosenberg, Amundi Investment Institute, joins us, head of geopolitics. What are America's intentions? How can America's intentions be described? What narrative attached to them if we do see action over the weekend in Iran? And Nanette Heshlefe-Derb will be joining us, Lombard Odier's EMEA CIO. Great day to hear from Nanette, so we'll look forward to that conversation. And thinking about the BOE, we'll also talk to Matthew Swannell, EY Item Club Chief Economic Advisor, weighing in on all things Bank of England.
Absolutely. Plenty conversations ahead. Really interesting ones. We have an all-star lineup to really digest through what else we've got on the agenda. Let me walk you through it. After the show ends at 9 a.m. UK time, we do have a Norges Bank rate decision. Remember, we got the Riksbank yesterday as well. A cut there. We're expecting a cut from the SNB, as Anna had mentioned earlier as well. So we are expecting that throughout the show. And then, of course, it is all about the BOE rate decision. So it is Central Bank Palooza today. And I imagine the read-through as well. We should remind our global audience that the U.S. markets are closed. So the bond market is not trading today. And futures are seeing very light volume and very light liquidity. So keep one eye on that as well. Plus, geopolitics very much in focus. We've been talking about the Middle East, but EU finance ministers will also be meeting, I imagine, discussing the same topics we are.
Yeah, absolutely. Inflationary impact coming from the Middle East, perhaps on their radar as well. Let's briefly mention the SNB then. We are expecting to get a rate decision, and there is an expectation that we get a cut. We haven't had actual action and change in policy from many of the big central banks globally this week, but the SNB could be one of those. 3 out of those economists polled do expect the central bank to cut below zero today. That would require a 50 basis point or more, or at least more than 25 basis points to take us below zero. That's not the consensus. The consensus says we go to zero. But given the strength of the currency, given the weakness in inflation, maybe these things are possible.
It's fascinating, though, that in this era where we're talking about inflation, where we're talking about a risk to global economies, even the idea of negative interest rates for a major economy is crucial, especially one that is the beacon of one of the major risk-off currencies. And that is the outlier possibility of this entire thing, is that what if they don't cut at all? Because the SNB has been very quick to cut in the past, and that going to zero would leave very little room to maneuver should something like a recession or a trade war escalate as well. That is something that the currency markets aren't necessarily prepared for.
Let us tell you about some of the other stories that we are keeping track of this morning. Bloomberg has learned that Japan is considering trimming its issuance of super long bonds starting from July. According to a draft plan, the finance ministry is set to propose cutting issuance of 20, 30 and 40-year bonds. In total, they could be reduced by almost $700 million each per auction up to the end of next March. Bloomberg's been told Guggenheim Partners CEO Mark Walter is buying the Los Angeles Lakers at a record valuation of $10 billion. Sources say the Buss family has agreed to sell its majority stake in the NBA franchise to Walter, who already owns the Los Angeles Dodgers baseball team. The price tag crushes the $6.1 billion record paid for a professional sports team set in March by the NBA's Boston Celtics. Microsoft is planning to cut thousands of jobs in the latest move to trim its workforce amid heavy spending on AI. The terminations, which affect mostly sales roles, follow a round of layoffs earlier in May that hit 6,000 people and fell hardest on product and engineering jobs. And this does stem from the relationship between this business and AI. Its efforts on AI, it seems, to the fore, dictating those areas they want to invest in and those areas they may be less keen to invest in.
It's fascinating that they're going through the cycle again. We see this with all the hyperscalers. They invest so much money on the front end when it comes to data centers, when it comes to hiring in bulk, and then kind of pulling back on this. And we've seen this, how they've done this with infrastructure in the AI space. But now they're also talking about, at least according to the FT, about their future role in OpenAI. They've had a 49% stake historically. What does that future look like? We know that OpenAI has relied on Microsoft for a lot of their funding to push ahead that AI agenda. The FT reporting that Microsoft prepared to walk away.
We'll continue to watch that, of course. Chrissy, maybe we talk through some of the things that are coming up in the show.
Absolutely. We have one eye on the oil markets. We also have one eye on commentary coming out of the big oil majors. Shell CEO warning that they are cautious around transit through the Persian Gulf. We're going to bring you his comments throughout the duration of the show. Plus, as I said, central bank palooza. At the top of it, the Swiss National Bank saying measures aimed at strengthening the resilience of UBS are, quote, the best solution. We'll look ahead to today's highly watched rate decision. And up next, right back to the focus on the United States. Jay Powell held rates, but Donald Trump is not happy about it. What about the markets? We're going to dive into those details next. Stick with us. If you have any questions of your own for our guests or for us, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Welcome back. This is Bloomberg's opening trade. Now, Federal Reserve policymakers voted unanimously to hold interest rates steady for the fourth consecutive meeting. Fed Chair Jerome Powell says there are lots of unknowns about the outlook for the economy, including the impact of U.S. tariffs.
Despite elevated uncertainty, the economy is in a solid position. We expect a meaningful amount of inflation to arrive in coming months. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. The amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are. The current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments.
Jerome Powell there, and a lot of focus on how tariffs get passed through into the economy and who picks up the tab for those. Now, President Trump was quick to criticize the decision and continued to attack Jerome Powell.
Because of this guy's rates, you know, if he'd lowered a point, I'd pay about a point less. Then if he'd lowered 2 points, I'd pay about 2 points less. And that's for 10 years, 12 years, 15 years, 5 years. It's hundreds of billions, it's even trillions of dollars that we're going to lose because of this too late. I call him Too Late Powell because he's always too late.
President Trump's views on the Fed president. Well, let's get to Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management, with us on set this morning. Kim, very nice to have you with us. Let me ask you about the Fed then, and the commentary. Of course, it's become politicized, President Trump weighing in with his thoughts on where we go. But if we put his views to one side and just look at where rates are in relation to the underlying economy, your view as to whether they are appropriate and what we see next from the Fed.
Yeah, I think they're definitely appropriate. What we heard yesterday was really mission accomplished on a no-news message, and I think that makes sense given just how high uncertainty is. It didn't make sense for the Fed to swing the bat one way or the other. I think what they're doing is they have the ability or the luxury to stay where they are and then just be more reactive rather than proactive. You know, we're getting pretty good news or pretty soft news on inflation, but we also know that that tariff pass-through is going to come, at least in some parts, in goods inflation in the coming months. And at the same time, that means that the Fed's going to need materially weaker activity data in order to cut rates. Yes. And that's looking fine at the moment. You know, the labor market is loosening, but very gradually.
What about if President Trump decides to nominate somebody new to the Fed early? I mean, how would the market deal with that? How would you be thinking about that? Would that undercut the messages that Chair Powell is getting out into the market about having to wait to see the full impact of higher prices on consumers as a result of tariffs?
Yeah, so Powell's reign as chair ends May next year. We could find out earlier than that who his replacement's going to be. I think the market will expect a dovish kind of shift in regime, given what Trump is talking about. I would caution, though, that the Fed is still a committee at the end of the day. It's made of 7 governors and then also 5 Reserve Bank presidents that rotates on an annual basis. So that's going to temper the dovish shift to some extent. Also, you know, if you're a Fed and you're trying to be too dovish in the light of still sticky high inflation, that's going to make you lose credibility. And that's going to actually probably send 10-year yields higher rather than lower, which is not what they're trying to achieve either.
The markets are pricing in 2 rate cuts, though. What would those rate cuts come from?
Yeah, so I think our base case is that, they probably do get ground out over time. I think if they come, it's because the tariff pass-through of inflation is just lower than we think, or the labour market picks up pace and it's weakening. It's still really weakening very gradually. So you've got a 3-month run rate of payroll still around 135,000. I think that's going to have to go a lot closer to zero or negative for the Fed to really pick up pace.
You mentioned the payrolls data. The jobless claims data was significantly stronger than everyone expected. How should we be interpreting labor data or jobless claims data, even ADP data, in the context of inflation risks, geopolitical tensions, et cetera?
Yeah, I think the bar, because inflation is high, then what you're looking for in the labor market has to be weaker than what you would usually do in order for the Fed to react to it. You mentioned jobless claims. Continuing claims is something that we're looking at closely because that's really been on the rise. But we are looking at the whole mosaic of data. So things like JOLTS, things like Indeed job openings, alongside payrolls and claims. There are some seasonally adjustment issues in claims data at the moment. So I think we just have to be a bit more cognizant of the bigger picture as well.
Yeah, I thought it was interesting that Powell was asked yesterday about the immigration policy and what that's doing. And he was clear to point out that, yes, there would be some reduced supply of labour to the economy, but he also saw slight reductions in demand. So he didn't seem too concerned overall about the impact there. Can I go to Japan then, Kim, and ask you about your stance there? Because Japanese bonds, we've seen an update essentially coming through from the Ministry of Finance talking about the amount of issuance they're going to do at the long end. And there's been a lot of nervousness about the long end of the Japanese curve, and that to some degree spilled into other global bond markets, didn't it? And just a real nice illustration of people's fiscal concerns, I suppose, and especially around the long end. How significant are these announcements today?
Yeah, so the Japan curve has really out-steepened and aggressively steepened global markets in the last 2 months. I think it presents actually quite an attractive opportunity here. So yeah, like you said, today we heard from the Ministry of Finance that maybe tomorrow we'll get a bit more details on their discussions with primary dealers. We see it more of a demand-supply imbalance amidst high volatility. If you look at domestic buyers of long-end JGBs, they've pretty much disappeared in the last few months. So they're waiting for some calm in the markets as well, and for the Ministry of Finance to come in and reduce that long-end issuance. I think what we're hearing today, this morning, about a 10% cut. If it's true, I don't think that's going to be enough to calm the curve. But next week, the Ministry of Finance is going to meet with other investors as well. And I think it's still an ongoing discussion back and forth before July when we actually get the final announcement.
Essentially, that it might not be enough because, quickly, we had a Japanese bond auction just this morning, in fact, but it was at 5 years. It's a 5-year horizon, so not the area that everybody's worried about, but that seemed to show pretty solid demand there.
Yeah, absolutely. But it brings about this question of issuance as well, and connecting the BOJ with the Federal Reserve, if you'll let me. In terms of this issuance story, because there's also speculation that Scott Bessent is looking to also move some of the issuance to the front end of the curve. The BOJ has historically been a little bit of a case study in central banking for the rest of the world. Does that work? Does moving issuance on various ends of the curve work?
I think it can help reduce volatility. It may not necessarily bring your level of yields down. I think the UK is a good example as well. We had the DMO a few months ago really significantly reduced that long-end issuance, and I think they understand that demand-supply imbalance as well as the pension industry has evolved over time. And you've seen since then that the UK curve, which has historically been really high beta and steepening, just reduce that beta. So I think it can reduce volatility, and then it's down to the fundamental data on just how far it can actually bring down the level of yields.
Kim, I think you like gilts. Is that correct?
Yes.
That's still correct. You're checking that's still the right information. And so where are you focused? We talked at the top of the programme about the deteriorating labour market environment, and the deteriorating economic environment into the second quarter. But then you also have this sort of persistent inflation.
Yes. So UK inflation is still higher, especially in services compared to a lot of the world. But I think what you're starting to see, which we're getting a bit more excited about, but not really going all the way in either, is just that pickup in pace of weakening in the labour market. And if you do get that, I think it can pull down inflation pretty quickly. The ONS has told us that the last figure that we got, which really pulled employment figures down pretty sharply, was taken earlier in the month than it usually is. So we do expect some revisions to that. But it's that labour market story that we're really looking at to pull services and wage growth down. And the big question for me is when the Bank of England can start to pick up pace from that quarterly rate cutting pace. And that's going to be down to how quickly the labour market continues to loosen, how quickly that feeds through to wage growth numbers, so how quickly that can come back to more 3% or a little bit higher, consistent levels, and then also how inflation expectations remain anchored in light of oil prices.
Kim, 30 seconds. Does the gilt market need to be pricing in an oil shock at this stage?
Not at this stage. I think it's incredibly difficult to say how the conflict ends. We know that if the Saudi oil infrastructures get hit or the state of or the Channel of Hormuz gets closed, then you're going to see oil prices skyrocket materially higher. Where oil prices are today and natural gas prices, it's going to probably push the Bank of England's headline inflation forecast up by about 0.2, 0.3 percentage points. And it's something at that point the Bank of England will still be able to look through.
All right. Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management, quite literally taking a tour around the world with us. We thank you so much. Coming up, we're going to continue that conversation on oil and the broader implications as U.S. officials prepare for a possible strike on Iran in the coming days. We're going to talk about what that means for the widening conflict in the Middle East, as well as the ripple effects into these markets. Stick with us. Don't go anywhere. That conversation next. This is Bloomberg. Good morning from London. I'm Anna Edwards alongside Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Bloomberg sources say senior U.S. officials are preparing for a possible strike on Iran in the coming days. President Trump says he's keeping his options open. The Fed leaves interest rates unchanged but warns some of the impact of tariffs will fall on the U.S. consumer. And today, the Bank of England is expected to hold interest rates, while the SEBI could cut them to zero. We'll bring you the Swiss decision later in the show. And I'll pick up on that theme because, of course, this is my personal obsession this morning, keeping an eye on that risk haven, especially when it's under kind of consideration against the other risk haven, which, of course, is dollar Swissy. We are seeing strength in favor of the dollar this morning, weakness on the expectation that the S&P is likely to cut. Brent crude as well, one eye on the Middle East, trading higher this morning. Marginally, trading at a 76 handle. But you can see there is nervousness in this market, despite the fact that the U.S. is closed today. We don't have a read on the bond market either. Eurostoxx 50 futures down a whopping 0.7%. The countdown to the opening trade starts right now.
Iran's got a lot of trouble. And they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to the people, why didn't you negotiate with me 2 weeks ago? You could have done fine. You would have had a country.
President Trump there reflecting on his intentions, keeping everybody guessing really around his intentions when it comes to Iran. So let's start our conversation there, Kriti, this morning. On today's agenda, what will the U.S. role in this war between Israel and Iran be? And it seems as if we could be possibly heading towards another weekend of drama on that front, possibly with some escalation. Now, we do have our reporting suggesting that U.S. officials are then preparing for a strike on Iran, but this is all subject to whether President Trump wants to go ahead with that. We heard him yesterday talking there about his views, saying it's very late to be talking with Iran, but saying the final decision has really not been made yet. He'll make that in the seconds before it is due.
The seconds before it's due, which on the one hand talks about how Donald Trump is thinking about this. On the other hand, talks about the severity of the situation and how large this is. If there was a strike on Iran, though, it's very clear that energy infrastructure would not be targeted. That's something that has been expected by the press because of the ramifications in the oil market as well. In previous iterations, though, he's also talked about not signaling some sort of regime change at all, or even targeting one on the idea that there is really no alternative as well. So ultimately, this comes down to one nuclear bunker that is underground and really putting the full firepower behind that as well. But even that is up for grabs. We're going to digest that throughout the show.
Right, and it does really come down to perhaps the framing of any U.S. involvement here and whether it will be very limited and very specifically targeted at that very low-level bunker, and whether there can be an argument around very specific action there, or whether this is something much wider and is interpreted as such by the market and is interpreted as such by the region and by Iran, and that'll be crucial. You mentioned how energy would respond to that. Of course, we'd all be watching to see the Iranian reaction, whether there be any closure or even just disruption in the Strait of Hormuz. That'll be crucial. But maybe this is a non-starter, because we know domestically in the United States, the MAGA movement was not founded on going abroad and getting involved in war. In fact, the absolute opposite. And so he is getting some pushback in parts of that MAGA movement.
Absolutely, within his own party. We should also mention, however, I think feels like Iran can sometimes be the exception to that rule, given that he did actively campaign on the assassination of General Soleimani. You mentioned, though, however, how the region is going to be interpreting this as well. We should keep an eye, mention as well, that not only is the region, but also how European leaders are thinking about this as well. If negotiations with Iran are potentially back on the table as one possible scenario, what framework does that look like in terms of previous nuclear agreements, which European leaders were very much a part of?
Yeah, seems like it's not the conversation for today, is it? You know, a replacement for JCPOA, but would it be a replacement for JCPOA? Let's move on to something else that's close to the market's thinking right now, Kriti, and that is the Fed, of course. I mean, so much for being data dependent, it would seem, because the Fed yesterday, the message there was about inflation is coming. This was quite a forward-looking, I thought, press conference at least from the Fed chair.
It's a fascinating one as well, because he's kind of saying, look, we don't know, which, surprise, surprise, nobody knows what the future holds. But he is saying, look, the economy is still resilient despite some unexpected jobless claims tick up as well. He is also warning about the tariff impact. And I think this is the very first time you've heard him very clearly say that there is some sort of inevitability when it comes to actually seeing that. We haven't seen it show up in the data yet. We've only seen it show up in things like import prices.
Yeah.
But he's saying that that is coming.
Yes, he is saying that is coming. And there was a really interesting conversation, wasn't there, about the reasons that it has not come yet. And he added thoughts into the mix around product imported before the tariffs and maybe being sold, therefore, at prices that don't fully reflect the tariffs. But that conversation obviously still to come. And the message very much from the Fed, wait and see. We'll learn a lot more about this during the summer. I thought it was interesting. Mike McKee asked a question about his role, about the Fed chair, about who sits in that chair. And he was quite keen, it would seem, to not get drawn into the conversation around what he thinks about President Trump's commentary on the Fed leadership, because President Trump has been very vocal on this front. But Powell was saying, look, this is not complicated. We stick to our goals, and I'm not thinking about the end.
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Now a week into hostilities between Israel and Iran, President Trump is set to meet with his national security team in the Oval Office this morning as he considers a U.S. response. The White House says the president will decide within the next 2 weeks whether to order a strike. Akayla Gardner covers the White House for Bloomberg News.
2 weeks. It's a timeline that we've heard many times from the president going back to his first term. He's used it to describe everything from decisions on health care to infrastructure. He also also used it to describe another conflict, and that is, of course, in Ukraine. He previously was asked about 2 months ago whether he could trust President Putin, and he said, "I'll let you know in 2 weeks." Still yet to know whether he actually trusts Vladimir Putin.
Bloomberg's Akayla Gardner reporting from Washington. Now, Israeli officials say they're determined to stop Iran from obtaining a nuclear weapon with or without U.S. help. Iran's Foreign Minister Abbas Araghchi says his country has never sought the bomb.
We were attacked in the midst of an ongoing diplomatic process. We were supposed to meet with Americans on 15 June to craft a very promising agreement for peaceful resolution of the issues fabricated over our peaceful nuclear program.
And now Iran's Foreign Minister Araghchi says his country won't negotiate with the U.S. while Israel's attacks continue. He spoke at the UN Human Rights Council in Geneva. While President Trump considers his options, Israel's military has carried out fresh attacks today on Iran's missile production sites and nuclear research facilities. Bloomberg's Jumana Bersetche has more from Dubai.
From the latest assessments from the IAEA, because they're still putting out assessments, there has been surface level damage, but perhaps not enough to get into those stockpiles. And as everyone's been talking about, the main one that they want to get access to is Fordo, buried deep in the mountainside. You could probably only really get access to that with the assistance of U.S. munitions, those bunker buster bombs.
Bloomberg's Jumana Bersetche reporting from Dubai. And the New York Post is reporting that President Trump's concerned about Libya-style chaos in Iran if the U.S. decides to strike. Sources tell the paper the president has mentioned Libya several times in recent days. Some breaking news on the health front. The American College of Cardiology now says millions more Americans should be taking weight loss drugs for heart health. The new guidance says exercise and a clean diet aren't always enough, and GLP-1s like Wegovy and Zepbound should be considered when choosing primary treatments for obese patients. Shares of Wegovy maker Novo Nordisk are down 2%. So is Eli Lilly, maker of Zepbound, but those shares had been lower on the session. The broader market is moving on comments from Fed Governor Christopher Waller. He told CNBC this morning the Fed could cut interest rates as soon as July, that any inflation from tariffs probably won't last long. More from Bloomberg's Michael McKee.
It raises the question of who is right. The bond market seems to be siding with the president at this point and suggesting that the tariffs are not going to cause a lot of damage or a lot of inflation, and they're not going to send the country into recession because of the budget bill up on Capitol Hill. A lot of people think that that's going to be recessionary. It's going to create a big deficit problem, and it's also going to join the tariffs in slowing the economy. But at this point, the bond market doesn't think so, and people are wondering, where are the vigilantes at this point?
And that's Bloomberg's Michael McKee. Right now, the policy-sensitive 2-year Treasury yield is trimming its losses. It's at 3.93%. The 10-year is up nearly 3 basis points at 4.41%. And the stock market is fluctuating right now. The S&P 500 is swinging between gains and losses at the moment. The Dow Jones Industrial Average is higher by 0.2%. The NASDAQ Composite is lower by 0.2%. Vice President J.D. Vance is visiting Los Angeles today. That word from the vice president's office comes a day after a federal appeals court allowed the Trump administration to continue deploying the National Guard to respond to anti-deportation protests in the city. More from Bloomberg's Bill Ferries.
For now, at least, it looks like those forces will remain under federal control in the streets. They're largely protecting federal buildings. They haven't been involved really closely with the area that the protests were centered on. But I think it's part of a bigger picture here of the Trump administration wanting to keep this power in reserve if it needs to do this elsewhere in California or elsewhere in the country.
That's Bloomberg's Bill Ferries reporting. Darden Restaurants is considering strategic alternatives for its Bahama Breeze chain. CEO Rick Cardenas said potential plans include selling it or converting the restaurants to other Darden brands. Cardenas spoke on an earnings call after the Olive Garden owner reported sales that topped estimates. Right now, Darden shares are higher by 2%. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager, and this is Bloomberg.
It's kind of range-bound at the moment on the expectation that it might, but we haven't gotten there yet. And the other piece of this is that
Remember when
it
a
feels
single
like
technology...
the veto on an actual regime change is still formulating when it comes to the White House.
We don't know. Again, we don't know. But the tone has shifted in the last 15, 16, 17 hours. It feels like it has become much more bellicose out of the United States. The bunker-busting bombs that you talk about dropped from B-2 Spirit bombers. are probably one of the few options out there to deal a decisive blow to the Iranian nuclear program. And I think it's that decision now that needs to be taken as to whether or not this is something that has the ability to finish that program off.
Exactly. John Authors even wrote about the kind of apathy in markets in the first couple of days around this tension, because, of course, with the possibility of the Strait of Hormuz being blocked, there's so many logistical and political challenges about that. There was kind of a lack of concern, perhaps, after day one in the market. And as you say, oil kind of range-bound. But it's that possibility that the US gets directly involved that is injecting the fear again today.
It's just an issue of ordnance. The Israelis don't have this necessary ordnance. I think there are only 20 of these bombs that exist in the US arsenal. Therefore, the only capability that exists to maybe deal that decisive blow is the United States. So it's a question of how far does the United States want to go now in terms of dealing that decisive blow to the Iranian program. And Trump's language around that appears to have changed.
But why? And the question is, you know, what does the US know in terms of intelligence about what Iran is planning? As you say, is it planning to target those US bases in the Middle East, for example?
But is that a debate, or is it that would be in response to the US getting involved? It's how much damage can be done, how much damage can the Israelis do to the program? They've started down this road. How much damage can now be done without the US involvement? And it feels like we're getting to that point now of that decision needing to be made.
When it comes to these markets, though, you can still very much see, as you point out at the top, caution is absolutely echoing throughout. A little bit of range-bound moves when it comes to the oil price. But this has inflationary impacts, because as long as the oil price stays high, there's a question here of how it translates into the bond market and thinking at the Fed.
OK, so let's move on to Agenda 2. It's Agenda 2. It's not Agenda 1, it's Agenda 2. It's Fed Day has been bumped to Agenda 2, which is interesting in itself. There's a really interesting piece from Timoros in the Journal this morning talking about the idea that we should ignore the dot plot. The market should totally ignore the dot plot. Powell has said in the past that it is a guess. And it feels like he is in, and the Fed is in guess territory right now. The market, of course, will interpret the dot plots and the summary of economic projections, and will spend... You will read, your inbox will be full, deluged with notes on how we should interpret it. But the line coming out of the Fed is basically, don't interpret it. We don't know. It is a guess at this point.
For our global audience, we should mention that Nick Timoros is the reporter at the Wall Street Journal who covers the Federal Reserve.
Has a little in.
Yes, known as the Fed whisperer and known as scooping the Federal Reserve for quite a bit. But it's interesting because are we paying attention to the oil price here? Is this, if I was Jay Powell and I was channeling his initial move of being data dependent, he would say, in his classic fashion, potentially, not to put words in his mouth, is that we need more data points. We need to see how sustained it is. But that's what the markets are pricing in. That's what inflation expectations are pricing in, that oil is going to be at this level for longer.
Because even though if you're not seeing a block of the Strait of Hormuz, you're still seeing ships rerouting, not just for oil, LNG as well, and staying on hold. So you are likely to see an inflationary impact, surely. But as you say, Guy, don't look at the dot plot, don't look at the forecast, don't listen to the commentary either, because Powell's going to try and keep him...
He's going to try and downplay it. Exactly. I don't know whether... I was talking to Val about this a little bit earlier, whether the statement is hawkish and he's dovish. I don't know what the mix is going to be, but the tone seems to be just ignore the dot plots. They're waiting to see what happens with the labour market. They're waiting to see what happens with tariffs and the energy story on the inflation front. They don't know yet what the picture is. But there's a couple of other factors I just want to kind of throw into the orbit around this story, one of which is we potentially are getting quite close to Jay Powell's successor being named. And this is really interesting because the market's beginning to price that possibility in. Is this the last press conference where Jay Powell has an influence?
He's surely going to be asked about all of this, and including his meeting with Trump in May. But surely what's being priced into the market for when Powell leaves is not enough. Because, yes, you will have a dovish tilt, but surely if you've got a Trump puppet leading the Fed, you're going to see a breakdown of credibility at the Fed and more than like a market dislocation.
But is this the last one? Is this the last press conference that he's got control of the narrative? Say between now and the next press conference, Trump names a successor, and we start listening to the successor rather than listening to Powell.
Names Duck Powell, basically.
Well, names a successor or names someone who's been thought of as the successor, which is potentially Scott Bessent. We should talk about him focusing on, as well, issuance. And that's where I think some of the regulation comes to the forefront. Michelle Bowman, the hawk of the Federal Reserve, who's now the vice chair of supervision, talking about pulling back on these leverage ratios to make it easier to absorb treasuries.
Will the banks buy more? So this is about there isn't an obvious buyer anymore for treasuries. So you change the supplemental leverage ratio, which allows the banks to buy more. The question is, will they?
Yeah.
And that's the bit. You can change the regs. Do the banks want to take that risk, given what's happening out there? Let's talk about CPI. You talked about inflation just a moment ago. UK CPI, a little hotter. I want to delve into the details and see what's happening there. But the headline number, it's a little all over the place, but it does look as if we've still got a fairly sticky inflation picture in the UK.
Yeah, so if you look at the core level, so it was 3.8%, it's come in at 3.5 in line with expectations. The services level, which is really what the Bank of England pays attention to, came down from 5.4% to 4.7%, so actually lower than the expectation.
So what was the core number? Core goods?
Core 3.5% in line. But look, I would just want to throw on a pinch of salt here, because last month the Office for National Statistics got it wrong.
Yeah.
And they blamed the Transport Department and issued this correction after the print came out. So maybe we'll get another one this month. It's been a nightmare for the ONS of late. There are lots of erratic factors around this data, including the timing of Easter. But of course it precedes the Bank of England decision tomorrow, and we'll get the updated bets at 7:30 a.m. London time. At the moment you've got 49 basis points of cuts priced in currently, and really a divided BOE at the moment, because does this inflation have second round effects and linger in the UK economy? You've got inflation expectations not as well anchored as the MPC would like. That's really the main question for tomorrow.
Core goods have ticked up just slightly. So that's interesting. I wonder if that's a tariff effect beginning to come through. Jumana Salahin is going to be joining us very shortly. Vanguard Europe chief economist. We'll get some answers, maybe on some of these questions that we've been talking about already this morning. Jerry Fowler from UBS is going to be joining us, European Equity Strategy Head. Daria Dolzakova is going to be joining us, Iranian nuclear program expert. That's going to be fascinating to talk to her about kind of what is going on and how the US can proceed from here, what the risks are. Mike Zawadzki, Blackstone Credit and Insurance Global CIO, and Anuj Rajan, Brookfield Private Equity CEO, joining us a little bit later. A bit of a private markets theme coming up a little bit later, Lizzie.
Coming up on the agenda for today, Guy, we've got at 10 a.m. London time the final euro area CPI print for May. At 1:30 p.m. London time, it's US jobless claims, of course, ahead of the Fed decision at 7 p.m. and then at 7:30, Chair Powell's press conference.
OK, what else do you need to know this, Wednesday? The Italian Premier, Giorgia Meloni, is pushing G7 leaders to support a ceasefire in Gaza amid escalations in hostilities between Iran and Israel. Meloni says many global leaders she's spoken to agree with her on the matter. Meanwhile, in Gaza, the city's health ministry says at least 51 Palestinians were killed and more than 200 wounded in an incident while they were waiting for aid trucks to arrive and then deliver. The Israeli military acknowledged, quote, several casualties after they opened fire on a crowd and said that authorities would investigate the incident. The UK is looking to restrict the number of visas it gives to countries which refuse to sign agreements to take back migrants. Prime Minister Keir Starmer says the move is part of the government's push for a more assertive set of measures to reduce levels of net migration. After almost a year in power, Starmer is coming under increasing pressure to devise a strategy that reins in immigration numbers that have touched records in recent years. And the US Senate has passed stablecoin legislation setting up regulatory rules for cryptocurrencies pegged to the dollar. In a win for the crypto industry and President Trump, the 68-30 vote marked a rare moment of bipartisan support in the Senate. The vote came despite Republicans blocking Democratic efforts to bar Trump from profiting from his crypto ventures while in office. A Trump-affiliated stablecoin already has $2 billion in its market value. So basically these are money market funds for the crypto industry, in theory. This regulation is talking about the idea that you basically have to have a one-for-one relationship between an asset, the dollar, and whatever this stable coin is.
Yeah.
It's going to be really interesting to see kind of what happens, though, what the differences look like between a money market fund and a stable coin when push comes to shove. And that's the bit that I'm waiting to see. If rates go higher, do assets in stable coins go down? They go up in money market funds. Are they similar? Are there key differences? And that, I think, we're waiting to find out. But this is a big step forward.
Well, in the cryptocurrency world, this is fascinating as well, because stablecoins are where you go when you need a haven from the volatility of the other crypto coins as well. So if you were trying to find or deal, or at least make it easier for a retail base to deal in cryptocurrencies, this is actually a good thing for that very specific base. But my question here is, what does it do in terms of a more macro tourist, an institutional fund, for example, that's saying, should we have Bitcoin in our portfolio? And that's the part that I'm not sure I've worked out.
But this isn't Bitcoin.
But it's in that universe.
Yeah.
It's obviously a huge win for the industry, which is, of course, not separate to Donald Trump anymore, as you pointed out, Guy. But, they flooded the zone with hundreds of millions of dollars to try and get a Congress that's friendly to the industry, and they're blasting through here.
But it also links back to the whole idea of this is kind of anti-fiat currency. If the basis for the crypto industry is a stable coin that is effectively pegged to the dollar, then at some point everything roots back to the dollar.
Yeah.
And that's kind of, doesn't that undermine the fiat currency, the anti-fiat currency case? But it also does in some ways undermine the dollar, because you can use this stuff for transactions. So do you need to transact in dollars when you can transact it? There are going to be regulations put in place in terms of kind of criminality and all kinds of other things around it. But the linkages are going to be really... I don't think
you've made before, like, if Trump is supporting crypto, is he hurting the dollar?
Yeah.
Well, is it the dog wagging the tail or the tail wagging the dog at this point? Something we're going to be monitoring throughout the rest of the program, of course, in the days and weeks ahead. But coming up on this program, we're going to bring you the latest out of the Middle East and dig into the future of Iran's nuclear program. Plus, top U.S. bank regulators plan to reduce a key capital buffer for the biggest lenders. We're going to dive into the details on what it means for portfolios. But up next, right back to those markets, oil trading near a 5-month high. Markets also eyeing this week's central bank decisions. We're going to talk about how they're all correlated and dive into that risk premium. If you have any questions of your own for us or for our guests, just please send them to us. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Wednesday morning, good morning. 40 minutes to go until the market opens for equities. In terms of what we're seeing in crude this morning, Brent crude currently trading at 75.98. Let's call that 76. How do you price in an oil shock? I don't think we're there. 76 isn't that big a jump, but it could become a big jump if we see potential US involvement in the conflict between Israel and Iran. How do I think about that? How do I model that? Let's ask an economist that question. Joanna Salahin is the chief economist and head of investment strategy group for Europe at Vanguard Asset Management. Good morning.
Morning.
This potentially could be a supply-side oil shock. I don't think we're there yet, but we have seen a pickup in energy prices. How do I think about that? How are you thinking about that and the potential persistence of those elevated prices?
Yeah, great question. So whenever you have an oil price shock, the first thing you would want to think about is why that oil price shock went up. And then the second thing you want to think about, as you said, the persistence. If it's just a one-off, nobody cares. So if it's going to persist, then you're going to see it in the prices that you pay for petrol when you go to the pump. And actually, we know that's quite quick. So it hits inflation quickly, and it's too early for a policymaker to respond. So how do you think about it? Think about the persistence, think about the level. You said 76. It's kind of within the margins of the OPEC target oil price, so probably not really news at the moment.
Yeah, but we have the potential to get there. So if you're a policymaker, what do? Do you just sit... There's lots of potential inflation coming through the system. This is potentially one of them, potentially one another. Another is the tariff story. Is this just another reason for policymakers to go, we don't know yet, let's wait and see what happens?
So as a policymaker, you have certain rules of thumb. You would think, a 10% rise in oil prices, that would normally feed through to inflation quite quickly. It gives you about 0.1 on the CPI. And that's just due to the direct effects. But of course, oil, we know that energy prices like gas and oil move closely together, so there could be broader spillover. So as a policymaker, you'd be thinking about that broader narrative. Is it just the direct effect, or will it spill over? And we use oil for so many things and energy for so many things in manufacturing.
What is the bigger risk? Is it the shocks to oil prices when you see a 13, 14% move in intraday? Or, as Guy was saying, the sustained move over, say, 3 months at $80 a barrel, for example? What is the bigger worry?
So the bigger worry really is the sustained move, right? Because when it's sustained, people don't know how to respond to it. For example, if you're a company and you're using oil as an input into your production process, you might be able to offset that one-off rise with, hey, I'm going to take a hit on my margins right now, or other prices might be falling. So you look through it. Because it's one-off, you can absorb it in your margins. When it's persistent, you need to be like, am I going to pass this through to prices?
There, in some recent data, when it comes to, I'm going to switch it away from the other worry that's kind of taken a back seat from the oil story, and that, of course, is the trade negotiations that are kind of simmering a little bit in the background as well. Some of the data is starting to show, in the United States, in terms of import prices and sort of factory prices, that there is a full read-through and full pass-on into the consumer. Are we in a world where the consumer, on both sides of the Atlantic, can digest price hikes?
So obviously the consumer's already come out of a period of high inflation, and we're hoping that that inflation is going back to that target. So can the consumer absorb that price hike? They won't like it, right? We're already seeing price levels higher, even though that inflation rate has come down. But to your point about the US and tariffs and how that's affecting goods prices, we're actually seeing potentially a lower impact than what we had expected in terms of that goods price. Initially, it looked like there was that front running, and in anticipation of tariffs, those goods prices are higher. But right now, it's pretty much in line with expectation.
How about the Bank of England? Because, of course, we've got the BOE meeting tomorrow. We've had UK CPI down, but not by as much as expected this morning, the pound higher. How concerned are you about the second round effects of this inflation and how it lingers here in the UK? Because that seems to be really what's dividing the Monetary Policy Committee.
Yeah, that's right. So I think the inflation number, as you said, a little bit stronger than what we expected, some of that reversal. And then the question will be, as ever, how much of this is news and how much is it going to persist? That 0.1 that came in a little bit stronger, what is the reason for that? If it's going to be persistent, then you get that worry. I think with the UK, the path of inflation back to target has probably been a little bit slower than other major economies. And I think that's why we're seeing this kind of split vote. Because on the labour market side, you actually do see a slowing, 5 months of payrolls growth falling. We saw the labour market data, the unemployment rate tick up. So the two forces are kind of pulling in opposite directions.
Of course, with that labour market data, as with the inflation data now as well, you've got these blunders at the ONS. Do you think that they're kind of meaning that the Bank of England's being too careful when actually it needs to act? Because you've had the likes of Swati Dhingra really berating the ONS.
So I think there are challenges with respect to data collection, and part of it is global as well. Response rates for surveys have gone down globally, but it's a little bit worse in the UK. So I think in terms of like those challenges, there's always going to be challenges of reading the signal from the noise. But we're expecting a pause this month on interest rates, with 2 more cuts coming for the rest of the year.
How much signal are we going to get from Powell later on today? And what am I watching? Who am I listening to him? Am I looking at the dot plots? There's an article in the Wall Street Journal this morning saying ignore the dot plots. How are you going to read the events of later on today?
Yeah, so I think on the US side, the data has actually come in more like, you know, they were talking about the mandate, the dual mandate, pulling in opposite directions with, you know, the labour market weakening, inflation rising, that stagflationary impulse. We're actually seeing that go away a little bit. So the data's come in with the labour market a little bit stronger, inflation a little bit weaker. So it's more mandate consistent and not pulling in opposite directions. So just hold. It's actually good news, and we're not expecting any significant change in messaging or the plots. The only thing I would say is there's a little bit positive news in the near-term outlook for growth. So you might see some moderate changes for 2025.
Okay, well, we await that press conference from the chair of the Federal Reserve at 7:30 p.m. London time. But Jumana Salaheen, Chief Economist and Head of the Investment Strategy Group for Europe at Vanguard Asset Management. Always good to have you ahead of the Bank of England decision tomorrow as well, of course. Well, coming up on the programme, Blackstone's bullish on European private credit. Their global CIO for credit and insurance is going to join us next on the programme as we look at futures here in Europe, pointing a touch higher, but not by much. A bit more outperformance when it comes to FTSE 100 futures. But US futures, even more optimism after the knock Wall Street took yesterday. We keep an eye on the developments in the Middle East, of course. This is Bloomberg.
30 minutes from the equity market open this morning, this Wednesday. Let's take a look at what the futures picture is telling us right now. There's a lot of big questions that the market doesn't have answers to right now, as a result of which I think a lot of people this morning may be sitting on their hands. And certainly that is what the futures picture is indicated. We obviously saw a reasonably turbulent session in the United States yesterday, but we don't know what's going to happen in Iran. The more bellicose language coming out of the President of the United States just asks lots of questions about what the next 24 hours are going to deliver. And of course, then we've got the Fed. And, of course, then we've got the Bank of England, Lizzie.
Yeah, you've got traders pairing Bank of England rate cut bets ever so slightly as they come online. So 47 basis points of cuts priced now after that CPI print came in with less of a decline than expected. But just checking in on your bond space, not a whole lot of movement here at all across the curve, across the continent, Guy.
Perhaps a little bit of a wait-and-see mode until we get that Fed decision later in the day. In the meantime, as we're kind of in that wait-and-see mode, let's take a quick focus on the world of private assets, specifically private credit. The president of Apollo Global Management, Jim Zelter, sees a, quote, ocean of opportunities in private credit, but acknowledges the risk of over-concentration in sectors like healthcare and enterprise software. We spoke to him exclusively at Super Return International earlier this month. Take a listen.
Certainly, there's been a tremendous growth of a variety of credit markets, whether it's investment grade, high yield, direct lending. And I think we have to differentiate between a credit cycle and industries where there may be an overabundance or an overenthusiasm.
Overenthusiasm, overabundance, some key words in a fairly positive environment for private credit. That's the president of Apollo Global Management, Jim Zelter, speaking again to us earlier this month at Super Return. Let's get a little bit more on that. Michael Zawadzki joins us this morning, Global CIO at Blackstone Credit and Insurance, on a quick trip to this side of the pond. Welcome. Thank you so much for being here. Walk us through those oceans and oceans of opportunities that Jim Zelter is talking about, because you have plenty of people on the other side of the coin saying, actually, this is where the cracks may be.
Well, it's great to be here. Thank you so much for having me. Maybe I'd make a couple of points on those comments. The first thing we see is this massive opportunity set, as Jim mentioned, in private credit. Today, the market is around $2 trillion in size. We see an addressable market of over $30 trillion in private credit. And so there's a long runway as we expand that market in what was traditionally focused on sponsor-backed direct lending to financing the real economy, infrastructure, asset-backed finance, and we think we are very early in that journey. So that creates a tremendous amount of opportunities. I would say what we're seeing on the ground in terms of fundamentals is actually pretty good resilience. Our portfolio companies continue to show strong growth. If we look across Blackstone's over 2,000 non-investment grade credits, our default rate is less than 50 basis points. I think what's important here is scale really matters, and having a global reach and footprint to access all of these markets really matters, because you never know exactly where that opportunity set may show up, and you want to be able to capitalize on it like we're seeing today in Europe, actually.
Well, it's fascinating that you bring up that keyword scale in Europe, because it's no secret that the private equity players and the private credit players of the United States have kind of swooped in to fill in that sovereign financing gap. How much of that, though, is bolstered by these fiscal promises from European leaders at the end of the day?
Look, last week, Blackstone celebrated its 25th anniversary on the ground here. And we spoke about deploying over $500 billion of capital in Europe over the next decade. It's been a great market for us over a long period of time. And so we don't view this necessarily as a distinct moment in time. What we see is a great investing backdrop here in Europe, like we've seen over a long time frame. Your corporate and consumer balance sheets are in good shape. Yes, you see an improved fiscal and monetary backdrop with some tailwinds in areas like defense and infrastructure spending. In credit specifically, because there's less capital here in Europe, we see excess spreads, we see lower leverage levels. That's why we have been active. Actually, 2024 was our most active year ever in Europe in private credit. We've built our team to over 150 people across 5 offices in the region. And as we look forward, that opportunity set I mentioned in infrastructure and asset-backed credit, it's in its absolute nascency here in Europe. We have over $100 billion of assets in that market in the U.S. We're just getting started here. And so when we look across the next decade, we see 40% or $200 billion of investment opportunity in credit alone for Blackstone in Europe.
So you're in the nascency of that, and you're really leaning into it. But do you feel like European institutions are getting more comfortable with the private credit risk?
Well, I think the access to capital for borrowers as this market scales in areas like digital infra, and we heard Jensen Huang from NVIDIA say 10x compute in Europe over the next 2 years. And so I think there are huge capital needs in the market, just like we've seen in the U.S., to drive growth, to drive innovation, to drive energy and power investments. And you need private capital to meet those needs.
What about the retail investors, though? Because they're piling into private credit as well. But, of course, they expect liquidity, right? So how worried are you that that could trigger a crunch if there's a downturn?
Yeah, I don't worry about that all that much, because I think if you step back and actually look at the facts of what we're doing in private credit, inherently, it's not a very risky undertaking, right? We're doing mostly senior secured lending, first in line for repayment, 40% loan to value in large, high-quality businesses, or we're doing investment-grade lending, both of which are lower-risk activities. The vehicles that we deliver those in, they are largely unlevered or very modestly levered at 1x. The capital matches on a liability and asset base to address those liquidity risks. And so when you actually look at the facts on the ground, and the Fed has actually looked at this over recent years, we actually feel like every dollar that goes into the private credit system actually de-risks the market and offering individual investors the opportunity to access the excess returns, lower volatility that our institutional clients have enjoyed in private credit. That's a good thing.
Europeans love to regulate, though. So if the bigger it gets and the further it goes down into the retail space, should we just expect more regulation?
I wouldn't say that, because I think what we should expect is it's logical when you see growth in a market to see these questions be asked. But we've had those questions asked for several years, and I think as you get
the scale is getting bigger.
That's right, but I think as the education is provided, as you look at the facts on the ground, I think people will come to see that it's a real positive for the system.
Yes, I agree. It could be a positive for the system. But there is a duration mismatch, as he points out. Generally, when banks have a duration mismatch, and we learned this in the 1930s, 29, is that you want to regulate that. You want to kind of create some buffers within the system. Is that what maybe private credit is going to have to deal with?
No, I don't think I would necessarily agree with that, Guy. Most of the way our clients access private credit are in long-dated, closed-end funds where there is a strong asset liability match. And even in our vehicles that target individual investors, we have designed caps on liquidity such that we match the risk that we have in the underlying portfolios.
So they can't take their money out too quickly, basically, is what you're talking about.
We have products that are designed to match the underlying liquidity of the assets. And I think that has worked and has been battle-tested over several years in the U.S., and I think you'll see the same thing in Europe.
There's also, though, you're talking about the liquidity and that kind of safety in terms of being long duration, but there is a growing need and growing desire and growing product match in terms of being actually able to trade private credit in the interim, in the short term, whether it's via ETFs, whether it's via, endowments or pensions or whatever that may look like. Walk us through the risks of that. If you're talking about products that ultimately have that safety of being a long duration asset, what about the folks that are using it to trade in and out every day?
Yeah, I would tell you what we see in the private credit market is a lot of chatter about trading, but for the most part, we haven't seen a lot of trading. I think most of our borrowers go to private credit because they want a partner that they can see through in the long term, who's going to hold on to that loan and be there to support the credit over time. And I would say our investors look to us to originate private credit because that delivers them excess spread, excess return versus the liquid markets. And so we haven't, while there's been a lot of chatter around trading in private credit, we haven't seen that scale in a significant way. You might see it episodically, but I don't think that'll be a huge trend.
Do we see retail taking up more of that trading base and more of the exposure to private credit?
Here's what I would say. I think when we look over a long period of time, retail has been significantly underinvested in privates, especially when you compare that to our institutional clients.
Sure.
And privates have delivered a lot of excess return for our institutional client base. And so I think it's a great thing for individual investors to have access to that. And we're delivering products that can do that in a safe way that delivers that excess return and lower volatility that our institutional clients have enjoyed for 40 years.
More interest in Europe? So I'm curious about this. You talk about this being in the early infancy of this story. There is in broader markets, there's this view now that you want to diversify your portfolios away from the United States. The United States has enjoyed its exorbitant privilege for too long, and maybe actually the rest of the world's going to outperform for a while. Do you get that sense from your investors at the moment that they're looking at Europe to do that? And if they are, how early are they in that process?
Yeah, what I would say to that is the U.S. will continue to be a very strong place to invest for our clients and for Blackstone. And we don't see that trend ending, right? The U.S. largest capital markets in the world, largest GDP, center of innovation.
It's going to continue to suck money in.
Well, I think you'll see U.S. continue to be a great place to deploy. That being said, I think some of the headlines, some of the uncertainty you've seen around the U.S. has caused clients around the world to look at other options, and they look at Europe, and they see what we see, which is an attractive investing landscape. And so I think you'll see them look to invest in both and in some cases diversify their portfolio where they see those opportunities.
It's a lot of catching up to do, though, isn't there, versus the United States?
Well, look, again, I think this goes back to where we started, which is that incredibly long runway and tailwind we have behind private credit, and that's why we see this $200 billion deployment opportunity for us here in Europe over the next decade.
Okay. Michael, we're going to leave it there. Thank you very much indeed. Michael Zawadzki, Global CIO, Blackstone Credit and Insurance. Thank you very much indeed. Credit.
Coming up on the program, back to our top story. Energy very much in focus as crude hovers near its 5-month high. We're going to dive into the geopolitics and the trades that are moving those markets. Stick with us. This is Bloomberg.
Welcome back to the programme. We are just over 15 minutes away from the opening trade. It is day 6 of the Iran-Israel conflict, so of course we keep an eye on the oil price. We have Brent currently weaker, 0.4%. WTI crude down about the same, still about $76 a barrel on Brent, but this is a near 5-month high. In the terms of the stocks picture, we have futures pointing ever so slightly higher for European futures, as well for Wall Street futures too. But let's get some analysis of what's happening in this oil market, because analysts keep telling us that these oil moves are nothing to write home about really in the scheme of things. But what happens if things go further in terms of US involvement in the Iran-Israel conflict? Let's speak to Bloomberg's Energy and Commodities Senior Executive Editor, Will Kennedy. Will, what are traders going to be focused on over the coming days? It seems like analysts are dismissing the possibility of the Strait of Hormuz being blocked, but things are in a different... The market's in a different landscape today, perhaps, because of the possibility of Washington getting involved.
I think that's right. We've still... oil is fluctuating a little bit around this price, around sort of just over 75 barrel, but we're substantially higher than we were before Israel started its strikes on Iran, which suggests that there is a significant risk premium remaining in the price. And I think that risk premium is centered on two things. Will the US get involved, as you say? And if they do, what will Iran do in return? Will it start attacking shipping in the Straits of Hormuz? As you say, I don't think people think that straits could be closed entirely, but it would definitely widen the conflict. It would make getting oil out of the region more difficult, more expensive, and probably constrain flows to some extent. So that's what traders are really watching for right now.
It feels like there's a floor under prices right now due to this latest escalation, but also a ceiling coming from the trade conflicts and the tariff policies emanating out of the United States. What does that range look like?
I think it will depend on what happens from here. I think that if the conflict really escalated and you really did get the conflict spilling into the shipping lanes, we could go substantially higher. But as you say, there are things capping it, and there's also the issue of OPEC, which has some influence here. They're already putting more oil into the market. We've reported that Saudi Arabia would probably like to put even more in, and they can go even quicker. Both Saudi Arabia and the UAE have substantial barrels they can put into the market. And while any blockage of Hormuz would be a problem for them, Saudi Arabia in particular has the ability to export that oil from the Red Sea and bypass the Persian Gulf. So that is one thing that's probably capping gains from here. And as you say, the economic background and those uncertainties. So what is the ranges? I'm not going to give you prices, but I think that anything over 100 probably seems like an outside scenario.
An old friend of mine who works in the shipping industry, and he was saying basically there's a standoff at the moment between charterers and owners and everybody that's involved in terms of who pays the cost for the higher insurance rates at the moment. And there's a standoff. Nobody's willing to pay it at the moment, the upgrade. Are we going to see ships going through this region at the moment until that gets resolved? Because at the moment, it feels like there's a lot of shipping guys saying, we don't want a part of that because effectively we're sending cargoes that are uninsured or not sufficiently insured.
Well, there are a lot of shipping guys who would like higher rates for their tankers, so I think there's a bit of gamesmanship here.
Precisely.
Look, the crisis is clearly going to force up shipping costs in a number of ways. Freight rates have gone up. Insurance costs are going up. At the end of the day, freight and insurance is not an enormous part of the overall cost of your oil. So yes, it will have an impact at the margin, but I think we are at the moment and will continue to find tankers willing to go in cautiously. We reported yesterday that the Qataris, who obviously ship a lot of liquefied natural gas out of the Gulf, are asking tankers to wait outside Hormuz before going in to get their cargoes. So that's the kind of caution that we're going to see. It is changing the way that people sail in and out of this region. But right now, I think it's important for markets to remember that the oil and the gas is getting out. And I think in the current situation, absent a big escalation from Iran, it will continue to get out.
Well, thanks very much indeed, Bloomberg's senior commodities executive editor, Will Kennedy. Let's talk about how this all translates into the wider markets. Mark Cudmore joins us this morning to talk about that from the MLive team. Mark, there's a number of big questions we don't know the answers to. We don't know whether the US is going to get involved. We don't know what kind of escalation we're going to be seeing. We don't know what the Fed's going to do a little bit later on. Is today just a day for sitting on your hands? Do you have a clear sense of direction?
I think we're just waiting to the Fed in the short term. And I think this Fed meeting is really interesting in the short term and for day traders. I think there will be quite a bit of short-term volatility around that, even though by next week we'll completely have forgotten about it and ignoring it. It has no long-term consequences because of the uncertainty, not just around the Middle East, but also the uncertainty around trade policy and what happens on the fiscal package. So anything the Fed says today only has a short shelf life, but it'll have a big impact in the short term. How is that likely to play out? I'm hearing a lot of people talk about the fact that the risk reward is to play for a dovish surprise, given the soft CPI prints recently and some of the slight weakness we're seeing at the margin of the jobs market in terms of initial claims. And then that's because what's priced in the market is that you only lose a little bit if they're hawkish, whereas you can gain a lot more if they are dovish. Even though I get the risk-reward argument, I think the Fed, if anything, will surprise hawkishly today. I think that there's a chance they only have one rate cut price in the dot plots. But the fact is, you know what, the labour market, because of what's happening on the immigration side in the US, will stay tight. Even if there's a reduction in jobs being added or even jobs lost in the coming months, it's still going to be tightness in the labour market. On the flip side, while inflation has been soft, we haven't seen the full pass-through yet from tariffs. And therefore, Powell will point to that inflationary impact. And of course, we've got the oil spike as well. So I'm expecting the base case is that if there are any surprise today, it'll be that they'll be hawkish. But I admit that there's not much to be gained in that trade. Therefore, the risk reward's not great.
But Mark, where do you focus for the signalling out of the Fed today? Because, of course, Chair Powell's not going to want to give much away. The Wall Street Journal kind of dismissing the dot plot. What do you focus on?
I think the dot plot in the short term is relevant. I understand dismissing it because the longer term issues, as I said, will be out of date soon. But today it will definitely make an impact what the dot plot says. And of course, in the press conference, he's going to be asked some kind of questions. If there's two priced, does that mean that it's going to go as soon as July, or does that mean that there's going to be 50 basis points in September? And I think either way, that answer is interesting. If he explicitly says, yeah, July is absolutely in the cards, it'll be interesting. If he explicitly dismisses, that'll be interesting. If he says, if he opens the path to 50 basis points or kind of tries to rule that out, it'll be interesting. So I think that the presser will be very, very interesting. And yes, I accept the dot plot is going to be pointless by next Monday, but it'll not be pointless in the short-term session today.
Mark, I'm putting you on the spot. The other top story we're following this morning is a potential decrease in capital requirements when it comes to Treasury holdings and what the risk ratios look like there. Is that a tradable piece of legislation?
It's been long flagged. This story is, of course, it's another planned story. It's kind of reaffirming something that's been expected for a long period of time. It is another marginal positive for the stock market, a stock market that is kind of drifting higher until we get the next big news. And I think that next big news will ultimately be a negative catalyst. So, yeah, it's short-term positive, but not a hard catalyst.
Certainly something we're going to keep a close eye on. Bloomberg's Market Live executive editor Mark Cudmore joining the program this morning. Get more updated analysis from him and the team. MLIV Go is the function on your terminal. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Critty. So energy stocks in focus once again today, given all the oil dynamics that you were discussing earlier on the show. Now, we have seen energy stocks, which is the white line here on the screen, rallying with the crude price. As that's gone up, unsurprisingly, we have seen a lot of gains for these stocks. And actually, over the past week, energy, the best performing space in the European equity market. Companies like BP, Shell, Total Energy and Eni all seeing gains of close to 4%, 3% on those stocks. And given the oil price still up around 1% since where we closed yesterday, that is the important thing for those stocks today. So potentially that will be positive despite the little declines we've seen in crude today. Then in terms of UK stocks, that inflation data slightly higher than expected. This could potentially trim some of the gains that we've seen for UK home builders year to date. It's been a pretty decent 6 months almost for this sector. Persimmon, Crest, Berkeley, Barrett, Redrow, all of those done pretty well. But the other space to watch is banks that have done it even better in the UK. Really big gains for these stocks year to date, given the rates impact. And there's a lot of talk about potentially M&A now coming through, with these big banks using the extra cash they've got from the higher rates to take over some of the little players, maybe Metro Bank, TSB, the ones that have been in the headlines recently. Potentially, we are going to see an impact on that from the inflation numbers. Keep an eye on UK stocks in general today. Then, speaking of banks, a bit of a downgrade for UBS, underweight over at Morgan Stanley. This is all coming because of the recent update from the Swiss government on capital following the Credit Suisse takeover. Now, analysts over at Morgan Stanley say that they are actually below the street in terms of the buybacks for UBS. So essentially, UBS is going to be returning less cash to shareholders because of those capital rules. So they're going underweight, meaning a recommendation to sell that stock. And therefore, we are seeing UBS called lower this morning. Keep an eye on that one in banking today.
All right, Joe Easton, our equities reporter, we thank you. With those stocks to watch as we head towards the open. More broadly, as we look at the futures picture, not much happening. The Euro Stoxx 50 futures pretty flat at the moment, but FTSE 100 futures up 0.2%. Of course, as Joe mentioned, we had that inflation data out of the UK earlier. The pound's up 0.3% at $1.34. But really, we're in wait and see mode, right, before the Fed decision and as we wait for more developments when it comes to the Middle East.
What's amazing is just how range-bound equity markets have been of late. We're basically kind of almost on the average for the S&P for the month right now. Considering the news flow, I find that absolutely amazing. Anyway, we're going to get the open in just a moment. Lovely day in London. This is Bloomberg. Wednesday morning, good morning. Let's talk about where we go with the opening trade and figure out what is happening here. We've got a session yesterday which was actually quite interesting. I'm telling you, Lizzie's got nothing. She's got absolutely nothing this morning. Futures are going nowhere. But in terms of yesterday's chart, this is what it looks like. A decent sell-off coming through into the end of the day. US down, let's call it circa 1%. Europe's got a little bit of catching up to do, but not a great deal. So many questions that we don't have answers to. What's the Fed going to do? What's the press conference going to reveal? Are we focusing on the dot plots? What's happening with the Iran-Israel story? All of that still very much firmly in focus. But Lizzie Burden, what do you got?
All of those questions, Guy, delivering us a great big unch when it comes to Euro Stoxx 50 futures this morning. Not a lot happening, as you say, as we head towards the open. Underperformance for the DAX, perhaps. But where we're going to get outperformance, it looks like, is in the UK. We've got UK CPI having come out this morning, holding at its highest in over a year before that Bank of England decision. So we've got to keep an eye on those UK banks. But what are you watching, Critty?
I mean, I would disagree with Guy. I think there's a pretty decent gap to be had between the FTSE 100 and the DAX. 0.4% of a percent move, I think, is decent. But you mentioned the outperformance in the UK. A lot of that is going to be driven by the energy stocks and the home builder sector, very much in focus. But I have to say, I think my personal obsession this morning is what UBS stock does. And this has everything to do with capital requirements, not in the United States, but actually in Switzerland. We know this is something that's been moving UBS stock quite a bit, but it looks like they are now cut to underweight over at Morgan Stanley, again, on those potential capital requirements, whether or not the Swiss bank, Swiss National Bank, and UBS by extension, can actually remain competitive. That's likely to move that stock this morning, Guy.
Okay, if you're excited about the gap between the FTSE 100 and the DAX, okay, we'll talk about that in just a moment. Let's talk about this market open and figure out what exactly is happening. We're not expecting some big moves here. We are expecting some moderate moves, but maybe the FTSE does deliver a little bit of outperformance versus the DAX. Anyway, the FTSE 100 is up a staggering 0.2% right now. We're expecting maybe a little bit more. We're expecting maybe 0.2%, but we're struggling to deliver that at the moment. In fact, we turn slightly negative. The Stock 600 is out and is down by 0.1%. The FTSE regains its footing and is up by, I'm waiting to round up. Let's call it up by 0.1%. The IBEX is up by 0.2%. We await the DAX So we can't talk about the spread yet between what is happening between the FTSE 100 and the DAX, Lizzie. I wait for that exciting moment when it arrives.
What we can talk about, Guy, are the UK banks. So you've got HSBC up 0.6%, about the same for NatWest, Lloyds up 0.6% as well. Of course, we've got the stronger pound off the back of the inflation data coming in disappointingly sticky for the UK. But break it down by sector across the whole of Europe, and you've got about half in positive territory. Insurance at the top of the basket, healthcare at the bottom, Chrissy, autos not far behind.
Not at all. And I think it's really interesting because you are continuing to see a push into the energy sector. And I think that is at least one consistent theme that we've been seeing over the last 4 days. In fact, to the point that the defensive trade in this market, at least for the last 4 days, in the last 4 trading sessions, has ultimately been oil. And that's really just a reflection of the macroeconomics that you are seeing. But to me, the healthcare story is also very interesting. You point out that it's the laggard this morning. I'm looking at AstraZeneca, GSK in terms of the UK benchmarks, but also like some Novo Nordisk as well. That hasn't let up at all in the last 4 trading sessions. So you are seeing repetition in terms of what this trade is. But again, you mentioned the UK banks. I will mention UBS down almost 2% this morning is your biggest volume mover to the downside. And that, again, comes back to the very juicy topic of capital requirements, this time in Switzerland, Guy.
I'm going to talk about Airbus. I feel like I'm missing the Airbus story from the Dubai, from the Paris Air Show. We'll move on to the Dubai Air Show. It is the biggest points gainer this morning in Europe on the stock 600, up by 1.3%. Airbus has been briefing. It is talking about the fact that it is targeting a higher dividend payment and affirming its 2025 guidance, which is interesting because Thomas Hoffler, the CFO, was the other day saying actually there's uncertainty out there at the moment, so maybe actually we don't lean on buybacks in the same way to conserve cash. But they're now talking about maybe targeting higher dividend payments, which I think is interesting, that maybe that is the way that they are going to go, and confirming 2025 guidance. There are so many imponderables in this sector right now. Huge amounts of demand, very much a supply-challenged industry at the moment. Don't know what's happening with tariffs, ongoing issues surrounding the supply chain story, ongoing issues from the airlines around kind of what they're doing in terms of airspace and things like that going on with the Middle East. So there's a lot of uncertainty in this sector. So it's interesting that Guillaume Faury is out targeting that higher dividend and affirming his 2025 guidance.
Uncertainty, of course, the cloud hanging over all of this. Let's bring in Jerry Fowler, Head of European Equity and Global Derivatives Strategy over at UBS for more analysis. Jerry, it's been a bit of a risk-off mood. You know, the stock 600 pretty steady, flat at the moment, and the rest of Europe trying to claw something back. But yesterday, certainly negative stateside. How long do you expect this cautious mood to continue as we wait for, clarity over particularly what happens in the Middle East?
Yeah, I mean, the Middle East would probably not even be the most important thing for European equities in the next month. We've obviously got the tariff deadline coming in July 8. We've got the earnings season for the second quarter that will start in the middle of July as well, and that's going to be our first indication of what's happening with tariffs. So there's quite a lot going on over summer, and actually the stock 600 trading at nearly a 15 times forward PE is roughly where we think it should be at the end of the year. And with discount rates pretty elevated, both risk premia and also risk-free rates, that's a reasonably rich valuation at the moment, especially when earnings are just being downgraded, left, right and centre. So unless we see this earnings recovery or discount rates coming down, Europe's in a bit of a holding pattern with divergences.
Yeah, you've got a lot of people saying, put the Middle East aside. It was a time for a pullback on risk anyway. You've got so much uncertainty there. Was the market set for that pullback regardless? Yeah,
after a very strong rally, I think we were poised for not necessarily a pullback, but a little bit of a holding pattern. Because at least when we look at our tactical indicators for the US market, and obviously markets are obviously very correlated globally, we're seeing that there are still drivers of further upside, which includes that credit spreads or an element of risk premia were high and were continuing to come down, but weren't as compressed as they were prior to Liberation Day. In addition to that, mutual fund and hedge fund positioning is still fairly light, and actually, therefore, there is still buying. Plus, I think there's just a big momentum trade where everyone saving into their pensions is always putting more money into the same thing they bought last month. So that contributes just naturally some more flow into the market. So there are still some upside drivers, but certainly some of these risks just, it's a busy summer of risks, not just in Europe. In the US, you've got the budget, you've got the ex-date, you've got tariff deadlines that are important there as well. So there's just a lot going on that I think into summer is keeping people cautious, unwilling to sort of chase this rally, but equally, very few people really looking to sell at this point either.
I want to lean into your second title, which is Head of Global Derivative Strategy. Where do you feel like the hedges are most concentrated? What outcome are people bracing for the most?
It's a good question. I would say that hedging is really quite light, and in part because we have moved into an environment where hedging is done on a sort of a needs-must basis, because it is fairly expensive. And as I mentioned, positioning generally is quite light. So to some extent, with that very light positioning, there's often more interest in the upside hedge, making sure that if the budget does go through and it's stimulatory, if the US deregulation agenda continues, that you've got those US upside hedges. In Europe, it's the same, although it becomes a lot more nuanced because there are very clear headwinds to the earnings growth from tariffs and from currency, and maybe even for rising yields on certain sectors. So, things like pharma, luxury, household and personal products, food, beverage, tobacco, really struggling to maintain momentum, not necessarily going down, but they're not leading the market the way that defensives might in a risk-off environment. So again, it's positioning for some of that upside through banking sector or auto sector or industrial sector call options. So I'd actually say that very few people are really looking for downside hedges at this point.
I'll let Guy lean into the currency impact, but before I let him go into that, maybe we'll see. I want to ask you a little bit about the oil sector here, because of course we're watching this trade. Like I said, in the last 4 trading sessions, the energy market or the energy equities are magnifying the move that you were seeing on the macro, on the oil stocks as well. What is that that multiple, if that makes sense? Yeah, well,
it's very hard to gauge. Excuse me. We have seen energy stocks bounce quite sharply when we've had geopolitical tensions around the world. But that also tends to fade quite quickly because, by and large, there is quite a lot of oil out there that can be supplied. OPEC has been constraining it. They are starting to release more of it. So it's, finding the right level of supply and demand balance when there are artificial constraints is quite difficult in terms of understanding where the oil price itself should settle. But nonetheless, we've had a prolonged period of earnings downgrades for these energy companies, in part because of the low energy price. So at this stage, we still have energy as an underweight sector in Europe, because we're expecting that this bounce might be short-lived, as previous ones have been, and that the negative earnings revisions are still enough to overpower what is a reasonably high free cash flow sector, particularly at current oil prices.
Do we need known knowns before we can start acting on what the information that we have? How high is the bar for a piece of information to become actionable at this point?
Yeah. So with the level of uncertainty we've had in the first 6 months of this year, analysts and economists really aren't moving their numbers until it's a fact that something is happening. So you saw that with Liberation Day. Everyone knew there were going to be tariffs against Europe. Yeah. But analysts weren't downgrading their earnings estimates because they didn't want to guess what those tariffs would be. So then you get the announcement, and they're a particularly high level of tariffs. Then you get a broad swathe of downgrades. It's the same sort of thing with US GDP. There was a lot of evidence US GDP should slow or would slow with tariffs. Yep. You didn't really get those GDP downgrades until you got the announcement. So it's very, very difficult to forecast things. I mean, even if we just look at our GDP forecasts and put them in the context of all the different scenarios about how the current tariff setup would play through, we've got a range of sort of +5 to -3% impact on US GDP because we just don't know how it plays through.
So given that, the market is normally a forward discounting mechanism.
Should be, yeah.
Yeah, but is it acting? Is the market pricing in now, or is the market pricing in 3 weeks from now, 6 weeks from now, 6 months from now? Because it normally prices, the equity market in particular, normally prices forward.
Yes, correct. And I would say that ordinarily the market might try to price 3 to 6 months forward in a less volatile environment. It feels a little bit now that might be less than a month. And even then, the distribution of outcomes on a shorter horizon is just much wider. Yeah. So if you widen that, you've got sometimes more volatility. So we have seen volatility spikes that can be very large when you actually have the news flow. But probably what's important is just that volatility itself can whip about. Sometimes it can be very low, and then other times it can be very high, and it can swing back and forth. And that means that it's rather difficult to time things like, do you want to be overweight cyclicals or defensives? Yes. Because that trade relies a lot on understanding the regime of volatility.
What about less tangible stuff, less precise stuff? Like, you've talked about underpricing the momentum behind Ursula von der Leyen, the European Commission, and actually that there should be more upside seen from what she's doing in terms of competitiveness. What are people not seeing that you are? Yeah, so even in Europe, there's quite a lot of skepticism that the Draghi report will make any meaningful change anytime soon. And outside of Europe, there's almost no awareness that the European Commission in von der Leyen's second term is quite different to the European Commission in her first term. There's a lot of very high-level people with specific tasks to implement elements of the Draghi plan. So we're doing work on that at the moment. We've got an expert call for our investors today, which I think is going to be very interesting. I've done the pre-call with him already.
there is a lot of work under the surface to